for one of your regular sessions, you took one of the peasants to the spa with you.
Oh, you're ready to go now. See,
yeah, that's right.
I started on him about 3 minutes before the show. That was the problem. I gave him a little on-ramp to get ready. So
I'm gonna bite back.
So, I mean, what is it? Mani-pedi, then the haircut, then the full body dip?
Just a haircut at Blind Bar at Todd's place.
What does Todd's place make? Does that mean they use a series of very sharp knives to cut your hair?
No, it means
it's more an Edward Scissorhands thing.
No, it means they charge you close to $100, and you can drink. They'll give you a beer. I don't drink. But they'll give me a Topo Chico while I sit there.
You get this for $100? All right, I'll tell you what, I will give you this for $90 right now.
So here is my thinking on it. Okay, it's a nice haircut. She does a great job. I've talked about this. Okay, you're looking at it now, jerk, but it's so expensive that I only go every 2 to 3 months. And every time I come in, she's like, you really should be coming like once a month. Like, this looks ridiculous.
Sounds like the dentist now.
Yeah,
trying to milk you for a
it's partial, right. And that's my contrarian mind is like, oh yeah, you'd like it if I came every 2 weeks. Every month I'd pay you.
Who wouldn't like it? I got to spend every day with you, and it's a joy. I'm sure she wants to see you once a month, because that's a treat. I don't think you took off enough for $100. That's like an $85 haircut. You need to take more off.
I'm the best customer.
Of
for
course
stuff
you
like
are.
That. No, seriously, because like I feel so bad, like I feel so awkward that even if it looked awful or like she missed like the stuff around the ears, I would be like, this is great. See, this looks great. And then I'd go home and I would do it myself.
No, seriously?
Yeah, 100%.
Oh, great.
I'm an idiot.
I love the old place you used to go to that they closed, because you used to come out of there and it was like, what conveyor belts were you on? Where were they?
It was like one in every 5 haircuts was a good haircut.
It was a roll of the dice.
Yeah. And that's what you get for $25.
Yeah. Oh, I see. So
I don't make the rules. Like, what am I supposed to do?
I go to a guy with a barber pole outside that's like 5 minutes away from my house.
You're so full of it.
It's $12.50. I'm in and
so unbelievably full of it.
That's seriously.
I need receipts.
It's Tom's Barber
I need receipts for that.
I'll drive you by it. It's by the Grater's ice cream place that you love.
Wow.
I know that place.
What? Yeah, Beth.
I've seen Pete there.
You've never seen me in Grater's. Well, no. Maybe if you did, it's once, because I went with my wife.
Wait, what's the ice cream shop that you do like? Because I dated a woman from the North Side, and she liked
such
Grater's.
You're so bougie about it.
No, you liked one,
Homer's.
and you like Homer's, or she liked Homer's.
I like Homer's. She liked Grater's because it's bougier.
And you made fun of, you were like, Grater's, it's all like kids covered in pimples. They're serving ice cream. It's disgusting. And I was like, what the heck?
What's disgusting is you got to wait in line for like 30 minutes, and you get like just very average ice cream. I don't have patience, again, at this point in my life, I don't have patience to wait in line for anything. If there is a line, whatever it is at this point in my life, I don't need it.
Okay. But yeah, I'm gonna get my hair. What should I do? I don't know what I'm supposed to do. I either get a crap haircut for $30, or I get a good haircut. It's not $100. It's $60, and then the tip is $80.
You've got a significant other now who should be giving you some guidance on this. Or
she knows a lot of stuff. She's honestly changed my life in so many ways for the better. For the superficial stuff, like clothing and kind of hairstyle and stuff like that.
Now, this young lady has a lot of talent. She's a fabulous rider and everything. She's
fabulous rider.
Horseback rider.
Can we get an... Okay, thank you.
Oh, wow.
I don't know what the hell you're talking about.
Sick mind. Horse rider.
I mean,
so I'm sure she's like braided the horse manes for shows and stuff like that. I mean, that begs
so
itself.
Stupid.
That begs itself for the same thing there.
I don't know
she could
where
do some
you
work
come
on
up
that.
with this BS. She braids the hair on the horses. No, but she doesn't. No. But
doesn't
that's
her
not,
mom's?
Nope.
Did her mom braid those?
You're
horses?
thinking of You're thinking of the bougie kind of.
That's English writing. You're right.
The thing that no, Callie and her mom. Absolutely not doing that kind of thing. Her mom got like mad that she had to wear like a Western style collared shirt to like one of the competitions, because she'll just wear a t-shirt and like Wranglers and go barrel racing. Yeah, she
is badass. Yeah. She's tough.
That's what I'm saying. She's not braiding some horse's friggin' hair and then doing the whole like, oh, it jumps over a small fence. It's not,
jumps over a small fence.
I'm sorry. I don't want to offend anybody. who's riding horses in, is that called Western style? I don't know what it's called, or dressage. What did you say?
Yeah, it could be dressage, jumping, show. I mean, it's a different saddle, different horse.
Gotcha.
Doesn't have the pommel. I know you like the pommel. That's a thing you grab onto, to hold onto.
I can't ever, whenever I'm on the horse, they're always like, I'm always like, oh, my horse is like, it's drifting different directions. And they're like, well, just guide it that way or this way. And I'm like yanking the what's the leather rope?
The reins?
The reins. I'm yanking the reins.
The leather rope.
In one direction.
Wow.
And the horse, I don't know if the horse just doesn't respect me. The horse is probably like, this guy's wearing Lululemons. I'm not moving wherever the hell he's. I'm going wherever I want.
Out there, string pants is not an asset.
Not good. Not good.
We're going to get you out of string pants by the time
I just don't think my body type works for jeans, though. I'm like kind of short. I've got like a chunk. I've got like a.
You're in pretty good shape.
A butt thing going on. I don't think the jeans work.
Wow. All right. Now I've definitely gotten too much. Oh, my eyes hurt now. I'm definitely not making.
All right. We'll talk about anything else.
All right. Let's talk about the ripping dollar story.
It's unbelievable.
Fed came out and did exactly what the market predicted.
Yep.
They cut by 25, and they said there's the possibility of 2 more cuts next year, which is what the Fed Watch tool was telling us already. Mm-hmm. Why the dramatic reaction? Bonds, notes, 2 years, all traded lower. But what's interesting,
huge move.
Yield curve steepened a little, but considering the amount of the move, tiny steepening in the yield curve. And that's the difference between the upward sloping 10-year yields rising a little faster than 2-year yields. It moved by a basis
equal
point
amounts.
or 2.
Yeah.
But,
from the front end to the back end.
Right. But
what would you have expected?
Honestly, nothing.
Okay.
But what I'm saying is, from the interest rate side, yields went a little higher. We kind of congested back to the middle, lower end of the range, 115, 116 in the long bond. But equities really, I mean, they went to town.
Yeah.
They went to town really hard. The SPOOs were down 1,000 points at one point.
QQQs were down.
NASDAQ, I'm sorry. NASDAQ was down 1,000 points. Dow was down, I want to say 1,000 points.
Yeah, for sure. That definitely.
SPOOs, at least 100. SPOOs, and
150 for SPOOs. Yeah, it was rough.
Yeah, Dow down.
Bitcoin broke below 100K, which is
but
like.
That's so interesting. It did, but we're back to, we were 102.70.
I'm joking. It's ridiculous.
Well, and out of everything, I mean, U.S. equity is staging a little bit of rally as we speak now. Dollar coming off.
Everything is. Yeah.
Dollar coming off a little bit now, but a huge move. They took out those lows below 105, and they went to town on the euro. Really, the ones they went to town on were the Kiwi and the Aussie. And Canada. Kiwi down 2% yesterday. So
let's take a look. I mean, this is a violent move. And I guess the way that you just explained it, someone who's sitting at home who kind of understands the correlations between all the markets that Pete just hit on, because they also annihilated gold. So you factor that into the equation as well. It shouldn't be surprising, if we could throw the platform up, to see these commodity currencies like New Zealand dollar and Australian dollar that we'll get to in a second get absolutely annihilated, because they're some of the most risk-on currencies out there. They're tied to gold. They're tied to equities around more of an Asian and obviously Australasian kind of equity mix. But still, obviously, yesterday, if SPOOs are down 3%, equities across the globe are getting hit. So probably made sense that these commodity currencies got wrecked yesterday. But I mean, to see at certain points this Kiwi down 1.5%, this Aussie down 1.5% yesterday at these lows, that's a huge intraday move. They got right down here and touched 62 cents in the Australian dollar. That's lows for the last year. Let's take the weekly chart out for a spin. We are right there, man, for lows going all the way back to the pandemic crash and then bounce back. They're bouncing it a little bit here today, up 0.5%, but still trading 62 handle. Right.
So from your standpoint as a trader, what do you need to see to, again, bouncing off the lows, U.S. equities bouncing a little bit off their lows, a little bit of, it started last night a little bit, not much, a little bit more being put into it today. What do you need to see throughout the bulk of the day to say we all know they're cheap. They were cheap yesterday before they broke another 150 points, 150 pips.
Well, yeah, they were down going into the. I mean, 63 was cheap going into the number.
It was so funny. Right before too, they took euro down to like 104.80. So it's like 105 is absolutely no concern to anybody. What do you need to see from tape action? Now, this was one we talked about. Okay, what's the scalping range yesterday? Scalping range was about 45, 50 points, one standard deviation. I said for euros, I'm going to add on at least 1.5 times that, so 75 points. If you had done that and bought the 104 evens,
still too tight.
You would have been out of them.
Yeah.
and this is a good example. So just to hold rubber, to hold a little bit of accountability. So you would have bought the 104s. They continue to pound this. This is why I talk about you've got to set some management activity, because when they got to 103.80 and 75, now that was the low. It felt really uncomfortable.
Sure.
So what you've done is set the expectations. Now, it doesn't mean you can't get back in at a different level or wait to see the market settle. But these are the mechanics of, here is one where you got no bounce.
Yeah.
If you were early and impatient,
No.
you really had a hard time. But if you set those scalping ranges, you got to them. You got to them in Aussie, and you would have gotten squeezed out of that too, if you had managed it.
Sure.
But this is how you set up. Now, sometimes they'll hold the levels, and you'll get a nice trade. You walk away from it, and you look and reevaluate. So, but from today's tape action, we're getting a slow grind up. We're not halfway back. And I only mention that as a metric, not from a technical standpoint.
But if you bought the 104s, you could scratch them. Like if you bought the one standard deviation move yesterday and held through all the heat of yesterday late afternoon,
right,
you're probably back to around a scratch. Maybe if you had enough powder, you could buy some at around the one standard deviation move. And it doesn't always happen, I should say, because this always goes one of two ways. The number comes out, you see a big move, you see a couple of minutes of like, okay, is this where we're going to stop? Right. And kind
Guys doing exactly what we're talking about.
Exactly.
All right. They shook the tree pretty hard. I'm going to see if I can get something cheap.
And then they just released.
Right.
And at that point, yeah, it's hard. Yesterday was a tough day to be a contrarian day trader.
Right.
But what I will say in situations like this, if you are day trading and that's the thing, and you're saying, hey, I'm buying and selling the one standard deviation for a contrarian trader, or I'm a trend follower. Obviously, yesterday was great for a trend following trade, or I'm buying or selling the one standard deviation on the trend basis, and I'm not taking these things past the U.S. equity close. That's when I call it a day, or I'm not taking them past the way that you trade. If I'm trading a one standard deviation move, then I'll take a quarter of a standard deviation as my scalping range around where I get in for loss or for profit. Yesterday is a really tough one. Now, if you have a little bit of a diversity of strategy whereby you are trying to scalp around a big number like that, but you're also looking at price extremes and you're like, okay, I'll swing trade for a couple of days, you were able to get a nice bounce in here. So hopefully, and maybe just a little bit of your experience with numbers like this. Of course, you're probably getting in around here and maybe taking some losses, or you're getting in here on the trend basis and you're taking some profits here. But is there any capability in your mind, knowing that we're already at, let me go back to the daily chart, a historic price extreme right here in that 105 to 104 range, to say, okay, I'll day trade some of this, but I'll also put part of my account, part of my equity here into something that I just want these 103 halves for this week or next week or however much time.
And I don't want to say it's not more advanced. This is a challenge for new traders. They tend to do all or nothing. I'm long, and I either got to get out of all of them, ideally for a profit, or when I get squeezed out, I get out of all of them. Incrementally, you could trade FX so small, down to a micro lot. 0.01 of a euro, I think he has around $25 of buying power, margin requirement. Now, that's just the function of leverage. And again, you can lose more than you put in. But if you're trading a couple of those micro lots and you're long, it's not a binary decision. You can manage a portion of that with the idea like, I'm going to stay mechanical around the one standard deviation day trading scalping, but I want to keep a small portion a little bit longer. There's nothing wrong with that. Just make those decisions ahead of time.
Yeah.
Go into what your game plan is, and taking on, just from experience, when you bought the 104s, they seemed so cheap at that point until they weren't. And they're going down through 90, through 85, through 80, pretty darn fast. Managing part of that, if that happens to be the stone cold load and they bounce, you still have some inventory. If they continue to go, those sales that seemed selling them at the bottom weren't the bottom. So thinking about what you want to do, if that you're playing that, boy, this is cheap, and you want to hold on to a portion of that, think about that beforehand. You've got to have your strategy and your scenarios in place. And managing part of the position, there's nothing wrong with doing that. What you're going to find is if you manage part of it and they continue to fall, you're going to be, thank God, and you're going to stay a little bit more mechanical with them. And if they bounce, that's a good thing because you still have some logs. So think about if you are, and it doesn't make it more complex. It just gives you more flexibility around sizing and what your objectives are. You don't have to have just one objective.
Sure. And yeah, I mean, I can remember, it's funny, yesterday's Fed event reminded me so much of the worst Fed event in my trading career when I was at the Board of Trade, which was like, I just had the worst mindset ever. I'd come off of, you remember that period where like we would have weeks of interest rates when they were at zero,
right,
and they were thinking about like the first hike, and they kept pushing it off, and we would have weeks and weeks and weeks of no action.
Right.
And so heading into this event, you know, I'm a young trader at a prop firm, and the older guys are like, well, you need to, you know, like tighten up. If the market is tightening up, then you need to like be a little bit more aggressive and get in there. And I'm like this 22-year-old kid, like, I don't want to lose all your money, when in retrospect, it wasn't my money to lose. So maybe I should have been more aggressive. But that's neither here nor there.
I wish I had you on my desk at that time.
But going into the event, I'm like, I've got it in my head. I'm like, okay, these guys want me to be more aggressive. I got to be more aggressive, whatever. And of course, it's the one event. They're not expected to hike or do anything. They don't do anything. But then the rhetoric afterwards is like, we're definitely going to hike next meeting. And the market just like blew out.
Right.
All of the spreads that I'm trading, knob spreads and tut spreads and tufts and fights and everything.
Yeah.
And I'm immediately through my limits on everything. And this kind of thing happens where I'm like, okay, I've got orders. I'm getting filled here, here, here. And then here, I'm like full boat.
Right.
And it's got to come back, or Gene is going to be tapping me on the shoulder, and he was a couple minutes later. And then it keeps going. And then, you know, inevitably, again, I don't want to make it seem like this always happens because, of course, theoretically, a market like this can go from 105 to 104 to 103 to zero if it wants to. But the way that markets, especially big liquid markets like this, are structured, there's usually a point where they pushed it too far and then it comes back a little bit. Yesterday, it was 103.5. And there were plenty of guys at my prop firm that didn't have my mindset, that, got some in here that weren't great, got some in here, and then were able to have a pretty good cost basis and wade through it.
And farm a little of them out.
But again, you know, whether it's you're at a professional firm or you've got just a retail Forex account or whatever your setting is, if you've got, let's say, $10,000, you don't have to throw it all at one shot here. You don't even have to, in a huge move like yesterday, two standard deviation move, you don't need to go full boat at any point.
Right. If you can get small enough, which is one of the great things with Spot FX, you can get really small, you can get incremental. And so you can dip and dip and dip without, you're not trapped in institutionally sized products.
Sure.
That, okay, if I've got two on, I'm uncomfortable. So that is really a powerful
And I didn't have
piece.
that at the
you were trading institutional products that had big.
I was like, I've got like
all
10 years and like 5 ZBs, and I am tracked.
That's a lot, and and all the mechanics go out the window. And let's not kid ourselves. And this is an important part for traders. You're going to take losses, and some of the most successful firms in the world work on a basis of 52% wins, 48% losses. And they trade enough that's a very lucrative endeavor. So the idea that we're not going to take losses is, and again, this risk-taking behavior is against human nature. We're not risk-taking. We're not built as risk. Well, you are. I mean, you went to Michigan. You have to take risk when you go to University of Michigan. I mean,
to survive, yeah.
Yeah, the possums, the squirrels, they'll kill you. You have to take. So as risk takers, we have to be mindful. Yeah, we're going to be wrong, and we're going to take risks. We don't want those risks to consume both our ability to be mechanical and to come back and be a participant on an ongoing basis. So keeping that in mind, that taking losses is part of, there is no magic carpet that only gives you win. Taking losses is part of the dynamic. How we do that and manage those strategically, how we think about them with the addition of statistics and math and the power that brings to it, those are all important ways for us to take that 50-50 and turn it into a favorable outcome. So this was a great example of that. But so today we've got a bounce back and everything. So if you wanted to sell them, you're getting a bounce.
Everything
now,
but
yeah, right. Well, and last night the BOJ came out. It's the one time they actually came out exactly on time. They were supposed to come out at 9 o'clock at night. They came out at 9:03.
That's no good.
They
came out on time. That's no good for yen.
I know. And I came out. I actually went to bed because I'm like, I know these knuckleheads won't come out till 11:30 or whatever. And I woke up this morning and at 9:03 they came out and they said they're not hiking rates.
Not inclined to hike.
Yeah, and left a very terse statement after
157.
That. Right.
Holy smokes.
So.
But yeah, give back across the
yen
board.
Taking
but
and
not
drubbing.
here.
So the crosses are really blowing out here. Euro yen, Aussie yen, the usual suspects.
Well, yeah, today's especially bad for these because you're getting the euro bounce and the yen weakness.
Exactly.
But yeah, I mean, even dollar CAD, a nice reversal here. That's again would have been a nice trade if you didn't go full boat into that first move.
So this looks like okay. Buy the rumor, sell the fact. We got the fact of the rate hike. Canada has been in an absolute tear from 136 to 142. What do you need to see as a trader to say that they squeezed out all the dollar Canada shorts. They got some guys long at bad levels. Maybe there's more legs to the downside of this crank. Because when you look at the daily, it's like, yeah, we're not off that much.
Yeah.
What do you need to see from kind of a structural standpoint? You need to see us get back down to those starting levels that we were at 1 o'clock in the afternoon before the Fed announcement to say that maybe the longs are finally trapped a little bit here.
If you're saying by the end of the week, then yeah, I would say like 143 here or like 104 half in the year, like pretty much where they went into the meeting.
Right.
Would be somewhere where I would have to feel some confidence. Because they can, this is the weekly chart here. They can, of course, take this dollar CAD market up to 145 or beyond. They have in recent history. Have they spent a lot of time up there? No, but like we just talked about, these moves can be so violent in leveraged markets like this that it doesn't have to stick around there longer than a handful of days. But yeah, to feel some confidence here, I would have to, and let's go back to that 15-minute chart really quick just to show people. I would want to be, closer to 143 here where they were before that number to feel some kind of longer-term confidence that this was reverting.
Right.
This was the blow-off top.
This may have been the blow-off top, and that's kind of what we're looking for in terms of tradable opportunity. The yen, you want to sell dollar yen? It's expensive.
All you want.
But it's not showing you, again, the congestion we're seeing, and go back to the shorter term chart,
sure,
because structurally that looks horrible. But the short one, all we're seeing is, again, that's congestion sitting right at those tops. So I can't get excited about selling this. Is it expensive versus yesterday? Absolutely. Versus a month ago? Hugely so. But I from my standpoint, if you want to dip a toe, you dip a small one. And you're mindful of, again, the question is, when you look at that, where am I getting out? 160? If you're going to sit in for that long, trade the appropriate size that it doesn't put a lot of pain in you. Size that down a little bit. Or be mindful that in terms of what I like to do is I like to look at, okay, I'm looking for a two-handle pullback to 155. But if I'm wrong, where am I getting out? And this doesn't, you just have to pick a spot because there's nothing back on the chart that gives you any kind of semblance of 157.5, 157.70. That's
and
all
we've
just noise.
we've seen the big moves and then the drift.
Right.
And so you have to make it price based, not like time based of like, oh, I'm gonna get in here and I'm gonna get this reversion today or tomorrow.
I'd look at the crosses.
Yeah.
I'd actually, in this instance, I'd be more interested in euro yen than just trying the yen top.
Yeah,
because it's giving you a little bit bigger extreme on the very short term. It's a little bit more interesting to me. But let's wrap it up there. Tons of stuff going on in FX. Lots of movement here. We'll see if we actually get some two-way action. We're starting out with a little bit of pullback of dollar highs, but we'll see how that goes. Coming up next, Tom Sosnoff, Tony Batista, Vanetta Logan. We'll see you back here tomorrow at 6:30. Have a great day.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others. How we respond to the most difficult situations is ultimately how we learn to build on our successes.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven. What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Morning, you knuckleheads. Happy Thursday to you both.
I'm gonna be busting into this.
I know. Beth got us
This is for our
presents.
super
What is this
producer,
all
Beth.
about?
This
What
is
this
so
all about?
nice. Tom, what did you get?
I don't know.
Hold it up, monkey.
So what's the protocol? Do you as me Lord and Savior, get to open yours first or last? What do you want?
Hold on, let me get my
I need to drink this right now.
What do we do? What do we do? How do we do this?
You do first.
I go first. All right.
You are the only child. So
We don't know.
yeah.
That's such. Let me
you're
not
so-
try to get it away from the mic for you guys. I'm
Yeah,
very
you're used to it.
I was told Cam, her daughter, is very jealous of this. So I'm hoping it's a curling iron or something. Oh, a little mini fridge. I love it. I love
Look
it.
at that. And
It
it's
goes-
red.
It goes well with my Mr. Coffee here.
She
I don't know
gives
if
you
can-
something hot. She gives you something cold.
A selfish gift.
They keep hot stuff hot and cold stuff cold, but how do it know?
You're gonna have the best desk ever. That's really nice.
Unbelievable. It's going to fit underneath here and great. It's probably going to
Yeah.
hum. You'll be able to hear it at home.
Selfish gift, so I don't have to bring you water.
I want that.
I know, right? I know. You wish it was like a Secret Santa, like you could steal it from me or
I'm
something.
taking that.
I bet you are.
No, that's Yankee Swap, not Secret Santa.
Oh, all right. Well,
'Cause you got your white elephant, you got your Yankee Swap, you got your Secret
All right, I'm
Santa,
gonna open up my
you got your dirty Christmas. It's a whole.
Tom's is a regift.
what?
And
Beth wrapped up something that she'd already given you.
No, I think I've given you this before. It's for,
I want the refrigerator.
do you know what it's for?
I want this
Nothing
thing.
says love.
For your nuts.
It's
What
for
is it?
your pistachios.
It's for your-
Pistachio. No, you put your pistachios on top. You stick your nuts in the. You don't have to take it out. You stick your nuts in the little space, the little hole. Don't
And
use
it's
that hole for
shells.
anything
There's
else. Just
Shells
your
in there.
shells.
Yes, to keep it clean.
I love it. That's a very thoughtful
That is
gift.
very
See, that's
nice.
a thoughtful gift.
And that
Very
benefits all of us.
Good job, Beth. Good job out of you.
I want the mini fridge.
Aw,
You can share. I just got the fridge, so I don't have to keep bringing Tony cold water.
yeah.
Good job. Good job.
You're literally a billionaire. You could buy your own mini fridge.
Thank you so much. I will cherish this for the rest of my life.
Better
You're gonna
use it today.
you're gonna use that every day.
Starting today.
Starting today is right. That's right.
Can I tell
great.
you, you were not here yesterday, but I was in office with Tom, and we had
I
like
was here in spirit.
we had Asian food for lunch, and they brought us like pot stickers, right? Like fried
I love pot
stickers,
stickers,
and then they had like a soy
Yeah.
like, dipping sauce or whatever. When I tell you, this man, a line full of people. Most people, take a little of the food, put the pot stickers on your plate, you scoop out the sauce, and you go on your
Hold on,
way.
what did I do wrong?
So Tom takes the pot sticker and in the communal bowl
No,
just
he
dunks
dips
it.
it.
And he's like, there's nothing wrong with this.
There's nothing wrong with that. I didn't take a bite of it,
But it's the optics.
You wanted to.
It's the
but I
optics.
didn't. I just took a pot sticker, dipped it in, and put it
In
on my
the
plate.
communal sauce.
But what else do you do with
You
that?
take a spoon and you put it on your plate. And
Said
then
nobody ever. You always dip a pot sticker in the sauce.
No, not in a
communal
trough of sauce
Not
that
in
everybody's
sauce
going to
meant to feed
use.
100
I
people.
don't. There's nothing. I'm not touching the sauce.
So I have a question for you. How did you get the pot sticker in the sauce?
Okay.
With your finger, right?
I picked up the pot sticker on one end. I dipped the other end of the
Yeah,
sauce, put
no,
it on my plate.
no.
What is wrong with that?
I know.
I am
You
calling
can't
the
do that.
CDC.
Now, if you use chopsticks or a fork,
If I used whatever, I just took with my hand. I picked it
no,
up.
there's no way you have the coordination
Oh my God.
not
Yeah.
to get your fingers dirty.
Right? Thank you.
Fingers
And
do
just the
not touch
fallout
the sauce.
from,
Yeah.
from everything. of
Yeah,
all just,
yeah.
No,
There's
fingers
no
didn't touch the
hairnet,
sauce.
nothing.
And then she starts going ballistic.
Oh, I'm glad you're
Because
here.
it was nasty.
Somebody has to speak up. People
Because
are
it was
afraid to speak
nasty,
up. Somebody has to
right?
speak up.
Yes.
She's like, I'm like, you don't even eat pork.
Wait, were there pork in those?
That were pork pot stickers.
Oh no! Well, it was delicious. I thought it was chicken.
It wasn't chicken. Yeah, positive. It wasn't chicken. It was pork.
It was delicious.
Oh my God! You ate a little piglet.
That's because
Oh.
chicken pot stickers.
Now. It's fine.
Chicken pot stickers are the worst.
Chicken pot stickers are good.
No, they're
anyway.
gross.
No, they're not.
They're
All right.
gross.
So what'd you do last night? That was
I ate
great.
pork pot stickers and I stuck my finger in the whole thing.
I'm just telling you. I have met your mother, and
That's not cool. Yeah, she
your
didn't raise
mother
you
is
like
a
that.
Saintly woman. She is
Right.
truly a saintly woman, and I don't really understand how this happened.
Yeah, I don't know either.
Right?
I don't know either. Something happened.
I did nothing wrong. But I actually, surprisingly, I'm one of the few people that really like that lunch.
The K-Fire, it's not my favorite.
I really like it because, not because
It's like a big rice bowl and 2 pieces of chicken on there.
Two pieces of
But the hot sauces are hot, and that's what you
And
like.
hot
there's some
sauces are hot
topping.
and the toppings are great.
Yeah.
Or were you not hungry like an hour and a half later? Because I was starving like 2 hours later.
No, I mean, I had dinner, but I didn't.
Yeah,
it's
it
fine.
just. But today, Fry the Coop though.
Love fried.
Love Fry the Coop. So
Yes.
super jazzed about that.
Super jazzed.
Yes, and it's a local business, and the guy Joe that runs it, super nice. Couldn't be
Super
Very
nice.
nice. Can't say enough nice stuff about him.
What'd you do last night? You were on the clock. Like, you know Christmas is in like 6 days, homie.
I know. I was
Okay.
I was actually out working last night, so
You were working the corner? Where were you working? The docks? Is it
What do you got? Like one of those bells that
Yeah.
you ring or something like that?
week? When
I have a
were
night
you
job.
working?
I have a night job. So I was
Well, you
working.
don't have a night job. Your coffee shop is closed at night.
I know, but we were working on some stuff.
Oh, okay.
They were cleaning and scrubbing, deep cleaning.
No. We were just fooling around, making some plans for the future.
Plans for the future.
Coffee shop. Maybe we're going to take it global. Who knows? No, just
Listen, can I just have a little name plaque on the side there and
No.
a seat in the corner?
no.
You have a drink named after you.
Oh, yeah.
What?
Name a drink. The
You
bat.
have the Bad Bat.
Do you know?
Bad bat.
So what they do there is because I have nothing to do with this, but what they do is that each barista has their own favorite
Drink.
drink.
Yeah.
They put it on a thing, and then they
Put it on a thing.
put it on a- they
This
put it on
is
a
how you
chalkboard
this is
on
how
their
you ask
menu.
people to do things for you. They put it on the thing and then the drink.
Pick a
put it on
noun.
chalkboard.
Yes. It's on their menu.
Yeah. So no, we were tasting toast last night.
Oh, what kinds of toast? Sweet, savory?
Sweet and savory, lots of different.
Let me just tell you something. Your supply chain can get stopped You got one funnel, one point of entry.
Ever since we started selling toast, there's like 20 people come by trying to sell us bread now.
Sure.
I'm like, no, I'm loyal.
Yeah, you go
Locked in
do
with
it.
Jimmy.
You go do it. You go do it.
I
See?
go, I'm
Locked
loyal.
in with Jimmy.
I go, I'm locked in.
Yeah, you go do it. You go try. You go try. You shut that operation down. One Molotov cocktail. Forget about it.
Okay, so but when are you gonna get your shopping done? Like I keep pressing this.
I mean, I got this whole weekend, and I
thought you were gonna go
got
to
a list?
Indiana. I thought you were gonna go to Indiana. I thought you were gonna go to the football game.
Yeah. Oh, do all these things. We're gonna go tailgating too.
You're all these pipe dreams.
somebody
Yeah.
DK'd that idea.
Oh, good. I'm glad.
Her exact words were, "I'm not sitting outside in the effing cold."
Yeah.
Right. Yeah, those are facts. It's not pleasant.
She's like, "It's supposed
There is no luxury suite.
to. It's supposed to snow. It's gonna be 25 degrees. I don't care that much about Indiana football.
Indiana, Notre Dame, right?
Yeah.
Nice.
Yeah, the best seat.
My son-in-law's going. You want me to get you a shirt or something like that?
I'll take a shirt.
Yes.
I'll take a thank you. If there's a commemorative, I'll pay you back. But yeah, if there's a
I mean,
commemorative.
my
back, I don't
wife
mind.
went last year to Notre Dame.
You have to reveal your size.
She went to the
we're
Notre Dame USC
small.
game.
Children's small. I get it. What's that?
Corinne went to the Notre Dame USC game last year.
In December?
And it's late. It's like November.
Oh, okay. Yeah, November's. Okay.
Yeah.
This is riveting. Pat, what'd you do last night?
Stayed up until 11 last night. Didn't get
Oh
home.
my God, that's
until
your bedtime.
10:15, 10:20. We had a hockey game against Winnetka. 5-2. We took them down.
Whoa.
Winnetka, I mean, those are
Battle of
No,
the
it's
Trust
Winnetka Wilmette.
Funds.
They're a very good team.
Battle of
They're-
the Trust Funds.
Yeah. Yeah. Stop
Battle of the
stealing
Trust
my
Funds.
joke.
That's right.
I like
Steal
that.
my joke, yeah.
Battle of the Trustafarians.
Yes.
Yep, we took
Sweet.
Pete's alma mater down. That's right, 5-2. They're ahead of us in the standings. A good game.
Well, if you can't beat
Low
them,
shots on goal, only
can't beat
15.
the Molmats at hockey, you have no chance.
That's right. We took
Wait,
them
when is Vinny on Christmas break?
Friday.
Tomorrow's the last day?
Yeah,
The last day of
tomorrow.
school? Okay,
Yeah,
okay.
he's got 2 tests today. Too big.
Because he's been
Fingers
studying
crossed.
so hard on the slopes.
Fingers crossed.
Yeah. Hopefully his skis will get the bindings put on them, and he will have time to be able to get on his run on Friday. So
Oh my God.
Mm-hmm. They had to do a rush job. Santa had to do a rush job.
Oh my goodness.
Bindings are so good today nowadays compared to like when we were kids. They were so bad. Now today they're so good. It's
So good, small, lightweight, and everything else. They're
They
just
pop in, pop out. They're so easy.
Yeah.
When are you going to Utah?
I really.
When are we going to Utah?
Yeah, when are we going to Utah? Actually, I'm going for my birthday. I'm going in February.
Another vacation?
Yeah.
I really want to go this year. I just have to figure it out with some things that are going on.
Oh my God, you're so busy. Nobu Thursday, spa, and then Vegas.
I got
So much going on.
My last Nobu.
Get my head did.
Yeah, I didn't really love it.
Are these real problems? I'm so sorry the last time you went to Nobu that you didn't love it.
Vinny loved Nobu.
I hate it here.
I did. He loved Nobu.
I mean, it's good.
He loved the Wagyu sliders. He loved Nobu.
Just didn't love it.
Oh,
He loved it. But we were in Vegas. It was fun.
Oh, Vegas! I've been to the one in Caesars.
Yeah.
Then we went to the one in some other hotel, Hard Rock or something.
Oh.
It was fun.
Well, jokes
Yeah, I
on
was with you. Yeah.
Jokes on you. I got people in the chat that are willing to buy me dinner in Boca. They're like, Vanetta, come on down to Florida. I'll buy you dinner in Boca. So I'll see you losers later. They're gonna take me out the game.
You should go out. You should.
I should go down.
Why
to
wouldn't
Boca.
you? You should. He's right.
Kill in
Right.
Boca. There's not a lot of people like you
That's
there.
right.
Perfect.
That's it. And what kind of people are those? When you say that, a lot of people like.
What?
Huh?
You mean dynamic, sassy,
Yes.
intellectual females?
Yes.
Got it.
Hey, I watched the Aaron Rodgers documentary. So
Well, how was it?
You didn't have to. It was interesting. Like I told Jessica, who works here, over lunch, because we always talk about like what we're watching, and she's like, "Why?" and because I was curious. Like I think because I like
have no
documentaries.
interest.
I like hearing people's sides of the story, and I don't know. It was interesting. I don't know that I like recommend it. I mean, but if you're into Aaron Rodgers, then
I'm definitely not.
Yeah.
fine.
I hate Aaron Rodgers probably more than any other athlete, but not because he's just a jerk, but because he killed the Bears for so many years.
Yeah. I get
I mean, every Bear fan, there's no way you can watch an Aaron Rodgers documentary.
I'm a Bears fan, and I watch. But aren't you just like
No.
intellectually curious about when he goes into like a little tent in
No.
Costa Rica
No.
on ayahuasca?
No.
Like I wanted to see it. Like
No,
I had questions.
no,
Okay, I'm just maybe I'm more open minded than you are.
you're fine. Aaron Rodgers ripped my
Hard out so many times.
heart out so many times, destroyed, like ruined so many Sundays for me.
Yeah, there is a lot of footage of the Bears, but it's like good like vintage footage, like right at the start of like Urlacher and Briggs, like when he first came into the NFL, and I was like, okay, those were good Bear, like so I did enjoy that brief.
Trust me,
snippet.
Urlacher and Briggs hated him too.
Right? Yeah, but
Yeah.
but then he owned us, and then it was over.
Yeah.
He did own us when he did that freaking paycheck thing that he
Discount
owned
double
us.
check.
Every time he'd be in the end zone, I wanted to rip his
Hate
heart
that
out
guy.
right through the screen.
Hate
I
that
know.
guy.
Yeah.
Yeah. I mean,
No, I don't watch Bears football anymore because they stank. So it doesn't matter.
Well, I don't know.
That's
There
what's
was one
on.
funny part. It kind of reminded me of you, Tom, where Aaron Rodgers, while on a private plane, tries to impress a young woman by explaining to her how he can do the square roots of large numbers.
No.
And I was like, this man has no game. He's like, do you know what the square root of 25 is? He's like, let me tell you how I figured it out. And I'm like, what are you doing? See, now you're interested.
no, I'm not. No, I'm really not.
Tom's like, no, I'm
No.
now I'm
No.
into it. We are having our office holiday party here today. Are you excited?
I saw there's like White
booze in the
Claws,
fridge.
yeah,
Yeah.
booze and stuff like that with a big sign on it.
That is embarrassing.
What?
It is embarrassing to have an office holiday party in your office.
Our,
Yeah,
our budget,
that's what we've become.
Our budget's $100.
That's what we become.
We spend a lot of money on lunch every day. I'm telling you right now, that is embarrassing. To have a couple of cases of beer in the refrigerator, I will not be there too. What are you getting? Domino's?
No,
Each department gets to split a slice. Because we're on track. Yeah.
And we are on track.
We are on track.
We are on track.
So we all get to split a slice. So you won't be here.
I will not be
You
here.
won't be here because Bat loves an Irish goodbye. So,
No
I will
doubt.
not be here this afternoon.
well, I hope you can join us right now because we got some good programming for you on this thrilling Thursday. You guys, we are almost done with this week, but we have a lot of great content for you at the top of the 8 o'clock hour. Fan favorite Trades from the Research Team, the world's greatest financial think tank, presents their trade ideas to Tom and Bat, which is going to be interesting because of the massive move yesterday. It'll be interesting. I'm sure they had to reconfigure some of their strikes or some of their trades because, if they had picked out something at 9 o'clock in the morning, it was vastly different by 2 o'clock.
That is true.
And we got Victor Jones in the house. Perfect timing to talk about everything that is going on. What are you talking about with Victor at 8:40?
I don't know. I didn't have a chance to catch up with Victor yesterday because we got really busy in the afternoon.
Yes, I understand. That is fair. Well, Victor will be on at 8:40. That is always tune-in worthy. And then 9 o'clock, a market measures profit targets by Delta for zero DTEs. That's part of our zero DTE series. If you miss any of that, you can search at the top of the page. If it's something you want to brush up on the holiday break, go for it. Maybe go outside, touch some grass.
Yesterday was I got a couple of emails from people that where the zero DTs saved their day because they bought some puts for protection.
Sure.
But I think in general, the zero DT yesterday,
Yeah, that had to be. That's the day you're basically full loss. I mean, unless you did something heroic. Yeah, for sure.
down 200 in the S&Ps. Bad as a guess.
Yep.
And then at around 9:30, live from the Tasty Trade Desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. That is headed your way. And then tomorrow, hashtag Fan Friday, one of the last Fan Fridays of the year. We are come spinning out of the turns. But if you have a trade idea, we would love to hear from you for tomorrow's show. Why are you looking at me like that?
I'm not doing anything.
Why are you eyeing her up and down like that? Like she's a pork chop or something like that.
He came out. I was waiting.
One of those pot stickers.
I was waiting to talk to him because I needed to show him. I needed to show him something, like an email, and he's just like staring at my sweater. It's just like such disdain on his face, and I just had like Christmas penguins on my sweater. I'm like, dude, they're just penguins, man. Like
He's more like a Grinch kind of guy.
Viscerally angry about my penguin sweater, which I got so many compliments on yesterday.
Oh, by the way, I think we have a new double-headed sweater for Christmas season. We should put that on.
I need that for my social video. Perfect.
I think I have that. I think I have it by my...
Yeah, it's in. Yeah, I know where it is.
Oh, you know where it is?
Yeah, I'll get it.
Come on, it's tradition. We got to put it on. This is when you do the reach around. Come on.
I need the views. I need the
Omaha.
views. Hey, that's the run of show for today. Do you guys want your daily dose?
Sure.
Hit me with my theme music.
Like good Santa, bad Santa.
Our leading story, breaking news.
Across
the wire.
This just in.
Top story, just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It is December the 19th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings, Mr. Bat?
Ooh, FedEx?
Yes.
This is it. FedEx, Nike, Carnival Cruise Line, I believe.
Ooh, okay.
Yeah.
How are the cruises doing going out of business, like Tom said?
They are going out of business soon. But you can get your TikTok on the seas because it's open water. Anyway, Diamonds dividend, and more importantly, Spider dividend. It's going to be a big dividend, probably $1.50, $1.70, something like that.
Probably won't come into play.
I don't know. We just took out the monthly range. I don't know. SPY dividend, it's a big one. It's not like $170 is a big dividend. Just remember, if you're put, I know you have calls. If the corresponding put on the other side is anything under $1, 50, 60, 70, whatever the dividend's going to be, they don't really post what the dividend is. But if anywhere in that probably have some sort of dividend risk. The smaller that number, the more dividend risk you have. So take a look at it.
Very helpful information. Thank you, Bat. Hey, getting into the First headline of the day, why stocks and bonds slumped and market volatility soared after the Fed meeting. Fed Chair Jerome Powell cut interest rates by 1/4 point and indicated fewer reductions ahead. He said today was a closer call, but we decided it was the right call. The Fed indicated they would probably only lower twice more in 2025. I don't care what the headline says. What do you say about what the market did, what it did yesterday?
I think it was more about the budget talk too. I mean, I think it was a little bit of a combination of
Yeah, I don't think there was any surprises. I mean,
they said what everybody felt.
On this show, we've been talking about he followed the bond market, and the bonds are down to 114 right now. I don't even know how they can do two more.
You know what? This move, I mean, I know we've been talking about it ad nauseum for the last month or so, but this is what happens when you don't have a healthy cyclical market. A little up, a little down, a little sideways, a little more up, more down, whatever.
Right.
When you get that kind of euphoria, and you get this kind of move. So anyway, sell a little premium on the close. Obviously, the right play. /VX got almost up to 20. It's
That was my next question.
1870. Yeah. So those who can do, those who can't, teach.
What are you doing to your bond position? What are you doing to your indice position? Are you doing anything in volatility?
He's buying bonds. He's already bought some and flipped some.
I'm long bonds. It's not good. But other than that, we're just.
What about like a S&P, NASDAQ, or S&P Russell? Like what?
We're long Russell. We're short S&Ps, but it worked yesterday. It's not going to work this morning. But I didn't do anything overnight. I just adjusted everything this morning.
Okay.
The only thing that's really sold off big was probably gold this morning.
I will get to that. I got a couple more stories. What about pure volatility? Are you doing anything in like VXX or?
No.
Okay. I don't know. I'm just asking.
I mean, I'm short vol, but I don't like it.
Okay.
And I didn't add to any short vol.
Okay. Hey, keeping it moving. Whoops, too many tabs open. The Bank of Japan met last night for its final rate review as Trump risk clouds outlook. Bank of Japan policymakers met to decide whether conditions are falling into place to raise interest rates at their final meeting of the year. What are you doing in the yen?
I don't know about their interest rates, but they're killing their
Asia,
currency.
Yeah.
They're killing their yen. It's down almost. Yeah, it's down almost
1.25, 1.5, right in between 1 1/3.
But 900 bips or whatever. But it's.
So I don't know if it's like a ripple effect from like what the American markets were doing, or if this is from their policy.
It's
just Japan.
Matching its old low pretty close back in July.
Yeah, all the other markets, all the other currencies are higher this morning against the dollar. Only the yen's lower, and we have a pretty big yen position on, so that's a little ugly this morning. But yeah, I think this is, if you're not in it, I'm not adding to my position here, but if you're not in it, you should get in it here.
Also, Bank of England splits on rates and outlook as they keep borrowing costs on hold. Not sure if you're doing anything in the pound or
I am.
Euro,
We're long the pound.
Okay.
So it's up a little today.
Yeah, it's up a skosh.
Yeah.
Let's talk commodities. Let's get into oil first. Oil fell last night on demand concerns after the Fed signaled slower easing ahead. Brent futures fell 30
It's unchanged.
cents. Okay.
Yeah, it's back to unchanged.
I am not psychic. At some point last night, I had to turn in the slides for this morning. So here we are.
That'll teach you.
No, are you doing anything in oil?
Have you ranked at 21? We haven't really done
Market
too much.
0. We've been out since it dropped under 20.
What about natural gas?
We have it. Natural gas this morning.
Up big, up 12 cents, 12.5 cents.
Yeah.
Nat gas back near its recent highs that it's had back in last month.
We're a little long natural gas.
I'm locked in a sealed room with the two of you. I know you have natural gas. Let's get to gold. Gold fell to a 1-month low after the Fed signals less easing. The Fed fell to its lowest price in a month. New quarterly forecast showed several officials penciled in fewer rate cuts, sending gold lower. What are you doing in gold?
We came in flat to this down move made us a little bit long, so we rolled down calls already this morning.
Gold down 36 cents, another big move, although it is about $20.
$36, yeah.
Off of its lows.
Oh, $36. Yeah, that's
$36. I said cents. I apologize.
Oh, no, you're good. What about silver or copper or any other?
Silver's down big, too. Copper is...
Silver's down even more on a percentage basis, full point and change.
Copper's down big. Gold's down big, silver's down big.
Are you?
Commodities are taking it on the chin.
What are you doing in the other metals? Nothing, or?
I mean, I'm short premium in all of them. I'm just adjusting. I mean, our silver. Yeah, I've already rolled down calls once today. Got to do it again.
Double up.
Yeah,
double up to catch up.
Don't love it.
Hey, here's an interesting hypothesis. Can Coinbase get bigger than Charles Schwab in 2025? I guess Coinbase could surpass Charles Schwab in terms of market cap, and it would become the largest brokerage firm in the world. What say you? I didn't think.
That's just stupid. No.
Why?
It's just idiotic. The answer is no.
Okay, but do you not want to have
Charles Schwab? I don't, because Charles Schwab has what, 7 trillion in assets.
Okay, I'm talking about market cap though.
I understand.
I'm talking about assets under management.
I understand, but you can't have one company that has 7 trillion in assets and have another company which the entire marketplace of everything they do is only like a couple $1 trillion. No, it's not.
Well, market cap for Schwab is about 2 times right now that of Coin.
Yes,
So
but
to
this
put-
headline says that it could happen.
This headline is written by idiots. No, it's not going to happen.
Just putting the math out there.
Can we talk about Bitcoin though and Coinbase, please?
Sure, we could. I'm going to go in reverse order this time. Coin, the stock, is up around $10 or $11, back to $290, and Bitcoin itself is up around $1,500, back to 102 and change after trading under 100,000 down to about 99 or so.
Okay, so that's a nice. That's
coming
a nice
back
little
up,
bump.
like the market's coming back up too a little bit.
Tom, what are you doing in Bitcoin and Coin?
We went home flat. So we're gonna, I guess, on the opening day, we'll be a little bit short just from the move over, just the move up $10. But we went home flat.
Okay. A couple of earnings from last night. Micron shares plunged 12% in extended trading after the chip maker issued weaker than expected second quarter guidance. First quarter revenue was in line with analyst expectations, while earnings did top estimates. Stock was down around $12, let's say.
Yeah, it was down even more. Micron's so weird. It was stock. That stock went up from every earnings it misses. It's like IBM. Every earnings it misses, stock rallied all the way up to 110 this week.
You are correct.
And now it's
92.
Oh, it's 92?
Yeah.
It traded 87.
Down another $10 or $11. Yeah.
Well, now it's probably inside the expected move.
Yeah.
We sold this 87.5, 130.
Okay.
I mean, I think we'll be okay.
It's close.
Yeah, we should be fine here at 92. At 87, it would have been a loser. At 92, it's probably a winner.
All right, we'll see what
Nothing
happens.
much you can do.
Also showcasing Micron's new logo.
That's a really bad logo.
Okay.
You don't like it?
No.
I mean, it's better than their other
No.
one. No? Okay, great. Oh,
No.
so sorry.
Do
So
not
sorry,
like
my
it.
lord.
Do not like it. They should have paid somebody to actually help them do a logo rather than try to do it themselves.
Okay. Hey, Nikki was in yesterday for Johnny Trades, and I love when Nikki comes in because he's into stuff that you guys don't know. No, I'm meaning this sincerely. Like, I'm just saying he knows about, like, different niches and aspects of the market that you guys, maybe because you're so traditional, aren't trading. And especially when Scott Sheridan read the top, tickers, you're like, what is this? What is this? And it turns out Nikki was like, these are all quantum computing stocks. And even I didn't. I'm trying to give Nikki his flowers, his kudos, because not even I was aware.
Kid works hard. I mean, he
does.
Listen,
he's on track.
It's just they were just the flavor of the month. And yesterday, everybody that was in the quantum computing stocks got annihilated.
Well, quantum computing stocks
Okay.
are flying, and investors
We're flying.
brace for the long haul. Okay, well, all right. Are you going to be cantankerous today? I did
it's-
love
it's
how
just
on
such a
Twitter
stupid-
people were we invented like a Grumpy Tom.
Grumpy
playset.
Tom, it was so
Grumpy
good.
Tom playset. It was so good.
It was awesome. We had I said, Grumpy Tom, what accessories does he have? Then people goes, oh, he's got a Grumpy toast store, and then he's got it's just all
Grumpy
good
Tom
stuff.
in the Tesla.
Yes,
Grumpy Tom
yes.
yelling at Vanetta.
Right.
Yeah, Grumpy Tom trying to get up the stairs.
Yes,
People
it was
are
awesome.
So funny.
It was awesome. It was awesome.
I am not grumpy.
Okay, no, because this is pleasant and engaging.
The peach.
But I just wanted to talk about a couple of quantum computing stocks, and if there were any options, and if there were just any possibilities, because like Scott said, they were in Tasty Trade Zone top trending tickers. So I think one was like the RGTI.
What is it again?
RGTI.
Yeah, I don't know.
I know.
I don't think that's I don't know if that's a symbol. RG is in George.
Yeah, T is in Tom. I is in. Yeah.
Yeah, you're right. $10.50 some odd cents. I mean, this is a stock that was $1.50.
Yeah.
This is a stock that did not have my name on it. It was $1.50 like at the end of November.
Yeah.
It's $10 now.
Yeah. How much?
I know we're early into the whole process, but
Okay, but
how much do you want to buy?
right, I don't.
here's another one though.
have my name.
This was up decent yesterday. QUBT.
Ooh, one of my favorites.
QUBT. Qubit. Qbert. Do you play?
Yeah, this one's even worse. It was basically zero month
And now
a
it's
half
25.
Ago. Now it's 25. That is correct.
Don't worry, these are great buys for the long haul. Just buy them now. I guarantee you, in 75 years, you'll get back to $25.
It was
But
worth.
if you
It
want
was worth nothing. Now it's worth $1 billion.
If you want
I
something,
guarantee you, in 25 years, it'll be worth it because that guy right now is in the back of a deli.
What's wrong with the back of a deli?
I'm just telling you, that's what this quantum computing thing is.
Well, it's more exciting than trading like a Google or IBM.
No, it isn't.
No, it isn't. No, it isn't.
No, it isn't.
Okay. Well, are you trading IBM or Google? Let's talk about that then.
I am not trading IBM or Google right now.
Okay. Well,
Google has an IV rank of 44, though it is starting to creep up. It has earnings February 4th. If you
might have done something for what?
Option trades today, every Tuesday and Thursday. Can't do much better than what we did on Tuesday, but don't talk about my Tesla position. That one's been a worry.
Yeah.
Yeah.
Well, hey, in other news, nuclear startup Oklo and data center operator Switch are aiming to deploy 12 gigawatts of new nuclear power by 2044. We'll all be dead by then. I don't even know how to pronounce this. I don't know if it's OKLO or if it's just Oklo. Anyway, they would develop, build, and operate small nuclear plants, and then they would sell the electricity through this company called Switch. Not sure what you're doing. Stock up maybe $1.30 yesterday.
Yeah, it's going to be like home nuclear, right? Just put a nuclear reactor
you put it right next to your Tesla charger.
Yeah, right. Exactly.
Yeah.
Everybody's going to have their own nuclear reactor.
Yeah.
Why not?
Nothing can go wrong.
Yeah. Anyway, are you doing anything in OKLO?
No.
Okay. Nikki said bless you for the shout out in the chat. See, he's a good boy. That's very nice.
His mother raised him right. I don't know. I tried.
He's very nice, and he suffers the same way that I suffer, and we are bonded in our trauma. That's for working for you. OpenAI. This is weird. So OpenAI is going to make ChatGPT available for phone calls and texts. Yes, your Nana, I'm not making this up. Your Nana can now call 1-800-CHAT-GPT, and you get 15 minutes of free access. Then it costs $2.99 a minute. No, I don't know how much it costs. Any global user can message the number via WhatsApp.
Sure. And what do? Do you just talk into it and ask?
I guess so. I think this would be good for you.
Oh, great. Yeah.
I mean, you just scream out for people to...
You can call Santa. You can do anything.
Yeah, you can do anything.
It'd be great.
Yeah, there you go. You can't trade OpenAI, but you can trade Microsoft. What are you doing in Microsoft?
Yeah, Microsoft, Mr. Softy, IV rank at 39, earnings February 4th again, trading 441, up about $4 or $5. What are you thinking?
I'm not thinking anything.
Brand new developments for you, Tom. The U.S. Supreme Court, yes, that Supreme Court, has agreed to hear the challenge to the TikTok ban. Did you hear this?
Yes, I did.
So
But
it's going all the way to the Supreme Court,
first of
baby.
all, for the 100th time, the TikTok's never being banned.
It is a law. I don't have skin in this game, but I'm telling you, this isn't an executive order. This isn't just a whim. This was a law that was actually passed.
I've been on the record saying TikTok's not going to be banned. I'll stay on the record.
Blue Horseshoe actually says TikTok's not going to be banned.
Oh, what do the prediction markets say? Do they say anything? Does Kalshi say anything about it?
No idea.
You know what? I never looked there.
I don't know. All I'm doing is I'm reporting. All you're doing is talking out of your ass. So I'm going to get back to my reporting.
No, actually, the reporting is the reporting
the
part.
facts are the case is going to the Supreme Court. That's a fact.
Okay, that's a fact.
That's demonstrably true.
But that has nothing to do with the question. It
does have a question because what the Supreme
is TikTok going to be banned? The answer is no.
Okay, but then that's predicated on the Supreme Court's decision.
Not really.
Okay. Do you want me to play the Schoolhouse Rock video about the 3 branches of government?
Please.
How how this works?
For the 100th time. I'm just
Okay.
gonna go back to this when it all is like, oh yeah, okay.
You can't trade TikTok, but you can trade Meta. What happened to Meta yesterday?
Got whacked.
Okay.
I mean, but every stock got whacked.
But every stock got
yesterday,
whacked. The Nasdaq was down 500 points.
Yes.
Yes.
So, but how did you have a Meta position, or
I did not. Oh yeah, I did, and it actually worked out quite nice.
Okay.
Meta up $10 back to 607. Certainly not where it started today, around 620 or something.
I would like to see Meta. My target in Meta is 500.
Well, you also made a wish yesterday for Tesla.
I want
and
Tesla to go down
stock down
275.
around 9-10%. It fluctuated. It was down 8-10% yesterday. And then this headline says Tesla stock should be bought on pullbacks for all these reasons. And then he gives.
Who's this analyst?
I'm not going to tell you, so
would-
you can yell at them before Christmas.
I would.
Ruin their family turkey?
I would sell Tesla on any rally. I believe the exact opposite.
It's Baird analyst Ben Kahlo. He's still bullish on the electric vehicle giant. Stock was down 8.28% yesterday. So.
Fine. It's up $10 pre-market today. Tell him he can buy all he wants right here at 350. It's
Yeah, you got me to roll
450.
down calls yesterday. I'm so mad.
450. Way better than 475 or 480. So tell him to go for it.
So wait, Bat, you are still in Tesla?
I am still
you
in
still
Tesla.
in
IB
Tesla?
rank at 93 is in, but still really
I'm in Tesla.
high.
I'm short it though.
Oh, okay. Well, I know.
Yeah, I'm
that
sure
you're short
Tesla
it.
too.
I'm looking for the stock to be $100 lower.
Okay. All right. Well, good luck with that. Hey, Apple is reportedly, blessedly, abandoning a plan for iPhone as a subscription. I hate everything about this. It was a way for people to pay a monthly fee to get a new iPhone every year, kind of like how you would do through like Verizon or AT&T, but it would have been direct through Apple. They first started concocting the scheme to change the way people buy phones back in 2022 because their planned obsolescence wasn't working fast enough. Where every time a new phone comes out, your own phone starts working like it becomes less functional, but people still weren't upgrading fast enough. So they were like, hey, well, maybe if we made people put them on a set payment thing and then made our iPhone a subscription and then just gave them a new iPhone every year. But the idea has been nixed. It was just trying to rope more people into getting locked into the Apple ecosystem. What are you doing in Apple?
In Apple, no position.
You should be talking to Nick. He got a new phone yesterday. You should ask him how the experience was. I don't know. Unchanged, 248 and change. Ooh. Apple. Even with the market up almost 1%, Apple unchanged.
Tom, I thought you were going to get a new phone.
I am. I just haven't had a chance.
When? You should Vecchio it. Like, you should get it for these tariffs hit.
Yeah, absolutely. Absolutely. You got to Vecchio it.
You gotta
I love
Vecchio
that.
it, yeah.
I love it. That's right. You got to do that, Sam,
Although,
before the tariffs hit.
he
sure.
is not wrong, because I did see on TikTok that people were like, hey, go to Facebook Marketplace because rich people are replacing their appliances and you could be getting like some Bosch, like dishwashers, honey, for good
If
prices.
TikTok is telling you this, they're trying to sell you something, okay?
They're trying to sell you appliances made in China.
Right.
Don't you see?
Okay, it's all
part of a larger scheme. Amazon workers are on strike at multiple U.S. warehouses during the busy holiday season. Thousands of Amazon workers walked off the job in the crucial final days, including the warehouse here in Skokie. Was in a barbershop quartet, Skokie, Illinois. The International Brotherhood of Teamsters, damn with the Teamsters, says the facilities in New York City, Skokie, Atlanta, San Francisco, and Southern California will join the picket line. Amazon, it says they say they're striking because Amazon delayed talks with them. What are you doing in Amazon? Not good. But rights, so.
I think we're pretty flat here. We have a little bit of I would guess we went home a tiny little bit long, but
okay.
I don't think it's much.
Amazon up 3 earnings in February 6th. You'll notice a lot of stocks are starting to come back with their earnings in February, all the stocks that we look to trade.
And when I tell you, I was such a happy little girl when I saw that my Amazon order shipped last night. Because I'm affected by that Skokie warehouse. Anyway.
They do a good job, Amazon. I gotta give them that.
Yeah. Tom, so you don't have an Amazon position?
It's tiny. Yeah, it's tiny. We're a little bit long.
Hey, here's some good health news. Merck is going to develop a weight loss pill from a Chinese drug maker in a $2 billion licensing deal. They said, Merck said that they had snagged the rights to an experimental weight loss pill from China. Sounds like the start of a sci-fi movie. The company is going to give them a licensing deal. Hansoh Pharma, the deal is worth $2 billion. Several other drug makers, including Pfizer and Roche, are also racing to develop more convenient obesity pills. Not sure what. I don't know.
We here at Tasty are going to develop a weight.
I don't have. We don't have a Merck position right now.
Okay.
We don't usually put on too many pharmaceutical type positions. Merck IV rank is 64. Earnings February 4th. Stock's actually down small, nickel or so. Merck can't get out of its own way. It better start saying whatever it wants to say and do it quick.
What's Lilly doing? That would be, I think, the biggest.
Which one?
Lilly, LLY.
Yeah, Lilly's always up in the leaderboard for the last few days on IV rank at least. IV rank is 44. Stock looks up small, but it's a $760 stock.
Woohoo!
Yeah, defined risk.
That's bonkers. Hey, the new Nike CEO is going to get his chance to shine as he lays out his turnaround plan. 2 months. Could you imagine 2 months into your job? You're like, okay, well, I guess I'm stepping up to the big stage. So Elliot Hill is getting his first shot this evening after the close to convince investors that he can rescue the flailing sportswear company. Like, he started at the company, like, basically like as an intern, like worked his way up. It's kind of a cool story. So then he was gone, but now they brought him back. A lot of companies are bringing back people that had worked there before to turn it around. Nike beleaguered. What happens? Are you going to trade it?
I have a position on there. We're long.
Okay.
We need the stock higher.
You need this guy to talk his ass off.
He does. Nike trying to cooperate up almost $1.
Nike has missed earnings the last at least 2 or 3 times in a row they've missed.
Sure.
So we're playing to the upside.
Okay. People are optimistic about this, so we'll see what happens. Frontier Airlines has launched its new Go Wild All-You-Can-Fly Pass for a limited 2-day promotional period, offering customers unlimited travel. Keep in mind it's still on Frontier, but for $299. The sale, though, was only valid through yesterday, but the pass was used for flights from May 1st, 2025 to April 30th, 2026.
$299?
$299. Yeah, you can book domestic flights as late as the day before and international flights up to 10 days in advance. So
it seems awfully cheap.
It does seem cheap.
There
If you look
are
at flights
blackout
anywhere, they're
periods
outrageous.
and availability, and it doesn't include anything like your luggage.
I'd hang from the wing for $299 the way things are going now.
That seems cheaper than one single flight.
Mm-hmm.
Yeah, I don't know. But I did want to talk about just like airline stocks in general, like UAL or Boeing.
What I like about Frontier is the fact that they put the animals on the tail.
Okay, great. You think I like the bear?
Yeah.
I do like the bear.
He's so cute, isn't he? UAL up $1.92 and change off its highs of, let's just call it 102 about 2 weeks ago.
Oreo.
IV rank is really good there, by the way, in the hundreds. Earnings January 27th.
Oreo maker Mondelez says they are using AI to create new snacks. Don't do this. Every company has an AI angle these days, and that includes Mondelez, the snack conglomerate, says in the Wall Street Journal that food scientists are using AI to create optimal recipes by specifying desired characteristics, including buttery and in-mouth saltiness. Nope, shut up, Bat. Or vanilla
add pineapple.
Or vanilla intensity. What do you think about using AI in food science?
They had Coca-Cola ones, these Oreos.
Oh, there's carrot cake ones.
I think they've been doing this forever. They just now figured out that they can actually have a press release that says, we're using AI.
Yeah, all right.
I don't like the gimmicks.
You can trade Mondelez. I forget what it is. If it's like MDLZ.
MDLZ, I believe. Yeah, MDLZ. You're correct. I traded not too long ago. $60 stock. IV rank is 70. Doesn't have earnings till February 4th. It's back on its butt. This is the area where I bought. Actually, a little bit below where I bought it, but we caught a nice little rally. We were able to get out a little with a back ratio spread, also known as a zebra.
Ooh, thank you, Liz.
Take a
and
little
Jenny.
something from Liz and Jenny. That's
Yes.
right. Mm-hmm.
Hey, we are on the precipice of the most important holiday of the year. I'm not talking about Christmas, not talking about Hanukkah, not talking about the solstice, not talking about Kwanzaa. I'm talking about Festivus. That's right, the day where you are allowed to air your grievances and tell people how they have wronged you. You put up a steel pole and then you fight. No, I'm just kidding. But Seinfeld, full series, has now been released on Blu-ray and 4K UHD. If you have a Seinfeld lover in your house, this makes the perfect gift. It's available for order on Amazon today. It is just in time for the show's, believe it or not, 35th year anniversary and Columbia Pictures' 100th year anniversary.
Would you like me to get this for Christmas? I'm in the Christmas spirit now that I got.
Tom doesn't have a DVD
now that
player.
now that I got the best gift for Christmas, I am in the Christmas spirit. Would you like me to buy you this because you're a Seinfeld lover? Can I do that for you?
No,
Are you sure?
I don't want that.
Because I know your nut dish isn't doing it for you.
No, I don't even want that refrigerator anymore.
Oh my God, it's so
No.
cool. I love it.
Wow. Just waiting to Beth catching strays. She does you a nice thing and you're insulting everything. Good job.
Yeah.
Good job.
Yeah.
Hey, finally today for my viral video of the day, I am in the holiday spirit, so I'm just showing holiday videos because I do what I want. Here's a pretty impressive holiday light display. I don't know how these people are doing it. I don't know how the neighbors don't complain, but watch this.
Wow. Makes my three.
What? Look at the fireworks. Who does this?
Makes my three stupid inflatables look really silly right now.
How do you have fireworks?
Synced up, too.
I got a whole playlist.
Yeah. I love that people do this, though.
I don't think you'd like to live next door to it. This has got to be warm weather because nobody can stand outside and put this elaborate display together in the cold.
Look at the fire. Wow.
That's insane. That's insane.
He lives on acres.
Yeah.
How do you do that all night long?
I don't know, but it's so cool.
That's what she
It's
said.
gonna cost you $5,000 every time the fireworks go off.
No.
Why do you hate joy?
How did you get that way?
This is my time. Look, right on time here.
Oh,
Yeah, what's
you
coming
did
up
awesome.
next?
We're going to take a quick 90-second break and come back. We got more for Tasty Live with Confirm and Send. We'll be back in 90 seconds.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
We are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's get a quick look at the market here. Sound even the S&P is up 39. I don't know, sounds about 15 handles off of their highs, about 30 handles off of their lows. NASDAQ up 127. Russell up 17. Dow up 238. Volatility in by a good 6%, $1.20 to 18.95. Bonds are down 29 ticks. I think that's probably the biggest surprise here. After this 10-day slide.
This bond move from
call it 120. I mean, pretty
120
close.
and a half to 114 and a half or 114. Mm-hmm. After it doesn't with the Fed lowering rates, the whole deal. It doesn't make any sense to me. Like, I mean,
we've had
today's move doesn't at all. I've been nibbling from the long side today, but not trying to add to my position. But I have an ugly position on. But unfortunately, I don't like it. Sam, I do not like it.
Understood. Bitcoin hanging out at 102 and change off its highs by only a skosh, about $600, but it took it on the chin yesterday too, getting something back. Oil up 36 cents. Gold down 41. Gold's another one that's down near its most recent lows.
Gold doesn't kind of scare me or worry me anywhere near what,
I agree.
I mean, gold.
I don't have a big gold position. I have a gold position, but
gold's like, to be fair, gold, silver, copper, people trade it and stuff.
Nat gas, oil.
Nobody cares.
Right. I agree.
I think
when you have an equity market like you have today.
Equity markets and bonds are where people care.
Right. Yeah. Totally agree. All right. Let's get to Confirm and Send. Obviously, most of the stocks are all higher. I don't see any that are outliers that are down that we trade at the moment. But
no, the only down stock is probably Micron from her.
Apple unchanged. Micron. Yeah. Mm-hmm.
Thursday, Confirm and Send. It is December 19th. Let's do it.
Because we got trades from the research team after this.
We do. We got a lot of stuff to do today. Plus, I want to talk about markets also. Mm-hmm.
Yep.
My question for you is, what percentage of individuals are trading options/derivatives using strategic investing? Do you think trading resonates with millennials and Gen Zers?
I'll let you answer this because I don't really know the answer.
So the percentage of individuals, what I wrote back to this person is the percentage of individuals that are trading options and and derivatives using strategic investing, the approximation in the industry is about 5%. So just to give you an idea, it's about 5%. Now, it could be 7%, it could be 3.5%, who knows? But we've always used the estimate of about 5%. But here's the interesting thing. It's 5% of the people, but it's 20% of the volume. So 20%.
80% of the time. I'm just kidding.
No, it's 20% of the volume with about 5% of the people. So that's pretty interesting stat. So 20% of the volume is pretty big, because the rest is, professionals, stuff like that. So 20% of the volume is approximately what it is. It's been as high as maybe 30% sometimes, but it's really averages around 20%, with, I want to say, around 5% of the people. Do I think trading resonates more with millennials and Gen Zers? No, not at all. Average, most of the trading is done in the 45 to 55, 60 range. So it includes some boomers and, whatever. But our customer demographics break down a third. So it's just that there's more, as you get a little older, there's more trading. So I do think it resonates with every generation, but I think the youngest generation trades the least, and the oldest generation trades the most.
I mean, it makes sense. I mean, that's the way I would have guessed.
Let's go next slide. Could you explain why bonds went down further after the Fed cut the interest rates? And it's
buying power of, buying opportunity of a lifetime, I think you're going to say. I have no idea why anything does anything.
Even more so today. I mean, one is, everybody knew the Fed was going to cut rates, but I think that was not it. I think it's more of what the Fed had to say, which is they're going to limit the number of rate cuts next year. So we've gone from like 6 rate cuts down to.
It's all baloney anyway. If the market moves or changes, they're going to change their language.
The only
for
reason
the
we went
future.
from 6 rate cuts down to 2 is because the bonds sold off. If the bonds rally, like I think you could have a bond rally because you could have a flight to quality. I think you could have a bond rally because you can see, a lot of policies backfire. There's the thought process that, that some of the tax cuts and things like that are going to spur on the economy, but if it doesn't work, you can see bonds rally too. I like the risk reward in bonds here, but so far this morning, no bueno at all. I just bought some at 08.
After you sold them at 14, you bought them at 9, sold them at 14.
Yeah, I've been trading them all morning just a little bit, but I'm also long them, which sucks. Bought some on the close last night at just under 115. So, and I'm also long notes, and those are down 8.5 ticks this morning. Not pretty. I don't know why the bonds went down after the Fed rate cut, except that the expectation for them to go up was not as bullish as it was prior. Let's go to the next slide.
Evidently.
Can you clarify what specifically you look for with the VIX one day? Do you focus more on where it begins each day, or do you monitor its movement throughout the trading session?
It does it update intraday?
Oh yeah, it updates in real time.
Because it changes from the morning.
It updates in real time.
Does it? Okay, because I thought it was just 2 times a day the last time we looked at it. You're probably right. I mean, that tells you how much I look at it. I don't really look at it at all. I mean, I guess I'm going to do a 0 day. I would put it in the back of my pocket.
So it's very important to understand that the only reason we look at the VIX one day is if we're trading 0 days. So yesterday,
/VX I look at all day long. Not
yeah. /VX we look at all the time, but VIX one day we only look at if we're trading the 0 days. So I don't really look at the VIX one day unless I'm about to get into the 0 day trades. And then I want to make sure it's not too low. So do we focus on where it begins each day? Not really. Most days it opens on the bottom and then rallies. But yesterday was a great example of that. But most days it opens low and closes higher because of the overnight risk the next day. But anyway, we generally only look at VIX one day when we're trading the 0 days.
Beautiful.
Next slide, please. So this person writes, I was looking at holding 2 MES contracts to have long exposure to the S&P without paying premium, and then collaring with SPY options for a credit, and then rolling this up after an upswing. Do the mechanics here make sense?
Yes, the mechanics here. I mean, /MES is S&P micro futures. So yes, they match up to SPY. Each contract is like 100 shares of SP. Yeah, it all good. Yeah, it all works. I mean, your timing's got to be perfect.
Each contract is 50 shares.
50 shares. 2 would equal 100. Yes.
Yeah, 2 equal 100. So 2 MES contracts would equal 100 shares of SPY. So sure, you can collar 2 MES contracts using SPY options. But here's the thing, and this is what I wrote back to this person.
The math is all good.
I go, I said, your math's fine, but here's the problem.
Why don't you do an MES?
I go, here's the problem. This trade makes no sense because, first of all, you're not paying a premium, but you are paying the cost to carry, just so you understand. So you're not saving any money there.
Right.
And the other thing is, this is really capital inefficient because you don't get any relief for those options.
Right.
So you have to put up the money. So if you're buying 2 MES contracts, then you're going to sell a call, buy a put. That's your collar.
Yeah.
So
you're going to do that in SPY.
You're going to do that SPY. You're going to have to put up all the money for the naked
call,
short call, and then the long put. And then you're going to have to put up the money for the 2 MES contracts. So it's incredibly capital inefficient. The other thing is, there is no way to arb that position. Like, what are you looking to do?
No, right.
It's a neutral hedge. There's no opportunity there.
You can do an MES options if you
can do MES options too, but there's still, unless you're not doing a perfect collar and you're doing you're giving yourself a little room in there, but for what? Like, there's no trade here. There's no arb available. So the mechanics are fine. The trade doesn't make any sense.
Yep.
Let's go next slide. If the markets are efficient, and I firmly believe that, what research / theory is there on how markets become efficient?
If the markets are efficient, and he believes that, what research theory is there on how markets become efficient? I don't understand the question.
I will explain. So this is interesting because he's saying here, so if the markets are efficient, which he believes and I believe, what research or theory is that on how markets become efficient? So what makes markets efficient?
Basically have a pick a market. How can it not
What makes markets efficient?
Volume.
That's your answer. So what makes markets efficient is liquidity. You cannot have efficiency without liquidity. And so what makes markets efficient is volume, is liquidity. Your ability to get in and out, the amount of market makers, the amount of participants in a certain market, the most efficient underlyings are the ones that trade the most. Yesterday, NVIDIA was the market leader. Tesla was the market leader. Those are the most efficient underlyings. They trade the most. So what makes markets efficient? Liquidity.
Yeah, 100%.
Let's go next slide. And this is the last one. And this viewer wrote, after yesterday, which do you think is more oversold, the bond market or the stock market? And if you say the bond market, what is the safest way to play the upside for a $25,000 account?
I mean, obviously, I'm going to say the bond market. I mean, the stock market's 2% off of all-time highs. I mean, I don't.
Of course. I think the bond market's also down 30 this morning. It's an easy question this morning. Bond market.
What's the safest way to play the upside at a $25,000 account? I mean, safe is relative. I mean, capital efficient way. I know you're going to hate this. Pure zebra play. Buy a couple options in the money, sell one option right at or out the money. It's pure stock substitution. Probably cost you $400 or $500 for a notional value of about 10, 12 grand. So that would be the best one-way directional play. I mean, selling a naked put would probably be my second choice.
There's
to be bullish in something that's oversold, the way they're saying right now.
There is plenty of different choices here. You can use TLT for the bond market. You can use TLT. You can use ZB. You can use ZN. Any one of those three work. The 10-year notes or the 2 long bonds. I would sell an out of the money put in the bonds or the notes, or I would sell a put spread in the bonds or the notes, or in TLT. That would be my idea of the safest way to play it. Either sell an out of the money put or sell put spread. Depends on how much capital you have, but you can do any of those trades in a $25,000 account. Easy. Just a one lot's only probably about $1,000, $2,000 total. Actually, I can. What is the short put in the ZN?
In ZN,
I think it's cheap.
Hold on.
A short out of the money put in ZN's probably going to be less than $1,000. I'm guessing.
Coming at you. Hold on 1 second here.
Which
short out of the money put with about 36 days going to around a 30-ish delta
is what
brings you to about $1,600.
Oh, it's that much? $1,600. Okay, a little more than I thought.
This account has anything in it.
Yeah. Okay. So then bonds and notes are going to be about the same, about $1,600 for a naked put. So then you can sell a put spread. You could do it for like $200 or $300.
Very good. You did good. You know what happens right now? We take a quick 90-second break. We come back. We got trades from the research team next. Let's take the live.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. But I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty specific.
Yeah.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Trades for the research team. Who is our first researcher?
Baby shark.
Ah, it can only mean it's Sahil. Sahil, my friend, how are you?
Doing good, Tony. How are you?
Very good, thank you. Fix your collar up a little bit. Left collar. There you go. There you go. Now you look handsome. Okay. Beautiful. What do you got? You're welcome. What do you got for us
Always
today?
looking out for me.
I'm always looking out for you. You know that. I want you to look your best. You're a reflection on me. Nobody's a reflection on Tom because we can't fix him.
No,
That's right. That's right.
Oh my God.
Maybe while we're here, reflection of.
What do you got, Sahil?
That's right.
What do you got, Sahil?
You're a ray of sunshine.
I can't listen to him.
It's much easier
What
to
do
be
you
a
got?
reflection on you.
Probably. What are we looking at? Roku. Ooh, like a hurricane. Go ahead. You know they're in every TV.
Yeah, I know they're in every TV. Yeah. All the smart TVs and everything now.
Yep.
Stock has been a wild pig as of late.
Well, I wanted some more undefined risk, so Roku, it's pretty good IVR rank, but this has a nice potential return on capital. There's some pretty good premium in here, so 70.95 strangle. I think it's up like $1.50 or something pre-market, but
Roku's a buck.
yeah.
Maybe a little bit, maybe a few pennies more.
IV rank is good at 40. It's been upticking.
Market, man, they close these markets wide.
And I saw you guys haven't traded in a while too.
We have not traded in a long time.
Yeah.
I'm just curious how bad these markets are.
That I can't tell you. I haven't traded in a while either.
Well, it's kind of weird. Some of them are.
A lot of markets on the close were a little.
I know. That's what I'm saying. So I think we'll put it on above the market, and then we'll see.
All right.
Prudent.
Okay.
Good job out of you. You got the creator to put something in. That's a good
I entered
job.
it above the market.
Awesome.
Sir.
All right. Who's our next researcher? That's right, man who never has his collar up. Gad, how are you?
Turn up the volume on the music, Beth, if you could.
Everything good?
Everything good.
Awesome.
Good.
Awesome. I know you're going back home soon.
Yeah, Wednesday, yeah.
Wednesday, been a long time, right? A couple of years.
Yeah, 4 years.
You better hug mama first thing you see her.
That's for sure.
100%. Give her a big
Yeah.
kiss. All right, what do you got for Sazno? Speaking of
She's gonna
adopted
be cooking-
parents.
She's going to be, we already have had this discussion. She's going to be cooking like everything imaginable. And then she's going to go, America, you gained too much weight.
No.
Too much.
Yes, you're going to say that?
Yeah.
No, I think she's going to be happy that you're eating and you're,
That he's not starving to death?
that you're not starving to death. That's right.
Yeah, they watch our shows every time, so.
Beautiful. All right, what do you got for us? Goldman Sachs.
What's the time change?
8 hours.
8 hours. That's not
Yeah,
bad.
It's not bad.
8 hours, not bad. For you, who's going to sit here with no time change, it's not bad. Yeah, sure.
It's not that bad. 8 hours.
Yeah, not that
It's like, it's, yeah.
better than 14 hours, yeah.
Yeah, it's better than 14 hours.
Right. It's worse than 3. Yeah.
Yeah.
Okay, so what
All right, Goldman Sachs.
Goldman Sachs.
Defined risk. I like that.
I have no Goldman Sachs position on.
Exactly. That was my point. So I still don't have position. So today was up a little bit, right?
This morning, up $5.
Yeah. So I put short on the candle. 515, 520 for put side, 610, 615 for call sides. The IV rank is decent, so 6.9. And the credit be corrected will be $2.35. So it's a cheapy trade.
I think I'm going to move it up to move the call side to
605, 610.
Closer to the money.
Yeah, just a little bit closer. And hopefully we can get, I don't know where this thing's going to trade. Probably about within a couple pennies of where it closed. I mean, because they're gonna kill premium this morning on the opening, so it's gonna be hard to sell, strangles and iron condors on the opening. But we'll see. I have a feeling that yesterday's down move, it's not the end of it's not the end of things.
Yep.
All right, cool.
Okay.
Good job out of you. Who is our next researcher? Get things done. Nice eye now. Good job out of you. Kai, my man. Kai, how are you, sir?
I'm doing great. How are you?
I'm doing well. Thanks for asking. Appreciate that. Merry Christmas to you and your family if I don't get a chance.
Oh, you're in a good mood this morning.
I'm always in a good mood. I start out in a good mood, okay? And then what happens is I spend a little bit of time with Tom, and depending on how he is on the breaks, defines the rest of my day. Then I go home, kick the cat, the dog, kids, everything.
You don't have cats, right?
No, I don't have a cat. What do you got for us, Kai?
All right, so
should not be allowed to have cats or dogs.
My daughter will bring home her cat. She's coming home this weekend, so she will bring her.
Nice.
We will have Sandy, named after Sandra Day O'Connor.
Sandy. So I'm going to give you another poor man's cover call, the third in a row. So
I do not need any more long bond positions. I have more long bond positions. I could choke a horse right now with long bond positions.
But this is a very small position, and this is very different from your long futures and short premium. This is a long poor man's cover call.
Give the man time to be.
Yeah, one lot only.
Right. Okay.
Only $300 buying power. Right.
Okay. I just said I have enough long bonds.
I know.
But I fully support this trade. I just don't need to put it on.
Okay. So the only reason at your spawn, most of the traders, they don't want to long futures, and also they don't want to sell the premium in the futures. TLT might be the next choice, but the premium is cheap, so that's why I'm going for the poor man's cover call.
Yeah, the bonds are weird. When bonds go lower, premium gets cheaper.
Yes.
I mean, the vol comes in.
That's just the way of the world.
It's just the way it works.
Yeah. So the IB rank at 28%, it's okay, but it's not expensive for sure.
Yeah.
So my strike is sell January 87, and you skip month March, sell 90 and buy 87.
Sosnov, say something nice.
Yeah, I mean, like I said, I'm already too long bonds, so I'm not going to do it, but I completely support it.
Beautiful. Who's our next researcher? You got no pull. Music's low again.
Yeah, Beth. Crank up the music. Can't hear Dada's music.
Dr. Dada, my man, what's up?
Hey.
Can't hear the walk up music.
Doing okay. Okay, so I got GLD today. This is a tiny bullish position. I'm trying to parlay a little bit of my meta success from that short position from 2 weeks ago. My only good position from 2 weeks ago.
Yeah, we don't give you any credit for that because you can't come on 2 weeks later and say,
"Oh, I can easily do that."
Yeah. I think that meta position. What was it again?
It was a call spread. I forget what the strikes are, but it's quite a bit below.
I think we took it off the next day. Whenever meta went.
Yeah, it was immediately a little bit of a winner.
Yeah, that's why we took it off.
I still got it on.
Yeah.
I should have taken it off yesterday, but it's up $7.
Shoulda, woulda, coulda.
Yeah. Anyway, I'm still up. So 239, 237 put spread here. Tiny position, 85 cents worth of credit. Stock is basically right here.
I like it, but we're
goes down a little bit.
Just like Kai's trade, we're already
He's locked and loaded.
We're locked and loaded in gold because we were flat gold yesterday.
Yeah.
But this morning, whatever
$42. Big move in gold.
Yeah.
Yeah. Wherever gold is this morning, we're going to end up long being GLD. We're going to be long in GLD pretty long this morning.
Okay, so you had a position in before.
Yes.
Yes.
You trading the GC or you just doing the
both?
Okay.
We have a strangle on in GC, which we've already adjusted this morning, and in silver and in copper. But then we also have GLD, GDX,
GDXJ,
GDXY.
Okay, got it.
We have like 4 different gold positions on.
Okay, good.
And all of them are going to be a little bit long this morning.
Beautiful. Good job out of you. Who's our next researcher? The creator of the Jajun trade, Jajun. Hands in the air.
Hello, everyone.
Jajun, how are you, my friend?
Hello, Jajun.
Doing great, doing great.
How's school?
Working hard. You can tell from my eyes that I don't have much sleep.
You've been working hard, no sleep? Good,
I'm
man.
working hard.
Good. You know what?
Always
Sleep's
working hard.
overrated. You have your whole life to sleep. Okay?
Totally agree.
Now's the time to put your nose to the grind. Good for you. Good for you. Proud of you.
Work.
What do you got for us, Jajun?
So we have UNH. The IB rank is very good. It's 98%. And it's right around $500. So I kind of want to take a chance to be long here. So we do a 43-day, sell the 495, buy the 475.
Earnings coming January 10th would be a stumbling block for me just a little bit. You definitely have to do defined risk, and the stock is up $3 today. Sadnov, what says you?
We are, Shajun, hey, we are already long UNH. We are short the 480, 490 put spread.
Awesome.
And I mean, we're also short a way out of the money call spread, but it's no longer in play. So I agree with UNH was the only stock that was up yesterday. It was up like $10 or $15 because this stock is down $100 over the last week since the murder of their,
one of their CEOs. Yeah.
So this stock hasn't been able to buy an uptick. So I'm with you, Jajun. We're already a little bit long the stock.
Yeah, I kind of think the Dow Jones as a whole has been punished too much. So it might be a good hedge against S&P shorts.
Yeah, we would agree. The Dow Jones has been down for 10 consecutive days. I think it's the first time since the Jimmy Carter days in the 70s. But the Dow will be up today.
Yep.
You've heard it here first.
The Dow will be up today, break the streak, but it's not necessarily, I don't know if the rest of the market will be up.
Wow.
We'll see.
Wow. I don't want a Dow Russell day, but
yeah.
Jajun, thank you, my friend. I appreciate your time and your work. Study hard, my friend, and then take a little break for Christmas. Who's our next researcher? Ping pong, ping pong. Julia, how are you?
I'm doing great. How are you doing?
I'm doing wonderful. Thank you for asking, but I am with Tom. But what do you got for us?
I'm so sorry. Well, today I got a baby trade. Shocker, I know. But today I'm actually looking at AMD. This one is I kind of alternate between AMD and NVIDIA, and right now I'm on my AMD phase of that. AMD and NVIDIA actually have kind of low price correlation. Since October, it's only been around 0.4, 0.5. And SMH is a lot higher. It's closer to 0.6, 0.7. So you know what? If I'm trying to get some semi exposure, don't want to be trading NVIDIA right now. Actually, I look at AMD. It has gotten no love since October. It's pretty depressed. So I decided to do a neutral-ish trade, a little bit more pulled out on the put side, going with the 105 short strikes and then $5 wide. And then on the call side, it's a little bit tighter. On the open, it's going to be even a little bit tighter than that, maybe around 22 delta is my guesstimate. But that's with the 140 short strikes, $5 wide, collects $1.16 and credit for $3.84 in buying power.
Sadnov, what say you?
Well, we have a lot of AMD positions on. I mean, we seem to be nailing a lot of the underlyings. We have a bunch of positions on, but I think AMD is a solid play. I mean, we're just short to strangle. Basically, I can give it to you right now. And hang on one second, Julia.
AMD
The
has
suspense is
earnings
killing
in
me.
February 4th.
AMD, February 4th?
Yeah.
This is a Jan trade, so this is 29 days out. It's a little baby trade. I wanted to be mindful of earnings with this one.
Oh, I take this back. We are just naked short the 120 puts in AMD. So,
here you go.
So we can do this trade. I thought we had a strangle on in there. So
beautiful.
Julia, what do you want to do? The 105, 100?
I'm doing the 105, 100, 140, 145. And it is a baby trade. I love my baby trades.
It is really a baby trade.
It's a little baby trade, and a little bit more skewed to the downside because this thing has just been just selling off since October.
Yeah, I think you have to. I'm going to roll up the put strikes one. Go 110, 105, 140, 145.
I had a feeling that was going to happen too.
But we'll see. I don't know if we're going to get filled. Maybe this trade's around 130-ish. All right, I just entered the Iron Condor.
Baby trade on the map.
Good job out of you. We're going to take a quick 90-second break and come back. We're going to catch the opening bell immediately following these messages from our sponsors.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Yeah,
stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called. Oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. At Tasty, we're delivering babies.
Oh yeah. Tasty Nation, good morning.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Back, my friend. The market open is imminent in about 30 seconds or so. Even the S&P's up 51 Sadnov on their highs. Volatility just off of their lows by about 30 cents at 1885. I'm talking about the /VX future, Sadnov. What do you think here, my man? Usually we like I said yesterday about an underwater close. We got an underwater close yesterday. If you remember, even the S&P sold off about 20-ish, 25-ish handles right on the close after the market had closed at 3 o'clock, signaling a little bit of a bullish kind of play in the market, which is what we've gotten so far today. So what are you thinking here for the rest of the day that you just had your opening bell? Even the S&P's up 44.
I'm not loving this opening. I got to be honest with you.
Well, I mean, we usually talk about the market opening lower for it to get its feet underneath it. We've opened higher now.
Yeah.
That's not as great, although we've had these down days, up day, down day, up day kind of play here, where the market gets a little bit of breath after a small little down move. This is a big 2% move. I think you can have a little bit of a test to the downside here, a little bit more possibly today.
Yeah, let's see what's going on in
Goldman Sachs up 11. BA, you know it as Boeing, up $4. Boeing was one of the stronger stocks yesterday. Tesla, which finally had its first downtick of around $40, is up around $11 today to $4.51. Let's look at what else is moving this market here today. On the downside, Bucker's MU down 15, Sadnoff. Baidu down $1.75. Lilly, which Vanetta mentioned earlier today, looks like unchanged or so. On the upside, everything. Netflix up 14, Tesla up 14, Goldman Sachs up 13, Meta up 12, Coin up 11, MSTR up 12, Costco up 6, Microsoft up 5, and the SPYs, which have a dividend, up $5.60.
Yeah, I'm looking at this MU stuff. That's a pretty big down move. It's way outside the expected move.
Yeah, for sure.
Yep. I just rolled down some calls, so that was not a good one. Let's see what else we got here. What's on the good side?
What is on the good side, Sadnoff?
Nothing much on the good side right now. And also, don't forget, I have December in the money. I have in the money December SPY positions that I have to roll today.
Okay, so I mentioned that earlier. You said you don't think it's going to come into effect yet. You are affected, Sadnoff, by the dividend. What do you have so we can take a look at it, just so people know? Some sort of call spread?
Yeah.
January, 29 days. Which strikes do you have?
No. 1 day.
Oh, 1 day. 1 day.
I'm short some 578 calls. I'm long the 583 calls.
Right, and those puts are trading for around $1. The dividend's going to be over $1, closer to probably $1.40, 50, 60, 70, something like that. You can figure it out if you want to. We can figure it out later. I know my son does that on his show. So these puts right now, anything pretty much under the 585, 586 strike, those calls, all these calls are going to be exercised. And you can see by the open interest today how many calls there are out there. And tomorrow you'll notice that this open interest will be significantly lower, to be in the teens, if not zero.
Goldman Sachs opened up $15, I think.
Goldman Sachs finally catching a little bit of a bid side. Now, I actually needed that today, so don't poo-poo on Goldman Sachs. Goldman Sachs has had a 5 or 6 day slide from 600 to, well, it was flirting with 550, 544 on the low. It's up $20 off of that low, only up $14 today, 564. Volatility upticking also in Goldman Sachs.
Yeah, I'm trying to figure out what do I have to do in the spider, so that will be a challenge.
A lot of call skew in Goldman Sachs too.
Let's see what else do we got going on here.
Tesla up 10 now. It's up a little bit more a moment ago.
Yeah, trying to see if there's any other problem children.
You mean the S&P's up 59, Sosnoff?
I know. Don't love that. I thought they'd be down at some point today. So far, no bueno. Man,
no bueno.
Japanese yen down 1,000 bips.
Sosnoff, should I wait for $1 profit on the premium that I sold yesterday on the close that you hated, or should I pay up by 10 cents and only make 90 cents? What would you do here?
Oh my God.
What would you do?
If I were you?
Yeah, if you were a guy like me. Even the S&P just uptick again. I'm going to split the baby, and I'm gonna go up a nickel and make 95
I would probably jump
cents.
off the side of the building if I were you.
I'm going to go up a nickel and make 95 cents. How's that?
Oh, that's beautiful.
All right.
Brings.
They didn't film me on the high of the day of the spoos. You know, it's two sides to every trade, Sadnoff. You gotta play both sides of the market here. Oh, that was your ding. You have low D. Do you know that?
I will change
that. Have you
that
had your
in a second.
testosterone checked or anything like that?
I am just gonna check out.
You should check that out, by the way. You may have low T or something like that.
Who, me?
Yeah.
No, strong like bull.
You should get it checked out. I like
why,
you.
Why are you saying that?
Man, I don't know. I watch you walk.
I'll raise my sound. There you go.
Sadnov, I got filled. That's right. That ding you heard through your small little volume that you had there for $1.55, sold it at $2.50. That's my SPX patented one-day spread. Sadnov got filled at $1.55, sold it at $2.50. If you were lucky enough to be on the follow page inside the Tasty Trade platform, that's correct. You will see this. Oh, I forgot I sold it at $2.55, Sadnov. I thought I sold it at $2.50.
Nobody cares. All right. So let me see. I mean, literally.
It did make a buck.
Literally nobody cares. Let's see if I'm on this. Puts, calls,
sold it at
calls.
$2.47 in the afternoon. Bought it back at $8.35. Highs, lows, Sadnov. How does Daddy do it? I'm like a mini Daddy.
Roll.
I'm like new Daddy.
What are you doing? What are you yakking about?
Nothing. You roll something.
I'm just trying to.
You go roll some puts or something like that. Or
no, I'm trying to
do that. I will entertain. Do I not amuse you? I will entertain the audience with profitable trades. That's.
I am trying to.
You go roll something. You go play with your ball and jacks over there.
No, actually, what I'm trying to do is to roll a position forward, and trying to decide, take off dividend risk.
Mm-hmm.
So I'm in the December 78.83 with 1 day to go. And I have to roll that to January.
Or close. I mean, this down move, yesterday you probably would have been able to roll it for a credit. I don't know if you can roll it for a credit.
No,
Oh, look at
it's
this. Mini S&P just sold off $10.
It's like a 50-cent debit.
So why would you roll for 50-cent debit? Well,
I'm short a put spread on the other side. I'm not going to cover the put spread. So it's fine.
Mm-hmm.
But I think it's going to be like a 50-cent debit. I don't actually know. It's going to be hard. Maybe we sell off. Maybe we don't. What do you think here?
I thought we would sell off a little bit here just because of the,
Me too.
the opening. Well, you didn't say that when I asked you the first time when they were up 60.
Well, I don't like when they're up
And I covered my long delta. Now we're down another 15 handles from there. Get with the program, son.
I don't like it when they're up that much, but we'll see. All right, so let's take a look here. We got some putties here. Putty.
Now I know where my son gets it when he's in the matrix.
Huh?
Nothing.
Bum.
And I'm doing all this while being parched.
Parched.
Yes, sir.
What do you do here? Buy any bonds here? I bought some at 01, but I'm down too much.
I'm the world's worst bond trader,
I hate
Sadnov,
bonds.
and I have a TLT position that I had to close to prove it. I took a couple of dollar loss in it. I was a bad pick bond trader. I'm a bad off-the-floor trader. I'm a bad screen reader trader in bonds.
Yeah, I used to hear about how bad you were in the pits. There was a guy that we used to know in the bond pit, and he was like, hey, could you send that?
I put a wing on his house, I'm
Can
sure.
you send that Batista guy back to this exchange?
He was definitely missing me. They were so nice to me. I always tell that story. They were so nice to me because they all wanted me. No, he's going to stand here today. No, let him stand next to me. And it was, they fought for that. I will give, that is true. That is true. Yep, that is true.
In this business, you know you're a bad trader when they ask you to come stand next to you.
And they have a hierarchy there. Like, the higher up you stand, the more valuable a trader you are. You'll take down more size from the broker. The brokers all stand on the top shelf. So if you're standing right next to the broker on a top shelf, you're the cat's meow. Now, I never got up there. I was a row or two down, but man, they pushed me up there so quickly. They wanted me to lay off stuff on me so easy. I was a mark. I can admit it.
I'm just thinking about, hang on one second, let me just see something. Because I haven't really done anything this morning. I'm kind of, I feel like I want to wait.
Wait for?
I feel like I want to wait for a little bit of a sell-off here.
Okay, you can wait.
Yep, I feel like I want to wait.
Okay, then wait.
I feel like I'm entitled.
Sometimes I feel like a nut. Sometimes I don't.
But I haven't got filled on anything yet, so waiting. Let's see what else we got going on. So Tesla, not up that much, only up 450.
Tesla only up 450 now. It was up $14 just a moment ago.
Yeah. SMH is actually down on the day. Some surprising things.
What's NVIDIA doing?
UNH is actually
67.
UNH is down on the day.
UNH is a pig lotto. Shajoon with a trade in UNH.
Let's see what else we got. Yep, I haven't done anything yet. I'm just waiting.
Mm-hmm. Oh, those who can do, those who can't wait. You want to take a quick 90-second break then? You know what we got coming up next. And you want to know something? I can already tell. I don't think you're going to be a match for him today. I think today's his day. You know, like you had Ali Frazier, and, you know, Frazier, you know, broke his jaw. I think today is the day you get your jaw broken. I mean, you're probably going to still win the fight because...
Yeah, I'm not
because the judges are on your side, they're in your pocket.
I'm not too worried about Victor Jones.
Really?
He's easy.
He's easy.
By the way, we just before Victor comes on, we have this
market.
We have this guess the market contest. So if you want to enter this year, enter now for next year, 2025, tastylive.com/guess, tastylive.com/guess. You can write down what you think, whether you think the SPX will close at the end of Q1, Q2, Q3, and Q4. We'll give away $5,000 next year to whoever's closest. Will be our 6th year. We're done with 5 years now. We've given away $25,000, and we will give away $5,000 more next year. So tastylive.com/guess. You have to fill in your guess by January 3rd. I don't know why. We should probably let you do it up until the day before, but you have to fill it out by January 3rd. So after that, no bueno. And only people that are, only people can enter.
Only people with good
time.
guesses.
Only people with good guesses, only one time.
Right.
All right, that's it.
Beautiful. Let's take a quick 90-second break and come back. We got more Tasty Live after this with Hear Me Out. Victor Jones next. Back in 90 seconds.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. as you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
We built Tasty Trade for today's traders. See it, click it, trade it. Customized charts with hundreds of indicators. Actually see your potential profit and loss. Quickly roll to the next expiration. See gains and losses even when you roll. Cancel, replace, duplicate, or invert orders with just a few clicks. The tools, the data, the knowledge. See it, click it, trade it. Join the club, genius. Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
My friend, you know what that means. Enough out of you. My man Victor Jones is in the house. Hear me out. Come on, Victor.
Oh yeah, Tom, Tony, Tasty Nation, how you doing? What is that? What do you mean, Tom Sosnoff? That you said I'm easy work? Is that what you said?
Yeah.
Something like that.
Yeah.
When I'm coming in,
I didn't
here,
say
I'm
easy work.
Is that what you said?
I said you're easy. I said you're easy. Like, you know.
What's the difference?
What?
What's the difference?
Well, I'm like Kamala Harris over here. Hard work is good work. What? You want some of this?
Oh man,
you want
really,
some of this?
You really switched sides.
No. What do you got?
I thought it was just like a
me.
one-moment thing when
What
you
do
have a
got today?
problem.
Let's go. I'm ready.
Give it to me. Look at you.
I'm ready for you.
I was going to come in here and ask you what happened yesterday. You know, from a guy that I know you didn't look at the summary of economic projections. You could care less. I'm kind of curious. You see the market spit up 3-4%, and
You know what I love about?
I told you.
All the macro monkeys. You know what I love about it?
What do you love about
is
it?
that all of a sudden the market goes down, S&Ps go down 200 points, and they're like, well, I looked at all the numbers and it doesn't make any sense. It's like, I can't figure it out. Okay, I mean, the fact that they're up 700 straight days in a row, that doesn't come into play because
we got them.
We got them. Yeah.
All I want to know is which one of us were you just doing an impression of? Who?
Oh, that was my.
Which one of us was that an impression of?
That was my combination of all of the macro monkeys on this network.
God help us if you're the only eyewitness and you have to go do a composite sketch. God only knows what that thing's going to come out looking like.
They'll pick you up in 1 minute. Yep.
Come out looking like Mr. Potato Head. Tom Sosnoff, I'm curious. I got a couple of government-related questions before I talk about bonds, because you probably bonded everybody out by now.
Yeah, probably.
Government shutdown on the table. They're talking about it like it's real. They do this every Christmas. They put in this big ass continuing resolution in front of the Congress people a couple of weeks before Christmas, and they say pass this so you can't go home to your friends and family for Christmas. And they whine and complain.
Me a raise.
Yeah, they whine and complain, but they always pass it. I'm curious, only because Polymarket's got it at 52% odds of a government shutdown, Kalshi's got it at 56%. You think it's all bullshit, or do you think this time is different?
I read what President Musk had to say, and I feel like
he's first, buddy. He's first, buddy.
I read what President Musk had to say, and I think that he's going to be a little off in this case. So,
you know what's so it's funny that you say that, because look at how powerful social media has come and what it has put into the hands of civilians like me and powerful people like you and Elon Musk.
What is your point?
No. Like that comment never would have been heard 15, 20 years ago.
The headline this morning.
No, it was a headline because he put it out on Twitter or X.
Whatever, it's a headline.
Hundreds of millions of people.
Everybody picked it up. I mean, but everybody else picked it up. You put it out.
Right, but if that doesn't
well, if you spend $44 billion, you can buy your own social network, and you can put out whatever you want. And then
I've got option trades today. I say everything I can up there.
Everybody can say what Tony. Then the New York Times can.
5,000 people a day benefited from my.
Hold on,
call.
It's the New. Oh, it is the New York Times calling right now to see what you're going to say on option trades today, so they can publish it. Okay,
All I'm saying is, look at how fast things move and change.
Of course, but that's the world. Okay, when you are the unelected president-elect, you have to have that responsibility. Okay, you're the world's richest person.
How does it make you feel? Nobody cares what the New York Times says anymore. What's that feel like for a guy who's read the New York Times your whole life?
Well, I don't really get a chance to read the Times anymore. I mean, it's not on my. They don't deliver it to my stoop anymore, so I don't get it. So I rarely.
That's too
read
harsh.
it.
I shouldn't say that. I shouldn't say nobody cares.
Yeah, that's not fair. But
that's not what I mean.
Yeah, the last time I'm embarrassed to say the last time I had a Sunday Times. We were in a hotel, and that was the last time I had one.
Another way to put it from one of my Taiwanese sources is that social media is the voice of the people. It's finally making decisions instead of the bought and paid for lifelong boomer politicians and newspapers
that person's an idiot. So
all right, so
sorry that one of your
you are brilliant.
Sorry that one of your emailers is just another idiot. But go ahead. Anyway,
okay. So
another. Did you hear that one?
Mr. Jones, let's talk.
Polymarket probability at 52%. Government shutdown.
Okay. So
Kalshi at 56. I'm going to take the midpoint. 54% is where the wisdom of crowds has this market. You take the over or the under on that?
Shutdown? Well, because I don't think that any of these bets ever get paid, no matter what. Because I honestly don't believe. Do you know that it turned out to be the biggest scam, the presidential election, because nobody's paid anybody?
What do you mean by that?
So do you know all the bets, all those billions of dollars that were bet on Kalshi and on Polymarkets and everything else, Robinhood, Interactive Brokers, everybody, nobody's been paid.
Why is that not a headline?
I don't know why that's not a headline, but nobody's being paid because what happened was, so everybody.
What's your source? Did you see this in your TikTok feed?
No, they're probably waiting for isn't there like.
They're waiting for January 20th.
Right.
So they're waiting for the actual swearing.
Right.
Because a couple things.
Oh, okay.
Number one.
If something were to happen to him.
If something were to happen to him now, they keep all the money.
Right.
So it's a free shot and they get all the interest on the money.
Right.
Because everybody thought they were going to get paid.
Right.
No, what a scam. What a scam.
Everybody thought they were going to get paid on January 5th.
They write that into the contract specs.
No, I know they do, but nobody read that.
Well, that's like buying XRT and thinking you actually have a retail ETF because you didn't look at the holdings or look into the
I understand
a leveraged ETF or a triple leveraged ETF and you hold it.
Okay, counselor, we heard you the first time. I didn't read my 75. You sound like Comcast when I call up and they say, "Didn't you read your?"
Today is going to be priceless.
I had a guy say that. I had a guy actually. Who was it?
You're acting like this is some big scam, and you work in the securities industry where security is big. It is. You have to read.
I'm sorry, but if I had made a bet, and I did not bet through any of these event-based sites, but if I had bet on the election, I would have thought I would pay the next day when.
No, you were too smart and bet on the Bears. That was what you bet on.
That's like a customer calling you up and saying, "Why haven't you deposited money in my account?" And you go because the date of expiry on what you're holding isn't until the end of the quarter.
Vic,
And
Victor, come on, that's completely different.
Hey, even the Batistas don't believe you.
Yeah, I'm a son of a loan shark.
If you think you're holding a standard expiration option and it's ended up being a quarterly, that's on you that you didn't know when it
because
expired.
you understand the markets in those. When you're betting on the election, you would think that when all the states have verified their election results, that you should be paid.
Of course,
that should be the expiration.
You
would have thought that was the expiration.
Now
you'll know moving forward the next time you bet.
Yeah, you will know. But
you'll get paid on January 20th. God forbid if nothing happens to anybody.
I promise you, Vic. Every person that made one of those event-based bets thought they were going to be paid the next day. Yeah.
I've got no issues with this. I've got no issues.
Of course you don't, because you read the contract. Because you're the only person in the world that actually reads the contract that Comcast gives you.
No, because I'm on these sites. You're acting like this is a 100-page document. It's a 2-sentence blurb below the chart, which talks about how it settles. If you don't read that, that's on you, bro.
There's only 2 people in the world that read that stuff: you and my daughter. The only 2 people, you and my daughter.
And it's her job.
I'm in good company.
And it's her job to do it. Then. It's her job.
All right, 54% over or under. What are you taking? You're taking the under?
Under, of course. It's never.
Tony, what about you?
They never shut down.
I hate to be on a guy who hasn't been right in 3 years side, but I'm going to take the under 2. I'm going to take the under 2. This time he's going to be right. This time he can do it. Gambler's fallacy.
Yeah.
What about you?
I think they want to go home. But I like that I think it's right that the market has this as greater than a 50-50 probability. I'll take the under, but I think
we're all on the same side. Does that worry you? That worries me more than the odds.
I think there's a lot of pressure on them to push back. I think they're putting pressure on Speaker Johnson. If you don't get tough and push back on this and get all the pork out of this bill, which I think is very unlikely, and you don't stand up, then he's gonna be voted out of Speaker job. So I think there's a lot of pressure.
All right, let's talk about something somebody cares about.
All right, the next one is, all right, I got another one for you before I get to Vaughn. This was like the piss Tom off segment.
No doubt.
Rand Paul just said something, and I thought you'd be interested. God. Rand Paul said, the Speaker of the House, as you know,
Rand Paul said something. Oh my God, let me stop what I'm doing and let me stop what I'm doing and listen to that monkey. Okay, go ahead.
All right. This is what he said. The Speaker of the House need not be a member of Congress, because there's a lot of debate about who the next Speaker of the House may be. Nothing would disrupt the swamp more than electing Elon Musk. Think about it. Nothing's impossible. Not to mention the joy of seeing the collective establishment, a.k.a. the Uniparty, lose their ever-loving minds. Tom Sosnoff, what say you? Do you support the idea of Elon Musk as Speaker of the House?
I support, yeah, because it would be it would basically be the end of democracy. So sure, I support it. And it'd be the end of
democracy.
It would be the end of.
Bro, will you get rid of that phrase?
It would be.
I know. Kill that phrase in your vocabulary.
It would be.
It's so
it would be. Here.
It's so bad. Look at the long-haired hippie freak. It would be this thing of 1960 now.
It would be an exceptional moment that probably would put a cap in the whole Republican platform. I'll put it to you that way. But if you really want to do it, go ahead.
Don't you like that they want to shake things up a little bit?
No, I don't like the fact that the richest man in the world can buy his way into being Speaker of the House. No, I don't like it. Sorry, I'm sorry I'm sorry that you think that's okay.
What I've noticed?
I'm sorry that you guys both think that that's okay.
Just a multi
I'm sorry that you guys both think that that's okay.
What's the difference between those two people? Multi-millionaire and the richest man in the world.
I'm sad that you think that.
What is the difference between
There's a big difference, because it means that the integrity of our entire democracy is at stake here. It means that the integrity of everything that you believe in and the reason that you have the opportunity that you have right now, it can be bought and sold. And I'm sorry that you don't recognize that, either of you guys.
Can I ask you a question?
Sure.
Because that was a trap and you just fell into it. I am curious.
What?
I am curious. What is the difference? So I just want to understand. help me understand, because I'm missing something. What's the difference between Elon Musk spending $200 million in 2024 and that being a threat to democracy? But when Zuckerberg spent $400 million in 2020, there were no issues, and none of this rhetoric from you
Bloomberg spent
about
$1 billion
the threat to
to try to be
democracy.
Ran for president. He didn't spend $1 billion, but nice try. But anyway, it's not even close to the same thing. Okay, so don't even don't try to put it together.
Though?
First of all, Zuckerberg didn't spend $400 million doing. I have no idea what you're even talking about. Okay,
I know you don't. That's part of the problem.
Yeah, I know, but there's because
you know everything about Elon spending.
Because you're just making up a number, and Elon's 200 and something, and Elon's 200 and something million has nothing. That is not the issue here. What the issue is that it only costs 200 and something million to make billions, and maybe more than that, hundreds of billions. And basically,
I know. I watched
to control.
I loved your segment. With Dylan yesterday, and that was the only little area where I disagreed, because you brought up the money that Elon was spending to have influence, but you were acting as if Dems are the only ones with the clean shirt. And I'm like, does he not know that Elon?
I was not acting like that. I was not.
$400 million in the last go around, and that didn't seem to be.
I'm not going to argue this.
According to ABC News, former Mayor Michael Bloomberg spent $1 billion on roughly a 100-day presidential campaign.
Hey, if you're running for president, spend whatever you want of your own money. He didn't raise any money for anybody. He didn't take any money.
I'm just saying I wasn't wrong.
All right, what else you got, Victor?
All right, let's do this. I told you this was like I
told you he was ready for I was ready for a broken jaw, and it was Ken Norton. Thank you for correcting me. I appreciate it.
I got one more, and then I'll make it actionable on yesterday's my thoughts on yesterday. But last one, Biden called for a ban on congressional stock trading yesterday by all politicians.
Okay.
And I'm curious, now that this seems to be getting real, at some point it was like people wanted a pound of flesh. Now the sitting president is calling for a congressional stock trading ban. We've talked about this several times in the past, but I thought I'd pause for a moment to give you a moment to give your
I am not going to change my stance on this one bit. I am strongly opposed to a congressional ban on stock trading. I want every single person in whatever branch of government to be able to trade whatever they want to trade, whenever they want to trade, in whatever market they want to trade. I think it's critical to understanding and preserving the integrity of our market structure. So I do not like the fact that Biden called for a ban on congressional stock trading, because I think it's a mistake.
Do you think he's just sticking it to the people who he felt wronged him and pushing him out? You think that's a kind of a FU to Pelosi on his way out of the door?
No, I do not think that. I think it's more of, I think he's just focusing on some things that he can say are part of his legacy. I don't think there's anything else to it. And I don't think this is an anti-Pelosi thing, even though, it's clear their relationship has turned cold and soured, but I don't really care about that. I don't care if this is a spite thing or whatever it is for him. I don't like it, because I want people, I love when people trade, no matter who they are and whatever it is. So I'm never going to be in support of any kind of a ban on trading.
You changed my mind on this, if I could say that. What I believe there is a problem only because there's a perception of the problem. Whether you believe, Nancy Pelosi's up like 95% this year, whether you think that's because she's a good trader or just because she's levered up on NVIDIA and that's the way that the chips fell this year.
She levered up on some underlyings and she held them. You know what? We can sit there and say, I can't do that. I think I'm a better trader than Nancy Pelosi, but I can't buy NVIDIA and hold it for 2 years. That's freaking hard.
Or have the timing like the day before it moves like that. But hey, to Tom's point, he was right. Mark Zuckerberg did not spend $400 million. According to sources that would be favorable to Tom, it was Zuckerberg and his wife that gave the $400 million to two nonprofit organizations that then helped elect Biden and others in the party.
You guys are so funny.
Thank you, Tony. Tony, you're the best.
So it wasn't Mark Zuckerberg, it was Mark Zuckerberg and his wife.
Oh, you guys Crack me up.
You are the only one doing any service to the fact checker name. All the rest of them, they're not worth their.
I like how you guys are fact checkers when fact checking matters to you. I mean, like from the party of no fact checking, all of a sudden when fact checking works, you want to do fact checking now? That would be a dangerous thing. That would be a dangerous thing for all the right wing nutcases to start doing is fact checking.
I could say the same thing back to you. I like how you love fact checking, except when somebody goes, "Hey, you were totally wrong about the $400 million whole thing," and now what do you have to say about your Elon versus Zuck contributions? But we'll leave that for another day.
Tom sounds a little bit like the girl that didn't get asked to the dance, doesn't he?
Here's my thing. I still think I came around. I agree with you, Tom. I don't think they should ban it. I think they should do two things. They should make these people pre-announce, and then I think anyone that doesn't pre-announce, because that's what they always do, right? They go, "Oh, I forgot to do my reporting, or I forgot to announce." What you should do is fine them 110% of the notional value of the trade plus 100% of any profits. So basically, it's all the notional value of a trade plus 10%, and then if they make any money, you take that back too. So we get out of this, "Oh, I forgot to file, sorry about that," and they just move on, they keep the profits, and nobody cares. What do you think about that, Tom? That's the solution in my mind. Pre-announce, and then stiff penalties that claw back all the notional and profits with a 10% premium, and that's how we solve this problem.
I don't even, what is your point? What's the point? I don't get it. What are you trying to solve?
What am I trying to solve? The perception of impropriety.
I get that, but I just told you I don't think there's any impropriety. Like I don't understand where you guys are coming from when you think there's that. Let them do whatever they want. I don't care.
I'm actually saying let them do whatever they want. All I'm saying is pre-report, pre-announce.
Why do you have to pre-announce? Just do whatever you want. Do whatever you want. If you want to make it transparent, make it transparent. But I don't even think you need to do that. I don't think that's fair to people. Just do whatever you want. Who cares? I don't care if you gave them the stupid numbers. If you told somebody what the Fed was going to do yesterday, the whole freaking world knew the Fed was going to lower by 25 basis points. You wouldn't have known what to do. Nobody did in the morning. I don't care what you. The idea that you can predict the way the market's going to do, what the market's going to do based on you knowing something is ridiculous.
It's a little bit different than what interest rates are going to do, or if I'm in a committee that's going to
do what?
Pass regulation that's going to be favorable to company ABC and not.
Was there some regulation that was favorable to NVIDIA going up 300%? 500%? 1,000%? I doubt it.
But I'm tired of fact checking you on everything.
I doubt it.
All right, last one. I'm gonna go market related real quick. So I know.
I mean, you thought Trump was going to drop out of the election. Let's go back to that. So, I mean, you haven't been right since he didn't drop out. So, why you continue?
I'm allowed to say whatever I want.
Of course, and I'm allowed to say the truth. I mean, what difference does it make?
Please. Go ahead. What do you want to say?
All right, last thing. People think for whatever reason on days like yesterday, it's about whether they cut or whether they don't cut. But really, it's about the summary. In my personal opinion, it's about the summary of economic projections more than anything else. I mean, there was a 98% probability they were cutting yesterday. That was not news to anybody. And what did change yesterday in the Fed's expectations for 2025 was increased expectations of inflation. So they moved it up from, 2.1% to 2.5% next year. And they also moved up their Fed funds rate path from 2.9%. No. Fed funds rate path, they moved from 3.4% up to 3.9%. I had a typo in my notes. My quick point was that I don't really think anything they put out on that piece of paper was a shock to the marketplace. Other than their inflation targets for 2025 were very, very high. At 2.5%, with 2% real growth, you put those together, and you're looking at a 10-year yield around 4.5 to 4.6%, which is exactly where we're at right now. So I, like you, still like buying bonds, and this is probably going to be the trade that takes all my money in 2025.
It did
But
to
I do
me.
like
It
this
did to
level.
me about 15 years ago when they went to 170.
So I don't understand. What's your question?
No question. I was just making yesterday actionable. I think nothing about the piece of paper they put in front of people should have shocked anyone. We'd been talking about the numbers that they'd put in that thing for the last 2 weeks, and we were dead on, with the exception of inflation being much higher. And I think if you look at their inflation expectation was 2.5%, and you look at their growth expectation, which is 2.1%, you would get a rough estimate of a 10-year yield at 4.6%, which is roughly where we are, 4.55. So I think unless you think inflation is going to be worse than 2.5, or you think growth is going to be much greater than 2.1, which is possible, we're at 3% now. But I think we're probably at a decent level between 4, 5, and 5 to go long bonds, and I've started to increase my bond position. And this will be the one perhaps I takes all my money, but I think for many different reasons, whether it's price or narrative or the piece of paper that the Fed put in front of people, I think this is a good range to get long.
Well, I think it's, if I liked him at 117 and 118, I'm going to like him more at 114. But actually, 113.28 right now.
You'll love him at 112 if we get there.
I think they're overdone, but we'll play the 24-hour rule and see if see what happens here. I mean, that's really all you can do.
I agree, gentlemen. That was the try to make Tom upset talking about as much politics.
It's good to have an ally in the room every once in a while. I mean, I get my ass kicked for 4.5 days a week. It's nice to have you every once in a while, Victor. Thank you so much for coming on.
I'm going to send you the article so you can read up on the 400 million, and I do expect a response. What is the difference between, and if you inflation adjust the dollars, 400 million in 2020 versus 200 million in 2024, the difference is insane, Tom.
It can't be. There's no inflation. Good job out of you, Victor. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a good old market measure next.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out, ask the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today. Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today. Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we're back, my friend. You know what that means. Time for a little bit more Tasty Live with a market measure.
I like it too. Profit targets
like
by
what
Delta.
too?
I like the market measure too.
Oh, okay.
Profit targets by Delta for 0 DTs. It's a complicated one, but before we do this,
sponsored by the SIBO.
We're going to tell you something that's
Victor Jones has been fired. No, just kidding.
No. Love Victor.
You'd fire me, but I'm too close to you.
Yeah. And no, I like the counterpoint.
Of course.
We are going to be doing 3 digital collectibles to start next year. And there is, perfect. We got it. We're not going to go back on the road until May with an amazing schedule this coming year. But before that,
God, I hope your daughter has a baby every year. Go ahead, keep going.
But before that, we are going to do some fun things in Chicago, and we're going to push these out to everybody. Everything you want to know about crypto.
But we're afraid to ask, which was a great movie, by the way. Everything you were afraid to ask about. Everything you were afraid to ask about sex. Was it Woody Allen?
Everything you want to know about sex, but we're afraid to ask.
To ask, yes. Woody Allen, great movie.
What year do you think that was?
1968.
No.
75? I thought
I'm going to say 72.
Okay.
But here's the funny thing. Beth, have you ever heard of that movie?
Never.
Of course. I asked every one of the young kids, including Ryan, who's doing this.
Oh, that's funny.
He goes, I love that name. Where'd you come up with that? And I go, it's the name of a Woody Allen movie from in the early 70s. And he goes, what? I never heard of it. It's
72.
Great. Every
72?
single...
All right, there you go.
72.
88 rating.
Every single person I asked never heard of that movie. It was a great movie.
I don't know if it stands the test of time. I don't figure it would, but it was amazing when it came out. I mean, I was 10 when it came out, but
it doesn't stand the test of time at all. Mm-hmm. It was a great movie, and I mean, all those Woody Allen movies back then were great. Yeah. Anyway, long story short, everything you ever wanted to know, everything you want to know about crypto, but we're afraid to ask. We are going to be publishing that, minting it on January 25th at 10 in the morning. Then Dr. Jim is going to be doing something called a beginner trader from start to finish. It's about an hour and a half. It's almost a full 90 minutes of Dr. Jim really taking us a little deeper than a crash course.
Now, you don't have to watch it all in one sitting, do you? Because 90 minutes straight of Dr. Jim, that could be rough for most people. That'd be rough for me. I guess I should only speak for myself. I shouldn't speak for the masses.
That's going to be on the third Saturday in February at 10 a.m. These are all digital. And all you have to do is sign up one time. You get all 3 of them.
So you can play it, rewind it. You can do whatever you want. Oh, this is going to be great. This is great. You could definitely learn from
Show it to your kids.
He's one of the best teachers. Just not 90 minutes in one full swoop.
And the third one is Mike, his friends, and his whiteboard.
I love it. I love Mike and his whiteboard. Very, very popular on our site and YouTube. It's going to be good. Now he's got his friend that's new and improved.
How many people?
Who's his friend, by the way?
His friend? Oh, his friend's Nikki. Friend, lover, roommate, whatever.
Nikki's the friend?
No, he's got
neighbor.
He's only got 2 friends. Mikey has 2 friends. He has Nikki, and who's his other?
His girlfriend.
No, what is his girlfriend?
Ooh.
Katie.
Oh, yes.
Three Amigos.
Yes, yeah, 100%. 100%.
The Three Amigos.
Yes, 100%.
Mike, Katie, and Nikki, but that's his friends. But
oh, it's friends, plural. So, yes.
Yes.
That's awesome. That's going to be gold right there.
Mike, Katie, and Nikki, and they're going to do a much more detailed and complex.
Mike and his whiteboard?
Yes.
Awesome.
So we are very excited about this. Actually, we just got a Tesla fill.
Oh, what Tesla?
Shocking.
You say that. Tesla only up $3.
Yep.
Make you holler.
Buying some call spreads back in Tesla that we sold. Hated them when I sold these. And they're actually working. Sold them at $1.72. They're $1.20 now.
Oh. Daddy, do it.
So these three things, you sign up one time, tastylive.com/events. You get all three. January, February, and March on the 3rd or 4th Saturday of each month in digital format. You watch them whenever you want. And this is a major thing for us. So we'd be very excited.
Awesome.
Anyway.
Like it.
Yep, me too. All right, let's go and do let's go do this.
Market Measure, sponsored by the SIBO.
Profit targets by Delta for zero DT is part of our zero DT discussion. Let's see what we got.
Is this going to be complicated? Because I'm a little tired from yesterday. Russell down 3. So
it's really complicated. Managing winners is the cornerstone of Tasty methodology. By taking profits aggressively, we ensure a high percentage of up days. When the trades are going well, using a higher profit target will bring home more of it. But some days, things turn against you, right?
Mm-hmm.
Okay. What have been the best performing profit targets for short zero DT premium? And has it depended on the distance out of the money? Do you want to take a guess?
I'm hoping it's in the 20-ish delta range. It's probably going to be closer to the 35-ish delta range. That's my guess. If that's
You're hoping it's in the 20-ish delta range.
With my short strike. I think they're only doing strangles here, right? Because they're not buying the wings. Is that correct?
They're not buying the wings. There's no wings.
Right.
Yeah.
Right. So I'm hoping it's in the 20.
We're buying back all that Tesla, not all of it. We just bought back half. A third.
You Tesla call spreads. Good job out of you.
Yeah. 122, 120, 118.
Beautiful.
Call that working it. S&P's only up, NASDAQ's only up 10. S&P's only up 23.
I mean, the S&P's up 23. I can't believe I got both sides right. So I don't know if that never happened before in my entire life.
Tesla's actually down on the day.
That'd be all right.
You're totally all right. Now, can you help me? Can you help me spread off some?
Ivy rank's still 96 in there. I need it in the 50s or 60s.
Yep. Anyway, let's keep going here. Let's have a little fun. We got to keep going. I do not like the way I do not like the way the
That's exactly what we talked about. The market opening too high for the type of move that we had yesterday. I mean,
oh yeah, I don't like that. But I'm saying I don't like the way some of the semiconductor stocks are acting. If you're playing along at home, and some of these stocks that were up big this morning, like MSTR and Coinbase and all that kind of stuff, they have, how do you say, given it up?
A little bit.
Big turnaround in some of these stocks. Let's take a look at Coinbase and see how bad how much that one's moved around. Pretty big.
Coinbase unchanged, down 90 cents. It's had a range. It got up to 295, just above, and it's right where it is on its lows right now, just under 279. So yeah, it's had a big $15, $16 move. Here, the NASDAQ just turned red, Southnoff.
Yeah. I'm just rolling down some stuff in Coinbase and Monster and those and MSTR, but my screen, top to bottom, has turned red.
You still got Goldman Sachs, JP Morgan, some of those banking stocks higher, Nvidia up $1 and change. But yeah, you are correct. It is definitely more of a sea of red than we had before, with some movers too. MSTR down 12, UNH down 6.
Yep. Anyway, let's
the study sponsored by the SIBO.
Let's take a look and see if Tony is correct. Using 21 months worth of data now, We examine selling strangles every day at the market open, and with a variety of delta ranging from 50 to 15. For each delta, we considered the long-term performance of the hypothetical traders who manage the trades at different fixed percentages of the initial credit. So the question becomes, if you manage at 15% or 50% of the initial credit, where do you do better? It's a little confusing because what happens here, and you're going to see this starting on the next slide, is
I think it's to be a higher delta than I'm gonna like. That's going to be my call.
What's going to happen, okay, and just hear me out on this, is the higher the delta, the strangle, like a straddle or a high delta strangle, the quicker you have to manage.
Yeah.
Or you're dead.
Okay.
But
I think you're going to get that opportunity.
If you get wider, then you can wait a little bit longer. But if you don't do it quick in a straddle,
that makes sense.
Okay. I think
at least that makes sense to me.
Okay. Let's take a look at the next slide. So, and I have to look at my screen here because it's a little different. So, this is the cumulative performance.
By different, you mean bigger.
What?
By different, you mean bigger. You could see it.
Yeah. This is the cumulative performance of the 50 delta straddles. Okay. Cumulative performance, 50 delta straddles. So what's happening here is, if you look at the top line that's in blue, it's hard to see, but if you look at the top line that's
a profit
in blue,
target of 15%.
15% blows away everything else.
Sure.
If you waited until 35 or 50% profits, you don't do that well.
Yeah, you can see that's that reddish line down at the bottom that's followed by that purple line.
Yeah.
That's the 35 and 50% target. The 25% is the yellow line. That seems to do okay too. I mean, it's in
you
the
do significantly.
The profits are on the left-hand side, right? $300 or whatever.
Yeah. Yep. You do significantly better. Significantly.
Yeah.
When you manage early on a big delta strangle or straddle in this case. Let's go to the next slide, Beth. So the next one is going to be 40. And what happens at 40 is you can go up a little bit. Now you can go to 25%, and you kind of have, you're okay.
Look at that straddle. You're a loss.
Yep. If you wait.
Yeah.
But this is the 40 delta.
Right.
We're only showing this because this is such a cool way to
look at time premium working for you. Yeah.
Go to the next slide, Beth. So this one is the 30 delta. And in the 30 delta, it's also 25%. So if you sell a straddle, like you sell both at the money options in the 0 days, you got to manage at 15%. If you move a little bit further out of the money, like 40 and 30 deltas, we're usually at 20. But if you move 40 or 30, then you can do it, maybe wait till 25%, 15 to 25%. Go to the next slide, because this is where we are at. We're at the 20% number. At the 20% number, okay, which is the one we sell, you can wait until you get to 15%.
Yeah.
You see that?
Yeah, I do.
Okay.
Yeah, I do.
So I'm sorry, you can wait to get 35%. 35%.
And
so this is the 35% number. So it's just as you get further,
a price target of 50%, not so great, Sadnov.
As you get further out of the money, you can go to a higher percentage. Okay.
And that straddle not doing well at all.
No. Let's go to the next slide, Beth. And the next one's going to be 15, and at 15, it's still the same thing. It's 35%. So what the research team wanted to show you was that if you sell something at the money, you got to manage really early. If you sell something further out of the money, you can give yourself a little cush.
Yes.
And you could hold out for a little bit more. I did a guest podcast the other day for somebody that was doing 0 DTs, and he asked a question just like this. And we hadn't finished this study yet, but because this is a brand new study, but
that's just that's just a roll.
But that's the SPY roll. Remember we said we didn't think we'd get filled.
Right. Well,
72 cents.
72 cents with the SPUs 40 handles lower.
Yeah, I mean, listen, I'll take it.
Then, it was trading 50, 60 cents higher than that because the put spread was 56 lower than that before, yes.
Yeah, that just gets me out of my...
That gets you out of your dividend risk and rolls you.
There's no dividend risk on the Jans, I don't think.
No, not at those strikes.
So anyway, that's really interesting. And anyway, super interesting study that as you get further out of the money, you can go from 15 to 35% in expected profits and have the same kind of targets. Let's go next slide. And by the way, you can do 25% across the board. You're great.
Yeah, it seems well.
The closer to the money, the zero TTs were traded, the more important it was to take profits quickly. For straddles, 15% profit target was the most successful, while the more typical was the 25% range. That's what I just said. The further out of the money, at the 20 delta, 15 delta, 35% profit did best, and 15 did even worse at 50. So just, that 25 to 35, perfect. The profit target management does little for controlling risk. The bad losers that never went green hit just as hard, but pairing the right strikes and management can set you up for long-term success.
Good job. Good study. I didn't think we were going to look at it that way, and it was really nice. Good way of looking at it. It's really how volatility and time works for you when you.
Yeah, no, that's a really good zero DT study.
Even the S&P is up 15. NASDAQ just turned red again, down 16. Russell is down 10. The Dow is up 109. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Starting off with Joy, your friend of mine, Mr. Scott Sheridan from Tasty Trade World Headquarters, the #1 brokerage firm in the galaxy. We'll be back in 90 seconds. Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Tomas, we
He
are
took his
back.
clothes off?
Yes.
The whole thing?
Whoa.
The full Monty.
So they did a full Monty?
Full Monty.
I did a full Monty at a Club Med.
You're doing it for your wife, doesn't count.
No,
And I have to
at
say-
a Club Med
Here,
on-
look at this. Here
on
you go.
stage.
So wait, where did you do your full Monty? Because in full
Club Med, I have a picture of it. I'll tweet it out.
I want to see it.
Omaha.
We had a bolo over our, like a hat.
Yeah, but then they removed it.
Over our junk. We did a thing on our head, we had 2 of them, one on our head, one here, one this, blah, blah, blah.
You're there on stage practicing.
Completely naked. I got 2 hats, one on my head and one on my package. And then we were doing these they made us do this little thing, They made you. You take off your head. And then, and you switch like this, And then the whole joke is they had tape on your, on your belly button kind of thing. Gosh. And you would hold it like this, and then you have the hat on your head, and you'd raise your hands up, and the thing would be staying out there, and the crowd would laugh. That was the joke. It was like a talent show.
Randomly, they picked you and said, you come up here and take your clothes off.
That is correct. Now, we already had our clothes off.
Was it all guys?
All guys, younger guys.
No, I mean in the audience.
One old guy, for the older women, they made a joke, young guy like me at the time, I was in my 20s.
The audience was all guys.
Yes, the audience was all guys.
How old were you?
But their joke is when we do it, we go like this. They got 2 guys on the side of the stage. They come out and they whack your hat off of your
tape,
private part.
Your tape.
My tape.
So
you're standing there like this with a hat on your head. I did a full Monty.
I had no idea that it was.
Where was this Club
this
Med?
wrong?
Club Med, maybe.
Turks and Caicos?
No, Zihuatanejo, when it just opened, Extapa Zihuatanejo was.
So
when
did it
first
help
opened.
with the ladies?
I was down there with somebody already.
You just said you were by yourself. The story.
You know what? I didn't want to talk to you guys about it. I was down there with somebody.
You're more than willing to tell us when it got whacked off. Okay.
Whoa. There was no whacking off on this, okay? That's a different party. That was in New York on 42nd Street.
Some guy comes running by, smashes it. You're good with that. But then
you're sitting there like this, right.
How long did you stand there for?
Not long.
That girl took her a separate flight home, right?
She did.
We were all traumatized yesterday by Matt's Club Med story. I will not get over that.
I found the picture, by the way.
Did you see the picture?
No, I don't want to see anything.
He found the picture. I don't know if he posted it, but it's scary.
Did you happen to post the picture that you sent to me?
The Club Med picture, you got it?
Oh, yeah.
Oh, I wanted to see it.
Oh,
I wanted to see a young bat. Oh, I think I've seen this picture.
How old were you in this picture?
I'm about 23.
And remember, you didn't volunteer, you were chosen.
I was chosen for a lot of things back then when I was 23, you know what I mean? While you guys were building billion-dollar companies, I was out there, having a good time.
Yeah, thanks, Dad. Thanks, Dad. Things could have been different.
Get the full scoop by checking out the archives at tastylive.com.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this man. Tasty Trade World Headquarters, your friend of mine, the very popular, the very handsome, my good friend, Mr. Scott Sheridan. How are you, kind sir?
I'm excellent. How are you doing?
I'm doing great. What do you got on your phone? You got a picture of something? You got something?
No, but I gotta read this story because I was crying before I came in here.
The story you just told us?
No.
Okay, good.
I didn't share this one with you. So, if you are a Jets fan, you probably want to turn.
They don't have any Jet. There aren't any Jet fans left.
Okay, well, turn the sound.
There was Jet fans at one time, but there's none left.
They were high and mighty.
Turn the sound off if you're a Jets fan. This is reported by The Atlantic. Okay, this is the report. This is the story that just came out.
Yeah, what's the story?
So the owner, Woody Johnson, I guess, is a very hands-on owner.
Sure.
Okay, no problem. No problem with a hands-on owner. So the guy says, I have no issues with him being a hands-on owner. What I did not expect to learn is the influence that his teen sons, Brick and Jack, whose love for the Madden franchise seems to influence the owner of this NFL team. No, seriously, our reporting revealed that the Jets owner nixed the trade for Jerry Jeudy last offseason because the receiver's EA Sports rating was too low.
So what? Jeudy sucked. I mean, he really did. His rating should have been low.
Why do I talk to you? Why do I
that bothers you?
Okay,
this is gonna bother you.
The boys who are playing Madden, EA Sports, football, whatever, are making decisions for $4 billion football team.
It's more like $8 billion.
It's not any different than
it's
you
more like
having
$8 billion.
A computer pick out
$8 billion.
Your
I would rather that
football team and beating us.
Do you know how the other decisions are made in the football league?
Apparently, I don't.
Obviously,
I'd like to think that.
Obviously not. But Tom is going to.
Obviously,
Tom, who's never been
that
on
would
one
not
of
bother
these,
me
tell
one
us.
bit because
Really?
honestly, the reason that Judy's rating was so low on Madden is because he stunk. Okay, he did stink. They're lucky they got Devontae Adams. They did better. It's a good move by those kids. Hire that kid Brick.
You know what? I'm bringing a bag of pistachios.
I completely disagree with you. I think I'm fine with that.
Really?
Yeah.
Okay.
This coming from the guy that let the computer choose his fantasy team?
It's not that I let the computer.
You did, and you beat us to add insult to
injury. You did, and you won. So yeah,
I just think my son wasn't concentrating.
I'll take Madden over half. I'll take the Madden ratings.
Yeah.
Because at least that's all quantified.
Okay.
Over half of the GMs.
So you would say that as the Bears, you'd be happy if you just as a Bears, if the Bears said our next GM is going to be some data guy.
If you
doesn't know anything about football, just to look at bad numbers.
I don't know. Well, the last 35 years of the Bears, it's people that know everything about football. We've had one playoff game in 20 years. I mean, come on.
That's pretty good.
Yeah. So I mean, yeah. Can you tell me what great moves the Bears GMs have had? I mean, I thought Ryan Poles pulled off the trade of the century a couple of years ago, but who knows? Hasn't worked out that way. But my whole point is, you're making a statement. Yeah, I'd be fine with Madden picking the team. As opposed to who?
Madden's dead, but
yeah, right.
Well, no,
EA
Madden
Sports. EA Sports is what you're talking about.
Okay.
How's Jerry Jones done picking his guys? I mean, who the hell? How do you know this stuff?
Wow. Whew. Would you have EA Sports pick your trades for you?
For sure. Wait, I'm trading right now. Pick everything I want.
Okay, fair enough. Moving on. Moving on. There is a connection
rather than 3 points higher.
There is a connection to our long-standing running joke of Parsons Chicken. So Parsons,
that's what I had for Thanksgiving.
Oh, this I want to hear.
Okay, so their location on Chicago Avenue, it's like 2100 West End Chicago.
Yeah,
well, it's not Parsons anymore.
Oh.
They flipped it to a pizza parlor.
Oh.
It's still Parsons. It's still the same company, but it's not chicken now. It's not like a dead chicken wing.
That chicken was gross.
Gross. So it's taverns.
Great. You guys are nuts.
Okay, you don't have any taste buds left.
Well, you already called me an idiot today, so I might as well be.
Only in the nicest.
Yeah, you did.
Only in the nicest of ways.
When I read you the emails from.
I said idiots. I was.
Idiots.
Yeah.
Okay,
it's so plural.
I lumped in the idiots.
Yeah. It's plural, so it's not offensive.
You and your idiot friends.
You and your idiot friends, right? That's not calling you an idiot. It's saying you and your idiot friends.
Go ahead.
Let's not double down.
Kind of have to go with him on this one. Okay.
Believe me, he's called me an idiot in the past.
Okay.
My friend Greg will send me the video.
I kind of have to go with him on this one. He did insult all of your friends. That's a
we're his friends. It was the emailers. He was reading off emails. I go, you and your idiot.
Okay. Anyway, back to the story. So, nice vibe, solid pizza, good salad. Give it 2 thumbs up.
Oh, okay.
That's your big thing.
Why?
That's your big reveal.
That's your big reveal.
Beth,
don't you hate him again? See how quickly.
You know what?
I thought you had something important to say.
What's a good pizza? You don't want to know about a good pizza?
Do you think our viewers that live all over the universe care?
Yeah, they
about
might.
A random pizzeria in Chicago.
They might.
You can leave if you want, Scott.
Beth, thank you. I'm going to give my
a random pizzeria in Chicago, and you're telling.
I can't wait to hear the next story coming out of your mouth.
Do you know what I found out? Change the subject for a quick second.
Nobody cares. Okay, I'll just get ahead of it.
About 8 years ago, Beth used to deliver my coffee to me. I would press a little button, and it would ring in her studio, and she would bring me a cup of hot coffee.
Which is not part of her job, by the way.
No, it was
because she's one of the nicest people on the face of the earth. She's willing to do it for you.
Kindness of her heart, absolutely. Right. So about 8 years ago, she introduced me to the craft, and now I have to make my own coffee. I get my coffee. I keep it here.
Craft.
You're going to correct him? Spatula.
Well, he said it like giraffe.
It's carafe. I didn't want to say anything, but just
carafe.
There's no T.
What is it?
There's no
T.
Carafe.
Drop the T. End it. Just stop talking.
Carafe.
Close enough. Okay.
Like Maria.
Like what?
Like Maria.
Well, I don't know what word you just said, but sure.
Maria. Yes.
Maria.
Anyway, 8 years ago.
I speak Brooklynese.
8 years ago, she gave me that container that keeps my coffee hot. It keeps my coffee hot, and I can pour my own coffee.
Keeps hot things hot.
I didn't realize it when she gave me this, because she came in and told me. She gave me a refrigerator so that now she doesn't have to bring me in my water.
It's a mini fridge.
Yeah, it's a mini fridge.
Now, I have to say, that's the definition of a mini fridge. Because I don't know
You're upset that you have to bend over?
Again, yes. My bending over days were done.
You're upset that you have to reach in your own mini fridge?
Yes.
That you didn't have to pay for?
I enjoy Beth coming in. She brought the fresh air.
I'm going to give
a little break from you.
I'm going to give you another suggestion. A little bit of work on your end.
Okay.
But this could be a solution without having to bend over.
Sure.
Freeze bottles.
Stop saying bend over. You okay?
Freeze bottles overnight, and then
My mom used to do that and my mom's death anniversary was yesterday. So thank you for mentioning that. I appreciate it.
See? And then they thaw, and then you have nice cold water sitting on your desk.
Yeah, my mom used to do that for my.
See, that's big brain activity.
Yeah.
Tom's wondering.
He used to put frozen water in your lunch.
No, she would a can of soda. She knew
can of soda would explode.
No, she knew how to put it was 2 or 3 layers
of tinfoil?
Of tinfoil around it. And she would put it in at a certain time.
Was she trying to kill you giving all that soda when you were a young kid?
kid.
And then you open
Shasta.
it.
I think it was Shasta.
Oh, Shasta was great.
Shasta.
It was like a nickel or a dime for a key, whatever. Yeah.
Right.
If you're lucky.
And when she would take it out in the morning, it would be perfect. It would just be slushy, and by the time I would drink it, it would be like just ice cold. It was beautiful. She had it down to a science.
Shouts out to your mom. That was a good mom.
That's a good memory. Thank you for bringing that up.
What was your flavor? Orange,
See,
grape?
we all became friends again.
Grape. He's a grape boy.
Grape or orange?
Grape.
Orange.
I'm just guessing.
I told you the story this morning. You know I'm not a grape guy. I mean, you know.
Thought you were grape.
No, orange.
Say
I like
Orange. Most people like orange.
Shasta.
Also like grape.
Okay, not me. I'm an orange, not a grape. Now, have you ever had the Mexican Coke version of Orange Fanta?
With the little guy on it. It's got
no, it's Costco. Just go to Costco.
Whatever.
It's just orange Fanta.
It's orange Fanta.
Sugar.
So it's cane sugar as opposed to.
They sell it now like you get Pepsi with cane sugar too now.
Yeah, but Pepsi sucks. So go to Costco.
Pepsi.
It used to. Doesn't
You're not a Pepsi boy anymore?
Doesn't drink soda anymore.
Diet Pepsi.
Yeah, Diet Pepsi doesn't drink it anymore because we couldn't get a soda machine because I was Coke.
I like Diet Dr Pepper in our thing.
Do you?
It's my favorite one.
Really?
Diet Dr Pepper.
Diet soda is not good for you.
I know. I don't
So
drink
Tony.
it all, but Diet Dr Pepper.
Vinny will love you for this. Does he
Right.
drink soda?
Yeah.
Go to Costco. Okay, go to Costco. And they usually have all Coke. Sometimes they'll do a mixed case. So it's 12 Coke, 6 Sprite, 6 Orange Fanta. The Orange Fanta is lights out.
Do they sell it in the small?
No, it's a bottle.
Is it this?
That's what I'm talking
Let's
about. Gibrajito or whatever. Yeah, this thing.
No, it's regular Fanta. Like that's a different one.
No, that's Jarritos.
Oh, Jarritos. That's how you say it.
No. Fanta. Just look up Fanta made with cane sugar. That's it.
They make them in the little.
No,
Oh my
it's
God.
a bottle. I'm moving on.
It has to be the. No, I gotta tell you, it gotta be the little cans because he wastes too much and it drives me nuts.
You know what? You and the missus. There we go. Thank you. There you go. So
He would waste that. He would open it up. He'd drink like 3 ounces and then it would go bad. And then
in a case at Costco used to be 19 and now I think it's $20. Now it's $30.
Thanks, Joe Biden.
Right, for $30. Still worth it. Look at this, $2.28.
There's no inflation. These bonds are going to 111, Sas. Forget about 112. I cut through that like a
Thanks, Elon Musk.
hot knife through
Well,
butter. No, you told me this is all still Biden's administration doing this yesterday. The day
So how is he running all of his companies and telling Congress?
And being president.
Multitasking.
And being president.
And being president of the U.S.
And telling Congress what to do. He's talented.
Talented, very talented.
Talented. Strong and quite strong.
Yeah, don't worry. Nobody has a problem with that.
With what? With him telling everybody what to do?
And being president.
Perfect. I can't wait to see how this all plays out starting January 20th.
ain't gonna last for long. You know.
None of this. There's
Nice change.
there's going to be so much infighting within the first few weeks because they can't get anything done, and they're going to be like, "What's your fault? It's your fault." The blame game. Let's see what happens. Wishing them well. Let's see what happens.
Change is good.
Wishing him well.
Well,
Can we get to your list?
We don't
before
have
he goes off on it. Don't make me bring Victor Jones in here.
Oh my
okay?
God,
I can't have
please
2
don't.
against 1 again. All right.
Can't have any more.
Every
Victor.
day.
I can't have any more Victor Jones.
Oh no, he's one of them.
Victor?
Yeah,
he's one of them.
Oof.
I met the kid. He was just.
He's one of the majority.
Oof.
When I met the kid, he was just like this.
He's one of the majority.
When I
Let
met
me
the
put
kid,
it to you that way.
One of
I
them.
met the kid. He was this nice kid from Omaha. You know.
He was a nice kid.
He was a nice kid from Omaha. He was just a smart kid. You know.
He's still smart.
Yeah, he's less smart. But he was this smart kid from Omaha, and he was just like really hustling, and you know, he had everything going for him.
And
Yeah, he's not hustling as much as he used to.
Now he's like, you know,
Drank the Kool-Aid.
behavior modifications required next.
All right.
What do you got for us? Let me hear your list.
Top 15 symbols going through the system. First 40 minutes a day. No broad-based indices or futures. Time for you. Number 15, Meta. At a 28. For everybody else.
You get some meta, Tom.
Tesla at a 94, MU at a 33, NVIDIA at a 37, TLT at a 43, MSTR at a 44, AMD at a 47, PLTR at a 72, Coin at a 49, Apple at a 28, Amazon at a 36, AVGO at a 48, TQQQ at a 62, GLD at a 61, SOUN at a 54, and number 15 for Tom, Meta at a 28, rounding out the next 10. iBit at an 86, Goog with an L at a 43, SMC at a 39, Intel at a 62, Microsoft at a 35, Netflix at a 35, SOXL at a 65, and RGTI at a 35.
RGTI.
RGTI.
Sounds very official.
Official.
RGTI.
Rigatoni.
Rigetti.
Rigatoni. What do they do?
Rigetti Computing.
Of course.
Reganado.
See, Nicky
This
Bat
is one of those stocks I like.
had the right idea. You just got to put quantum in everything now.
Right.
And it's worth 10x.
This is a stock that
We're
went
changing our name.
We should.
Yeah, Tasty. Not Tasty.
Bad quantum.
I'm Quantum Sosnoff?
Bad quantum coffee.
Bad quantum coffee, yes.
Bad quantum coffee. There we go. BQT.
Yes.
I love it. Good job out of you, Scott. Sosnoff. I mean, you're not as bad as you usually are today.
Oh, he's bad.
No.
No, he was bad.
No. He's on a bender here. He might possibly have 2 positive green days in a row this month. We're gonna take a quick 90-second break and come back. We got more Tasty Live. Jury's still out. More Tasty Live after this with Liz and Jenny next. Peace.
Stand by.
Whoops.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking loose.
We can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. Number 1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. Number 30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. Number 6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. Number 18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
We just ripped higher up to 50 points, and I just thought we would stay there, but
the thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Rewatched that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. But I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty specific.
If you missed the live show, here's our cherry on top weekly recap.
We're going to play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. What? Gotta go to your front door. Oh. Elijah left you a present. Go ahead.
You really want me to go to my front door?
And while Tom is getting his gift,
so these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like "thank you" and "you're right."
Oh my God! Keep your shirt on.
No! Right there! Please! It's sweep.
Like this?
Please.
Oh my God, Tom! Take that. Oh no!
Let me
Take
see
that
those
shirt off.
peanut-sized nipples. Oh please, go! Yes. Oh, happy chauffeur! Happy chauffeur! Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. but I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty specific.
If you missed the live show, here's our cherry on top weekly recap.
We're going to play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. What? Gotta go to your front door.
Oh,
Elijah left you a present. Go ahead.
you really want me to go to my front door?
And while Tom is getting his gift,
So these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like thank you and you're right.
Oh my God, keep your shirt on.
no, right there, please. It's sweep.
Like this? Oh my God, Tom, take that. Oh no,
let me
take
see
that
those
shirt off.
peanut-sized nipples. Oh, please, God, yes. Oh, happy chauffeur! Happy chauffeur! Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. But I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty.
If you missed the live show, here's our cherry on top weekly recap.
We're gonna play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. What? Gotta go to your front door.
Oh,
Elijah left you a present. Go ahead.
you really want me to go to my front door?
And while Tom is getting his gift,
So these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like thank you and you're right.
Oh my God, keep your shirt on.
no, right there, please. It's sweep.
Like this? Oh my God, Tom, take that. Oh no,
let me
take
see
that
those
shirt off.
peanut-sized nipples. Oh, please, God, yes. Oh, happy chauffeur! Happy chauffeur! Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. But I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty specific.
If you missed the live show, here's our cherry on top weekly recap.
We're gonna play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. What? Gotta go to your front door.
Oh,
Elijah left you a present. Go ahead.
you really want me to go to my front door?
And while Tom is getting his gift,
So these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like thank you and you're right.
Oh my God, keep your shirt on.
no, right there, please. It's sweep.
Like this? Oh my God, Tom, take that. Oh no,
let me
take
see
that
those
shirt off.
peanut-sized nipples. Oh, please, God, yes. Oh, happy chauffeur! Happy chauffeur! Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. But I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty specific.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
Hold on.
She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
Everybody, and welcome to the Liz and Jenny Show. I'm Jenny. That beautiful blonde is Liz. Sorry for the technical difficulties. We are starting a little late today, but that's all right. We're going to have a jam-packed show.
We have a jam-packed show. We do. It is a Red Shirt Thursday, and we are in the office. You might ask why. Well, and I'm going to shamelessly self-promote. There is a Guess the Market promo coming up. John McGloin, our super producer, can you please put up the art card for the Guess
the Market? Yes, we are going to be filming a little Guess the Market. commercial. And can't wait. So, John, if you could pull it up, if you could pull up the Guess the Market info, everyone could sign up and guess the market. It's free. It's free to play. And you could win. You can win prizes, money.
$2,000 to be exact. $2,000 of Tom's money is the equivalent of $4,000 of normal people's money because it's way more fun to win.
All right. So what is your guess? What is your guess for the quarter's end of the year?
It's sealed.
It's sealed. You're not telling anyone. Okay.
It's in the steel trap.
All right. Well, we have SPX right now at 58.93. Do you guess SPX or are you guessing ES?
I don't know, John. Is it SPX or ES? I don't remember.
SPX.
SPX. Okay, so 58.93 right now. 58.93 right now. What?
It's SPX. We should have the SIBO in on this.
Yeah, guess the market.
Yeah, don't you think?
I agree. Okay, here we go. Guess the market. Where do you think the S&P will close?
I'm not submitting mine. I'm not submitting mine until January 3rd at 2:45. Quarterly.
Yeah, I think I would wait till the last minute too.
Did you hear Tony's giving Tom the day before each quarter?
So $1,000 if you're the closest guess for each quarter. $2,000 end of
Is
year.
it Price is Right style closest to without going over?
No, I think it's just closest to.
It is closest to?
Well, it says closest to.
Okay, closest to the pin.
Submit your guess. Where do you think the S&P 500, the SPX, will close on the last day of each quarter in 2025? $1,000 cash prize for Q1, Q2, Q3, $2,000 cash prize for Q4, tastylive.com/guess. I'm going to guess it's just closest to. It doesn't say closest to without going over.
Well, it doesn't say Price is Right style.
No, it doesn't. It doesn't. So we've got 58.90 on the SPX today, right now.
So you know that Bears pool that I'm in, not Bears pool, the football pool that I'm in?
Yes.
The end, it's closest to without going over.
Yeah, so one person's got to win in the end. That makes sense.
Yeah.
I mean, you've got to win. Someone's got to win in the end. They can't roll that.
Nobody gets 19, somebody gets 18, and people get 20. They're not going to split it.
They have to have a.
Yeah.
So I don't know if there's one person like one away above and one away below.
They split it. If it's closest to.
Yeah. Anyway, it's a fun game. Guess the market. Do you even remember last year's guess for the end of this year?
I wrote mine down somewhere. I was bullish, but not this bullish.
Okay.
I will tell you that. I was bullish.
Let's jump into the platform. So January 3rd, here I'm going to January 3rd because that's when our guesses are due. January 3rd, SPX opened at 47.25. 47.25. Do we have people this year close to where we are right now? Their guesses.
Well, I mean, yesterday helped.
Yesterday helped.
We're kidding about that. It did not help. It did not help our account.
No, but it helped some. It helped some of the guesses help come back in line. If someone looked at 47.25, 1,000 points higher, 57.25, that's not that far off.
Not that far off. I know I was bullish, but I don't think I was nearly this bullish.
No.
I will tell you, we were sitting at the table, and I do love coming in and talking to traders. I love being around like-minded individuals. I was sitting talking to Jamal, and I was like, what? Yesterday was pretty crazy. We were at the SIBO, so it's a little different. We were at the SIBO. It was kind of calm-ish there because it was pre-announcement.
There were a lot of orders, but mostly rolls going on.
Mostly rolls. I can't imagine what it would have been like in the VIX pit yesterday with the VIX up as much as it was, which is right over on the other side.
I wish we could have been there during that. I mean, it's unfortunate. We were in traveling mode when the number came out.
So the number came out, and then I kind of glanced at my phone, and we were down 38. I was like, oh, fine, down 38. Then, still driving. It's frowned upon drive and trade. It is, so I try not to do it. When I got home and opened up my account, and spoos were down almost 200, I was like, oh, there's an extra zero added.
Okay, I got home before you, and I had just bought a couple like 0 DTE SPY puts before the number. Just a couple. And not SPX, just SPY puts. Just a couple. And I got home, and spoos were down 50. I was like, sweet. Closing these puts, taking my money on these puts, sweet. At the end of the day, when we were down almost 200, I was so mad that I closed those.
And Jenny, on the SIBO floor, do you remember this? SPX, we were talking about the Jajun trade and talking about putting it on. We closed ours for a scratch yesterday, which was fine. And I was saying there was $12. So the expected move for the cycle was $24.
Yeah, $24.
It was a 5 standard deviation.
And I remember saying, I think we're going to move more than $24.
Yeah. But it's a 5 standard deviation move. Jamal and I were talking about this out there. So usually it's like a point, what was he saying? Like a 0.8%. Is like the biggest move. This was a 5 standard deviation.
I mean,
move.
we were like 8 times the expected move. Something crazy.
Yeah.
Something crazy. Oh, so speaking of the Jejun trade, we started late today because we had a little bit of technical
we
issues.
did. I forgot it's already.
So I don't know. It's already 10:20. I don't know what you think.
I'm telling you, our account had a bite taken out of it yesterday, and as it well should. We put a bullish Micron trade on. Micron is down.
Yeah.
And so our account should have had a bite taken out of it considering what we had on.
My account,
not too bad.
My account had a big bite taken out of it because I'm long bonds. And we had the Russell ES trade,
Which
the
we have in here
MES
as well.
M2K, which the Russell's more affected by the interest rates. That was down a lot more. That was down 4% or 4 or 5%, while SPOOs were down 2%. So that hurt us. Same thing today. We've got ES up almost 0.5% and Russell down a little bit.
What is the implied volatility on the Russell right now? Can you check IWM?
Okay.
Because you remember when Trump got elected too, the Russell was up 7% the day he got elected.
So we've got a 54 rank. 54 rank. We're talking about this position here that we have going on, this M2K MES. Since we put it on, it's down about $400.
Yes.
And that was only a few days ago. That was maybe Monday or Tuesday.
So, and we were talking about this yesterday. This position technically, by all Greek theoretics, leans bearish.
Yes, it carries some short delta, but even with the move yesterday, that didn't help because Russell was down so much more than the SPOOs.
Right.
Now, I don't know if you can see this. I pulled up $M2K, $MES to go back in all time.
Yeah, but I think we pulled that up, but it doesn't really show it.
Yeah, no, you can. I was looking at it yesterday.
Scroll.
So you can scroll. Here, no, I have to. I was scrolling on mine at home. Let me see.
I don't know.
Okay.
There's no bottom bars.
Yeah. So here, this is where the only time I saw it lower was back in July.
But that's not all time.
We've only got a year chart.
Okay.
So you only have a year chart. But back in July, I was just trying to see if we put this on 1, 2, 3, about here. We put it on around here where we're looking at.
I think we actually put it on a little bit better than that.
I thought we put it on Monday.
I'll go back and look.
Well, we had I know we had it at least on the day before. So when I'm trying to think about how much have we lost from this move and how much more could this lose, I'll just go back 3 days here. Let's say 6,900 to 7,300. So about 400 points there. And it's down. Yeah, that's right. We're down $400. So basically $100 a point. So we go from 400 points, we're down $400. And if this low here of this spread is 77, so about another 400 points away from here, we hit this low level and we're down another $400 on that trade. Just trying to think of, okay, what's a worst case scenario here?
I mean, when you put $3,500 into a trade, it's not a small trade.
No, it's
so
not.
think about it from that perspective. If you're putting that much capital into something, there's that much risk in it. Not that it's going to go to zero, but it's more capital equals more risk.
Now, normally people would think of a pairs trade as not as much risk because it's a pair, and these are micros. But we had a huge move yesterday in the Russell, much bigger than the move, twice as big probably as the move in the ES.
It was twice because I think the ES was like 2 and Russell was over 4.
Right.
Over 4.
Right. So, and this is what we get. This is where this pair stands now.
Where was it in November?
Up here. Way up here.
When?
It dropped down to this level.
When did he get elected? The big move, the big green bar.
This big green bar here.
Yeah, November 5th. That's the big green bar.
Yeah.
Right. Yeah.
So we're keeping ours on for now. I'm keeping mine on for now.
I'm keeping mine on too. I mean, honestly, in this account, because it was such a big capital bazooka, we might have to manage this earlier. But right now, I don't want to panic on day one. Right?
No, and if someone was like, oh, this, I don't know how much this could lose. I don't want to keep it on. And our trades are not trade recommendations, but could you do it in a more defined risk way using IWM and SPY? Yes, probably using options like using a zebra. Maybe you would have to do like 2 IWM zebras, long zebras, and then 1 SPY put zebra. You could probably do that and replicate this.
You could, but not today.
But we're not going to, right, we're not at that point. We're not at that point. I'm just curious. So you've got IWM 221 and SPY is 590.
IWM's 221?
Yeah.
217 calendar. Put it in.
Okay. All right.
Okay, that's the downside.
What do we have in IWM right now? We have on 232, 238, we have on a diagonal. Someone was bullish in IWM, so we have a diagonal on.
Yesterday.
Yesterday. Now.
Yesterday. That was from what's your assumption?
After the down move, you have a choice with these diagonals. You can reestablish your diagonals or you can buy back your shorts.
I say we reestablish this one. I have no problem being long IWM here.
Okay, so to reestablish this.
Because, wait, let's talk about this real quick. So if you look at that short, which we did, it's 8-day, 12-day. That short only has 8 cents back. So we're going to buy that back no matter what. But then you're looking at something with 12 days that it's the 232 and it's trading 221, which means that IWM has to go all the way back up to 232 before this bullish position kicks in. I would rather put more capital into this and reestablish.
Okay, so we will put it on and use the same. And let's see how expensive it is because the vol has gone up. Vol's gone up. So let's see how expensive it is. So if we buy the 222, I'm just trying to keep it cheaper. Buy the 222 in the 12-day because this was short term. And then we sell the 228. So that's $6 wide. We're putting another 240 into it.
This is defined risk.
I know. We put 240 into the first one. We're putting 240 into this. We're going to have to put $5 into a $6 wide.
Yeah, that's fine. I mean, honestly, it's fine. So what are we trying to do here? You're trying to make a little bit of money. You're not trying to make it all back in this trade. But if you would, if you didn't have that, would you put it on today? Probably. What I don't want to leave is that 232 in the 12-day that's just going to sit and decay.
That's
all we got.
Now, if someone doesn't want to put a lot of times with these diagonals, they're defined risk. If you don't want to put any more money into your diagonal, you can just leave it. You can. I mean, you know the risk going into the trade when you put them on.
So the 232 is worth what right now? It's in the 12-day.
60 cents, 50 cents.
So yeah, close. I mean, honestly, I would rather take that. Look at how far away that is, and what delta is it in the 12-day? So I don't mind if I was gonna be,
It's 53 cents. You're gonna get 53 cents.
So if you were bullish in IWM yesterday,
and this was from what's your assumption?
Yeah. But honestly, I mean, I would have done the same thing. I didn't have anything in IWM in my account, and I did put that in. It's okay.
So me personally, I would rather in IWM do $2 wide call spread. Maybe I got to lower it.
You're selling the call spread?
I'd rather do a $2 wide call spread and a put for $1.50.
You can't go naked option versus diagonal. You can't.
And I'd rather get $2 this way.
I would rather get $2 this way too, but that's almost $3,000 versus putting an additional $200 in. So on 100%, I would say if you got a 50 rank, sell premium, sell premium, sell premium. But the problem is that's not a apples to apples comparison.
I just don't like having $5 into a diagonal that's $6 wide.
I'm fine with that, but you can't say they're not the same. You can't put a square peg in a round hole.
Or
you can't rank these against each other because they're two totally different trades.
I know, but with 49 rank, I don't love a $6 wide diagonal that we've got $5 into.
All I'm advocating is close that and put something else on.
Okay.
That's all we were saying.
So we're going to close this. We're going to get our 54 cents back.
Yes. I mean, you can sell a put spread if you want to and use less capital. You could do a big lizard with the at the monies and define your risk.
Or if we had 12 days bullish, but we needed to go up to 232 to make it back, we could use that 50 cents and, buy a $2 wide call spread, or I don't know. I just don't like.
You've got a 50 rank. Go in near term and put on a big lizard with a fat tail because that's what we need to do.
Okay.
If we were going to have $500 at risk, $500 at risk.
Sure. So how far do you want?
Bullish.
Should I go to Jan? Or you want a shorter term?
Honestly, when you've got the rank like this, it is January.
So January.
You can do a big lizard or you can do a jade lizard. Do like a $5 on the top as far, like to the expected move and I don't know, just put it in. We'll see what this looks like.
Well, I pulled up a jade lizard and you didn't want to.
You have to do a fat tail because we're not going to put $3,000 into this.
Yeah.
That's why we said big lizard.
You have to buy something. So big lizard, you've got 222 to 230.
And I wasn't saying I didn't want to. What I'm saying is you can't compare it to the diagonal.
No,
they're
but with the
different
50
trades.
rank.
With a 50 rank, you should be selling premium.
961 credit, and it's $8 wide.
So you have $1.30.
You have $1.60.
It's going to be expensive.
It's going to be expensive. Yeah, it's using $1,000.
Well, it's better. It's better than $3.
and takes your break even to 214.
Okay.
But it's $1,000 in risk.
Here, what do you think about this? Why don't you go up and do the Jade Lizard type thing where you're $3 wide, and we'll do 2 put spreads on the bottom.
Okay.
Do you know what I mean? Where we're gonna kind of split the difference between the big and the Jade.
So we could just do this: $5 wide.
There you go.
$5 wide put spread.
210. And then do a $2 wide. Do a $2 wide and bring it in. You can go in a little bit more.
Well, then we have risk to the upside.
A little bit of risk. We'll make money if it goes up, unless it gaps up wildly. If this gaps up wildly,
right? Then the other one would have come back, and then we'll be mad we have this on.
Yeah. Yeah, just do the dollar wide. That's fine.
Just regular Jade Lizard.
There she is, a regular Jade Lizard.
Regular Jade Lizard. $5 wide put spread. $1 wide call spread. This isn't going to make that much, but
something. And we can layer in different positions. Okay.
Okay, so we're doing our like daily end of year SPY calendars, and we're rolling. We've got to roll that. We have to roll that call, but it's so far away. The 604. You're not going to get anything for the roll.
Go out one day. I mean, I was looking at it this morning. Now, granted, it was before the open, but you can get like 10 cents, 15 cents.
Oh, you can?
Yeah, I think so. In the one day. Go to the one day. Nope, never mind. It's gone.
So over the weekend, we probably could go to the 4 day. You're getting 8 cents.
Ugh.
I know.
When I saw 15 cents this morning, I was like, I'm doing that. But I don't want 8 cents that way. But it's so far away. It doesn't really matter.
I mean, we've covered a big chunk of the cost.
So then you just leave that. That's what we were looking for in a big move.
Right. So do we? I'm tempted to start over with it at the money.
I'm fine with that.
You know, here we're at 590, and if we do tomorrow's 590, they've gotten expensive now though. Look how much more they are than we paid for it.
That's what happens when implied volatility.
Forget it. Forget about it, SPY.
We've got the one bullish trade in.
Yeah.
I mean, I wonder if that was a super overcorrection. Spoos are up 42 again.
I know. That's why for mine, I bought back my shorts and I just left my longs, and I'm just.
Because you're not getting anything for those.
You're not getting anything.
Yeah.
So I think like we close this for a penny and we wait. If we get 50 points today, 50 points tomorrow, then we'll be back in business of getting money for that, for selling those 0 days.
It will be back in business.
Back in business.
Back in business.
Speaking of getting back in business, Micron down 16.25, was down 18 or 19. Wah, wah, Micron.
All right, can we pop into Twitter real quick? We're gonna go to Jack. If we're talking about Micron, we gotta go to Jack. So let's pop into Twitter. Here we go. He's top on the happy red shirt. He just says red shirt Thursday. It doesn't say happy. Oh no, my strangle in MU is in danger. I closed my short calls, but my short put is very, very close to the at the money.
Oh, well.
Congratulations.
Yeah, that's not bad.
I'm scared. What would a new trader do? Should I roll out into for time? Is assignment scary? I love that you cover these topics with Twitter.
Okay, Jack. So you've been doing this a long time. I'm sure you've been assigned on things before.
I think he's having fun with us.
So, all right, Micron. And Tom's puts were out of the money too. I think Tom's puts were like the 87.5. If you sold puts and were looking for, you got out of the way. You know, when you define your risk, you have to bring it up. Well, ours was up. We were the short 195 put spread. You have to bring it up when you define your risk. Naked puts, they're kind of okay.
Naked put, you roll till you're right.
So
you're almost the at the monies. Very close to the at the money.
Yeah.
Congratulations on your wealth, Jack JT.
Yeah.
Roll them out. Look at the implied volatility in Micron. Let's jump into the platform if we can.
Yeah, let's go on the platform. I wanted to get back in with puts in Micron. I heard Tom say his were the 87.5. That's right there. You're trading right there.
I think he's in the 1 day. I would take those and roll them out. And it's Micron, right? So Jack is perma bull in Micron. So
I'd go roll them to like taking a small credit and roll them to the 82.5 in Jan. That's what I would do.
Yeah, you're taking it down $5 and you're still getting a credit.
What do you think it's selling at 82.5 for? 217.
I love it. I love it. I love it. I love it.
$1,200, 217, 82.5 put in Micron.
What could possibly go wrong?
And ship. So now we're just selling puts. Now we're just chugging away.
Okay, so here we will be chugging away. So I will say this. Not a while ago. It was this year.
Phil.
It was this year. We had somebody on the show. And we were talking about how The down move hurt because the implied volatility was so high, so we had a lot of puts in. This down move didn't hurt us nearly as much.
We didn't have a lot of puts.
We didn't have a lot of puts. We didn't have a lot of naked positions. So kind of, if you're looking at something like this, now is the time when Tasty traders, all of Tasty Nation, and myself included, is going to switch. We just did it in IWM, or we switched to selling premium. So I just want to be, this is here, but it doesn't mean that it's not going to continue to go up. It is what it is. So just trade with caution.
Trade with caution. It's not. Do you remember that time where we got some vol and I was like, oh, put City USA. This isn't put City USA. This is trade with caution.
This is one put in Micron.
We sold a naked put in AMD yesterday. And just to take a look at it here, it's the 115 put. It's still $5 or $6 out of the money. It's down $140. We sold this yesterday. That's
not bad. I mean, that's not bad.
No, it's not in bad shape. It's not in bad shape.
Well, here's our saving grace. We did it in the January. If we would have done it in the nearer term, it would have been closer.
Would have been.
And we're still $5 away from being at the monies.
Yeah. So that's not terrible. We're filled in IWM.
That's our first fill of the day.
No, aren't we filled in Micron? We're filled in Micron too.
Oh, second fill of the day.
Here's something we have to manage. There's a couple things. I did not go in this account yesterday afternoon. Did you go in this account yesterday afternoon?
Did you? Okay, so you closed IWM. No, I did not.
We got filled in IWM. I closed the original. I closed our diagonal and just put in this Jade Lizard.
Yes, okay. I got that.
And we are filled in Micron. I left our earnings trade because there's nothing to do with it now. We'll deal with that tomorrow. And I put on the new trade.
Well, yesterday. Yeah. Oh, everything got pushed out because nothing happened after our close yesterday.
No, I didn't do anything in here. Oh gosh. Thank God we got, thanks to our viewer for the MSTR trade because we made $170 on that.
Woohoo!
Our one bearish trade.
Oh, and you know who that was? Hold on. This was Liz and Jenny Forever.
Thank you, Liz and Jenny Forever.
If you wanna pop back into Twitter real quick.
And I'm gonna close this.
Just because it's topical. Here we go, pop back into Twitter. Liz and Jenny Forever, while she is closing it. Good morning, ladies. Happy Red Shirt Thursday. Happy Red Shirt Thursday to you too as well. Love seeing this picture of this baby. Your GTC took profit in MSTR today, 50%. Not sure why it didn't trigger first day. Huh. KBE option spreads are crazy. Can we take a look at KBE? Because it was one of our only shining moments yesterday. We have a put zebra in it.
Oh, it's up today 50 cents, but KBE yesterday, look at that, put zebra in KBE, so thank you. Gosh, Liz and Jenny Forever, we owe you. We owe you between MSTR and KBE, we owe you something. We'll take you out to lunch.
Keep tweeting us, giving us your trade ideas.
Yeah, so that made $275. That was helpful.
Yeah, that was helpful.
Now,
let's look at this. So we've got the 59.61. I mean, honestly, I would like to close this and run like a thief.
Yeah,
you can ratchet it. Do you want to walk through the ratchet or do you just want to close it?
We could walk through the ratchet. So
this is pretty far. This might be a good example of walking through the ratchet.
Of course. If we want to keep the bearish position going in KBE, we would close our current zebra, put another one on, sell 150 delta, buy 270 deltas, and we would shift this whole thing down and take in 290 credit. When we put the trade on, it was 465 debit. So now if we're taking almost $3 credit, then we only have $165 at risk in KBE.
And it's still profitable to the downside. Mm-hmm. So that was a good walkthrough of the ratchet. I'd like to take our $300.
I kind of think we just close this and take our $300 and say thanks to Liz and Jenny Forever.
Jenny Forever, great handle, by the way.
Yeah.
It's actually Dave 59 OR.
So we're working that. Closing that.
While you're looking in the account, let's pop back into Twitter. I'm going to go to Bob on Fire. Thank you very much for the earnings plays today. So he's got Nike, FedEx, Carnival Cruise, and WGO. I don't know what WGO is.
No, I don't know either. We'll take a look at those.
Look, so CarMax was last night, and it was up 9%.
Carvana, I thought.
CarMax, KMX.
Okay.
Not Carvana, KMX. Okay. Let's take a look at that if we can. So I'll keep these up and we'll look at it, but it was not Carvana. It was definitely CarMax.
No, I get Carvana's on my brain because I looked yesterday after, Russell was getting hammered. I looked what are the biggest weighted stocks in the Russell. And number one was like MSTR and number two was Carvana.
Number two is Carvana?
I mean, at the top of the list?
That thing was going bankrupt last year.
So
it was a $4 stock.
So when I saw that, honestly, when I saw like the biggest weighted stocks in the Russell and I saw MSTR and Carvana, I thought to myself, if I knew this, I wouldn't have even put that trade on.
What? The IWM or MES?
Our M2K MES. If I saw that, if I showed you that list and said, Liz, these are the like heaviest weighted stocks in the Russell, you would have said, I don't want to get long that.
But you got to understand, this is all versions of the same trade too, because the Russell also has things that are sensitive to interest rates. So the long bonds position is the same thing as the Russell position, is the same thing as a lot of other things.
But we don't even have a TLT position, and all we had in the bonds was one point wide put spread. We didn't have a big position.
Which still has, what does it have to lose? 56 to 63. You've still got 7 ticks to lose. 7 ticks.
56 to 63. Not 57 to 63.
57 to 63.
Not much. 5 ticks.
5 ticks.
Not that much.
Tick. Can you go back and can you go in there and give me what 6 ticks is? Just go to the 0 DT.
I'm going to the 1 day. Here's 5 ticks. 62.50.
It's a little bit more than that. So we have like $75 left to lose.
Yeah, not much. Mm-hmm. Not much. I mean, it's nothing like mine. Like the bonds took me out yesterday. Thank you, Tom. I'm going to send him a bill.
Just slide it over at the table.
Today at the lunch, I'm going to give him a bill.
Do you know what's for lunch today? Did you look?
Yes. Fry the coop.
I know.
What is that? Sandwiches?
Massive chicken sandwiches.
Okay. And you know what I said when I woke up today?
Eating fried chicken sandwiches?
Woke up today. Stepped on the scale and then said, the diet starts today. And then I got here and it's Fry the Coop. It's a dilemma.
It is a dilemma.
If the diet starts today, what am I gonna do when Fry the Coop comes?
You're gonna be eating the sides, the pickles. It's crazy though, because we both had stomach flu. We didn't have it. Our kids had it. Her daughter had it, and my son, and they didn't see each other. They went to 2 different schools. My son lost 8 pounds.
Lily looked
in 2 days.
Lily looks emaciated. We went out to dinner last night to celebrate a handful of things, not my possessions, and I was looking at her across the table. Her face looked like a skeleton.
Yeah.
From having that flu.
8 pounds, 2 days. What could possibly go wrong? I was like, I'll take a little bit of that. I'm just kidding.
Yeah, and my son home from college. It was a rough day yesterday. It hurt. I lost probably a Disney cruise. Probably lost a Disney cruise.
Oh, I lost 6 cruises. I don't know what kind of positions you had on. I was like, oh, that took a chunk out.
So, and then we're at the restaurant, and he's home from college. He's like, we're celebrating. I'm gonna get the surf and turf. I was like, all right, I guess. So he got the surf and turf. That's my kid.
That'll do it. Where'd you guys go that he got surf and turf? Name the restaurant.
Don't even ask.
No, you have to tell me now.
Because we were just at Cooper's Hawk, and surf and turf was like their December special.
Cooper's Hawk is good. I like Cooper's
Hawk. And I said to him, I go, and I love Cooper's Hawk. You know, our friend owns it, right? Yeah. We love Cooper's Hawk. Our friend owns it. Nothing against Cooper's Hawk. But I was like, you may want to save the surf and turf until we go to a steakhouse, not Cooper's Hawk.
Yeah, but the surf and turf there is sometimes like a crab cake and like a hamburger. That's a surf and turf at Cooper's Hawk.
It was like,
and it's delicious.
It was a couple filet medallions, and then it had a lobster tail with crab on top of it. Stuffed lobster tail, whatever. I just said, why don't you save that for Mr. Benny's? Because we're going to Mr. Benny's, and that's like a legit old-fashioned
I've never been to Mr. Benny's.
Take Sue there.
Where is it?
It's right by your where you take the dog.
It is?
Mm-hmm. Takes you there. We're trying to figure out.
Plug for Naws. It's Naws. If you want to rescue a pet, NAWS.
You're trying to figure out where to take your mother-in-law for her birthday, and she loves old-fashioned steakhouses. It is the legit old-fashioned steakhouse.
I'm also looking for a casino right by it.
Well, then you could hop on 80 and take her to the new one.
We just come to your house and you'll just deal us cards.
I've got a poker table. We'll put up a game.
You're not going to believe this. And just set it up where she wins. Could you do that? That'd be great.
Wait, when you take Sue to Mr. Benny's, can you let me know? Because I'll make sure we go the same day. And
what are you
doing here? I'd like to buy that table a round of drinks.
That'd be great.
I mean, anyway, my point was, I felt broke yesterday, and the kid orders a surf and turf.
Yeah. What are you going to do? The kids are expensive.
And I've got a few weeks until he's 21, and then he'll be drinking on my tab.
Oh no, you're right, because he's still on the
Sprite.
He's still on the tab until he's.
And he looks old, where the servers are like, "What would you like to drink, sir?" And he's like, "I'll have a Sprite."
They're good kids. They're good kids.
Okay, so back into the platform. Here is. I don't know what you think of this. Like this, we are almost at max loss.
Oh, close that thing up.
We have nothing in TLT, and I'm not saying get in because there are people who are bullish on bonds. There are people who are bearish on bonds.
In this network.
There are people on both sides.
That are live on camera. There are people that are bullish and people that are bearish.
I had, look at this move today again. It's crazy. It's bonkers. The moves in bonds are crazy. Now, this morning I bought a ZB, right? Just bought the ZB. It used like $4,000.
Yeah.
And then got here and it was already down a lot.
I'm actually going to put it in. I want to see how much.
It instead of just being long ZB.
And 4,000 is overnight margin, by the way. I just looked.
That's the overnight. Well, I put it in early before the market opened.
Okay, that's fine.
I put it in before I left. So I was like, I'm just going to buy a ZB future before I leave for work. And put it in, then drove in the car for an hour and a half to get here.
It's not smart.
And then when I got here, it was already down like.
That's what I'm saying. You didn't put an order in to close it?
No, I just threw in just bought it.
That's a scalp. You've said this so many times. If you're scalping these, you got to be in front of the computer.
Well, I put it in, got in the car.
She's getting a certified badass card.
And then I was so irritated with it when I got here. I changed it and I saw, okay, well, if that would lost like $400, I would need 4 TLTs to have lost $400.
Yeah.
So I replaced it, took it off and replaced it with, look at this zebra. Sell a 50 delta. So you're getting $1.66 here. You can get this 80. You can just, it was pretty cheap. $2.92. What are you getting?
Trying to find a certified badass card for you.
I was like, are you getting money out of your wallet to give me some money?
I think you need it. I used to carry one. I think I gave my last one to somebody in New York.
Sounds like you're dealing cards over there. Is that all the credit cards you have?
Darn it, I don't have it.
Oh my gosh.
Okay, sorry about that. Now continue. I was going to try to give you a card.
All right. Anyway, I figured out like if I had 4 zebras in TLT or 4 longs in TL, 400 shares of TLT, it would move the same. 100 shares in TLT is $4,000. 1 ZB is $4,000. 4 zebras is nothing.
So let me ask you this:
$1,200.
Let me ask you this: let's look for ones. Let's talk in one lots right now.
Yeah.
Jenny Andrews, that ZB that is so far away from our premium selling, we have about $87 left to lose.
Yeah.
We have about $87 left to lose.
Yeah.
Okay. So why don't we take that $87 and buy one of these?
Why don't we just buy one of these?
And now that one is.
We don't have $87 left to lose. We have like not eaten.
We have $80, like $75 left to lose.
I'm going to show you. We have to. 63 is its max.
Yeah. So you have 7 ticks.
Replace order.
You have 7 ticks left.
56. So.
What is 7 ticks?
50. Okay, so look, you go from $5.93 to 9. So you're at like $16. $16.
So 16 times 7
times 1, 2, 3, 4, 5, 6, 7.
Yeah, 16 times 7.
And you think we'll get filled?
No, all I'm saying is I don't care. I'm just saying, if you want to switch-a-rooney it, you can, because to your point, that TLT is so cheap. We don't have to close this. We can leave this.
I mean, usually when something, okay, we
can $100 left to lose, or 70, so much left to lose. What are you trying to close it for? 9 cents?
No, I had a 9-cent debit. That was like a GTC.
That's our GTC.
Yeah, that was our GTC for 50%. That was our GTC for 50%.
All I'm saying is put in the TLT.
That's all I was going to do is put in the TLT.
Or what is the TLT IVR?
I would still think I'd rather have a zebra. Here's the reason. All we could lose is $294 on it. All we could lose is $294 on it. You have $294. That's your max loss. I kind of liked.
Give me the best part about a zebra. Say it with some enthusiasm.
You have unlimited profit potential.
Unlimited profit potential.
That's amazing. Unlimited profit potential. But I switched mine. So I switched mine just like long ZB to 4 TLT zebras, because then I know if you're wanting to do, and I'm not saying exactly apples for apples, but if like 4 of these for $1,196, or holding on to 1 ZB future
to the tune of $4,000.
To the tune of $4,000, and that you don't know what you could lose. Where here I know what I could lose.
Agreed. Well, we're one for one. We're.
I just wanted to show like how you could. It's not exactly the same because this is a 20-year. It's not exactly the same, but then you know what you can lose. Like, okay,
yeah,
I know what I could lose, rather than like while I drove in the car, I lost $500. You know,
I told you those are big. Those are big.
So $3. I'm buying one zebra. We'll keep an eye on it.
Yeah. Okay, so can we pop back into Twitter real quick too?
Sure.
So number one, I'm gonna go to Jack because he's so funny. Like a warm fuzzy blanket. I feel so safe now. Thanks for letting me tease you guys.
I'm pretty sure I have that exact same blanket at home.
You probably do. You probably do.
Okay, let's see. Happy Retro Thursday from Mikey. Follow-up ratchet question. Do you sometimes just move up the long calls or always the whole package? Always the whole package.
I always do the whole package.
Yeah.
I always do the whole package.
Yeah. 8 pounds in 2 days. Can you come and give me that flu?
I know. That's my son. I mean.
Not me. I mean.
Now, granted, he is 6'6", so 8 pounds on him is nothing because he's almost 200 pounds. You know what I mean? So and he doesn't have and when I say this, Mikey, the kid doesn't have an ounce of fat on his body.
Yeah.
He lost 8 pounds.
How does he feel now? Is he finally getting better?
Yeah, he's fine.
They were tired.
Yeah, he's fine.
They were tired.
Okay.
Oh, you know the guy who owns Cooper's Hawk? Yes. I graduated 8th grade. I went to school with him for 9 years.
He slept on my couch in college for a full
Oh, he dated your college roommate?
Yes.
Yeah.
Like to the point where I was like, he owns Cooper's Hawk?
Yes. So yes to McHenry. He owns Cooper's Hawk. Liz and I grew up with him.
We did.
And he's doing, there's going to be, and I've always said I wanted a Tasty Nation cruise. He's doing a Cooper's Hawk cruise where he's going to be on the cruise.
Come on.
Anyone can sign up for it.
So he was on, and Mikey, he's been on.
Bootstrapping.
Was it bootstrapping or was it something else at the
Bootstrapping.
time? A long time ago. And this is how in style he rides. We were so jealous of this at the time because he came in a van with a driver.
It was a big Mercedes. It was a Sprinter. It was
like a Sprinter van, lined with booze.
And the seats were taken out. It was like a bar and a tasting, like a little tasting. It was like a traveling tasting vehicle, lined with wine, a little tasting table. That's it. And it was his office and a desk.
Yeah, and he's got a driver because it helps. Like he's got to work and stuff while he's commuting. And that's what we asked Tom for.
Remember that? We did. We're like, can we get one of those to drive us to and from work?
We want the booze lined in the bar.
But there are so many Cooper's Hawks, and he has to go from one to another to another to another. So he would work in his traveling van.
Yeah, no, I mean, he makes sense. He's not a raging alcoholic, although it sounds like it in the van. But yeah,
they just opened another one in. They're popping up everywhere.
Their almond champagne is fantastic, by the way.
They just opened one in Cherville, Indiana.
How do you know this? You been to Cherville?
Well, you know what I do know, and I got to tell Vanetta because I know she watches The Golden Bachelor. One of the main guys who made it to the very end in The Golden Bachelor is from Cherville, Indiana.
Why would Vanetta need to know this information?
Well, he doesn't live far from her parents, and she likes The Golden Bachelor.
Oh, okay, I needed to get from point A to point B with this information.
I think she watches that show, and he's quite a celebrity now.
So are you suggesting she just like hang out in Cherville trying to meet him?
Well, I know people in my condo complex in Michigan City who also reside in Cherville. They go between the two. And I know some older ladies who might be interested.
I thought he was the Golden Bachelor, so he wasn't
picked. No, he was like he
was released.
Yes.
He was released into the wild. You're missing some key information. He was released.
I think I said he was like number 2. Like he wasn't chosen.
Gotcha. Okay, gotcha.
He wasn't chosen.
This is all making a little bit more sense now.
So he's on the market.
He's free.
And you might find him at the brand new Cooper's Hawk
Vanetta's too young for a Golden Bachelor.
I'm not saying for Vanetta, but her mom might have some friends.
Oh, I was like, her mom is married. I was like,
her mom may have some friends. We just got filled on something.
Let's look.
KB. Oh, we got out of KB.
Mm-hmm.
Okay.
Yeah, so those are getting pushed out right
something that we need to address is this straddle we have in CVS.
Oh, I was going to ignore that.
10:53.
No, we just put the call on.
I know, 2 days ago.
Yeah, we put the call on because the one was so far underwater and there's some extrinsic value in it.
There's still 56 cents left in that call. So if we're in CVS, this is the time where people might say like, oh, do I want to go inverted and roll down my call?
Let me ask you this. It's got a 93 rank. Where is earnings?
I don't think there's Feb yet. Oh, yeah, there is. And then we'd be rolling through earnings.
You're rolling through earnings. But when something like this, so a lot of times when we see this put, we added that call for, I can believe there's still that much extrinsic value in that call. So we still have 60 cents there, which means there's 60 cents in the put. When it becomes zero extrinsic value, I'm moving it to a zebra.
Oh, I 100% agree. And I thought about that. Like we're essentially long stack now in CVS. We could change it to a zebra or just change it to let me price out the zebra. It's a little tricky. Here we've got 187. I guess you can do 40, 42. It's 660.
I mean, it's $6. Then it's not
bad.
You still have extrinsic value though. You still have $1 in extrinsic value in both
coming out.
Yeah,
coming out of that.
And honestly, sometimes I'll switch to the zebra
CVS.
if we need. I mean, this looks just like Walgreens Boots
I was
Alliance.
gonna say, I'm curious. I want to see what the market cap 62 billion in CVS. Walgreens Boots Alliance 8 billion. Sounds about right.
Yeah, that does sound about right.
Sounds about right.
Okay, did you hear can you open up the diamonds chart for me real quick? Diamonds is like the lost child. Like we never really.
We don't trade it. It's not that liquid anymore.
No, but people in the Gen Pop loves to talk.
Gen Pop. I love how you're getting with the times. People in the Gen Pop.
The Gen Pop. People in the Gen Pop love to talk about the diamonds. Okay?
Traders don't talk about the diamonds.
No, they don't. But this is the most fascinating thing that I heard the Gen Pop say. Look at this. Like, see those little red bars? Tick, 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 tick. It hasn't had 10 down days in a row in like 75 years.
Since the 1970s.
Yeah.
Since the 1970s. So you must watch Tim Knight.
Oh, it was on Bloomberg.
I heard Tim Knight say it.
Oh, Tim Knight. Maybe he watches Bloomberg. I'm just kidding. But yeah, so this is, which I thought was bonkers.
Yeah.
Because while the rest of the market was going up, it was like, look over here, the diamonds is
ticking down.
Yeah.
It's funny. We used to trade DIA, but we don't anymore.
No.
It's just, I think it's usually not as liquid, not as active.
I mean, so if it ends up today, this will end the streak.
It'll end the streak, and it's up to 47. Okay, so CVS, what do we want to do? Do we leave this, or do we turn it into? Or you could also say, take this off and turn it into a diagonal. Because sometimes when we want to get out of something, we will turn it into a diagonal.
It's got a 93 rank. I want that extrinsic value.
All right, we'll just leave what we have.
I don't care though. Whatever you want to do.
Do we want to roll down the call?
No.
Mechanics would be rolling down the call.
We just put that call on. We didn't start with this.
No, we didn't start with this. We added the call 2 days ago. All right, we leave it. It's out till Jan. That's far.
29 days, yeah.
I mean, just after what we went through in Walgreens, it's a little, I don't know.
And if you want to define, so to your point, it is define your risk. How much do you get back if you close this?
It's 10:57. We got a little bit of time. Not that much. It's 7.25 debit. We get back 8.73.
Okay, you get back 8.73.
So I'm 47. I'm just curious. I just want to see how much it's going to be expensive. 42, 47, $5 wide for $3. I have a $3 diet. I don't know. I guess we'll just leave it and wait and see what happens with CVS. Cross our fingers.
I mean, I think it's going to keep going down.
I do too. Well, we only think that because we rode Walgreens down.
That's correct. That's exactly why we think that.
And honestly, now everyone orders everything online. I order everything online.
Well, you want to know why you order everything online? Because you can't get to anything in a CVX or a Walgreens because everything's locked up. You have to call someone to get a key to open it up, and I was like, "This is ridiculous."
I know. Like I went in there. I think for Logan's like hair gel, and it was locked up. They've got everything locked up.
Locked up.
Well, I guess it's going to solve theft, but then you just make it easier and order everything online. And you want to know where I'm ordering everything now?
You're going to say
Sam's Club. So it's at the top of his range. I joined Sam's Club only for the discount on the Disney cards. I paid for the Disney cruise with the Disney cards from Sam's Club, and now
you can order online through Sam's Club.
Now I have the app. It's so easy. Toilet paper, it comes right away. Paper towels, comes right away.
Costco?
No, does Costco do that for you? Well, Sam's Club was the only one with the Disney discount.
Oh.
So I had to join Sam's Club. Now I get everything from there. Everyone at Christmas getting Slippers all around, $5 each.
Everybody gets slippers.
They had so many good deals on the website. I've never been part of Sam's Club before.
Where is a Sam's Club? Did you ever?
I don't even know. I've never been to one. I just joined online.
You got it online. You got the Disney cards online.
Uh-huh.
Wow, this is.
They were mailed to my house, delivered, hand delivered by the FedEx guy.
With a white glove.
All right, so you think we just leave CVS?
No, I think we should close CVS and never look at it again.
I kind of agree.
Honestly, I'm not willing to ride this to zero. We still have Walgreens Boots Alliance in there.
726.
I'll take the $500 hit and call it a day.
I don't want to take. We were down 500 in CVS. I don't want to be down 1,000 in CVS and say, "Oh, CVS really got us this year."
Yeah, that's the last thing that I want. I don't care for CVS.
Yeah, I don't either. I think it's just because the Walgreens is just too fresh.
It's too soon.
Biggest loser in my son's account this year, Walgreens.
Walgreens Boots Alliance. It's too soon.
It's too soon. So I guess that's fitting. If JD's worst performer this year is OKLO and I put it there.
And we put Walgreens. I think I made him buy Walgreens.
Funny. Oh, we're out of time. I will say Tesla, now people were starting to get worried about the upside, Brooklyn butterfly. Now you don't have to worry about that anymore.
Buy the dip.
We've got both sides.
I know. I'm just kidding. I'm telling my son.
What else do we have in here? Oh, we've got a handful of things.
No. We've got both sides of that, and then we've got a butterfly off position. So
Okay.
that's why it looks like it's so much stuff.
Okay. All right, everybody. Good show, Liz.
Best show ever.
You're better than average.
Thank you, Jenny. So are you. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow, everybody.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel. Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Hanson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song, yes.
Yes. All right, good luck, good trading. Let's go eat some roost.
Peace. Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mikey Butler, and of course, Katie McGarrigle in the house with me today. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day, because I spend it with my two buddies, Mike and Katie. Look at us. We all have a little green. We're all very festive.
We've got the Grinch vibe going on.
Oh, yeah. Who's got the smallest heart, though? Probably me.
Well, I thought you were going to throw it at me, and I wasn't going to deny.
No,
I have a big heart.
You have a huge heart. Are you kidding?
I think there's a lot of love and a lot
Medically
of heart.
concerningly large.
That's true. The stimulants have probably enlarged it multiple sizes.
That could be something.
You know.
With the coffee and the nicotine, you know.
You know, we live fast here, you know.
Yeah,
we're traders. You got to live fast.
Mm-hmm.
Yeah.
Yeah.
Happy Thursday.
Yes.
What's the spread?
Ooh, I don't even know. I haven't looked.
It's got to be a pretty close game. It's Denver Chargers. They both have 0 running backs, and they're just going to chuck the ball. So that's exactly what we want to see on a nice little Thursday night football game.
Okay.
We're looking for a Cortland Sutton.
He needs Cortland Sutton. I need Joshua Palmer.
We could have them both.
We could have them both.
Yeah.
Give us both. We're both in fantasy playoffs in a big tournament outside of this realm, and we need to advance.
Yes.
I won $19 on Monday.
Hell yeah.
Hell yeah. What'd you bet?
I took the under again.
Oh my God, you're just a queen.
See,
I got it by like 0.5 points.
that's fine, but that's why over-unders are there.
I know.
That's that hook.
I know.
And you won the under because people were they were smashing the over, which moves the line. So you're smashing the under. You're basically a contrarian in that sense.
Yeah.
That's ultimately, if you're betting unders, you are a contrarian because most people bet overs.
Yeah.
Because unders are un-American.
Yeah.
So.
Well, I just didn't have
What was
very
the
much
bet?
faith in the Bears. So that was kind of,
Yeah.
you know.
Smash. Smash. Yeah, that's always a good strategy. If you think one of the offense is going to just do nothing, then you smash the under. Because even if the other team does do well, the Bears, the week before, we had, 3 yards in an entire half?
Yeah.
Despicable.
It's disgusting.
It's a tough time.
Yeah.
Haven't won a game in 60-something days.
Yeah.
Oof.
I
Should
saw.
have kept Justin Fields.
Shut up.
You remember before?
Bite your tongue.
Before we drafted Caleb Williams, I was like, we should keep Fields. We should give up this first draft pick.
Fields isn't even starting on
offensive
the
line.
team he's playing for now.
Of course, but I'm just saying, when you look at the stats of Caleb Williams, they are not good. But it's not really his fault. It's not his fault.
He had like the longest streak of he went, what was it, completions or no interceptions?
No interceptions.
No interceptions. Yeah.
He's doing fine.
He is totally fine.
But what I'm not kidding about,
hellhole of an organization.
yeah, the McCaskey's got to go. We need Bezos to smash us with his big bags of cash.
I would love that to happen and him to just park his yacht off the water at Soldier Field and just
they have a drone above the stadium, and then they go over to him. He's just raging, smashing champagne bottles together.
Yes.
We need a big name player to take over this organization because the McCaskies don't want to spend money. It's the same situation as the Reinsdorfs with our other 2 terrible teams. You know it's bad when you offer Juan Soto like $700 million and he says no, and he goes to the Mets.
Yeah, he's like, no thanks.
Yeah.
Gucci.
Anyways, everything's fine.
That was a rant.
We're a bunch of chill people.
Yeah. I did not really get a chance to rub elbows with the two of you yesterday. How was your afternoon? How was your, post J-Pow party? Was it good? Was it bad?
It wasn't great.
Fetal position.
Because I'm violently long. I'm bullish everything.
I knew that.
But
I was talking to Nick in the kitchen this morning, and he caught me off. He's like, "I gotta go. It's the Open." I was like, "Oh crap!" I was like 2 minutes before the Open.
I'm sure you play some bullish trades after the sell-off.
It's been an interesting morning. I think our accounts, I think we have a little bit of both sides. Like I had some long volatility that hedged me a bit. I had some downside plays in SPY with like a put diagonal. So the volatility and the magnitude of the move, you can't avoid having net losses.
Yeah.
I mean,
everything gets correlated.
Yes, and everything moves in a big way, and any short premium you have inflates, whether it's calls or puts. So you have that marked loss. But if you stay small enough and you have, two-sided trades, you have a couple that are bullish, couple are bearish, you take off the stuff that works, and it allows you to be dynamic. And now I'm longer than I was before the dip, now than I was, before. So you get that, I don't know, it's exactly what you should be doing. So it's painful, but as long as you're not, your whole year isn't on the line day to day, you should be able to hold this stuff.
Yeah. Well, that leaves the question then, and Mikey, you said this in our little show chat, I think, yesterday, but has Santa fallen off his sleigh, or did he just trip inside of the sleigh?
I think he probably tripped inside of the sleigh.
Okay. I kind of think the same.
I think if we would have seen a continuation today to the downside, then sure, you could say Santa's off the rocker and everything's falling to zero, but the VIX is down 5 points today. We'll chalk it up to a knee-jerk reaction. I think we grind higher through the end of the year. I could be proven wrong, but again, this is what I said yesterday too with Ilya and Dylan. We were just talking about the probabilities of continuation and what we should expect going forward. Show me that we have the ability to have consecutive down days and get into a bear market. Until that happens, I'm just buying dips. I'm really I'm not doing it in size. I'm doing it small.
Yeah.
Seriously, this market moves so fast and it corrects so fast that it's you have these big moves to the downside and then they're eaten up and you're back at where you left off 5 days later. Yeah. So until that changes, I'm just going to buy dips.
I will say I wish, or I shouldn't say I wish because that doesn't matter, but I think it would be healthier to have more two-sided action. It seems very much like we grind higher 10, 12, 15%, and we get these violent 4 or 5% down days. I don't think that's long-term a positive for markets. I think markets have to have a little bit of two-sided action, month to month, week to week, day to day. Obviously you can't time that or play for it. But I agree. I don't think the story has changed because we went down 3% yesterday. And the wild part is that the freak out of a down 3% is way more than the freak out of the up 3%.
Oh yeah.
So you don't have people calling you or texting you oh my God, Apple's so overvalued. It moved from, you know what I mean? It went from, and this is a month, the middle of last month, it was at 225. It's at 250. It's up 10% in a month. It's the world's biggest company. It's $300 billion. Nobody's texting you and going, oh my God, Apple is so overvalued.
So frothy
here. But then when we have a move from 255 to 250, a 2% move, everybody's oh my God, are we crashing?
I know.
It's a crazy thing about market psychology that
everyone expects the markets to rip higher. That's the thing.
I guess.
But it's you're saying, it makes it really difficult. Even if you're quote unquote violently long, if you wanted to become that, your strategies are severely restricted because what are you going to do? It's hard to sell puts. When volatility is low.
Yeah.
I mean, yeah, sure. I'm the queen of call debit spreads. I do them on the show all the time. I have one today, but it's just, it gets a little boring. It's not, and it also doesn't do anything for your break even, which is the whole point of options trading. So,
yes.
Yeah, I feel the same where I'm just I don't think that this is the top. Now that I said that.
Oh God. Oh no.
I wish I had a lightning thunder sound effect that we could just put in right there. I don't think this is the top, but it's also tough to try to find ways to get long if you weren't already.
Yeah.
So I would also appreciate some more two-sided action is what I'm trying to say.
Yes. And now it's interesting because volatility is on the higher end of where we've been used to it being over the last couple months. So whether you're bullish or bearish or neutral, you're getting paid for risk now. Whereas I think just yesterday, as you were saying, it was hard to sell puts or put spreads.
Yeah.
Now you get a little bit of a pullback, 2, 3, 4% in a lot of stocks, and a pop in volatility of 20, 30, 40%. You know, in most of the stocks, it's an interesting time. And speaking of pops and volatilities and price changes, we had a ironically perfectly timed segment yesterday with the mayor of Margin Island, Mr. Peter Klink.
I know.
So if yesterday spooked you a little bit, maybe you go check out
Risk analysis tool.
the risk analysis tool that we went through yesterday. We had the man himself walk us through everything.
That's great.
It was funny
Did you
'cause-
attend the art party?
We did not.
No.
Yeah.
Yeah.
Oh,
It was
did
one
you?
for the
It
ages.
was good.
Well, I was on the crypto show with
Okay.
Ryan, so I caught the tail end of it. But
Nice.
there was violin playing.
Mm.
There was charcuterie. There was a 2008 red that was poured. I didn't have any of that, but I'm in that vicinity.
Mm-hmm.
So it was a cultural moment for Tasty as we go into the next part of the holiday season.
I love it.
It's great. And this is all done. You know, he's a man of science, right? With his risk analysis tools, but a man of art too.
Yes. Yes,
Really
he
can
is.
just
Do it all.
work in both worlds.
Get you a man that does both.
Yeah.
Right?
He's gifted.
Klink for president.
Yeah.
There you go.
Anyways, all right, give us a quick little rundown.
Sure.
We'll get to some trade ideas. We got the chat popping off.
Yes.
What up,
good.
chat?
E-mini S&P 500 futures up 28. We're at 59.68. When was the last time we said 59? When was the last time we had a 5 handle? It's been about a month.
It's been about
Hasn't been that long, but it's okay. Up 28. We were up as high as 60. We got up to 60.05. So about 40 points higher from here. Definitely been some choppiness today, two-sided action, which is beautiful, and we've been wanting that with volatility higher. That's what you should expect.
Yep.
NASDAQ up 16, basically unchanged here. You got the Dow up 191 and the Russell down 5. Oil selling off a bit, forward/CL down 60 cents, 69.42. You got volatility futures at 2020 up a nickel right now. They were down about $2 at one point. We got to 18.55. So a little bit of a bid in volatility here in the middle of the day. Bonds down almost a point and a half here. They've been getting smoked over the last couple of weeks. Gold and silver both getting killed. Gold's down $46. We're back down to the 2,600 mark, and silver down $1.50 here, almost 5% back to 29. It's been a huge move there. Bitcoin as well, seeing a little bit of that volatility, down 500 on the futures. Spot is down 1,400. Our low, though, was in the 99 handle.
Damn.
So will the 100K support stick?
Ryan thinks so.
Good. I need that.
See though. We shall see.
Good.
Cool stuff coming. Really quickly before we get into the trade ideas. Speaking of Ryan and speaking of, I don't know, trading and being on the show, we got a couple of two-tree new digital events coming in early 2025.
Yes.
You can sign up at tastylive.com/events. You can sign up for all 3 at once, which is pretty sick. Everything you wanted to know about crypto, but were too afraid to ask. Beginner trader from start to finish with Dr. Jim and our man,
The whiteboard.
the whiteboard guru himself. Mike, his friends, and his whiteboard coming in hot. A resurgence in the whiteboard pandemonium.
Yeah. And my friends are sitting in the room with me. So we're gonna be doing a little something here.
Yeah.
But I'll just spoil it right now. Everybody, because there's no description on this site, but if you click into it and you sign up for it, you'll see more. But we're gonna be walking through basically everything you need to know about buying the guts and selling the wings, and just the transactional nature of manipulating strikes if you're moving strikes or moving expirations, and how you can think of extrinsic value relative to intrinsic value risk and all that stuff. So if you like anatomy of a trade segments, this is basically teaching you everything you need to know about the transactions that apply to anatomy of a trade segments. So you'll be able to take away all that information and manage your positions going forward much more confidently, I think.
Yeah. It's going to be exciting.
Yeah.
We should do a side-by-side of the old whiteboards where you were like,
Oh, there he
team
is.
bald
Look at this.
sides.
Look at that picture.
Yeah, team bald sides.
Yeah.
Bald sides,
That was
Peaky
wild.
Blinders.
Yeah, he was very peaky.
Yeah.
Peaky Blinders.
And now look at him. Here we are. Full sleeve.
Significantly aged. Yeah, full sleeve. True.
Significantly aged.
I prefer seasoned.
Yeah,
There you go.
seasoned.
Yes.
Sage.
Yes.
Full of wisdom.
Thank you.
You're welcome. Yeah, sign up tastylive.com/events. We'll be talking about actual in-person events for 2025 as we get into the actual new calendar year, but this is a way to kind of stay engaged and keep your trading top of mind in the meantime.
Indeed.
It's going to be sick.
Indeed.
Beautiful.
All right. Let us drop some trade ideas for y'all and drop your questions in the chat in the meantime. We'll get to them right after.
Yeah. Let us do it. Join us on the YouTube channel. You can pop in those questions along the right-hand side chat. I'm going to put in the link to the newsletters so you can get your cherry picks for free.
Yes, we had a very good one this week. We got a bunch of emails and love for the cherry picks this week, and we're going to do a little follow-up. Next week, we're working on it now because Doc will be out for some of the week next week. So stay tuned. We're going to look at because we looked at, I don't know if you saw it. It was amazing. But we looked at implied volatility ranges in the market as a whole and a basket of kind of our main traded stocks, Apple, Amazon, Google, Meta, Microsoft. And we put them together and we tried to answer the question of what's the sweet spot for implied volatility?
Sure.
Because everybody asks us oh, this is too low, this is too high. What's the perfect spot? So we tried to quantify that by looking at the expected move and how many times over the data set, which was 6 years, how many times it stayed inside the expected move relative to the implied volatility. So we looked at implied vol versus realized volatility. Okay. Next step we got to take is okay, we got to see what the risk was for the realized volatility the times it went outside the expected move. So that's what we're going to look at this time. So we're going to figure out, okay, this is your implied volatility. Here's your tail risk kind of metric. Here's, how many times it stayed inside.
Nice.
Thank you.
I'll have to go back and look again. I did a quick scan, but I probably didn't give it as much time and attention as it deserved.
Shame.
I will, though. I'm a woman of my word.
I know.
All right, where are we looking first, friends?
Yes, trades. Tree trades.
Tree trade ideas. If you saw my tweet, I did a little silly thing. I did, instead of saying tree, I put 3 Christmas trees in a row.
Oh, tree.
Because holidays.
Honey.
Yeah.
It's holidays.
Okay, so FedEx is my nearest and dearest stock. It's, I think last year it was my most profitable stock. This year it's my most profitable stock. It's just so funny because it's the most random thing. But really, I just keep playing it to the upside, and it works out. Not to say that this is going to work out. I actually think that FedEx is going to have a hard time rallying in a big way. I think the Fed announcement yesterday kind of spooked a lot of people from making big swing trades, big money trades. So FedEx actually has a really high expected move for this earnings announcement after the close today. 30-point expected move on a $270 stock. That is very high relative to other stocks that we see. Usually fall between the 5 and 10% range. This is well over 10%. So I'm keeping this really small here. But because the premium is so high in the one day, 240% IV relative to 57% IV in January, I was able to buy the 290 call, which is about 15 points out of the money right now, for $1,100. And I sold the 290 call for the one day for $900. So the risk here is $220. But as you can see, if FedEx has an inside move, even if it sells off a little bit, we're collecting so much premium in the short option relative to the long that this trade can be profitable in a number of ways. So taking advantage of that near-term IV with a defined risk, very small trade, and just doing this long January, short the weekly 290 call calendar spread. I got filled at 220. max profit here, if we go to 220, or sorry, if we go to 290 and I hold this to tomorrow's expiration, probably $500, something like that.
Sorry.
What are you giggling about? Share with the class.
I'm reading the chat. I
Yeah.
followed you into it.
Cool.
I got filled at 2:05.
Beautiful.
Sorry.
Oh, that's amazing.
You'll see why it's funny in a second.
All right.
Good job, Mikey.
Thank you.
Am I getting roasted for some?
No,
You got
I'm
this
getting
set?
roasted.
Oh.
I'm getting roasted.
Okay. I'm sorry, this is all January. I forgot to erase that last call leg. That is not a February, it's a January.
Okay.
But anyway, do you know how many times this year, besides the August little meltdown, that we have been above a VIX of 20?
Twice.
Great guess.
I think that's correct.
3 times.
Oh, okay.
So it's only been a couple times.
Yeah.
Got a VIX of 20?
Paint dry type of year.
Yeah. So I'm going with an iron condor. You got to sell this fall. I'm doing it to find risk. I'm going into SPX. We did this for the December expiration. Did you close that, or you still got it?
I did for a small winner.
Because you had just the call spread, right? I made you.
Well,
or did you do both?
I had the iron condor. I peeled off the puts.
Yeah.
And then I think I peeled off the calls the next day
Okay.
for a teeny little winner.
Don't look at that trade now because it's probably a very nice winner. But that's how it works, okay? You can't,
Oh, yeah,
you know. Yeah. So I'm looking at iron condor. I'm going out to January. Going into the January PM settled monthly expiration. So it's the January 17th PM options, which settle to the closing value of SPX rather than the AM settled, which settled to the set price, which is a little funky calculation. It's just not like what I like to trade. So I go to the PMs. I'm doing a big old wide iron condor like I did in the December trade idea. 56.75, 56.50 on the downside. That's around the 20 delta. We're 200-300 points out of the money. On the upside, the 61.25, 61.50 basically back up to highs or past highs, another 25 or 50 points. Very similar trade. Just gonna hold on to this one. I did it at 790. Got max loss of $1,700, so it's a big position, but it's kind of my core. You know what? Selling some vol, chop around for the next couple weeks, take a couple dollars.
Not too shabby.
I like it.
I might play with the strikes a little bit, but
Sure, you could. I wanted to take advantage of the volatility. That's why I went to and the pop on this trade is like 40 or 45%. That's because you're right at or just inside the expected move on both sides. You're at 20 some odd delta with 30 days to go. You want to go to a 1 standard deviation, I totally support that.
Sure.
Probably trades at like $4-5.
Sure.
$4 maybe.
All right, not too bad. Yeah, I'm gonna look at the strikes and maybe tweak it and narrow them a little bit, just because I've already got a little bit of long equity exposure. I already saw someone throwing some shade at me in the chat about my long RTY trade. Blame Vecchio.
Ooh.
It was a shot. It still is a
That's
shot.
okay.
You
It's
know?
still open. It's fine.
Yeah, I mean, like I said on the show, though, we're gonna do this, and then we're gonna sell off, and then what happened? We did. A teeny
Big sell off. It's forming the McGarrigle pattern though, which is good.
It's forming the McGarrigle pattern. Oh yeah, it is forming the McGarrigle pattern.
Yeah.
Oh, that's great. But the reason I was laughing, sorry, Mikey, to steal your sunshine at the end of your trade was because I genuinely think that Stonk Messiah has like access to our slides ahead of the show, because in the chat he said, please don't like get long energy. Please don't get long oil.
Well, maybe you saw it on the follow page because you posted it.
Oh, that's true.
Yeah.
I guess I did do that.
Or maybe he is clairvoyant.
I literally called him clairvoyant yesterday.
Shout
I
out
told
to
him he was the Oculus because
that best ball lineup. Shout out to the Stonk Messiah. He's got a
he has a
got
fantasy
shot.
football lineup in the playoffs like we do, but it's like if you were to know the result of how well these players had played up to this point, it's every single player. He has every single player.
It's exceptional. Yes.
So he's clairvoyant. He is the Oculus.
Yeah.
So maybe this is just a continuation of that.
You might be. But anyways, this trade is it's a Johnny trade. I was talking to a couple people in the office, And we've been kind of, for those that don't know, like when we onboard new people at Tasty, we kind of put them through what we call like full market bets, which is our version of like Wall Street bets and hell.
Yeah.
Hazing.
Hazing.
Yes, you have to, pick up Sosnov's dry cleaning and all sorts of stuff. Yes. No, I'm kidding. But we try to, teach new employees more about the markets if they don't come from a trading background. So I've been seeing Jason kind of running these sessions again because we've had some new hires recently. And it just came up in another conversation I had about just like bite-sized trades that don't require a lot of management, especially as we go into like the holiday season, that maybe take advantage of something at a price extreme, just like all of the bread and butter stuff you learn when you're first starting to learn about options trading. So to kind of put that into practice, I wanted to showcase one of those. And I landed on XLE, which is an energy ETF. If you look at it, it definitely looks like I'm trying to catch a falling knife. We shall see where we net out. But because it's a Johnny trade, like this is half of the size of what my normal risk tolerance is. It's a great way for somebody that might be newer to spreads or to options trading in general to participate in a way that is, kind of like a stock substitution type of trade, but where you still get to see the dynamics of like options prices changing over time. So I am going far out in time just because I don't necessarily think this thing is going to slingshot back up and, make a V pattern instead of a McGarrigle pattern. And so I am just looking at the February expiration. I also didn't want to tie up a lot of buying power going that far out in time. The 82, 87 long call spread, risk one to make one, no management, super happy to get 75, $100 out of this thing, just to kind of show some newer people in the office how this works.
Sweet.
Teeny tiny. You can, of course, widen your strikes or, go into a nearer expiration if that suits you. I do not have on any natural gas or crude oil right now, so this was also a way for me to start to put some energy back into my portfolio. Crude is like in this really like tight range, and I can't really make heads or tails of it. Like I want it to go one way or the other, but I don't want to buy.
And then you could take the other side.
Yeah, like I don't want to buy like an iron fly or a condor or something like that. So yeah, and I'm not ready to get into natural gas just yet because it's off of its lows.
I can't say I've traded XLE in quite some time, and it used to be like one of my. I really liked trading it. I had a lot of positions on there, so I'm with you and I'm following you. I did a poor man's covered call, so very similar look to what you did. I went out to February. I bought the 80 strike call. I sold the January 85 against it to 398. So I paid up about 50 cents ish of extrinsic value, which is which is fine. So I need a little bit of a move higher, whereas yours is a 50-50 shot.
Yeah.
But I like it.
Yeah, just to again, a small way to participate.
Things down 20%.
Yeah, I mean, look at it.
And I was looking, somebody was chatting me about XOM.
Oh, Exxon. I think that's in here. I don't know the full weighting of XLE, but
Wow. Big red bars.
Yeah.
Chevron, Schlumberger.
Yeah, XLE, what a wild move. I followed you sort of. I did a diagonal spread. I moved to the 80 strike in February, bought that, and then I sold the 87 in January.
Okay.
So 7-point wide diagonal spread. I got filled at 458.
There we go.
Very similar to what I did the 80, 85.
Yeah.
Diagonal poor man's covered call, something like that.
There you go.
Beautiful.
There we go.
Bitcoin futures under 100K.
Oh no.
Nasdaq selling off. What's really interesting, something we talked about yesterday, was that in the market turmoil, NVIDIA was only down like 1 point.
Yeah.
We called that out as like, okay, if you're trying to get long for a reversal, NVIDIA, if I'm picking one stock, it's probably NVIDIA, because if NVIDIA's resilient enough to avoid that sell-off, maybe if there's a reversal, you have a high confidence pick of it going to the upside. It's up $3 right now, but I still think if you think the market's going to recover and we get back to all-time highs, like NVIDIA must be higher, right?
The long NVIDIA, short Tesla
yes.
play.
Tesla was another one. Tesla
played out.
has sold off aggressively, and IV is collapsing. So like we said, the move was so crazy to the upside in Tesla. IV was expanding. Now you're seeing it's down 75 points from the high pretty much.
Yes.
And IV is collapsing at the same time. So it's played out.
As foretold.
As foretold.
Yes.
All right, we have a ton of comments and stuff
Cool.
going on in the chat, so we might have to do a little rapid fire over
Yeah.
the next 25 minutes to make sure we're getting to everybody, but let's let it rip.
Yeah.
Let's do it.
Alan, sold a BTC future, 300K account. Can you walk me through overnight carry and span margin? Maybe a tip or trick or two.
I do not know, but if there's a whole futures cheat sheet that Taste Trade has, you can probably post in the chat with all the overnight requirements. Big contract.
Yeah,
big.
It's a 5-coin notional.
Yeah.
5-coin notional. So you're making money right now. This is a good move for you today and yesterday.
Yeah.
But just be aware, like, you have a 300K account. If
You're more than fully. You're
fully
loaded.
tough.
You're
Like,
locked and loaded.
You can't absorb much volatility at all. Like
No.
if Bitcoin goes from 100K to 120, first of all, you lose 100 grand.
Yeah.
Second of all, your buying power probably expands, and you probably can't hold that trade for very long. So I think you got to size down in that.
Yeah.
Because it's just too big of a notional, even for a 300K account, which is a large account.
Yeah.
I would define some risk there, if you can.
Beautiful trade.
Beautiful trade the last 2 days.
Big boy trade.
Yeah. How did you sleep is the question.
That's a good
Did
question.
you take pills?
Yeah.
What? Sleeping pills?
Yeah.
Yeah. I will also, in the meantime, try to look up the overnight requirements. I think that Tasty Trade Help Center has that in their help articles somewhere.
Look for like the CME futures. I think that's what it's under.
Yeah.
Outright futures, CME outright futures.
Yeah, I'll take a look and see if I can drop that in the chat while we're knocking through other questions.
Eric, you guys should make a sports betting fantasy sports app. Eric, we literally had a meeting about this.
Mhm.
It was just like a feel it out meeting, but we pretty much said if this ever goes down that route, we're gonna be there.
Yes,
we'll be there for you. But I don't know if that's gonna happen. Katie, are you bodacious in the contrarians at the gate? Tasty trade.
Hell yeah, I am, JC. I am Bodacia. Yeah.
What is this?
That was the old cartoons, like the 80s style.
Oh, yeah.
Cartoons we did back in the day.
Oh, wow.
Yeah, I think they've started to kind of recirculate them as bumps
Yeah,
on the network.
those are great.
But yeah, I threw on my raspy voice, tried to take it
What,
down.
what was your line? Do you remember?
Oh God, I had a couple, but like, I don't off the top of my head, I don't remember.
No,
but it was
those are
fun. It was a good time, and it was animated by people in house. So kudos to the Tasty
Amazing.
production and creative teams.
Yeah.
I'd love to do that again at some point.
Be great.
Yeah.
I've been on a Vikings kick. I've been watching the Vikings Valhalla show endlessly, falling asleep to it. So I trying to induce Viking related dreams. That'd be the best case scenario.
Is that the one? Is that like the regular Vikings show, or is there?
No, that's a
After.
spin-off. Yeah,
Yeah.
the spin-off after.
Okay. I think I started to watch the first one.
Yeah, that's the iconic like classic.
Yeah.
Yeah.
It just was all in that same time frame of like Peaky and Vikings.
Yeah.
And like just
Good
that
TV.
2000s to like
Yeah.
2014.
Yeah. The new Dexter is coming out soon. I'm interested to see
Oh
that.
yeah.
Yeah.
Indeed.
Yeah. And Squid Games 2 comes out on December 26th. I'm gonna
saw
binge that
that.
immediately.
That one, did you guys? I mean, it was obviously very good. I hope that it's as good this time, but it's also one of those shows where like I can only watch one because I'm just so deeply uncomfortable.
Yeah, the first one was pretty amazing.
Yeah.
Just because of the shock value of the
Yeah.
whole thing.
Yeah.
Be
wild.
interesting to see if they can recreate it.
Yeah. Time will tell.
You got to watch the Squid Games reality show.
No.
Yeah.
Don't do it. Don't do it.
Not.
It was so good.
Don't do it. It was painful.
Sunflower's trying to day trade. How would we do it with options? Thinking of selling calls and day trading MU to pick up $50 here and there. I'm not sure selling calls is the way I would approach it. I think I would just do like spreads. If you're day trading, First of all, check out the scalping mini series we did on tastylive.com. If you just search for scalping, you'll see it in the shows tab after your search. But that kind of explains how you can estimate intraday ranges. And then once you get the intraday range, you can see where the price extremes for that day are. Whether you hit the lower bound or upper bound, you can trade against that. But unless if you own shares of MU and then you're like selling a call against it, like fine. But I don't really like selling calls in what was a bullish market, especially near term expiration calls where you're not picking up much for the risk.
Yeah, it's just not capital efficient. I think if you're trying to scalp short-term options, I think it's just better to do them via long premium. You don't have to worry about tail risk or, the amount of buying power you're using, all that stuff.
Yeah.
Mm-hmm. Harsh has got a leap in CCL, 20 strike for Jan 2026. Paid $4 for it. Nice. With earnings tomorrow, is it better to close and reestablish or collar off the position with options expiring tomorrow? So yeah, that's a nice trade. You're up $300.
Oh. It's a good trade.
Yeah, you could totally collar this off if you wanted to. Like for example, you could buy the 24 strike for 50 cents.
You looking in the weekly?
Yeah. Like you could buy the 24 and then sell the 26 for a scratch.
Mm-hmm.
That ultimately protects you below 24, but you still have upside profit potential above 26. If you're basically saying, I just want to feel this out, maybe flip a coin here. But yeah, you could collar it off easily.
Yeah.
Nice trade though.
It's a great trade. And if you're planning to keep this, you could do it in that weekly, or you could go a little bit further out in time and just look to trade that position. Now, if the stock goes down and you're doing this collar at basically nothing, you take the money and run.
Yeah.
That sort of trade. You're not holding this.
Yeah.
Nice trade.
Who is next?
JC, yesterday is a day that tells you how big small can be. Yes.
100%.
Especially when the market was expecting literally nothing. It was a 25-point expected move before the Fed announcement.
Mm-hmm.
And you sold off 200 points. It's crazy.
Yeah, it's a lesson. It takes these lessons to learn some of those things.
Oh, yeah.
And it's why we always harp about position sizing and risk tolerance and all that stuff, because things get big quickly.
Yep. Definitely grow teeth.
Yeah.
What about Boeing flying around?
BA. I
Honey.
have not touched Boeing in a minute.
Oh, me neither. It's rising from the dead.
Yeah.
Up to 180 here.
Hmm.
IV rank pretty decent.
Mm-hmm.
I don't know if I'm ready to get long here, but I think maybe a little iron condor here. 165, 155, 195, 205. Just about $3.
In the January?
Yeah. How does that sound? 65 down here.
Too shabby.
I could do that. IV rank 58. Applied volatility at 41%. Let's see if I get $3 on the dot. Right around a 20-ish delta. Maybe leans a tiny bit long.
I'll join you. I'll see.
Yeah, it's one I haven't traded in a while.
Excuse me.
Yeah, there you go. A little BA action. Crazy move there.
Mm-hmm.
JC, November 6th, when SPX gapped up 90 points, leaving a hole between 57.82 and 58.62. Any technical traders think we will fill that gap?
Not a technical trader.
What are we looking at? Which I got filled at 293 on that.
I'm working like a 299.
Yeah, I don't hate the idea of sitting with it. You can, no rush.
Yeah.
What are they looking at? Where's our gap fill?
The green bars of gap to the upside in SPX after the election. But yeah, I think this is interesting just from a visual standpoint. Like if you look at SPX and the Qs, if you just put a vertical or a horizontal line across the lows of the last 2 days where we are at now, That was the high that was reached on November 11th, and we're kind of just sitting there. So I guess we'll see if we plunge below that or if we rebound above it. Visually, it's appealing. People saying they're taking out mortgages to buy all the out of the money calls.
H. Montero, there will most likely be a New York City trip in 2025.
Yes.
It was one of our highest turnout cities.
I think we had like 800 or 900 there. Didn't
We had
we?
like, I don't think it was
Or did
that
we get to
high.
1,000?
I don't think we were that high.
Oh.
But I will be back regardless for the bagels. You know?
We need a repeat of UFC 300. That was the most iconic. You got so lucky. That was the best UFC
I know.
that's ever been shown.
Yeah. I was also so lucky because I didn't wake up dying the next day, even though my blood was 95% tequila sodas.
I was gonna say that's because all we did was just pound light beers.
I was on
That's
the
another
tequila soda
tactic.
train. Yeah.
There.
It was
Light
the
beers.
probiotics.
Yeah.
It was the water.
Oh, there you go.
You know, we had a good amount of food too. But yeah, we don't know what Tom is really cooking up for 2025 just yet.
No.
Hopefully it will entail the three of us getting back out there together, but
Without Tom.
yeah, who needs him?
Yeah.
We can finally have that 2020 tour. That
I
we
know.
never
Do you
got to
remember when that was the whole thing? Oh, yeah, you guys are going to do it yourself.
Yep.
And then he realized his face isn't right at the front and center. He doesn't like it.
Oh,
So, you know.
well, it was also, we
And
lived
then,
inside.
yeah, we also got hit with a pandemic.
Yeah. Anywho, all right. Who is next?
AVGO ex dividend Monday, Jan 17th, 200 call assignment risk. Roll up and out to Feb.
Jan 17th. Okay, so let's look. Dividend is on the 23rd. It's 59 cents. So you really don't have any risk.
You're fine.
Even if you had something from earnings that got blown through here, probably around the 172 mark is where I would, think you got to roll or do something. If you are in the December, well, I guess the December monthly will roll off. So if you're in any of the weeklies, just look at where an option has 50 cents of extrinsic value, or 60 cents, I should say. That's where you're at risk. But 200 strike, no big deal.
JC, my brother's doing great. He lives in Hawaii. He runs his own thing.
Yeah. He made it out the struggle.
He's thriving.
He's thriving.
Yeah.
He's about to wake up right now. He's probably going to check the wind, see if it's a kite surfing day. And if not, maybe he'll
stack some sats.
This is a buying opportunity with Bitcoin under 99K.
Yeah. He's also violently long.
He is violently long. He's doing it right.
Yeah.
What if we, you know how like Oprah used to go to like Hawaii or to a destination
Yeah.
for her show?
We should do that.
Can we like tap into Chris Butler to do a Hawaii broadcast?
We could.
Get the three of us down there.
I would love that.
Yeah,
I would
be great.
love that, especially now that the sun is setting at 4 o'clock. So
The sun, we don't get to see the sun.
Yeah, what is the sun?
I don't know.
We saw the sun, and on my walk to work yesterday, I stopped in the sunlight and
Yes.
just
You,
like, looked
stood there.
at-
I literally did.
did one of
Yeah.
these?
For like 5-10 minutes, and I was like, this is all I'm getting
Yeah.
for another week, so might as well soak it up.
Yeah, I do that. I'll like go sit like on the floor like a house plant.
Yeah.
And just
Perfect.
take it in.
Love it.
Great.
Is the expected move more often to go outside when the VIX is low, since low vol is the range is smaller? I mean, implied volatility in general is overstated, and this is especially true for ETFs. I think you run into situations much more frequently with equities, where equities just do what they're going to do. What I will say is, if you're selling risk on both sides and the VIX is low, the pain you're going to feel is significantly more than if you're selling premium like what Nick did after the volatility spikes. You can get much further away. So that's when we like to sell premium, especially on both sides of the market, is after a vol pop, rather than just selling it consistently in like a monthly cycle. 0-day stuff is different because it's day to day. But yeah, we're waiting for the vol pop to get those wider ranges. Palantir call ratio in Jan. Long the 85, short 2 of the 90s.
I don't mind the trade. It's a little bit capital intensive. If you remember, did we do it was this a trade idea from last week that I did, or maybe we just did this we did this on Tuesday. So it wasn't on 3 trade ideas, but it's got an extra little juice to it in terms of the buying power requirement. It uses about $2,000 $2,000 in buying power to put on a naked position in Palantir. So I felt like it was kind of just too big for me. So I did an iron fly or like a tight iron condor here. So that's, if I was looking at that ratio, I think I would rather move it a strike closer and do like a broken wing butterfly type trade. Save yourself, $1,000 capital. Something like that.
Go. Nice. All right.
At what percentage of loss do you usually give up with selling a put, and is Tesla finally done mooning? I think Tesla could easily rally higher, but I think the fact that we're seeing Tesla sell off pretty aggressively and volatility collapse just goes to show how crazy the upside move was. And at what percentage loss do you usually give up with a short put? I personally don't. If my plan is to exit at a loss, I'm just going to define the risk and do a put spread. Because like a short put, if I'm selling a short put, I'm taking the stock or just rolling the put perpetually, even into a violent sell-off. Yeah. I think you got to be comfortable with that risk, because if you're not, you're ultimately if you sell a put and you exit at a loss, it's no different than having a short put spread that's at a loss. But your risk is probably more. So like if your plan is to exit at a loss, I would just sell the put spread up front. That way you know what your risk is regardless of the move. And if you have a short put, undefined risk or naked, I'm manipulating that. I'm rolling out in time, moving it down, or just rolling out in time. Because an in the money short put is just a covered call. So that's my 2 cents. Which doesn't answer your question, but I think I would look at it a little differently.
Yeah, I would add to it, if your size is small enough, you don't necessarily have, I don't have an exit plan for, I don't know, I'm short that Celsius put, CLH. I sold this at 227, it's marked at 370. I am small enough in this position, I think we did this, a week ago? Just about. Small enough in this position, I can roll it, manage it. I'm not worried about it. It would stink if it went down to 10, 15 or whatever, but it's small enough to where I don't have to think about exiting it.
MU, what is the best practice threshold as percentage account for a binary diagonal trade? Diagonal spread is basically worthless. This is a $600 loss. 2.8%. How many X trades a month to de-emotionalize the pain of loss? So for me, it's just you got to be comfortable with the max loss. If you're not comfortable with the max loss of $700, you can make it smaller. You can do a different trade or just not trade it at all.
Sure.
But this is why I go out to February, because if this move is reversed, the trade's fine. But at the same time, going back to a short put, this $600 loss is significantly less than a short put would have been, or long stock, et cetera, et cetera. But if I wanted to, I could go in now and do a new trade. I could buy the 90 in Feb, sell the 100 in Jan, and do that for $4. I actually looked at doing that this morning.
90.95.
90.95, yeah. So you can recoup some losses if you get a reversal, if you're willing to take more risk. With this market, I would like to see MU kind of flatten out before I do that. That's kind of what I did in Target. I waited for a couple chop days and then I took a long bias, but that's kind of the in a move like this, that's what I'm doing is I'm just going back into it with more risk, with a longer time frame. But I still have that long option in Feb. So if there's a 5-10 point rally, that long option will gain back $100, $150, something like that. But we'll see. But the answer is you can't control these earnings trades, so you just got to be comfortable with the max loss up front. Put ratio spread in MU, Feb 75.80.
Feb 75. Okay. Yeah, I don't mind it. I might even lean to go to January and just do like an 80 put or something like that. I don't know, when you're doing a ratio spread with 60 some odd days until expiration, it's just a lot of time. I think I would just rather sell the put. I could probably do that. I mean, when were we trading at 80? 80 was all the way back January.
In MU?
Yeah.
I'm seeing September.
Oh, 84, something like that. Come on.
Oh, okay.
Yeah, I'm talking about like in the money, 95, something.
Oh, the 80,
like a
okay,
year.
sorry, the 80s. Yeah, I was looking at the like 86, 87. Sorry.
I'm gonna sell a January 80 strike put, $1.56. Try and get $50 out of it.
Here you go.
29 days. Gonna use $1,000, but I freed that up by buying back the one short call that I had. I did a 1x2 crab trade, which I'm out like $200 on, but the short premium expires tomorrow. It's basically worth a trade at a penny. All right, 153.
Japanese yen.
Oh no.
Oh boy.
Big sell off.
Oh yeah? I think
We're
that
at the
probably
lows.
helped out Vecchio. I think he was short.
We got to go to Japan right now at these levels. we could be eating like kings and queens over there. It's crazy how like it's so inexpensive. Once you get there, it's crazy.
I might have to nibble on something here. Let's see.
Yeah.
Yeah.
What are you thinking? KT.
Big wide call.
February? Or January?
February.
Okay.
Myself a little time.
You're looking like at the money call spread, short put spread.
I feel like the put
Iron
spread doesn't
Condor.
give you enough. Even 50 days out.
Mm-hmm.
Unless you do the at the money.
I got to buy a call spread here.
I think that's what I'm thinking.
I'm going 6.5, 6.8 for $600.
You're going out of the money? Ooh.
Slightly out of the money. $3,000 max profit, $600 max loss. This is just a big wide call call vertical spread. But I mean, this move is just really crazy. And we're near the lows where we had that reversal. That reversal was the Japanese yen unwind, I believe. Yeah. But either way, this is also a short dollar trade. If you're long 6J or 6E, it's the same idea.
Yeah.
I'll bite. I'm going to change the strikes a little bit, but I don't hate that.
I got to get in. I got to get long Japan. We love Japan.
We know. How are your babes?
My Snoopy babes?
Yeah. Didn't you buy because
They're
of
down like, I think
it's
they're
down. It's down bad. I'm down bad.
Oh yeah, I'm down bad too on my bonk.
What do you?
I'm in bonk.
Bonk. Okay, you rotated out of MAGA,
Yeah.
whatever it was.
I took profits. Yeah, this one
I'm
doesn't.
filled in the end.
This doesn't look good. I mean, Ryan with the fart coin,
Oh yeah.
he just
Missed
nailed that one, and then he got into AI16Z, the AI
Yes.
bot that trades.
Crypto.
Yeah.
Yeah. I've got a little bonk.
You got a little bonk?
Yeah. I'm hoping, and somebody asked this in the chat. They asked, what are you guys doing with the Where Do I Start show? So we're going to be like, that is the complete, 9-episode series, if you will, of the Where Do I Start.
Oh, you're done?
I'm done with that, but like I'm still going to do the show with him probably once a week, if not twice.
Cool.
Depending on you guys and Glenn and whoever else wants to jump in with him. So I got the basics. I learned why it's a compelling thing to add to your investing portfolio.
Mm-hmm.
And we're going to start to spread our wings, broaden our horizons.
I love it.
Maybe I'll be on the bag battles one day.
Oof.
A girl can only hope.
We would welcome you with open arms.
Yes.
We'd
have to set you up with a new spot, though.
I know.
I have to deliver the golden ape to Ryan. I forgot to do that on the show.
Filled on yen. I am in the 65-67 out of the money call spread.
There you go.
I just narrowed it a little bit.
There you
Saved
go.
myself like $150.
Yeah. Beautiful.
Yeah. All right, time for one or two more. The chat is popping off today. Thank you all
Yes.
so much. Feels good to see that growth going into the new year.
Yeah, Merrick, the MU trade was huge sell-off, multiples of the expected move. So yeah, if you wanted to add risk, going long Feb, short Jan is the adjustment I would make. I would just close out of the February one and then restructure it. I'm gonna wait. I want to see if we get a little bounce here, and then I'll likely do that. What was your spread for Boeing? Some people asking for.
Boeing, I think I posted it already, but the trade was 165, 155, the 195, 205. Iron Condor, 10 points wide on both sides. Right around the 20-ish delta for the shorts. I got 293 credit.
Mm-hmm. I think that's it.
Yeah.
Beautiful.
Yeah.
What's for lunch?
I don't know.
Fry the coop.
Ooh.
And sweet green. Hopefully there's some salad.
I hope there's something left.
Pennies.
We were very sparse on the food yesterday.
Are we?
Yeah.
I
Yeah,
had
it was
a
slim
raw food.
pickings. Oh.
We'll take a look. Anyways, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie, Mike at Trader Mikey B, Nick at Trader Nicky Bat. Sign up for our digital events in January, February, and March at tastylive.com/events. More coming for 2025 soon, so stay tuned. Good luck, good trading, go football, go bowling, go life. Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Die like squirrel.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes, but the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
We are back. It is Thursday, December 19th, 2024. This is Futures Power Hour, sponsored by Sammy Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, I'm gone for 1 day. What did you guys do to this market?
I know. It's we missed you. We needed you. You weren't there. We needed you. It was a tough day yesterday, and I'm not quite sure we're out of the woods yet.
I don't think that we're out of the woods at all. I think that we've just decided to go deep into the woods of hibernation now. This is the second to last real trading day of the year, perhaps. We think about the calendar moving forward, December 23rd next week. Christmas Eve, then Christmas itself, that we talk about going into New Year's Eve. I mean, this is it. But volatility has changed course over the session. We've seen stocks come off their highs, of course. And bonds have broken into new territory that we have not seen in quite some time, Jamal. The damage is profound, Jamal. Hopefully, this is not just a one-day thing, at least for some positions. But there's new ways to look at this market, at least now that we have both eyes open here, Jamal. Yes, the eye situation, you're going to see my eye do weird things over the course of the session. Yeah. Lesson learned, folks. Don't scratch a cut on your leg and then rub your eye. I'm a child, evidently, who hasn't learned enough to wash his hands. So, Jamal, next time in Chicago, don't shake my hand. Aside from that, what did you make of yesterday's action around the Fed meeting?
You know what? I'm glad we're here to talk. I really do use a lot of these times to discuss different things with you because I think we spend a lot of time in our own head. And I don't know about you. It's great to talk with you every couple of days because I want to make sense of stuff sometimes. Sometimes I'm making sense maybe in my own head, and I'm just curious what it sounds like out loud. Seriously, because honestly, nothing surprised me yesterday. I'm sure you could dig deep into the weeds of all the stuff that was said during the meeting, which is obviously, I should say during the presser, which is obviously when we saw the biggest moves. And I wasn't really surprised. I mean, we knew that they were going to cut, and they did. We knew that they were probably going to slow down the pace of cuts. I mean, that wasn't a crazy surprise and not a crazy idea. Outside of that, I thought yesterday's move was quite an overreaction. Now, look, I'm here for it. As I've always said, I'm looking for times where markets move big and we get some volatility because it creates trading. Hell, it creates content for us. I like it. But I just am not sure why we dropped so much yesterday. And not only did we drop, VIX went up. And not only did VIX go up, VIX was going up in the after hours too as markets were still dropping. So I don't know if it's sort of, maybe people were a little bit overextended and needed to sort of unwind a few positions here and there. I'm not sure, Chris, but I still think yesterday was was a little bit of an over-exaggeration. And I also am not surprised by today's action. When you come in and you see the markets immediately up after and then we fade, that just means that people are still a little nervous after yesterday's move. So that's how I feel.
One of the drivers that I was looking at yesterday was the change in the Fed summary of economic projections, whereby they lobbed off 50 basis points worth of rate cuts for next year. And as a result, they had to take down the target that you see in 2026 lower by 50 basis points as well. That's more or less where the market was going into the meeting, but the market's taking that in a different direction entirely today. According to the CME FedWatch tool, we have one more cut priced in by the middle of next year, 98.2% chance, we'll call it rounding up, by June 2025. But the odds of getting one before then, it's only a sliver here. And I think in terms of this being a hawkish cut, given the Fed's own, I don't want to call it, how should I describe this? They changed their inflation expectations outlook to such a significant degree. It almost begs the question, if you think that inflation is at such a risk of turning higher in the next few months going into 2025, why on earth did you just cut? And I think that's a big part of this market reaction. It's almost like the Fed is caught flat-footed and the market has a little bit less faith in how the Fed's handling the situation right now. Because you can't just say that, oh yeah, inflation is going to be running this much higher, but yeah, we're still going to cut rates heading into that environment. That's an oddball.
I suppose. And of course, people are talking about, well, they have to kind of cut because the housing market is struggling and there's other areas of the economy. I guess, man, I don't know. It just still seemed like somewhat of an overreaction by stocks yesterday, to me, I would say, and by volatility to some extent too.
For the breadth truthers out there, if breadth declines before the market tops, you had your moment in the sun. Dow Jones is down, 12 days in a row. Today could be 13. Yeah. Yesterday was the worst string of it. We haven't seen a stretch like that in quite some time. Same thing for the S&P 500. Breadth has stayed negative the entirety of this month. And as we look at today's bounce, Jamal, we're going over to stocks first. There's something trying to get together here. It's not much of anything great. 59.60 so far. We closed at 59.42 yesterday in ES. And it was a 60-point bounce. Now it's a 20-point bounce. So perhaps there's still some room for this to expand to the upside. But hark the volatility angel sing, 51.8 IVR. That is something that vol sellers can work with now. But I want to take a step back here because, quite frankly, I'm among the bulls here at Tasty, and you and I have been in the bull camp together. I think the risk management aspect of why the trades were structured the way they were makes this much less painful experience than it could have been otherwise. If we were selling puts and we were having long deltas expressed in that environment when volatility was so low, we would have been steamrolled yesterday. And when we were sizing up trades to stay long deltas in the market, the risk to reward by selling put spreads was like risking 4 to make 1. Mm-hmm. But if you were playing it in the long call side, if you were doing it through the calendar call spread, I was doing it through the long out of the money call spreads, right around that 25 or 30% probability of profit. You were risking 1 to make 4. In a sense, at least the way I had my trade structured. So today would have been much, much worse if I was selling volatility when the VIX was at 13 instead of buying the out of the money calls. Yes, I'm not happy with how the positions are performing, but small losses, relatively speaking, and there's enough time on the board here where depending upon how this bounce takes shape, there could be an opportunity to resell them at, or at least get out of the positions at higher levels.
Really good point. That's exactly why I've been playing the covered calls. That's exactly why I've been saying it in the manner that I've been saying, such that, I understand if you don't want to risk X, Y, Z, go back, look at the tape, right? I mean, I understand if you don't want to buy futures right now, but there's no reason, there's no wall of worry, at least so we felt, right? Prior to yesterday, there was really no wall of worry. That was going to cause stocks to fall. Now, obviously, things change, but nevertheless, this is the reason why we were using the careful way that we were using, because you just never know when these type of days happen. I mean, there was a 30-point expected move, I think, when we talked on Tuesday, from what I was talking to Liz and Jenny too, and they looked yesterday and they said there was a 24-point expected move. Both of those were less than 0.6%. 7 out of the last 12 times that move was underpriced, and we had moved at least plus or minus 0.8%. We moved 3% yesterday, so we blew through all of it. So almost 5 standard deviation move, if not more. And you just don't know when that's coming at all. And so that's the reason why you and I were both trying to use these ways of staying long and using and expressing our opinion while not risking the farm to do it. And I mean, again, yesterday was not great for me, but at the same time, most of my long calls are further upside in a couple of out months. And again, you don't necessarily want to be long upside calls here, but I'm using the call spread such that I'm selling near term and I'm long basically January and or February in SPY. And as of the last couple of days, I've got it on in diamonds using DIA and IWM. I'd love to do it in ES or NASDAQ. Those are a little big for my portfolio. So that's why I'm using the covered calls in those ETFs to express that opinion.
Yeah, so the structuring of the trades matters, right? But now at 51.3 IVR, there's a lot more to work with. I think the IVR here is a little bit misleading in the sense that volatility is pretty darn high right now. We have that very wonky, whatever that was at the beginning of August, where, you know, VIX spikes into the 60s. How many times have we seen that? Not many.
No.
COVID,
especially
global financial crisis.
Especially the fact that, and I got this, and I'm going to talk more about it on Engineering the Trade today at 1:45 Central, 2:45 Eastern. But that was 2 times this year we've had spikes in the VIX above, like on a 50% on an intraday basis. We really haven't seen those too often. And pretty much every time we've seen a spike of 50% in the VIX on a day, you usually see it much lower a month later. So something to keep in mind.
VIX has effectively doubled since December 6th low, 1270 back then, now 2353. Jamal, this has been the top side of the range, though, outside of that August, whatever that was. Whenever we've seen a move above 22, 23, it hasn't lasted that long. So I guess the question is this time different? Is this more like August, or is this like every other instance where we've been near 22 or 23?
I would like to say it's like every other time because, again, every single time since 1990, the VIX did 50% in one day. We are lower a month later. I do still feel like yesterday was an exaggeration. I don't feel like there was something said that was crazy. However, when you see VIX moving in the aftermarket like it did, that means somebody's blowing out, and that's kind of scary. And that's the one thing that makes me a little bit worried about going forward. You know, you could also see a situation where, like you said, we don't have a whole lot of trading days left in the year, and maybe things are fairly quiet, and this is kind of forgotten about it. And a month later, it's just one of those things that just happened like August, and we move on. But I don't know, man. The only thing I could think that would be, we don't know about is the effect of tariffs. But I want to say that tariffs are priced in. When you talk about something for 2 to 3 months expecting it to happen, in my experience in the past 20 years of trading, typically in those situations, it's already priced in and you just don't know it yet.
Jamal, one of the things that we've looked at over the course of this year, where I am remiss to say we did not catch it in the past few sessions, was that whenever stocks have been about 3% above their 1-month moving average, it's coincided with a short-term pullback. That has been a stat that we have referenced a number of times over the past 2 years during this bull market. It's just one of those things, maybe overheated signals. And 2 days ago, the NASDAQ was more than 3% above its 1-month moving average. So that should have been a red flag. Now, in terms of both of the positions, again, one of the reasons why rolling out the positions when we did, I would point to the fact that the width of the strikes was taken in as well. Because when you were long the 6K, short the 6,200, that expresses a level of confidence where you're risking a little bit more than you would if you were, say, long the 6K, short 60-50 call spread. So the strikes are much tighter right now. But having now made that correction, is the uptrend in the NASDAQ off the August lows imperiled yet? That's the honest-to-God technical question that people need to be asking, because I see the July high here, currently sitting around 21,500. I see the swing highs that we had in November. I see this little 2134 EMA cloud that caught us back at the beginning of November, back here during the pullback at the end of November. I see us right back into that zone right now. So it's been a rough, ugly session. But if there has ever been a place for the NASDAQ to find support, this would be it. So bulls, Custer's last stand maybe, hopefully not. But this is the place that you need to put your flag in the ground and make your defense. And if you fail here, and if we're looking at like a close of 21,250, you really start to think about a bigger flush and just positions winding down because the end of the year is here, and maybe it's because of a government shutdown, right? Maybe it's because of the Fed uncertainty now moving forward. But either way, the technical damage needs to be monitored because it can no longer be ignored.
Yeah, it can no longer be ignored. That's for sure. I mean, it's something that we have to at least keep an eye on right now. Again, I'm still holding my longs in the ways that I have them, the calendar call spreads. But again, the technical damage usually leads to psychological damage sometimes. So we're in a very sort of sensitive area, I would say, right now overall.
Jamal, the Russell took it particularly hard yesterday.
Yeah.
Poor Russell. This, unlike the NASDAQ here, has sustained that significant technical damage. But then again, here we are. Lows that we saw back in October, lows that we saw back in November. We've erased 6.5%, 7% off the highs. We're also at the midpoint of the 6-month range. Oh, is this an iron condor situation now?
I mean, you definitely can. No doubt. I'm not doing them. I mean, I've been doing like a same deal, sort of playing to the upside, but it definitely is. I mean, I would expect, if there is a snapback, I would expect more of a snapback in ES and NQ versus Russell. I think, now it's back kind of in a range. It's certainly geared up for that.
It's a good risk to reward, though, is the question. 43 days out at the January 31st expiry, it's a 60% probability of profit. If you are short the 2100, 2450 put and call respectively, and then long the 2050 and 2500 call, or rather put and call respectively, max profit of 645 against a max loss of 1860. I'm not crazy about that, Jamal.
I'm playing it for a return to an upside move, but you got to wonder, considering it just lost all of the momentum from the post-election move. That's the one thing that makes you wonder if it's going to kind of hang out in the range now, because there were a lot of buyers, right, during that post-election huge move that we saw, and now they're underwater. And so this is sometimes in those situations, buyers and sellers start kind of fighting here, and you sort of end up hanging out. So Iron Condor might be the way, but right now, I'm still playing it for a move back. I used calendar calls on this one as well, and I'm playing it for a move back, especially since it's just been so oversold for so long.
Yeah, I'm just taking a look at how this trade might be structured. A short put spread here. I
think it's one of those trades where you can win in both ways, honestly. I guess is really what I'm getting at.
Yeah, we gotta. What's the preference?
The preference is always
Short
for a
put
snapback
spread?
move for me. But you're saying strikes, totally different.
Yes.
The preference is, downside 2175. I mean, I think, yeah, even though that's like towards the bottom, like right around the expected move. I mean, when you look at 2175, that's calling for some real carnage anyway. I'd live with that. I'd live with 2175, selling that put spread, 2175, 2150. And then the upside is where things get interesting, right? Because do we see some relief from these yields and then that causes the bounce again? That's the real question. I don't know if I'm more worried about upside than downside.
More worried about upside than downside. 2201.6 is the swing low in the range that we've been trading in since the middle of September. And so if you are of the mindset that this is a good place to jump in, volatility has run up the board like this. And Jamal, you just pointed out that stat. Anytime the VIX has been this high or expanded this quickly since 1990, a month later, it's been lower 100% of the time. So again, that seems like maybe we don't need to think about the market rallying from here. We're not necessarily bulls, but we are of the short volatility mindset.
Right.
And the market may stop falling from here. We joke that's the wedding crashers trade. You mentioned it on Tuesday that, finding points of reference to encapsulate or capture our mindset. And really that's what we're talking about here as well. So it's a 55.5 IVR. It's still 0.5% loss though. So Jamal, this turnaround here intraday, is that enough to give you pause to wait to see a little bit, say, better technical footing on a lower term time frame before you even consider putting this on?
I mean, this thing hasn't really been technically beautiful for most of the year, honestly. I mean, there's times where it's just completely broken out, and then it was sort of consolidated, and then it broke out like we saw in July. And then, it kind of did the same type of move that we're looking at right now. So I don't know if I care so much about the technicals in this for when you trade in the vol. I mean, really, you just kind of look at the ranges in more recent times. And again, I think we've kind of identified a low end of the range. We know where the top side is. So, I mean, I would just center if I'm doing a condor, I'd send it around those.
Stocks are real ugly here. Jamal, what do you make of the move in some of the leadership groups here, like technology and semiconductors, as we wind down to the end of the year? I know that's not future specific, but these are the major sectors that guide the NASDAQ, the S&P, at least over the past few months.
100%. I mean, I center a lot of what I think about these major indices based off of the big names in the indices. I mean, it's hard not to, especially nowadays, and that's all we talk about. So one of the things that's interesting is we did see this dominance for I can't remember. I guess it was a couple of weeks there with AVGO taking over. It felt like a couple of weeks. It really wasn't. Maybe a solid week. But we saw this dominance with AVGO, which is, at least, top 6, 7 in the index for NASDAQ versus, and Russell, actually, I think. I'm sorry, not Russell, S&P versus NVIDIA, which was really struggling. And now you're starting to see that turn around a little bit. I don't know if that's a sign here. If it is, I think that's a good thing because it means we might not be falling that much further if NVIDIA is going to start to take over a little bit again. So I'm keeping an eye on that, the difference between those two. But you talk about sectors overall. I mean, housing has been struggling more recently, and I don't know, banks have been kind of lying in the weeds. We haven't talked about those in a minute. Neither. They've been kind of weaker, and so when you look at a Goldman chart, it looks just like the Dow. Obviously, UNH and healthcare has been struggling as well. So there's something. It's almost like as if the typically when we see breadth as weak as it is, when you see, the way that I look at it, that S&P 500 names that are above the 50-day moving average, that's only been around, like right now, it's about 20% or so. Usually when it's that low, it portends a market bounce coming. Well, it was trending lower before we just got this sell-off, which meant like things were already fairly weak and they just got way, way weaker. So I would like to think that number being so low, the S&P 500 names above the 50 moving average being only 20%, I would like to think that means we're going to bounce soon. But like you said, like we said at the top of the show, you can't ignore the technical damage right now, and I think that's something we have to keep an eye on.
That is something I have not checked. You just piqued my interest on something, Mr. Chandler.
Yeah, I mean, look at XLF. It looks just like Dow. I mean, Goldman, just like Dow. Like these names have been really weak.
Well. One of the indicators that I like to look at is the number of stocks above their 20-day moving average. And whenever we fall below 8%, because whenever we're below 8%, it typically coincides with a significant low in the market.
For sure.
For example, the last time we got a reading of that to that degree was on April 17th. The market bottomed on April 19th, that Friday. Mm-hmm. Prior to that, the readings that you saw were right around October 5th, 2023, which again was within a week or two of the bottom. So we're at 8.15% as of the close yesterday, and I believe we've slipped below 8% today. XLF is looking cruddy, though. That's a break of the uptrend from the August lows. Semiconductors here haven't really broken down, and NVIDIA up by 2.2%, you point out. If this is the neckline of a head and shoulders pattern, it's reversed that breakdown to a certain degree. It's hugging its 1 week moving average right now. Jamal, there's part of me that says the best strategy in the market, if you've been a fund manager over the past years, has been buying every 5 or 10% drawdown at NVIDIA blind. And you've been almost guaranteed to return more money to your clients 3 or 6 months later. Why would this time be different? Why wouldn't people have that same reflex right now?
I don't know, but I'm a trader, and traders trade, and that's exactly what I did the other day when NVIDIA got to 127 and change. I sold a put spread, and then I bought some February upside calls. So you're preaching to the choir. This is what I've been saving my chips for, Chris. Remember a couple like 3 weeks ago when I was like, I don't really have many trades on? This is the kind of thing that I was hoping for, to be honest with you. And I was really trying the last couple of days not to just kind of go in And I'm kind of glad I did. Again, yesterday kind of hurt, but I've tried to position myself such that over the next month, if we do make a bounce back, things will be better. But I just don't expect it to happen today. I think that would be too easy. I think it's going to take a little bit of time because of the technical damage, for sure.
You know, there's really two trades this year that have bothered me insofar as, like, I've been right about them, but I never acted on the impulse. And it was how the SMH was moving sideways, and really over the past 2 months, crude oil was in the sideways range. I really don't like range trading, so I try to avoid it when I can. But you know what? SMH has been doing nothing for the past nearly 4 months. I mean, we're talking about a market that on August 22nd, we'll go actually to the 19th. August 19th opened up at 245.79. We're at 240 right now. And I've operated a few times in and out of iron condors here. This is actually a better volatility environment in SMH to do such a trade again than it was just a few days ago. Back on December 2nd, the IVR was 19.32, and today it's 46.8. So part of the way you operate, obviously, is like if you want to be bullish, go ahead and be bullish. I have my own disposition, and I see plenty of reason with the NASDAQ making its line of defense where it is to hold on to the longs, because maybe this is just a flush after a bout of overextension. Santa Claus rally window still hasn't opened up yet, Jamal, so I'm not going to be the person who abandoned ship and faith this time of year. But the condor in SMH is looking pretty good again. Like, it's better juice, more bang for your buck. So I would think about this being a potential opportunity. XLF and XLK make me uneasy. Some of what I see in the metals and the growth stuff and the yen makes me uneasy. Smoke them if you got them.
The great thing about SMH, I bet, and this is, sort of, you and I get this probably higher level trading thing. I bet this is a very good dispersion play, because I bet a lot of people are selling vol in here and probably buying some of the constituents vol wise. And if it doesn't move, then they'll make money on the SMH. They'll probably lose money on the individuals and vice versa. So I bet there's a lot of that going on, because this thing is very liquid. You can easily put on a condor or a couple of condors in here and potentially make money in this. So I'm sure that that's happening, because, again, this thing has so many of those names that we talked about a little bit ago within it. So it's kind of an interesting trade, I'm sure.
I always find it funny when the market gets bothered by a Fed that's more optimistic than it previously was. We see that GDP expectations for 2024 revised up by 0.5%. They're revised higher for 2025. Unemployment forecast lowered for 2024 and 2025. Inflation, that's what goes bump in the night. Bigger move next year to 2.5% from 2.1. So I think that's what begs the question of the market when trying to figure things out. Why would you cut rates if you expect inflation to run higher next year than where you have it ending this year? That makes almost the market feel like the Fed set itself on a preset course and was ignoring the data for so long, and it fell back into a corner and couldn't not cut this time around.
Do you think they walk themselves, or do you think they're trying to not walk themselves into a policy mistake? Is that what it is?
Yes, but because they cut again, I think the odds of the policy mistake went up. But we won't know that for such a long time, right? The tail whip of, the bullwhip effect for monetary policy is 12 to 18 months. So this rate cut we're talking about being felt maybe end of next year.
Yeah.
Going into the start of 2026 in the real economy, at least, for it to be fully digested.
When you see these big red bars from yesterday, that's what they say to me. When you see the big move from VIX and even in the after hours, that's what it says to me.
Yeah.
That the market feels like there's a policy mistake after yesterday's cut.
Now, the one thing about bonds, I have been such a good contrarian indicator here, Jamal. Every time we've talked about bonds, notes, anything on the Treasury curve recently, I've pointed out how since September, thematically correct, inflation, blah, blah, blah. But in terms of the actual trading, I've been a good contrarian indicator as anyone. And remarkable timing on the previous long ZN position, which was established here on December 6th, but for a brief reprieve on Tuesday, it's been straight down since then. But again, risk management, comfortable with the loss, right? Talking about a trade now that's basically sitting at max loss, but it was structured in a way using the out-of-the-money call spreads when volatility had dipped so low, started to look into negative IVRs, that it's a small loss. And that's the kind of bet you have to place. High convexity, and quite frankly, if I hit one of every 4 of those kind of trades, then the strategy breaks even. So you don't need to be a winner. You don't need to go to the Hall of Fame with a 350 batting average, Jamal. Getting 1 out of 4 of those correct will yield the break-even rate you want, and hopefully it ticks higher than a 1 out of 4 percentage rate. But my goodness, bonds, notes, what are you doing here? This is really ugly, Jamal, and I think it highlights the path uncertainty ahead, as well as the geopolitical, rather the credit risk that the U.S. may be going through because of this government shutdown that's looming. And if this is all occurring while, there is a Speaker of the House in Mike Johnson now, who's to say that he's going to be in control when the new term starts next year? So just bad everything. Coal in the stockings right now for bond traders, unless, of course, you've been short. If you have been, tip of the hat.
Yeah, I'm trying to evaluate what I want to do here. I'm still long a call spread. I might just flip it and get short a put spread now that we got a little pop and vol here. This is one, though, I mean, honestly, it makes me more nervous for my bond position than any stock or ETF or future position getting long. Honestly, I mean, it makes me more nervous here because I just don't have a handle on bonds. I just don't really have a handle. Clearly, it's a couple of times now. I just don't have a handle on it. I'm not exactly sure what way to play them.
Jamal, there is so much that scares me about these charts. We used to hold this one out sacrosanct. Continuous ZB contract, if I wanted to go to a Bruce Willis thing there, come inside, it'll be a good time, it's a party, right? Uptrend gone, right? We see that the move off the lows in ZB, October 23, April 24, when we broke those in November, we tried to get back there here and failed, and we returned into the downtrend that was guiding us lower from the COVID highs. So this uptrend is now lost, and we're setting new cycle lows. I suppose if there's support in ZB, it's going to be close to 112 and 27 ticks. For ZN, another kind of danger Will Robinson type of chart where all of a sudden this big downtrend, this move higher since October 23 looks like a big bear flag that precedes another swing to new lows. Where would that support be? 107? Maybe. But nothing good is coming out of these charts if you want to be a directional bull right now on the notes or bond side. We'll need to see what the positioning update looks like when the CFTC releases its updated COT report. And what a bummer, Jamal, that this occurred on Wednesday, because we're not going to see it this week, and we're going to have a janky release schedule moving forward. So it's going to be some time until we see how the market's fully positioned now after this Fed meeting and this big breakdown technically in notes and bonds. I will not be trying to get any long deltas here for the rest of this year or for the foreseeable future. It's been a failure in every regard for the past 3 months. So I'm out, tapping out.
I know. I'm going to hold the position that I have right now. I still have this, again, like I said, this February long 108 and a half, 111 and a half call spread. I'm tempted to sort of readjust it and just sell a put spread. I'm looking at the 110, 107, but those 110 markets look out of line. But I'm tempted to sort of readjust this put spread and do something different, just to sell vol. But you see that Feb? It's not just me, right? See that 162, $2, the 110 put? That thing's out of line for sure. That thing's too wide, bro. I might go with the one.
What do you mean? You don't think it should be 38 wide?
It's too, right. It's too wide. Way too wide.
When everything else is 1 or 2 wide.
And so it's too wide. At times like this, I mean, I don't feel like doing it, but at times like this is a little secret, folks. Sometimes you can just sort of try to sell, 1.9 and sort of fix the market. It's kind of how you can do it. I don't feel like doing it because I don't want to get filled. But let's see. Let's walk it down here. You can do it sometimes. Let's see. Oh, yeah. It won't even allow me to do it. Jeez. It is literally that wide. It's weird. Anyway, I'm probably thinking about selling a put spread now that vol has popped in here a little bit. But even still, I mean, you know what? I changed that. I'm not going to sell it. I know vol is IVR is higher. But look, this is the reason why you can always feel okay about being long bonds and long a spread It's the implied vol is 6. I mean, you know, how much further is it going to fall to? Is it going to fall to 4? You know, it's not like it's going to fall that much, right? And so that's something to keep in mind. So I know I don't want to adjust this. I really don't. Like I'm 108, 108 and a half, 111 and a half. I don't want to roll down because again, it just has not worked out well. But I know one thing for sure: if I get out of this position, they'll bounce back up. That's what typically has happened this year.
Yeah, I have 64 days to expiration, so I'm not really too thrilled about where this is situated, being long the 114, short 116. And it just shows to show how correlations break down all the time, right? Yep. One of the assumptions was that if you were looking at reflation, you would see weaker bond prices and a weaker stock market. And I was of the mindset that if the Fed was giving us a hawkish cut, it would be the like nip in the bud. Oh, they're going to be higher for longer, and therefore inflation and growth will be lower. And thus, this will be the end of the road for the Treasury sell-off, because the 50 basis point rate cut was effectively the start of the move higher in yields across the curve we see over the past few months. That obviously, that assumption was wrong, plain and simple. So it's doubly painful when you think that you have a hedge on. And listen, it was sucking wind anyway, thanks to the moves that we saw at the start of December regardless. So it moves a little bit closer to max loss. But again, structured in such a manner that is a small loss because we were looking something out of the money. And when volatility is low, this is for those that are just following along for the first time or in recent months, when volatility is really low, it's not necessarily the best or most prudent thing to sell puts when you want to be bullish, because it becomes a one-way street that you can run you over very, very quickly. Mm-hmm. If you want to stay bullish directionally, find a way to structure it on the call side. But once we find technical footing down here in something, Jamal, with volatility having been elevated, this is a sell-put environment all of a sudden again, which it wasn't just a few days ago.
Yeah, no, it definitely is. It definitely is now. It's the last thing on bonds I'd say is I'll probably get interested if we get to 107 and change. But the capital that I still have available, I want to at least save for any possible more moves in equities, because I think that's just the bigger opportunity.
Let's keep going. It's 20 minutes left here. We need to talk about this move in gold and silver, which has been really crappy for the gold side of things once again. GCJ5, the position that I'm operating in, finds itself not only losing short-term support, but we see we're losing some of that longer-term support off of the June lows, Jamal. We'll try this for a third time. There we are. Jamal, what do we make of this move today? It's been fading all session long. Gold is off by 1.53%. Silver off a healthy 4.03% right now. Are the tops in place for metals at this moment in time?
You can literally copy and paste what you just said about bonds a little bit ago about gold and silver for me. I can't do it anymore. And it's not so much based off of them. It's the dollar. It's just been so strong, man. And I mean, I did say I made a deal, right? The other day I said it on air. I said if we didn't move to the upside on the other side of this Fed meeting, I was going to ditch my gold and silver positions. So as a result, I got rid of them. And again, the dollar's just been so strong that it's just holding these two down. It's making it tough, right? And now that they've lost some technical support, they seem to be dancing near those levels, but still, it's not the same as the trade that we were doing earlier this year. I think it's at this point it's a little bit of a different trade, and a lot of it started after the election. It really hasn't gone in the night yet. It's not completely over, but it started during the election, and it's been wavering, it's been teetering, and it's had times where it's looked like it's returning, but it's now just the dollar is so strong that it's really tough to make a case for long gold and silver for me.
Metals, everything. On a day when yields are up and the dollar is soaring, it's difficult for metals to have any sort of significant footing here. Curiously, the Aussie and the Canadian dollar have staged a turnaround, which we'll explore in a minute. But copper, for example, it's now back down near the lowest levels we've seen going back to August, if this sort of be the close for today, August 12th level. And it's a 34 IVR, so not exactly super enticing to jump in and sell puts as we try to crack through support. Jamal, we frequently complain about SI being a vehicle that may be suboptimal because it's not as liquid as gold. It's not as liquid as copper. The spreads are a little bit wider. And so for most traders, it's more prudent to operate in SLV. A few days ago, I was trying to get on the long 33, short 34 call spread because we were sitting at support. We were sitting at support of the swing lows we had going back to late September, also the uptrend from the August and late November swing lows, and the trade never got filled. And thank goodness for that, because that is money that is otherwise not lost. Sometimes you're wrong. I'm glad to be wrong on paper, not in actuality, but this had been a place you'd want to cut anyway if that was a position that was taken. This is ugly now. This is really bad for silver. This looks like a head and shoulders top through and through. It means a return back to the lows that we saw in August, sub 27.5, very feasible. Wouldn't discount it, wouldn't forget about it. Gold likewise looks like it's topping out significantly. There's a lot of technical damage here. June, August, November swing lows starting to break, failing to hold a rebound back above them here today. So the close really matters a lot for gold and silver. It's not looking pretty. And throughout all of this, where's volatility gone?
Down.
Nowhere.
Yeah.
Yeah. Not going up.
Yeah. Yeah. I mean, it's the trade isn't there right now, and that's fine. I mean, it'll possibly be there again at some point, but it's just not there right now. And I mean, again, I don't necessarily feel the need to get short these either. I'm not looking to do that. So I'm out for now.
I wouldn't do that. I wouldn't do that to my sweet Prince Silver. But if we get back down to 27.5 and volatility continues to come in, longer dated calls are going to look real tempting, Jamal. Thinking like maybe 100 something days out, maybe looking back at 35. We'll see. Patience, though. This is a lot of ugly technical damage across a number of asset classes today. Silver, keep it in the pocket. Copper, we're into support right now. If we got a little bit more vol, might be worth doing something, but it's not exactly the prettiest looking chart either here. Energy, on the other hand, talk about not caring. Couldn't care less.
Jamal, what's interesting?
Oil didn't get out of bed yesterday.
I gotta say this. I mean, what's interesting is that just in the last 24, 36 hours, I rearranged my watch list. I've moved gold, silver, and all these energy things out of my sight for the time being because there's nothing going on in them. I'm seriously. I mean, there's more going on in volatility and rates and in the equities and the NVIDIAs and the AMVGOs of the world. I want to see what's going on in those when I wake up in the morning and look at my watch list. Not gold and silver and nat gas and oil and try to force a trade.
Energy is so uncorrelated with the Fed that you look at what's happening in these markets and you think these would have been a great place to hide out over the past 24 hours. Crude oil is doing absolutely nothing. In response to a Federal Reserve saying that inflation is going to be up, you think that the market may say, it's because the Fed sees something about energy markets that are going to be passed through to everything else that we just don't see yet. Not really. That's not the narrative. Natural gas, we could talk about temperature forecasts a little bit. NOAA constantly revises their 2-week ahead forecasts, and they're not looking, any better than they were a few days ago. Just for the sake of putting this on the screen, all of the country now through January 1st is looking at above average temperature forecasts. So that should, in theory, be bad for natural gas prices. Jamal, I suppose that if we're feeling like cowboys here with now a 79 IVR, we could sell some call spreads up against this resistance. But this is also a market that kind of looks like it's a spring that's coiling and getting ready to break out, maybe bottom in a very significant manner. So is it really worth trading right now? We know natural gas doesn't really abide by the laws of technical analysis, physics, all that's holy or otherwise. Crude oil, on the other hand, still between 66 and 72. I need it to get out of this range, but the low volatility still makes that reverse iron fly something that is a tempting trade for me. Maybe that's what I need to do here and just walk away and say something's going to happen. I just don't know when it's going to happen.
Maybe. Yeah. This thing's kind of, that it's right at the middle of its range over the last, 3 months or so, oil is. And yeah, it's been very quiet. You would have thought that there would have been a move yesterday. As a matter of fact, I remember looking around at so many different things. For a second, I was like, wait a minute. I got to check out oil. What's going on? 70, flat line, not moving. Nothing's happening. And I actually couldn't believe it. But at the same time, it makes sense compared to what we've seen over the last couple of months. And then that gas, once again, how many days in a row is it? Again, this is The best thing about it, kind of like you said, is both of these. They seemingly, oil usually not, but they're seemingly uncorrelated to all the other stuff that's affecting equities right now. Nat gas always is. You could definitely make a trade in here right now. I want to save chips for equity stuff. I think there's going to be a little bit more to happen here, maybe even a little more fallout. But you could make a case for a nat gas trade.
Jamal, before we go to currency, we're making a little bit of a comeback here in stocks, not much, but NASDAQ is back in positive territory. S&P up now to 59.75. Maybe that was it. Maybe that was the flush. How often do you see the VIX jump up above 28 and stay around those levels, Jamal? I'm not throwing in the towel just yet. I think it's quite ironic that it looks like I have a black eye after yesterday's price action because positioning-wise and physically, it does feel like that.
I could see us falling lower. I really could. I forgot to do this. We got to look at this real quick. SPX. Scott Sheridan actually pointed this out earlier today. Go to SPX. Go to the December 20 expiration. You can do either one. Either one doesn't really matter. We're looking at skew. Go further down. Go down. 5,800. Sorry. 5,800. Now, go to 5080. Go to the 5080 strike. The 5080 puts. And as you keep going down, you're going to see all these bids, right? The 5080 puts, 90-cent bid. Look at $51.25 bid. Dude, how crazy is that? I mean, why do these have bids? And then, of course, immediately people are like, well, that's an easy way to make money. I mean, I suppose so, but it's not cheap. You can do that. And you can't do any spreads. Don't even think about a spread. It's impossible because none of the spreads are going to line up for anything. So it's just wild. This is the kind of thing that volatility brings about.
I don't know, Jamal. I could sell the 5090 put and buy back the 5020 for a potential max profit of $15 against a max loss of $69.85.
Yeah. Go ahead and spend $6,000 to make your 15 cents.
It's only $7,000 of buying power.
Yeah, right. Yeah, I mean, there's just all this bid to these downside options. It's pretty crazy.
Yeah, that is really wild. Is there another leg lower coming? In the world of the U.S. dollar, the dollar reigns supreme. King dollar here is now up at its highest level. We have to go back to the weekly chart to get it onto the screen. But this goes back to the first week of November 2022, which is a pretty good thing, I suppose, particularly if you're someone who likes to buy things from abroad. Goods imported are getting cheaper. Dollar's getting stronger. Should help with inflation a little bit. One of the studies that I read, Jamal, is that 95% of the goods that Americans import are invoiced in U.S. dollars. And so when you, on a month-to-month basis, if you're buying something that has something from the UK in it, odds are that it's going to cost you $20 regardless of what the pound-dollar exchange rate is. If the pound-dollar exchange rate's 130 or 150 or 110, it's still going to cost you $20 US. So how much of this dollar strength is actually going to translate into, good news for U.S. consumers and inflation here at home? Probably not as much as it does for other countries. The flip side is that a lot of companies in the S&P 500, they do get a significant portion of revenues from abroad. Like Apple, for example, I believe now 55, maybe 60% of its revenues come from abroad. And so when you look at something like the Thai baht or the Indian rupee hitting multi-year lows versus the US dollar, it begs the question, what is that going to do to, earnings for those kind of companies that are sensitive to foreign currency fluctuations? So that maybe becomes a bit of a problem. There is something I'd want to remind people of, or at least share for the first time. I read a recent study at the beginning of this week, spurred on by what I heard in a Bloomberg News interview, that anytime there is a 10% swing or more in the dollar index within a quarter, that's when it begins to show up in earnings as a problem. We were down at the lows of about 100.16 on September 23rd. We're almost up 10%. So in terms of this being an impact to earnings and becoming a headwind for the stock market, we're getting pretty close to the territory where you begin to blow past some companies' hedges that they have in the currency space, and FX becomes problematic for them before they have a chance to reset those hedges.
Really? And since when? What time frame?
Well, this has been a move. Anytime there's a 10% move or more in the US dollar within a single quarter, so over a 3-month time window from high to low. And we're about 8.2% above the low that we were at in early September. So we're kind of in that territory where this is a headwind for stocks, for earnings.
That'll be fascinating to see. I mean, again, and that's something that I think is something to pay attention to for the next quarter, right? Because again, this coming quarter, given everything that we've just heard, especially over the last few days here, I mean, now it's kind of a little bit in jeopardy, right? But we'll find out real soon enough, I guess, over the next month if this is just a blip on the map, or if this was really something that we can point back to later and say, you know what, this all kind of really started there.
It's interesting because the way the market's moving, it reminds me of a chart that we shared here from Steve Donze from a Pictet Asset Management in Japan a few days ago, where we were talking about how the dollar index was unfolding very similar to how it behaved around Trump's election in 2016. And almost on cue, as we make our way into the middle of December, the dollar index has jumped up to new highs. Maybe this means as we get into the trade war segment of the Trump administration, which is, I think, going to be a large part of the first, year, as those negotiations take place, we're going to hear complaints about the dollar being too strong again. And you could see this kind of analogy play out in a similar manner. So perhaps this is a last gasp, if you will, for the US dollar, because ultimately, if the Fed does see inflation realized for economic concerns and the labor market weakens and growth slows, you have stagflation. At least stagflationary forces afoot where growth is slowing and labor markets eroding while inflation's going up. And then that's not necessarily good for the currency itself. Early days still, but in terms of the dollar itself, hey, we were long those 0064 puts in 6J that we put back on in September. And while they looked like crap a few days ago, Jamal, deep out of the money, going to expire worthless, today they are looking much, much better, my friend. So 15 days to expiration. Will we ride this into the ground? You betcha. Sometimes you got to do the whole, Dr. Strangelove, got to learn to love the nuke kind of thing. But it's perhaps the only thing that's green for me on a day like today. And lastly, point out in the euro, we are here at the yearly low close. I still think those parity puts are rather interesting for folks to take a look at. 60's in a lot of trouble right now.
Yeah, you're looking like a prognosticator on that one. This is definitely weak. I know people have been looking to get long this. A lot of people use that micro. A lot of tasty traders have been using them, but I'm just not sold on it. And speaking of sold, this looks like it might have lower to go.
It's ugly, ugly, ugly. Even the pound here coming in and looking at what could be the low close that we've seen going back to May. Jamal, overall, these are markets, if you think about the pound, the euro, the yen, that's 70% of the broader dollar index. And that's a significant then portion of flows that are just going to make funding for emerging markets more difficult and make servicing floating market debt that's denominated in US dollars more difficult. The dollar's more expensive in currency terms, and rates are resetting to higher levels right now. And if you think you have recession concerns for the US potentially around the corner, which I don't necessarily, even if there's a government shutdown, it would mean that the rest of the world is going to see more difficult trading conditions going into 2025. Dollar reigns supreme for now, but for how long is another question.
I mean, I know at least not one of them, but just picking the four: Euro, Aussie, Pound, Yen. If you had to pick one to get long, which one would it be?
My lawyers advised me not to answer that question. Jamal, I wouldn't. Incrementally, I wouldn't allocate a dollar to anything else other than the US dollar right now, but
yeah.
That's kind of where I've been. So yen weakness today, helping offset weakness in S&P calls, NASDAQ calls that are out of the money. But c'est la vie. Friday, December 20th, what's next on the calendar? We wind the week down with the PCE report. It's the Fed's preferred gauge of inflation. We have a good idea where this is going to land. You can impute most of the values from the CPI and PPI reports released over the course of the month. And so unless it's a strong deviation away from what we're talking about, 0.2% month over month, nothing really to worry about. 0.2% month over month and lower keeps PCE and core PCE on track to get closer to 2% by the middle of next year, rather the third or fourth quarter of next year. So hopefully it continues to trend in that direction. Otherwise, in the morning, some Canadian and UK data. Jamal, as we wind down every one of these shows, we do a brief bit of education. Today we're talking about assessing risk. Head over to tastylive.com, top banner, Learn Beginner Futures, where you can find the coursework put together by the fine folks on the Tasty Live research team. Notional value and correlation are two ways traders can begin to assess the position risk as well as the overall risk to their portfolio. And by diversifying with products, strategy assumptions, or directional assumptions and strategies, traders can more effectively manage their risk. Sometimes the correlations turn against you, like what happened with notes in the S&P for me recently. But hey, live to fight another day. Learn more about assessing your risk. Go to tastylive.com, top banner, Learn Beginner Futures, or click the link here on the bottom of this slide. It will take you there directly. Jamal, I will see you, I think, well, this is our last time together for the rest of the year.
Wow. You done all your Christmas shopping yet?
No.
Yeah, I've actually surprisingly done a couple.
So I have two. Yeah. But
last thing too, have you watched Enigma with Aaron Rodgers?
Jamal, I cut up my Aaron Rodgers jersey on air the other day. So no, I have not.
I'll
blind myself
one
again
episode the other day with
before
my daughter.
I watch that.
It's interesting. It's a little interesting.
Why would you do that to your kid?
My daughter's a Green Bay fan. It's complicated. You know, my wife and my daughter are Green Bay fans. I know, it's so weird.
For Dad of the Year, Jamal Chandler, I've been Chris Vecchio. Good luck trading the rest of today. See you on Overtime later, folks. Jamal's back with Engineering the Trade. But next up, Dr. J with From Theory to Practice.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets is the biggest takeaway. And that's kind of just the overarching principle I follow.
I'm Jim Schultz, and this is From Theory to Practice, guys. Guys, I leave you for one day. I leave you for 24 hours, and the Nasdaq's down 1,000. The boomers are down 1,000. Even the S&P's down 200. Y'all had one job, man. You guys had one job, and you barely kept the market above zero. Man, I don't know. I might be looking for some replacements after today's show to kind of, do better work in my absence. But welcome to the show. I'm so glad that you are here. If you're watching over on the Tasty Live network, man, I'd bounce on over to YouTube. I would bounce on over to YouTube. You can join the conversation and join the discussion. You can communicate with your brethren that are also watching the show. Man, it's a good time had by most, especially if you were playing the market to the downside yesterday. I know we left off on Tuesday. It was day number 5. Guys, today is day number 11, right? Day number 11. Those last 90 minutes yesterday, that catapulted us right into the double digits. So let's take a look at what's going on today. Man, I don't know, a little bit of a rebound, right? A little bit of something, a little dead mouse bounce or a little dead something bounce. Got S&P's up 39. You got the Nasdaq, also known as the risk-free instrument, also known as the options for income bros product, up 56 today, which is not exactly what it did yesterday, which we'll take a look at here in just a minute. You got the boomers up 325, and then the Russell 2000 Futures Index up 280. Man, we got lots to do today. We got so many things to talk about. We got to do this in 40 minutes. Wow, there's no way. We got to sell premium. We got to talk about SPX butterflies. We got to make a whole bunch of, B- jokes along the way. Like, there was just not enough time. There is not enough time. But if you have a question for me, drop it in the chat box. I will try to get to as many as I can. I'll still try to get to it right around the halfway mark of the show, but I might be just a wee bit late here today. So market is up today. But guys, look at this, man. This scared the children. This scared some people out there. There were some knickers that got wound up pretty tight yesterday after Uncle Jay apparently came out with a purple tie. There was no way. It must have been like a lavender or like a lilac. Like, my man didn't come out with solid purple. It must have been one of those deals where you're like, is that purple or is that kind of a bluish, yellowish, grayish type of tint? Because if my man, I still haven't seen the presser. I have not seen the press conference because, communicating with so many of you all via email, I'm still way behind. So my apologies for that. But just getting back to so many of you guys, obviously in the market myself, kind of seeing what's going on, doing the shows, doing the content, doing YouTube shorts, doing crash courses, all those things. I haven't had a chance to watch my Uncle Jay updates, but I heard through the grapevine that it was a purple tie, and it certainly did not mean to buy. It certainly meant to cry. It did not mean to buy. It left you asking why, oh why. And so, man, I don't know. But if you look at yesterday, man, this is something. Now that is a candle. Like when you go to candle school, and the candle makers come out. And they're like, all right, we're going to show you a candle here on day number 1. We're going to show you how to make it. We're going to show you how to get there, but we're going to show you the prototypical candle. Boom, there it is. The Nasdaq candle from yesterday, down 1,100 in terms of the range. Hit a low of 311 last night. And, man, I don't know, guys. I do not know. Now, obviously, the market is up a little bit today. I honestly expected and still expect there to be more strength coming off of yesterday because, I mean, again, money's still easy. Sure, maybe it's not as easy as it was. Like, sure, maybe, Uncle Jay, he didn't even take away the punch bowl. He just said, listen, instead of using, 6 Splendas, we're going to use 4. That's what my man basically said yesterday. And so I don't really think that, I think volatility might be here for a while. And I think there could be a lot of back and forth, which will be fun. That'll be super fun and super beneficial for us as premium sellers and kind of active traders and kind of zigging and zagging and things like that. That's a lot better than all-time high after all-time high after all-time high. And so, man, look at that. Look at immediate S&Ps, or I'm sorry, NASDAQ range of 1,100. Immediate S&Ps. Man, I don't know. The candle maker might use that candle, actually. That's even more impressive, in my opinion. The range of 240 on the immediate S&Ps. Opened them at 61.26. They hit a high of 61.48, which, of course, that happened earlier in the day when everybody was waiting to see what is Uncle Jay going to go with. And, man, it was something. They closed them at 59.40, just a crisp 200 points lower than the high print on the day. Had a low of 59.06. Man, that's some crazy stuff. Even the metal bros kind of getting taken out to the woodshed. I mean, look at the metals. So the metals, because of the closing and because it's kind of it's a little janky in terms of like when the metals markets open and close. It's not really like a 4 or 5 o'clock deal. It's like a middle of the day type of deal, which we had to learn the hard way along the way, doing options on gold and options on silver and whatever. But gold looks like it wasn't down that much yesterday. But if you were actually, and also, it doesn't feel like it should be down as much today, but it's actually down a pretty nice chunk today, and maybe not down as much yesterday, technically speaking. But from a continuous stream standpoint, like from just a one day to the next standpoint, gold's gotten shellacked. Like gold's gotten absolutely crushed the last few days, where the high a few days ago, 27.60 or thereabouts, we are now 26.14. And then my silver bros, man, somebody check on your local silver bro. You'll probably find them at like an Ace Hardware or something, maybe like a Home Depot if they can't find an Ace near them. Silver down $1.20 on the day. Man, that is just not good. And it was actually a lot lower earlier. I mean, you had silver had a low of the low for silver was 29.14. Man, we sliced through the 30, no problem. We're about to slice through 29, and now we're back to 29.53. And so, some crazy stuff out there, man. Some crazy stuff. Not for your novice traders, not for your beginners. This is gonna be for the seasoned pros out there. This is 100% gonna be for the seasoned pros. Nobody can lose money quite like us seasoned pros. We do it quickly. We do it efficiently. We don't mess around. We don't monkey around with like actually having some winning trades here or some profitable trades there. Like, no, man, we get right down to business, and we get long going right into FOMC yesterday. And so, all right. So what I want to do here today, man, let's talk about a couple things going on in the portfolio. There's actually not too much, believe it or not. I want to talk about SPX, of course, because you can see this trade is actually working. It was working more just right before the show. And so this trade, even though we're not even inside of we overshot it to the downside. Even though we are not inside of our strikes, this trade has worked incredibly well. Now, what are we going to do? Well, we're going to talk about that over the next couple of minutes. We'll see kind of where the wind blows us, but I want to make sure that we get a few new trades on today, because this is the day, guys. I mean, this is what you train for. This is what all of those extra sets of walking lunges are for at the end of the day. Nobody likes walking lunges. I love leg day more than most. I hate walking lunges. Hate them. And I don't care if you're holding the 10s, the 50s, the Hondos. It doesn't matter. Walking lunges with your body weight suck. Like, they're really, really, really bad. And so anyway, but this is why you do all that. This is why you put in all those extra reps and all those extra hours. And so we'll talk about SPX here in just a few minutes. Let's put on our new premium trades, because I kind of want to give this SPX trade a little bit more time to to come back. And then, of course, I'm going to get to y'all. Man, I see you guys. Man, look at you guys. I see Wayne's in the house. I see Dennis Richardson's in the house. I see Sam L's in the house. Bill Buchanan's in the house. Man, David Galmore's in the house. Look at you guys. Paul Heyman's in the house. And let's go. I appreciate you guys so much. All right, let's do so what I want to do, I've got 3 trades ready to go today, because volatility has gone through the roof. You've got volatility futures up 20 cents, 15 cents, whatever. /VX trading 20. But guys, look at the VIX. Man, look at the VIX. The VIX is down. Look at that. What pattern is that? Man, what is that? That's like a halfway H. Man, look at that. So you've got the VIX down $4.40 down to 23. Now, I still have not received the official word from the VIX Corporation. I don't know if we can trust this VIX print. I don't know if we're allowed to use this VIX print, because the one back in August, we couldn't use it because there was a calculation error by the VIX interns. So I don't know. Did they get new interns and they messed it up again? I don't know. I don't know if this VIX print is real or not, because they kind of mix in, the real and the imaginary on the chart. They don't really tell you what you're allowed to use and what you're not allowed to use. And so right now, I guess I'm going to assume this is real. But, in a couple of days, we may get the memo out of VIX headquarters, VIX HQ, that says can't use this one. This one doesn't count either. Sorry, there will be no refunds on your trading accounts, but your VIX calls just simply do not count. But VIX down $4.40 today, down to 23, down $4 to 23 is crazy. It's been a while since we've seen that. And so, man, I'll take it. I'll absolutely take it. So, all right, so volatility's back. So I want to sell some premium. Man, let's do a little something. So we're going to futures options, the gift that just keeps on giving. So MES, we have an IV rank of 49.6. So man, let's get in here. And guys, I think I'm going to mix it up a little bit with MES. So we're going to go to the January 31 cycle, 43 days to go. But I kind of have a little bit of a hankering to do a ratio spread in here, so I'll put ratio spread. But I kind of want to widen it out more than we might typically do. Now, remember, we're dealing with MES, so we're dealing with the S&P 500 index now. So you're talking about a $6,000 product. We're not dealing with SPY, which is a $600 product. So you have to scale accordingly, right? So if I do a 50-point wide ratio spread in MES, that's like doing a 5-point wide ratio spread in SPY. So, it may look more impressive, it may sound more impressive kind of on the surface, but it's really not that big of a deal. Now, a lot of times with ratio spreads, if we're looking to actively manage, at or before 21 days to go, we typically go, or at least I typically go, with really tight strikes. Like I don't really widen the spread out too much at all because I really want to boost my credit collected. But here, I'm like, I don't know, man. Let's tap into the flexibility that is available with something like a ratio spread. Let's go like 50 points wide, and then let's just kind of see where the wind blows us. I mean, if the market goes up, then we'll have a good situation on our hands. If the market continues to go down and some time ticks away off the calendar, then we might even have a good situation in that environment as well. So I'm thinking, what am I thinking? I'm thinking we go 59.20. 58.70 as our put ratio spread in MES. And of course, I'm doubling up on the 58.70. For those of you that might be listening to the show, welcome to the program. I appreciate you guys. My audio only crowd. You guys have a special place in my heart because you're doing it, man. You're doing it like it's 2003 again. You're doing it like there isn't, instantaneous video everywhere that you go. And so I appreciate you guys. So 59.20, 58.70, 50 points wide. I like this trade because we're collecting an 84-point credit. We're picking up $5 per point, so we have to multiply that by 5 to get not to get our max profit, because the max profit is actually going to be, let's calculate this really quickly, since I clearly can't do it here on the fly. So we're going to collect the $83.75 in credit, so $80 in credit, let's just say. So if I get $80 in credit times 5, because the multiplier in MES is $5 per point, that gives me a max profit of $400. But also, I have to add on top of that, what about the width of the spread that I could also bank on? Now, of course, this would only happen if we pinned 58.70 at expiration, so it's not a likely outcome, but it's still very helpful to have as a reference point for understanding what is a more reasonable profit target, like what is a more reasonable objective on this position. Well, if I were to bank this spread, this spread would be another 50 points times 5, which gives you 250. And again, I'm no Julia Spina, but that looks like it's about 650. And again, you can never be sure, so we'll put the squiggly lines. But it was about 650, and the max profit here is 670. That's just because I was, being fast and loose with the rounding in terms of the credit that we're collecting on entry. But I like the trade. I like the trade a lot because I think it's going to give us a lot of wiggle room. And who knows, guys? We might even hold this inside of 21 days to go. I don't know. You just got to tune in to find out. Like we might even go for a little bit more on this strategy. Just don't tell Tom that we're doing it, and it'll be fine because he hasn't seen the show. I think he watched half of my first show, my very first day, and he has not seen the show since. He has no idea what we're doing. Zero clue what's going on. So we can pretty much do whatever we want. So let's go ahead and let's put this guy on. In fact, he probably sees it in the emails. He's like, from theory to practice. That's still on the network? He's probably shocked. And so let's go ahead and let's push this guy out. All right, MES, 84 points on the credit. All right, that's good. We got the ratio spread down. All right, moving right along, man. We're doing it quick. Let's go into MNQ. I really don't think we need to overthink this, guys. I really, really don't. It's the NASDAQ. It's the risk-free instrument. I understand yesterday, you guys let it fall 1,000 points in my absence. I still don't know how you did it. Like, it took a lot of effort to do that. Like, you guys must have all just completely missed the mark across the board. You had one job and you couldn't do it. But I think now that we're back in the saddle, it's you and me riding, as a team now. I was going to say riding solo Jason Derulo style, but that doesn't make any sense. We're riding as a team now. We're a team. I think we sell put, man. I think we go in here. right? I think we sell a put, we take advantage of. I mean, if you guys have seen if you guys were at the live Where's Bat tour, you saw me talk about short puts. If you've seen the digital collectible, you saw me talk about short puts, and it is my favorite strategy. It really is. It's so flexible. It can give you things that other strategies can't give you. And so I really, really, really like the strategy as a way to not only play the market to the upside, but also generate positive theta, play a little volatility contraction. Because again, we got to wait for the memo from VIX HQ. I mean, if that VIX candle is not allowed, then I would imagine that the volatility is going to collapse even more. So I think let's go in here. Guys, we can sell the 21,000 strike, which is right about your 35 delta. We can sell that guy for about 400 points, 425. Now, it's $2 per point in the MNQ pits. You have an IV rank of 80. I'm sorry, IV rank of 40, I should say. And so this is a pretty solid trade. Like this guy's looking pretty good. I don't really think that we need to analyze this too much more. So let's go in here and look at the buying power, guys. $1,800. That is absolutely phenomenal. Like from a position sizing standpoint, we've got $30,000 in this account. That's 5-6% of the account. That's fine. That's very easy to fit in. You could do this trade if you've got 20,000 in your account. Now, it might be kind of on the higher end of what you would typically do. It's closer to 10%, but it is in an index, and so you don't have the individual stock risk. It is in the Nasdaq, which, all kidding aside, is a more volatile product than like an S&P 500 or like a Dow. But you can't even do options on the Dow. Like the boomers, I mean, they're figuring out options like now, like today. Like they didn't even really know anything about options until, I don't know, earlier this morning. And so to get options like in the actual financial markets, it's going to take a little bit more time. The thing about the boomers is their work is incredibly reliable, but man, they take their time. They 100% take their time. And that makes sense. Conscientiousness comes at a cost. So I think we go in here. You've got, about 6% of the account. Looks pretty good. Let's go ahead and let's ship that guy. All right, so we got filled at 423. And then the other one I wanted to do was IWM. So IWM, the IV rank in here is also elevated. You've got an IV rank of 53, which is pretty good. And so I'm thinking, let's go ahead and let this time. So we're kind of, I'm essentially using my three favorite strategies. Like we did the ratio in no particular order because short puts are my favorite. I did that obviously number 2. But ratio spreads, we did MES. Check it off the list. Short puts, we did MNQ, check it off the list. And then number 3, my third, not my third favorite, but of the top 3, the only one that's missing is going to be the short strangle. It's going to be the tried and true, kind of the tasty classic. So I think we go in here. Let's go to February. 64 days to go. NASDAQ back to unched on the day. It's been very whippy today, which makes sense. I mean, you would expect there to be lots of movement back and forth. I mean, everybody was waiting to see if they were going to just completely squash them today. And so far they haven't. But, man, it's going to be really interesting to see. Like I'm looking at the NASDAQ specifically, where are the next 200 points going? Are we going to see a new low? And not necessarily today. I mean, this could go into tomorrow too, which tomorrow's the OPEX. Tomorrow's December OPEX. Tomorrow is the granddaddy of them all, OPEX. Tomorrow is the Rose Bowl of OPEXs, which is tomorrow. And so shout out to all my Keith Jackson fans that might be watching the show. But man, look at that thing. Is this thing going down to 300 or is it going back to 700? It's going to be very interesting to see what happens. But let's go in here. I don't want to reinvent the wheel, man. Let's sell a 203 put. Let's sell a 239 call. And this is the trade that Amelia's got cooked up for us. And I like it. The buying power is about 8.5% of the account, so it's a little bit long in the tooth, but it's not crazy. We're in an index. I think it's okay. And again, I mean, opportunities like this to sell volatility don't come around every day, and so this is a big part of what we do. This is essentially the foundation of the entire network, selling volatility when it spikes like it did, because our research has shown us over and over and over again that it has a strong tendency to want to contract back lower, and if it does that, then you're going to get paid. And today's actually a great example, because if you look at ES, NQ, you look at the markets, they haven't moved a lot today. They've moved a little bit, of course, but not relative to yesterday. It really hasn't been much. But if you sold premium after the big vol spike, like at the end of the day yesterday, you got paid today. Like, you got paid today. It didn't really matter if you were bullish, bearish, neutral. You absolutely unequivocally made some money today. And so that's the benefit of selling premium when volatility is so high. So let's go ahead and let's push this guy through, because I want to talk about SPX really quick. And then I got to get to y'all, man. I got to get to you all. Man, look at you guys. Look at you guys in the chat. I just appreciate you guys so much. Let's see. I can't get filled. No fills on IWM? All right. Well, let's just do it then. All right, beautiful. So I got filled at 624. Okay, I'll push all this out on the file page. Wow, look at all those positions. This is way more positions than I'm used to having. But man, volatility's up, and we gotta do it. And so look at our Bank of America. This is it. This is the cornerstone. This is the pillar upon which all other things are built. Bank of America, 100 shares, right? Again, remember, every Friday, we talk about stock a little bit. We're going to talk about stock tomorrow because it's Friday. And so make sure you tune in tomorrow. We're going to talk about stock. I'm going to specifically talk about the probabilities associated with stock ownership, because when you go to buy stock, if you saw last Friday's show, you saw this happen when I bought the Bank of America last Friday. I don't necessarily love the way the probabilities are presented in terms of, with stock ownership. We're going to talk about that tomorrow. So don't miss it. It's going to be tomorrow, 2 o'clock Eastern, 1 o'clock Central, only on the Tasty Network. So let's go ahead and, all right, we did that. Man, I want to get to you guys. Let me do this really quick. So SPX, here's what we're going to do. Famous last words. You guys ready? I'm not going to close it. We're going to hold this thing, because I really think, now somehow, as luck would have it, we actually got the direction right yesterday, which is the first time it's happened in the history of the show. So I'm thinking, man, maybe we can stretch this into a double. Like, can we stretch this into a little 2 for action? I don't know. Maybe it's possible, right? Theoretically, it's possible, I think. And so I think this has been, this has the potential to be such an amazing trade that we only have $5 of risk, in total. Now, obviously, right now it's marking at, another $4 on top of that. So you could argue, and it'd be a pretty good argument, honestly, that we have $10 of risk in this trade, because we could lose, the money that we've made in the trade. But man, if we just get, it could happen today. It could happen going into the close, and certainly could go to happen tomorrow. If we just get the tiniest little push, I'm talking like 20 points in SPX, maybe 25 points in SPX. I am going to put in a GTC order just in case this doesn't get filled now, or like by the end of the day. It'll still be going and cooking going into tomorrow, OPEX. If we get any type of back and forth action and we get SPX, I'm going to say 59.25 is probably all we need to go ahead and get this guy filled. I'm going to put it in a GTC order for $15. I don't think that's crazy. This is a 50-point wide butterfly, right? The max mark is $50. We're so close. We are on the precipice of greatness that I'm like, man, we worked so hard to get it to this point. Sure, I love a $4 winner. Don't get me wrong. Everybody does. But I'm like, man, I don't think it's that crazy to kind of hope that we get, just a tiny little move higher in SPX. And at the end of the day, if we are wrong, which has happened before, then the risk is limited in just how bad it could be. So I'm going to go in here. Let's close the full trade. Let's do a GTC order. I haven't done one of these in a while. Let's go $15. Now, I won't necessarily know exactly when this is filled. So like if it's filled at the end of the day today, then I'll try to push it out at the end of the day today. If it gets filled tomorrow at like some weird time at like 10:08 or 11 o'clock or whatever, as I'm getting ready for different things and working on other things, I'm not always, in my platform. So I may be a bit delayed with when, I actually push this out and you see it on the follow page, but that I'm going in at $15. And so if you had the same trade down or something similar, just watch. If this thing marks $15, I'm out. Like, I'm not going to change it. I'm not going to cancel it. I'm not going to go in and start, kind of janking with it. This is what we're going with. And so that's going to be that. All right, so let's do it, man. Wow. We only have 15 minutes to go. But where are you guys at? Let me see where my people are at. So David Galmore is in the house. He says, Dr. Jim, I was down $14,000 yesterday before I was down $14,000 before 2 p.m. My buying power was between 18.5% and 20%. At the close, my buying power was 44%. I really got hammered yesterday. And so, yes, you did, my friend. Yes, you did. And so the buying power expansion with naked options is a real thing. It's a very, very real thing. And you experienced it yesterday. And so a couple of takeaways. Number one, yesterday was, I mean, it was historic in terms of the volatility spike, in terms of the volatility expansion. Again, whether it's real or imaginary, we're still not quite sure. But given what we all experienced, what we all lived through, like our lived experience, it was a pretty big volatility increase. And so because of that, the volatility expansion and the buying power expansion, they're going to go hand in hand. Like you're going to see a significant buying power expansion. So that's the first comment that I want to make, observation. But the second one is this. This is why we don't typically like to be, fully margined. We don't typically like to be not fully margined, but fully allocated with our capital. That's a better way to put that. Typically we like to be somewhere under 50%. Now, I know some traders who, go much higher than that. And I mean, hey, there's many, many different pathways forward through the forest here. But generally speaking, we're going to be somewhere between 20 and 50%. And you were on the lower end of that rung, right? You were on the lower end of that range, which is good because whatever plan you have in place, it's always good to be able to execute that plan, to the end of its useful life, to where you don't have to go in and start kind of, circumventing what you wanted to do originally because your buying power is all out of whack, right? And that happens all the time. Like if people are, 60, 70, 80% allocated, you get a day like yesterday. I mean, margin is calling. I mean, they're calling, they're texting, they're coming by the house. It's not just a phone call. They're going to let you just ignore it and not answer. Like they're going to be on the property, right? And so that's going to be a little harder to do because now you got to go in and close positions earlier than you would want to, and all those kinds of things. So, so it's good on you. Nice job, even on a down day. Nice job in keeping your capital allocation kind of front and center and top of mind. That's some good stuff. So Bill Buchanan's in the house. Not hearing a lot. So if you saw the very beginning of the show today, so I'm always looking at the YouTube comments when we're going in live because I want to make sure it's working. Like I don't usually have time to like read them or anything like that, but I'll glance over at them and sometimes one or two will catch my eye. I want to make sure it's working and I'm ready to go and everything is firing. I actually saw Bill's comment as John was counting me in, and if you watch the very beginning of the show, watch the first couple seconds, I'm laughing, or at least giggling, as I started into my intro, and it's because I read Bill Buchanan's comment, which reads, not hearing a lot on Twitter from my options for income gurus. Any idea what happened? I don't have a clue, man. I do not have a clue because I've been assured, Bill, much like yourself, I've been assured that I can sell options for income. I have been lock, stock, and barrel guaranteed that just like my job, right, just like my career, just like what I do for work, 30, 40, 50, 80 hours a week, whatever it might be for you, I'm going to be able to sell options for that kind of income, right? That's what they're all tapping into. That's the positive connotation they're trying to, lean on. They're trying to lean into. And I don't know, man. I don't know where all these guys went. Like, where are all my screenshots, bro? Like, where are all my huge P&Ls, bro? Now, you guys know, like, if you've seen the show, you won't find a bigger premium seller proponent than me. You will not find a better, hey, you need to be selling options in your portfolio as a strategic investment. I'm number one. Like, I'm on the top of the mountain. It's me, the Sosnoff family, the Batista family. Like, we all get along. Like, you got your Schultzes, you got your Sosnoffs, you got your Batistas, got your Germans, your Italians, your Jews. Like, we were just meant to coexist, obviously, right? And so when you think about that and you understand that, it's like, all right, I know where Dr. Jim's at. But the problem that I have, as you guys have known, and here we go, this is going to be the last comment, and I think the only comment that I got to, these options for income bros, man. The problem is, what they're trying to tap into is this connotation that we all have in our mind of what income means. Now, I understand on IRS forms, it's all income, whatever. That's not what I'm talking about. When people hear the word income, they think reliable. When people hear the word income, they think stable, right? When people hear the word income, they think, man, I put in the work, I get paid. The reality is trading, selling options, selling premium, it doesn't work like that. It may work like that on average. It may work like that in the end. In fact, I think it probably does, and that's kind of what we're all hitching our wagon to. But again, you don't get paid, at your job on average. Like you don't get paid, at your job. It's like, well, I couldn't really pay you this week, but I'll get you extra next week. Like maybe some of you do. I don't know. Maybe you got some back alley street dentists that are watching the show. So I take back that previous comment. Maybe some of you are actually doing that. But most people in regular jobs is not how they get paid. And so when you've got, a YouTube bro, a finance bro, putting up a thumbnail, super clickbaity, options for income, it's like, yeah, man, that's just not how it works. Which, by the way, we've got a new thumbnail that we're working on by yours truly that says, here's how you sell options for income. So make sure you watch that when it's released this weekend. And so Sam L's in the house, Dr. Jim in the house, Sam L in the house. Man, I appreciate you. Best show after a good cardio session. Gotta get those carbs for dinner. There you go, man. Go get it, my friend. Yes, I think, quick comment on cardio sessions. Cardio sessions, in my opinion, are significantly overrated for their fat loss abilities, but they are significantly underrated for the alertness that they give you, the dopamine rush that they give you, and just how good they generally make you feel. And so I'm right there with you there, Sam L. Finn West in the house. Good morning, Dr. Jim. I went shopping yesterday. I added shares to 22 stocks on my dividend income watch list. I believe you meant your selling options for income watch list. Lots were on sale. That's correct. Nice job. I mean, if you're going to buy stock, if you're waiting for dips to buy stocks, I mean, there you go. You got 4% yesterday. It got 1,000 points in the NASDAQ yesterday, man. What more do you want from me? Like, what more do you want from me? 1,000 points in the NASDAQ. One day. Went from day 6 to day 11 in about a 3-hour span. And so Dennis Richardson is in the house, says, man, the lifeboats. That's correct. Yes. And it's every man for himself. So that's probably should be a single seater that you're rocking there. So Wayne says, what's going on there, Wayne? Dr. J, it's your brother from TO. Man, I appreciate you. Just wishing you and your family a wonderful Christmas. Man, happy Merry Christmas to you too, my friend. Happy Christmas. That's what they say in the UK. So Merry Christmas to you too there, Wayne. Happy holidays. And man, it's a joyous season. And I just appreciate you, man. I appreciate you and all the support, helping out with the Toronto show. It was so great to get to meet you and your wife. That was absolutely amazing. And really, really, really good stuff. So thanks, Wayne. Thanks so much for being here. So Sam L comes back and says, Uncle Jay canceled the Christmas rally. Dr. Jim called it. Always right as usual. That's correct, Sam L. That's correct. You don't need to check the tapes. Sam L's right. You don't need to go back and look in the archives. Sam L's got it. He's got you covered. Don't you worry about that. And I got Sam L covered with that 20 that we talked about. So scramble everything. Hey, Dr. J, glad to see you survived the most important FOMC meeting. Yes, I mean, speaking of real versus imaginary, I'm not exactly sure what this show is. Like, is this Lost season 5 where there's like flash sideways? Like, you had the flashbacks, you had the flash forwards, and that was not super easy to follow. But then you got to flash sideways. I mean, still the greatest show ever developed, and it's not even close. There is no close second. Breaking, whatever is, there is no close second. But the flash sideways, that was quite a head scratcher, man. It was quite a head scratcher. So that's kind of how I feel with this show right here. So Brian Watson, NQ, the Roaring Kitty candle. Yes, that's correct. Is he still in business? He's not in jail somewhere? All right, well, go for it, man. Jim, greetings, Dr. Jim. What's going on there, YouTube Jim? I appreciate you, my friend. Anka is in the house. What's going on there, Anka? FedEx earnings. Are you doing a butterfly again? I didn't even know FedEx had earnings tonight. I was so focused on the Fed that I didn't have time to focus on FedEx, if you guys see what I did there. So they have earnings. Ooh, tonight after the bell. I don't know. I mean, Thursday and Friday? I don't know there, Anka. Should we do it? I mean, should we go for it? I mean, we've already got our SPX butterfly cooking for tomorrow. That's going to be fun. But it's GTC cooking, so it could be cooking overnight. Like this thing, we're going to be smoking these ribs for like 19 hours. This guy's going to be a little bit different, though. IV rank of 107. I'll tell you what. So I went to FedEx. I had to mail something into my mortgage company the other day. And, when you're doing stuff like that and you want to make sure that it's all buttoned up and whatever. It's like I was talking to the woman on the phone and she was like, hey, yeah, send this to us. No big deal. Here's the address, whatever. But she was like, don't use UPS. You have to use FedEx. I was like, well, why? She's like, because I would normally go to UPS because that's where we do all of our Amazon returns, just like everybody else in the world and whatever. But she was like, our system doesn't really agree with UPS. It likes FedEx a little bit more. So I was like, okay, that's kind of interesting. So I get to FedEx, huge line. And the workers, let's just say they weren't the speediest bunch that I've ever seen. And so these two things together, I'm kind of thinking we got to play this thing to the downside. Like, I'm kind of thinking FedEx is kind of falling on hard times. So what if, man, can we go 20 points wide without breaking the bank? I have a feeling this might be a little too expensive. But the Thursday going into Friday, is this more than $5? 363. Man, they're just giving these things away. Look at this, guys. 265, 245, 225, put butterfly for tomorrow. An Anka special, 369 on the debit. 369 on the debit. And Anka just commented in the stream that she will be reimbursing 25% of all losses. So 265, 245, 225. 369 on the debit. Man, that's some good stuff. Anka, we're just going to need your real name, first name, last name, driver's license number, and, a good reachable address and contact so that we can get our reimbursements when FedEx rips tonight. But 265, 245, 225. I like it, man. Let's do it. 369. I mean, we've certainly made worse trades before, kind of like this SPX thing that's going to be zero tomorrow. So let's go ahead and, but I'm doing it. I'm sticking to my guns, man. I want to see if we can have a really, really, really good trade out of SPX, because I feel like we're right on the cusp of some good stuff. I keep trying to go down. That would explain why I'm not getting filled. Let's go up. 378. Let's see what happens. No takers at 378. Let's try 383. I think we'll probably get filled here. Yeah, okay. So filled and we got improved to 378. So there you go. So in FedEx earnings tonight, man, look at these positions. Man, I'm gonna have to start bringing the intern onto the show. I can't do all this myself. Like, you guys are gonna meet the intern. If you are brand new to the show, by the way, thank you for being here. I'm so glad that you're here. If you made it all the way to this point, then I'm really humbled that you stuck with me to the end, which I know is not always easy to do. And so thank you very much. But I have an intern. I have a trading assistant. I think I'm the only one on the network that has an intern for his show, and it is my 4.5-year-old daughter. She does all of my trade analysis. She gives us the strikes. She gives us the profit targets. She gives us basically everything. And so with all these positions, and they're all hers anyway, all the losers at least, I think I'm gonna have to start bringing her on the show. But let's see here. Thank you there, Anka. I appreciate you. Rob Banks says, good day, Dr. J. What's going on there, Rob Banks? Scramble Everything says, oh yeah, we definitely losers on long bonds. Yeah, long bonds. That's a Tom special. Right, that's a little Sosnoff, little blue plate special right there. You got ZB at 114. 114. This thing's gonna be 110. This thing's gonna be 110, no problem. Don't even worry about it. Don't even worry about it. Now, in Tom's, defense, obviously, I know he was short the market going into yesterday. And so he just needs, I'm going to say he needs about 4, maybe 5,000 more NASDAQ points to finally get back to even on those NASDAQ shorts he's been piling up for about 4.5 years now. And so it's been quite a run for him. So, but bond's going to be about 110. I'd say maybe by the end of next week. And so let's see. Paul Heyman, no office Christmas party for you today. No, apparently not. Well, I mean, I'm in St. Petersburg, and so every day is a Christmas party in St. Petersburg. And so Scramble Everything says, or with the barbell over the shoulders or holding it in the front squat position. Walking lunges always bad. Yes. No, man, I just go with the dumbbells. But yeah, if you're doing barbell, yeah, if you go, wait, hold on. Barbell over the shoulders. So like a typical squat hold for a walking lunge. I'm with you. Holding it in the front squat position. Now listen, man. I've been in the gym now. I started training when I was 18. I'm 43. It's been 25 years. It's been a quarter century. I've seen a lot of things in the gym, and I've seen some crazy stuff in the gym. I never judge because I just love the fact that I have so much respect for anybody that's in there. But I've never once seen, not one single time, seen somebody doing lunges with a barbell in a front squat position. I don't think this is the thing. I think you just made that up. You 100% just made that up. Somebody help me. Sam L., if you're still watching the show, have you ever seen this? Because I know Sam L. is, my Mike Israel brethren. And so help me out, Sam L. Have you ever seen this? Am I the one that's in the wrong here? We need to find an arbiter of truth, and I'm going to go ahead and I'm going to delegate that to Sam L. Let us know, Sam L., because I don't think that's a thing. Gabriel's in the house, says, hey, I'm Gabe and I'm new. Man, Gabriel, I appreciate you, my friend. Thank you so much for being here. Man, I'm really humbled that you're here, and I really hope you're finding a lot of value, whether it be through my show or all the other amazing shows we have on the network. we're an active trading network, man. Like if you're looking to be a bit more active in your portfolio, you're looking to maybe position yourself to, take advantage of a day like yesterday, or, have more protection on a day like yesterday from just a long only portfolio, then you're in the right place. You're in the right place, whether it's my show or all the other amazing shows. Like, thank you for being here. And you can always reach out to me if I can ever help you in any way. Please do. It's my absolute pleasure to help however I can. So Chuck says the VIX seems a little high. Yes, I agree. I do agree. I think that it's going to contract. It's going to continue to contract. And so let's see. Oh, Scramble Everything says they got a million running the VIX calc these days. Yeah, maybe. I don't know. So she can count to 12 though, and she's not even 5. She might be behind. I don't know. But it's pretty impressive. And again, she does it very efficiently. Very efficiently. It's 1, 2, 6, 9, 11, 12. I mean, she's there, half as fast as most people get there. And so I have a feeling she applied the same strategy to her VIX calculation here this morning, which would explain, the 28 print yesterday or whatever it was. And so, Richard Price, are you doing it? What's going on there, Richard? Are you doing anything for Nike or FedEx earnings? I'm looking to burn 300 overnight. Well, man, you are in the right place, because I'm not going to do anything for Nike because I didn't know that was tonight either, and I don't have time to do it. But we did just do FedEx and was right about 380 in terms of, the stack of cash that it's got a light smoke to it already. Like it's got a little bit of a smoky flavor. Like you got the ribs and you got that stack of cash. They kind of got the same thing going on. And so, but there you go there, Richard Price. Pat says, hey, Gabe, you can learn a lot here. Oh, Pat, man, I appreciate you. And then Pat says, watch as many tasty videos as you can. Yes, that's correct. That's correct. And honestly, a little inside pro tip for accessing content, tasty content. Obviously, it's like drinking from a fire hose. You get into the archives, it's going to be very overwhelming, extremely overwhelming. I would find a personality that you connect with. I would find someone that you like the way that they, explain things or whatever. It could be me. It could be anyone else on the network. I would stay with that person for a while. Go into the archives and actually listen to the way that they explain things, because I think it's going to speed up the way that you learn and the speed with which you're able to, grasp the material. Because we all explain things in a slightly different way, even if it's the same thing. And so I'm trying to kind of, leapfrog you over all of that potential headache. And so, but guys, I got to go, man. I see Jamal, but I see you guys. Man, look at you guys. Man, I see Darren Jones. I see Scrub Trader. I see Howie Egg. I see Scott Chansey. Man, I can't get to you guys. Come back tomorrow. Please come back tomorrow. Come back tomorrow. Hang with me. I'm going to need some people to lean on when this SPX butterfly goes to 0. So I appreciate you guys so much. If I can ever help you in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys tomorrow.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do. Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Oh yeah. Tasty Nation, good morning.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
What's going on, everybody? We're going to take a deep dive into what happened yesterday and also why one VIX stat might actually be the saving grace on things to come. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Before we get into yesterday, I got to tell you guys, I went into a deep dive the other night on YouTube about Pee Wee Herman. I couldn't help myself, man. I mean, I don't know how I got there, but before I knew it, I was there. And you know what? I didn't realize how much, I knew about some of the backstory. I knew that you know, for those who aren't aware, you have to look up Pee Wee Herman and the show that he had that was so famous in the 80s. But he had, they were like maybe 10 years prior to that, he'd been doing shows with a troupe called the Groundlings. Now, I knew that part. I knew they were doing stand-up. I knew all that kind of stuff, you know, et cetera. But what I didn't know is the guy had been working on the character maybe even a few years before that. He had been on, like, game shows. Like, he was on, like, the dating game show one time, like, in full character, and literally was always the character to the point where the guy you could probably, prior to him doing like the Pee Wee Herman show in the movies, you probably could find like 1 or 2 videos of him as himself. And I actually found one, and it was kind of funny to watch it. I mean, because the guy asked him, like, is it Pee Wee or is it Paul? And he goes, you know, I'm actually trying to figure that out myself. And so he was so deep always into character. I'm telling you, man, it was like, I don't think he really knew the difference for the most part, but it was really interesting just to watch. Like, he'd done some stand-up. Like, he used to pretty much always do stand-up as his character. And he had like a solid, like, tight 5 minutes where he would come and he would like do the character and like do all these different things. And he had this like bag of tricks, which is eventually a skit that he pulled on the show. It was crazy, man. I mean, I just didn't realize how deep it really went. But for those of you who know the character, you obviously know some of the downfall too, which eventually happened when he got busted. It was a trip. You have to look it up. I'm not going to talk about it now. It's a family-oriented show. But he eventually, you know, like moved on and eventually more than anything became Paul Rubens more than Pee Wee and did more acting stuff. But I just didn't know how much. Like, he probably went to Hollywood and like started that character. And back then, you know, there was no like real backstory to anybody. You just bounced up and all of a sudden he's Pee Wee Herman and he's doing stand up. And you're like, who is this dude? Like, this is really him. It was a trip. I don't know. I got really lost in. There's a ton of different videos. You can check it out for yourself if you're as fascinated as I am. But anyway, let's pull up some slides. Let's talk about what's going on in markets today. I know, dude. Yeah, you saw he was on like the Gong Show before he was Pee Wee. He was. I mean, it was a trip. It was a trip. Like, he did a bunch of different shows before that. It was wild, man. Anyway, oh wait, what? Hey, Jim, new listener, do you have any new cheat sheet? Whatever. I'm reading things. Anyway, so we saw what happened yesterday. We saw the big moves. We saw the technical damage that it did to markets. If you're like me, you think it was kind of an overreaction. Volatility seemed like an overreaction as well. Big move. The Fed basically said that, they cut rates, but yet at the same time, they increased their inflation forecast. And that does beg the question. Why would they do that? What's going on? What are you really worried about? Is there a policy mistake? That's the only, while as much as I think as yesterday was an overreaction, when you see markets move the way they did, when you see volatility jump up the way that they did, when you see what we're still struggling today to even get back to normal, right? Because we've had plenty of times where we drop down big. A lot of times the next day, we're right back. Unless it's something serious, then it's like a 2 to 3 day move, which who knows? Maybe that's what we're looking at here. Now you see all of a sudden you have a 9% chance of a rate cut for the January meeting, and it seems as though we're going to stop cutting rates. Why? Because maybe they're worried about where things are going to be in 2025 and inflation, which again, they raised the inflation forecast. So what does that mean for markets? Well, obviously you see what rates have been doing more recently, and they've been on the rise. It makes you a little bit worried about getting bullish. I don't know how deep you can get into getting bullish. I'm still bullish, but I'm not throwing a whole bunch of money at it in big ways. I got my bullish plays are more like January, February to see if we can get past through all of this. Yesterday was jarring. There's no doubt about it. But you do kind of feel like, I don't know, man. I mean, again, we're looking at backwardation in VIX. You see the big VIX move. I don't exactly know what to make of it yet. I don't expect us to really do this within the next day or two. I think it's going to take some time. But the Fed definitely threw the market a curveball, man. And it, I'm not exactly sure what to make of yet. I'll be honest with you. Because when you see a day where you see the 2-year yield falling, but then you see the 10-year yield bumping up the way that it is, it's just, it's all really confusing, to be honest with you. Dollar surging to the highest level in 24 months, which makes it basically hard to even get any gold and silver longs anymore. I had gold and silver. I got out of them. There's no way I can trade those now because it looks like the dollar is going to continue to surge, similar to what we saw the last time when Trump was in office between 2016 and 2020. So it makes it hard for gold and silver bugs to really keep playing those longs when you're going to see the dollar doing what it's doing. So I'm out of that too. I think we got a really big paradigm shift basically yesterday. And the one thing that you can hold your hat on, the one thing is that the VIX made a intraday move of 50%. Matter of fact, it kept going a little bit even after hours. Every single time we've seen the VIX do a one-day move of 50%, volatility is lower a month later. Now, does that mean the markets are that much higher? That is a different story, right? Sometimes they're 2% higher, sometimes they're 5% higher, sometimes they're fairly flat. But volatility is going to come in. So for us who love to trade vol, hey, it's right there on a silver platter. You can go ahead and start to get short vol in a meaningful way. I'm kind of waiting a little bit. I have some cash still. I'm waiting a little bit between today and tomorrow because I could see things moving a little bit more tomorrow. As a matter of fact, I'm looking at some SPX butterflies, and I'll talk about that when I get to the platform. But in the meantime, leftovers. Americans, of course, love to spend big on Christmas cheer. Let's move to the next slide. Not only Christmas cheer, but I think Mother's Day is also big here. This is the average expected per person spent on selected holidays. Naturally, winter holidays and Christmas are big. So I forgot to put the time frame for this one up, but this is like November 1st through the end of the year. On average, $874.70, like as a individual, you're spending on this time of the year. Easily $1,000. Easily, right? I mean, you might as well say it's $1,000 because it is. When you get gifts and whatever else, holidays thing or holiday parties, right? I got a holiday party actually this weekend. A bunch of friends. We should do this holiday party every year. It's a white elephant party, right? Those are kind of fun. I do kind of like those. There's always this one gag gift, right? If you've been to a white elephant party, you know what I'm talking about. There's always one gag gift that everybody one person gets stuck with. But still, you're buying stuff for that. You're buying gifts for whether it's family members or, like I had to tip the housekeeper the other day. We got to do that. I keep saying housekeeper, but, I think that's the best word to put it. But you got to you're spending money during this holiday season. It just is what it is. Of course, $874. Mother's Day is next, believe it or not, $274. Naturally, Father's Day is further down the list at $196.20. Valentine's Day and Father's Day, so close. Who knew? $192.80. Easter, $192. I can honestly say I don't really spend that much money on Easter, I don't think. Halloween, $108.20. I mean, I guess that's candy, probably some decorations, you know what I mean? Independence Day, I feel like, well, you know what? If there's anything I spend on, it's probably fireworks. So we go further up north to Wisconsin, typically, to a family cabin. And of course, further up there, it's wide open space, so we can get some big fireworks. We usually do every year. That's always pretty fun. $93 on that. And then Super Bowl, I don't spend money on Super Bowl unless I'm spending on squares. But apparently, some people do. $85.40. I guess if you figure parties, I don't throw parties. I just go to parties. If I do go somewhere, I usually stay home. But yeah, man, it's people are spending this holiday season. What do you expect? Let's move to the next slide. This is an interesting time when you look at just a couple of days ago. VIX was in contango, nothing was crazy, and all of a sudden we're in backwardation here. Jan VIX futures, even right now, Jan VIX futures trading 20.95. I told you guys, right? If you wanted to play volatility, January was the way to go. I should have listened to myself. I didn't play any vol. I didn't expect for vol to do this though, and I think many did. So yeah, Jan VIX is as of right now. I took this snapshot early in the day, but Jan VIX is, as I'm sitting here, it's trading 21 on the bid. February is trading $20.40, and March is trading $20 and a nickel. So that's where volatility is. Even April's, for 5 months out, we're in backwardation. I don't know the last time we've seen this. Probably in August, maybe. April of this year, I think. So yeah, this is pretty strong. But again, we were very, very low. A lot of times when implied vol is low and historical vol is low and you get an event, big snap, right? So what can you say? Let's move to the next slide. This is probably arguably the most interesting slide that I have for you guys today right here. So these are all of the moves above 50% in one day. For the VIX, one-day change. Yesterday was the second largest VIX spike in history. And guess what? We've had two of them this year. We had yesterday and we had August 5th. Of course, February 5th was the Volmageddon. That was 115.6%. VIX, SPX was down 4% that day. This is why it's crazy, because SPX was down to, I don't know, man, whatever. 74% yesterday move in the VIX. By the way, people who are like real VIX traders, because VIX is expressed in percentage terms on the year, they hate when you talk about percent change move in the VIX. That's why this is funny. August 5th, we moved 64%, almost 65%, and the market was down 3%. Then you see, when you look at this, we've had, this is 1, 2, 3, 4, 5, 6, 7, 8. I got 9 of them up here. 4 of them have happened in the last 3 years. It's been a volatile time period when you think about 2020, 2021, so on and so forth. Volatile time period that we've had, and this just further, shows you that. But 2 big VIX spikes over 50% in the last few months here that we've had, and all of it was related to like rates and whatnot, right? Like each time it was related to what's going on with rates. Go figure. So pretty much every time we've had one of these, about a month later, VIX was lower. Even though Miracon time period, which was November 26th of 2021, I remember that fairly well. And then, just about I shouldn't say just about, every single time VIX was over 50% one-day move, about a month later, VIX was much lower. So you can feel free to sell vol. Of course, I'm not telling you that if you sell vol right now, it's not going to get bid tomorrow. It might, but we're talking about a month from now, 2 months from now. Theoretically, it's typically lower a month from now. Now, you can see, though, November 26, 2021, a month later, it might have been lower, but then a month after that, it went back up again on January 27th. So that's one of the few times you've seen that. So, but I don't know. You expect vol to come in from here. Let's move to the next slide. So the damage has been done in a lot of these sectors when you're looking here for, communications. XLC was the highest on the year, nearly 40%. That has dropped off quite largely, but it's more about the lower sectors. Like you've been wondering more recently, what's up with the wide breadth or the lack of breadth that we've seen in the market, meaning how many names that are actually doing well, or as I like to look at it, names that are above the 50-day moving average in the S&P 500. I quote that stat every day. I'm going to quote it at the end of the show. We've noticed that a lot of names have not really been near all-time highs, even though we were near all-time highs, right? And when you look at the bottom of the list here, you look at energy names, you look at XLV, which is healthcare names, you look at materials, XLB, those have not been cooperating. And then you also look at some of the names in the Dow. UNH, of course, comes to mind. You look at Goldman, like a lot of names have really started to struggle towards the end of the year here, even though we're like near all-time highs. We're not that far off of it, even after yesterday's move. But there's been something going on in the market here. And while it's great for those of us who create content, while it's great for those of us who are looking to kind of buy a dip, this is, yesterday I think was a paradigm shift. I mean, when you look at all of these sectors, every single sector was rocked yesterday. That, my friends, is really not good. So it's something to be careful of. Let's move to the next slide. For earnings tonight, you got a couple of blue chippers. Speaking of, names, I don't even know if what's in the Dow and what isn't anymore. I thought Nike used to be in there. Let's see. I look at market indices and Dow. Yeah, I don't believe Nike is not, but is FedEx? Let's sort by here. No, FedEx is not, and neither. Nike still is in the Dow. It still is. That could change, of course. Of course, NVIDIA is in the Dow now too. Let's remember. So we got those three earnings. Bank of Japan, they had their central bank meeting, and they left costs unchanged. Of course, if anything they were going to do was raise, right? But they chose not to. They're the only ones that's doing different than the rest of the world. Bank of England, they had a chance to cut. They chose not to. That tells you a lot about what's going on over there. They left rates at 4.75%. You got core PCE coming up on Friday, but we don't expect a whole lot of movement out of that. I think if there's any movement tomorrow, it's just continuation of either fear or some excitement at the buying the dip here, both of which I'm about to try and play. Number of S&P 500 stocks above the 50-day moving average. I told you guys it's low. Only 22% of issues are above the 50-day moving average. Most of them are struggling. We are up 10 from yesterday, but still not good. Let's move to the platform here. I told you I'm thinking about trying something. I think I'm going to try some extreme trading here. I'm going to try and it's probably this time to try and do a butterfly. And I'm going to do it to the downside. Why to the downside? Because I think I got enough stuff to the upside right now. I'm going to try it to the downside. Well, that was easy. Filled easily. Yeah, I'm going to try the downside here. Centered around 5,800 in case we drop a little lower. I probably should have done that a little bit wider. Another 30. I could go. What does this cost? That would be 90, right? 265. Well, that's a little more expensive than I want to pay. I'll pay 250 for it though. Edit, no. Let's see if I can get it for 250. If I get it for 250, I'll pay for that. I got enough. Wow, that's too easy. I don't like that. I got enough upside stuff on, that's for sure. What I don't have is much downside left. Remember, you guys. I told you guys the other day, man. The only downside I had was the Tesla trade. If you were in that with me, that was nice, wasn't it? Again, I got out of it because I wanted to use the money for proceeds to try and find other ways to get long into that down move that we were having yesterday. And of course, hindsight is 20/20. I mean, if money were unlimited, I would have just kept that thing on. But you know, the trade served its purpose for me. And, well, yeah, the trade served its purpose for me, and I was able to at least have some type of downside play on while the markets was falling. So that worked out, but I just decided to close it because I needed to get a few more long deltas on, which ended up working out not so great, of course. But, you know, we were into the down move. And again, I mean, I expected that. I'm not surprised by that. So that's my only downside play I got on. If we move further tomorrow, that'll work out. And again, the nice thing about doing SPX butterflies, as most of you who do it know, for those who are new, this expires to cash. SPX is one of those type of things. Expires to cash. So that's the nice thing about doing these because You don't have to worry about taking delivery on anything. So if it could fall within this window, that would be pretty awesome. What are the chances of that? 58 and a quarter, another 60 handles down. I could easily see that after a week that we've had. I mean, I actually like the upside too. But I just don't see any path for that. But I mean, I was looking at the idea of doing this type of further upside. This is crazy upside, right? Like 59.70. That's over, well, like 100 handles, a little more than 100 handles from here. Which again, you could get that explosion. But I just figure I have enough upsides plays on in the form of those calendar call spreads that I've talked so much about, whether it's SPY or IWM or Dow. The only ones I don't have that on is Qs. And I just haven't been able to find a way to play it. The problem is all these weird strikes. I think this is from the NVIDIA split. So there's a lot of weird strikes here that don't correlate to anything. Like if I wanted to, sell Jan upside and get long Feb upside, it just doesn't, there's no corresponding strikes that work. I have analyzed the idea of doing, what did I look at? I looked at like these, like 50. I mean, where does, see, the thing about it is that there's like nice round numbers that correspond to ES that make sense here. Qs, I wish they would just why don't they make Qs equivalent to a similar price action in MNQ? I just don't, what does 520, 530 correspond to? There's no nice round numbers. Like for SPY, I'm using 610, 600, 620, 615. It's so weird with this. So, I mean, I guess I could do something, the highs was what, 530? I don't know if we see those again, who knows? But I don't know, selling this Jan and then buying February would be nice. What is that, the 540 strike? But that's a whole $4 and change. Usually I like to do these for $2.50 or less. I don't know. I don't love paying $4 for this. This thing is definitely not cheap. And then, you could go further up, but I mean, at that point, this is new territory, right? Like, are we going to get new highs on this thing? I'm not exactly sure. Oh, let's delete that. I'm not exactly sure. So I have, this is the only one that I haven't done them on, but IWM got a lot of Jan Feb situation here. Again, the one thing about these calendar calls, they don't exactly always break it down for you, how things are going to really work out. Because it's a weird trade, right? Like at the end of the day, you're looking for a small grind higher while your near-term options are sort of bleeding, meaning, the theta's falling out of those, while your further upside options and a further out expiration are starting to still gain some volatility value. So that's kind of what it is with that. But that's basically a large part of my book. I don't know how you guys are trading things, but a large part of my book is basically having IWM calendar call spreads, having the SPY calendar call spreads. Now, I will say, I'm sure some of you are like, well, why are you, doing calendar call spreads? Because at some point you're long further upside in these call spreads, right? Well, yeah, but I'm also short further upside in near term. And so the near term upside is where you really want to be short. Further out upside is generally, okay, it's going to hold up. It's going to hold up more than the short near term. And so that's the whole idea behind the trade, if you will. But yeah, I got them on in IWM as well. And what else did I say? I got them on in diamonds as well. And again, when you look at Dow, Dow has just been smacked down. It's sitting right around the 100-day moving average, which makes you feel good. That's right, Pat. There goes the rally. I'm not surprised neither at all. I've kind of been waiting on this all day long. Not that I've traded on it. I'm not really surprised. And I almost feel like the losing of this rally could end up leading to more downside when you come to tomorrow. And it won't be as violent as it was the other day, of course, but nevertheless, still, I think it could, I don't know. That's one of the reasons why I just decided to put those trades on. This is in the ES, of course, but we could easily see another 50 to 60 handles to the downside tomorrow just because people are still scared to put on any longs after yesterday's move. Can you blame them? I can't really blame them. Anyway, Nike has earnings. This one is a weird one because the last couple of earnings have not gone well. As you can see, I was eyeing up some puts here. I don't feel like spending any near-term premium, but I almost want to play downside in this. And again, I always play earnings for moves. So, I don't know. I could see Nike still struggling. $7 expected move, which gets you down to 70 and change. I could see Nike being down I could see Nike being down like $10 tomorrow for no other reason than the fact that things just haven't been good for them. I don't know. I'm going to try and buy some puts in here. There's a lot of, oh no, that's the open interest. What's the volume looking like? A lot of volume here. Looks like a lot of downside volume too. There's some upside volume, I guess. Yeah, we'll see what happens in there. Big expected move though. I mean, that's almost 10% expected. Well, almost 10%, not quite. Expected move in Nike. And then FedEx is another. I really haven't played this one as much. I mean, this is typically one that I'd like to play, but I don't really have a read on it. That's one earnings in June. This was the earnings in September. I mean, what do you make of that? Big move to the upside in June, then big move to the downside. You would imagine this should probably, I don't know. I don't know. I don't have a read on it. I really am not sure how I'd want to play FedEx here. Does it go back upward to 300? You know what I mean? What's that worth? 300 calendar call. These are my preferred ways of playing earnings. $1.20. Oh, geez. That's pretty cheap, man. I mean, I just don't know if I think they're going up though, you know? I'd play $1.20, I guess. A couple of those on. And maybe I'll put on a couple of 310s as well, just in case it really. But I mean, how does any name do this now in this type of environment where things have just gotten not so good? I don't know. We'll see. I might put on a couple more in a 310 strike. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade small, and trade often. I'll see you.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Hello, the three of you out there. How are you doing? Tim and I here. We're going to look at charts together. It's a mixed bag today. My own portfolio is doing fantastic, even though the ES is up over 18 points at the moment. But lovingly selected shorts are doing really well. And I think there is plenty more fireworks to go before. I'd say we got one more week of this. Sometime near the end of next week. Should wrap up the fun for now, and then we'll get into the renewal of optimism for a few weeks, so we can reload. But it's fun for now, and let's enjoy it all we can. I have we're going to focus on my shorts today. That sounds dreadful. We're going to focus on the items in which I am long puts. And you've seen some of these before, but I think it's worth honing in on the charts that have been the most vulnerable. And as I've mentioned, I've got 15 positions, all in bearish. And at the moment, even with the green ES, almost every single thing is down again today. So we'll look at those in a few symbols. It's going to be kind of a honing in, as I said, on those shorts. Let's look at the Spider, the biggest, oldest, baddest ETF out there. Some good stuff going on. Yesterday, of course, is very dramatic. We had a failure for the first time of the August 5th trend line. And we rallied this morning, which is terrific because I got to reload, and I'm out of money at this point, so I'm fully positioned. And I'm thinking that the next items to watch are going to be this midline and, probably more important, the election gap. That is the high from November 5th before the election results were known. That'll be the next big test. And that'll be the next hint of support. With, I think, a week left to go in the sell-off, it's pretty likely I think we're going to cut through those, but we're taking this one tick at a time. Just wanted a brief detour here because the market is always looking for like the latest fad. Because, if you wanted to invest in Apple or Google or Facebook, the time to do that was like years ago. So everybody's looking for like, well, what's the next thing nobody's really heard about? Like 3D printing at one point, gene editing at another point. Crypto comes and goes like the seasons. And by the way, Bitcoin's down $10,000 from just a couple of days ago. But right now, it's quantum computing. That's the latest thing they've uncovered. That's the latest item the carnival barkers are hawking. And you can see what happens with the volume here just recently. I've just pulled out 3 of these. Here's a D-Wave Quantum. And I don't know. First thing about these companies, I can assure you, not a single, there's never a penny been made, and they're probably bleeding money. But they are the hot new thing. And, they would trade 1 million shares a day, 2 million shares a day. Now, in recent days, has been in the hundreds of millions of shares a day. And that exhausted itself yesterday, of course. And today alone, if yesterday weren't so insane, I would have shown these yesterday. But yeah, we've lost a third of the entire value just in the little bit we've been open today. So quite the shift there. Here's another one, Quantum Corp. Got a very appropriate name on that. Well, again, look at the volume. This was a very recent fad. Just a few weeks ago, look at this. 10,000 shares a day, 20,000 shares a day, 40,000 shares a day, then tens of millions. Just all the sheep just rushing over to like wherever they're told to go. And here's one more, Qubit, Q-U-B-T, quantum computing, down almost 50% today. Whew. How happy you think the sheep are now? Again, a little bit, you can't even see the volume bars. They're so tiny. And then hundreds of millions of shares. Who on earth did these to these poor people? You just start announcing that this is the hot new thing, and everybody rushes in, and they wake up the next day and half their money's gone. Thank you, investment advisor. So yeah, and these fads, they come and go. They just change names. I mean, like hello. We're gonna get to that later. I was mentioning gene editing earlier, and so an example of that would be along the lines of, well, edit. That's a good symbol for you, EDIT. Back in the day, this was hot too. When was this big deal? Back in late 2020, gene editing. We're gonna have designer babies, and so like in a few days, this went from like $30 a share to triple that. And as what I was just showing with quantum on a huge volume surge, let's see how it's done since then. Okay, it's lost about 98% of its value. That's how that trad went. So these things just aren't, I mean, I've looked at these, that Walmart is the only stock that seems to be going up. You know, I guess people will always need toilet paper and toothpaste. Walmart just keeps pushing lifetime highs day after day after day. But yeah, ads come and go. So yeah, quantum, no thank you. One other thing before we get into the shorts is I'll say again that the precious metals I mentioned yesterday, like there's kind of no place to hide, and that continues to be true. It could be weeks, even months before precious metals represent the kind of opportunity I hope they will provide. As it is now, they still look quite sickly. The miners here breaking below this reversal pattern. So yeah, staying away from everything. Let's bang through these shorts, shall we? We've got 15 symbols to go through. These will be in alphabetical order. And I say that because I usually kind of group things, you know, so I kind of tell a story each day, but you can't really group alphabetically, so we'll just thumb through them. The tie that binds all these together, which is that I'm long puts all of them, expiring anywhere from March of next year to January of 2026. Here's AMD. You've seen it a gazillion times. Completed a beautiful head and shoulders pattern, and it is now broken below even the August 5th low. And the target on this is way down here. So I'm just all these just kind of sticking around. Caterpillar, it's way up here, and I think these are June puts. That's probably not enough time, but I at least hope we'll make the trip down to the blue trend line on this one, which is the next medium-ish support level. Cracker Barrel, CBRL. This one's up a teeny bit today, and it's one of the less clean patterns. Some of these just knock my socks off. This one's okay. And in each case, I've drawn a dashed line, typically a red dashed line that shows when I would figure that, well, that's not going to work out. That's a stop out of that. ConocoPhillips, COP. A lot of energy companies have a pattern kind of like this. This is sinking nicely. I expect it to go much lower. I was looking kind of historically at my spreadsheet about the positions I had closed and what kind of went on to much greater profits. And like the APA, remember that one? You know, that was like hundreds of % profit on a very conservative option. So I really missed the boat on that one, but hope to stay in the boat with this. Yeah, there's lots of droopage to come with COP, I think. Crocs, CROX. You've seen this almost on a daily basis for weeks now. And this one is hammering down below its nicely formed reversal pattern, which is the third time in recent memory. Of course, EWZ, I've talked about this ad nauseum. It's kind of catching its breath right now, and it can wiggle and woggle a little bit. That's okay. I'm going to hang on to this one, hopefully, until we can match our target down there. Alphabet, this is another one of those not sensational, but still not terrible patterns. I like this one just because obviously it's super heavily traded. And if the NASDAQ in general does continue to weaken, and the last symbol we're going to look at is the cubes, then I think this should come right along for the ride. And it's amazing because, you know, the VIX was at 13 just 2 or 3 days ago, you know, and we were sub-teens this month, 12. You know, so the complacency was absolutely to the bone, to the marrow. And in short order, things are starting to reverse away. Huntsman, this is the 2026 one. I'm giving this one gobs of time. Monster top on this one. IBM, another kind of boring but active. So that hopefully will work out. Eli Lilly, LLY. This has been another cool little chart. Breaking below its meh kind of pattern there, but it seems topped out nicely anyway. Netflix, NFLX, this is up today, recovering from yesterday's shellacking. But in cases like this, I've set the stop just above yesterday's high because I figure if they can conquer that, then well, I don't want anything to do with them. NVIDIA also recovering from yesterday's droopage, but we've got an inside day here, and I still think we've got every good chance of breaking below that pink tinted topping pattern. Novo Nordisk. This is a great one, as you know. We've talked about this a lot. NVO got a new price gap on this, so I dragged the stop loss to yesterday's low as my new stop out level. And the target on that I've drawn in green. It's around 89 or so. Palantir. This one's my smallest position and probably the one I'm kind of my lowest commitment one. It's the one I have the least confidence in. But as we've seen with Tesla, the friends of the new administration, their stocks don't necessarily go up forever. You know, Tesla reversed like $50 from yesterday to today. And Palantir, we'll see. But like I say, this is, of the 15, that's probably my least favorite. And then SMH, our good friend SMH, which has its own topping pattern. It isn't quite complete yet, but I've got a feeling this is going to finish up, and this will, I think, drag everything tech-related down, particularly goodies like AMD. What was kind of extraordinary with yesterday's drop, I've got to say, is the small caps, because unlike a lot of other indexes, the entire election boost is gone. There's November 5th. So to put this another way, we're trading now where we were near some of the lowest levels of election day before the results were there. And of course, the results yielded a huge rally. So kind of a surprise. As I said, the VIX had a big lift lately. We were sub-teens just earlier this month, got down to 12.70. Yesterday was explosive. We moved from 14 to almost 30. Just really amazing stuff. And this is the second highest we've been literally in years. And so the record for the year, of course, still is at 34.77 for back on all the craziness of early August. So in closing, particularly since tomorrow is the last day of the week and will be the last full trading week of the entire year, we've only got 5 shows left. Watch those cubes, because we did a little damage to the trend line yesterday. We're doing a little bit of damage right this second. And if we can truly cut below this line, then I think it just opens the door up to a drop down to the election day gap. So I think that's what's on the menu between now and the end of next week. Thank you. And I'll see you tomorrow. Bye-bye.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. And you know what? I don't know what to make of this day. I'm a little perplexed. Can I explain to you why?
Yeah, sure.
We opened significantly higher.
Yeah, up
last
about
night.
50,
Last night we opened a little higher.
We opened 50 or 60 handles higher this morning.
That is correct. We're only up 9 right now. Nasdaq's actually down after being 250 points higher than where it is right now. Russell's down 4. Dow is up. Kind of a mixed bag of tricks, but a mixed bag of tricks with nothing really going on. But I tell you one thing that's happening, Sadnov, that's a lot different than this morning and really earlier in the afternoon or the morning. Volatility is up. It's up $1. It's trading at.
Yeah, it was down. It was down $1.50 this morning, wasn't it?
Yeah, it was at 18.5. It's 21 and change right now. That's a little worrisome. A little bit.
Yeah, the VIX is still down about $4.50, but that doesn't mean anything. I understand. It's there's actually, I think there's more than just that. I think I'm going to tell you what I think about days like this. Normally, after you get a huge down day, like we haven't had a down over 3% day in what, like a year, whatever. It's been a long time.
I was going to say all year.
Okay, that was yesterday. Today they were up. It's very normal that they can't hold it, but I feel like
it's not surprising. You mean? I agree with you.
No. Not surprised they bounced back a little bit. Whatever. Today they're kind of been up all day. They're about to go down on the day. But here's the crazy thing. I feel like a team that was down by a basketball team down by 30 points in the first half. They spend all their energy coming back in the third quarter, and they almost tie the game up, right? And then they just run out of gas. I feel like this market just ran out of gas. And I feel it's very vulnerable here. You're about to go down on the day for the first time right now.
Yeah, even the S&P is completely unchanged.
Yep, now they're down on the day. The first down tick we've had all day, NASDAQ down 100. It has been an incredibly challenging, it's been very challenging to be short today, very challenging. And I think for that reason, a lot of people, including myself, that had a bunch of shorts on today, at different points of the day, we're kind of forced to cover because you're thinking, oh, man, this is going to rally, right? What else could you
Sure. Yeah. Yes. Yesterday was a gift. Today they're taking a little bit back. Time to cut bait.
What else could you think? What else could you think? I hate this tape action. I think this is the first time we've seen what I would consider to be ridiculously ugly tape action. There's going to be huge volume today. Now, it is Expiration Friday. So it is the day when all the remaining futures have to come off today. There's a ton of jockeying for rolls and everything else. So there's a lot of reasons for the huge volume in the S&Ps. A lot of
almost 2 million, and it's still got 25 minutes.
Just so everybody's clear, this is essentially tomorrow. The DEES futures don't trade; they just mark them on the opening. So if you have a position on that you want to get out of or roll forward, you have to do it today. Right. There is no other trading.
There is no tomorrow in that trade.
Yeah, there's no tomorrow in that trade. Same thing with ES options expiring December. Same thing with SPX options. So there's no tomorrow. I just think that's a big reason for the volume. But like you said, you take that huge volume, this huge churn. They had a chance to take them higher today. They didn't.
Sure.
And you get the volatility expansion late in the day. You lost bonds totally.
I don't even think you ever had bonds. I don't think bonds really. I mean, I know they trade up to 115, but man, they looked weak all day too.
Oh my God, yeah. I just bought some right now at 1331, and I just bought some notes at 108, 18 and a half. And I'm just adding to positions. I'm being stupid here, but I feel like I would, if I had to buy anything, that's what I'm going to continue to buy. I would not buy stocks here. And you know what else? For the first time, some of these stocks that looked like they were invincible. For example, just talking about some stocks, but not like, I'm not ready to throw the talent on Tesla yet or anything like that. But other stocks.
Hold on one second. Tesla was a lot like the market today. I know Tesla's down $4 and change today, which was really a small move. But Tesla had some big volatility all day long, down to 420.02, by the way, which about $16 lower than where it is right now. I think that's when Elon bought it at the 420 number. And it got as high as 456. That's about $20 higher than where it is right now. And look at the IV rank, back at 100. If you remember this morning, I was telling you the IV rank was in the low 90s. So volatility is expanding in Tesla as it does nothing right now in the close.
Yeah, all I did in Tesla today was buy back a bunch of those call spreads we sold. Finally, we made a good trade in there. It's been a long time since we had a winning trade in Tesla, but I don't like the tape action today. I'll throw that out there. And here was the crazy thing, because I was talking with Scott earlier, because we were looking at risk all over, because people were writing to us saying, why can't I buy any out of the money SPX options? And you literally today could not buy an out of the money SPX option. I don't know if you looked at them, but we were going down all the way to 5,000 for tomorrow. Every single option was $1 bid all the way down, like beyond the limits on the opening, way beyond the limits.
Yeah, I'm looking at the 1 day. Well, these are the weekly 1 day.
They finally came in a little bit, but I'm just telling you, you go 1 day and you went out 500 points in the SPX, they were $1 bid. You went out 700 points, they were $1 bid. You could have sold anything you want. Now, nobody's got that kind of money.
Sure.
It's not worth it, and the firms won't let you take that risk, and the spreads trade for zero, so there's no spread you can sell.
Right.
But all I'm pointing out,
they don't trade for zero, but they trade for pennies. I understand.
Yeah, like 1 or 2 cents. There's nothing you can sell. Right. So unless you could sell a naked option, which requires like $75,000 for a one lot to make $100, it's not worth
overnight.
It.
Right.
Yeah, overnight. But every single option all the way down, and no market makers were selling them.
Well, that's got to be high skew now then, correct?
Today was one of the weirdest things. That's the reason. I'm going to tell you the reason, though, that volatility is higher. The reason that volatility is higher is because the out-of-the-money options in the SPX, every single option was bid. So so on the one hand, you made a good point about the volatility being up and the market not doing anything. But on the other hand, the reason for it was that nobody would sell an out-of-the-money SPX option. Now, here's my theory on that. My theory is the expected move tomorrow morning is, believe it or not, is $50. If you remember last expiration, it was like $23 or $24.
Yeah, I was going to say half.
The expected move tomorrow morning is $50, or at least it was an hour ago. It might be lower now. And the SPX options, remember, volatility is computed off of the out-of-the-money SPX options. And since the SPX options were so bid, there was no way volatility could go down today, because you couldn't buy a single option out of the money. Like if you wanted to spread something off for tomorrow, and I'll tell you the reason I think this is the case because I think that the clearing firms all over on the professional side just shut down these. I think they just shut down these prop firms and said, you know what, you're not taking us down. So you can sell spreads, but you better have everything covered.
Right.
So just when retail, like I got an email from somebody today complaining that, that the margin requirements were too high for something. And I'm like, they're higher than this for professionals. Like you don't have any idea. Like the pros, they get their overnight requirements are like more than your overnight requirements. They don't even let you be short naked out of the money options if you're a pro. Like you can be short some, but depends how much money you have. But you better have $200 million in the bank before you can sell a lot of stuff. So
yeah, but I mean, I know that's logical what you said, but it doesn't mean anything to the customer. You know what I mean? Like, they want to do what they want to do.
Of course. I'm just pointing it out. There were huge moves today in some commodities. We got annihilated in Japanese yen today. It was down over 1,100 bips. I don't know if you have a.
I don't. That's almost a 2% move. I mean, the yen's sick, Tom. It's sick. I mean, of all the currencies, it's sick.
Yeah. You just got to buy it here, though. It doesn't matter what you think, and you just got to buy it. And the other thing that just to mention, if you care, natural gas exploded today too. It's up like 6 or 7%.
Yeah, 7.5% net gas up 25, almost 26 cents. There you go, 26 cents right now.
Yep.
It's a big move.
Huge move. So just now remember, this is a weird day. Lots of reasons why this is a weird day. It's a weird day because it's going to be triple witching, quadruple witching tomorrow morning. There's a lot of churn going on today. So you got to read a little bit deeper into this. A lot of out of the money options bid because you have a $50 move tomorrow morning.
Yes.
As far as earnings go, I mean, we put a very small Nike position on. That's all I played. If it matters.
Yeah, Nike, Carnival Cruise Line, FedEx, if you're interested.
I'm not playing FedEx, not playing Carnival Cruise Lines. Nike, we played it very small. We have we're short the 70 puts and the 90 calls. It is a small bullish position.
70 puts, 90 calls, and I'm assuming that's in January, right?
70 puts, 90 calls in January.
Yeah, you're right. It's got about 6 deltas or so per contract.
Yep. It's a small bullish position. That's it. And in Bitcoin, which also got slammed today, it was only 2 days ago we were talking to Bitcoin about 107 or something, wasn't it?
Yeah. Not you. Yeah, you're right there with the Bitcoin futures for sure.
We were talking about 107 or whatever it was, and today we are
10,000 below that.
Yeah, we're talking. Last time I checked, it was about 96. Where are we now? Bitcoin
97,000 on the nose.
97. Yeah,
we did trade down under 96, but yes.
Yeah. Traded into the 95 handle today. So Bitcoin moves around. I am so bearish in Bitcoin I can't see straight. I have no short position on there. So I'm not talking my book. I'm not short Bitcoin, but I am extremely bearish in there. And I just think everybody. Can you think of an asset class other than real estate? Because nobody's short real estate. Can you think of an asset class that's actually tradable where everybody is short? I mean, every single person is long, like they are in digital assets.
No, I mean, but unfortunately, that's by default. I mean, you really can't sell it unless you go into some of the ETFs. I mean, it's the nature of the game. You're either going to be a buyer or you're not going to play.
By the way, if you just a quick little tease, if you are based in Chicago, if you live in Chicago, in the next couple of days, we're going to announce a very small, intimate pop-up gathering on crypto
at Tom's house.
With Ryan, not at my house, with Ryan Grace and a couple of other special guests, possibly.
Celebrities, if they prefer to be called celebrities.
We are going to announce it in a couple of days. It's going to be first come, first serve. It's only going to be a couple of people, and we're doing it just to test some new content. And if anybody wants to come, just pay attention the next couple of days.
Very nice. Very nice. You'll be announcing this on Tasty?
On Tasty Live.
Beautiful.
So my favorite trade here, Bat, in spite of the fact that I've been dead wrong and I don't even know if I can get back to even, would be the bond trade. I'm still staying in it. I just bought more at 114.31, I think. I don't remember. I think I just paid 30 or 31. And I just bought some notes at 18.5. They're 19.5 now, but I'm not selling them. I think
you got those 2 ticks. You sure you're not going to sell them?
Positive. I thought today was the one day, the only index I thought you could come in long today, and the risk reward was great, but I didn't do it, was the Dow, because it had 10 straight down days, and it just seemed like it was ready. Bonds, how many down days in a row have those had?
Oh my God, way too many. And not just because.
Let's take a look.
Well, you got one green messed up in there, but you got 3, 6, 7, 8, 9, 10 with one green. So you got 6 down days, a small sideways day, and 2 more down days. On a product that's had let's just call it a $6 range with an implied volatility that's really stating over the next month of about a $2.50 range, 3. So outside the expected move, all in one direction, all to the downside.
Yeah, let me just pull up. Yeah, we're talking about, what did you say? 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 9 straight down days. And we've gone from 120.5 to let's call it 113.5. 7 points down. 100 and on a $114 index, you're talking about right about 6% move in a bond market that's gone lower with interest rates going lower.
Right.
Something
doesn't compute.
Well, it's not that something doesn't compute. It's that something's got to give. Either the Fed's got to come out in the next couple of weeks and say, excuse me, we're looking at the when we said lower rates, we actually meant we were going to raise rates. Yes, exactly. We misread our notes and it said minus 25 basis points, but it should have said plus 25 basis points.
That was
Unless
a typo.
They say that, something has got to give. And what that is probably like at least a bounce for a day or so. Who knows? So we will load the Flotola there for a little bit, for maybe a little bounce or two.
You already have, Thomas.
I know. And you're seeing a little churn right now, so don't pay. Like they were just up 20, now they're up 7. This is what happens.
Even the S&Ps were up 20 in like a blink of an eye. You are 100% correct.
They were unchanged, then they were up 20, 22, and now they're back to up 5. This is what happens when you get vol back into the low 20s. Remember, just about 2 weeks ago, we were at 14, 13. And
maybe even sooner than that in the last 10 days or so.
That's when you're watching paint dry. You want to see paint drip. Now you're seeing it. It's like all over the place.
Sure.
This is what it doesn't dry. So I'm going to look at my watch.
Just about 3.5 million SPX options trading. Just almost a little under that in Tesla. So Tesla's still busy for sure.
Yep.
SPX
looking at
still
my
busy.
screen. By the way, if you had an MU position on, because I did trade that overnight, that was another earnings play that was outside the expected move. Like I can't tell you how many earnings plays are so bad. MU was another one. You could not get back to even in there.
$17 move brings it down to where it was at the beginning of the year. You want to take back 2024? You can do that in MU right now.
Yeah, S&P's unchanged or down on the day. And if you want another area that's gotten really cheap in the last couple of days, China is on sale, 20% off.
China is on sale, and it might be more than 20% off. But yeah, BABA back down to its recent lows here that it reached last month. Baidu, I believe, is doing the same, near its lows, not quite as bad. That's what I thought. Yeah, not quite as bad. But yeah, there are some stocks in China that are on a fire sale. Hey, one last time, SPY dividend tonight. It's a big one, $1.50, $1.60, $1.70. You know what to do. Take care of those in the money call options, whether they're long or short. Just make sure you know what you have.
And just when we said before that the expected move tomorrow in the opening is $50 in the SPX, just so you understand this, that means the expected move in the morning in the SPY, which is usually pretty damn good. Okay, we're not saying this because it's like, this is the theoretical expected move, which is 70% accurate, is $5 in the SPY.
Right.
Which
If
is a lot.
it's one-tenth the size. So if it's
but a $5 move in the SPY is a lot, because today there's basically nothing. But a $5 move is a big move in the SPY, and that is just a theoretical calculation from Black-Scholes. That's all it is, based on implied volatility where it is today.
Yep.
So that's kind of, and if we're just going to go over our kind of worst positions for us today, were the Japanese yen bonds by far, and that would be my problem children today: bonds, notes, and the Japanese yen.
Yeah, I didn't have really any problem children. I think Boeing's giving me a little bit of Boeing up $4 and change.
It was up $6 before. If you were watching,
I know.
It was up.
Yeah, I'm watching
$6.
I had long delta in there forever until about the last 5 or 10 points. Yeah.
On our European tour, I told this on our European tour that we just recently did, Boeing was 138, and every single day all we did was sell puts. And you can't hold them. I mean, how long can you hold them?
Yeah, you were selling them right here when the stock was somewhere around, I don't know, like 140 something to 130, 38.
Yeah. And
low tick, baby. Come on, show some intestinal fortitude.
I used the back testing platform to show that there hasn't been a winning trade in a year in there. And people were like, why are you showing us this thing that every single trade's been a loser for a year? I go, because I'm a contrarian. And if you find something where every single trade's been a loser for a year, then you got to sell puts now. And they're like, I hate your logic, but all right, whatever.
What are you waiting for? Hey, even the S&P just went down 5, sad enough.
7. Lows of the day. NASDAQ lows of the day. S&P's lows of the day. Dow lows of the day. And I'd be really surprised in the next couple of minutes if they got the Dow to tick down the day in the next 6 minutes. Oh boy, it was just up 200 when we started this segment.
Yeah, it was. And Bitcoin down big, 4 or 5% too.
Yeah, well, Bitcoin is one Michael Saylor sell ticket away from being down $50,000.
And you're talking about the cash future, right? Not the
I don't care what he
coin.
sells. I don't care what.
No, I'm just saying you're not talking about coin, the stock.
If he so much sells a share of Coinbase, it's the same thing. Okay, it doesn't matter what it is. All right, do you want to bring in the boys? I know they're in.
Sure. Who do we got? Who do we got from overtime crew over there? There they are, Chris and Ilya. Chris, how are you? Ilya, how are you?
Gentlemen.
Hello, boys. Well, we're back in. This is what they call the fun days. This is vol in the low 20s. 20 to 22.5 has always been our sweet spot for vol. And when you get vol at these levels, you get a 20 handle move in the S&Ps like it's the wind blows.
I mean, I'm not mad at it. I definitely have a problem with my bond exposure, but so
does everybody.
Yeah, but I'm not abandoning it. I don't think it's really crossed any red lines for me. It almost has, but thankfully I'm risk defined in there. But that stocks can't figure out a way to snap back, that's something, and S&P especially. So I'm looking for opportunities. If there's even like a 50% retracement off of here higher, I'm going to look for ways to add into a short.
Yeah, I think that I said this earlier before you guys came on, that I think the market spent a lot of energy today trying to rally. A lot of energy. A lot of stocks were bought. There was a lot, this morning, midday, this afternoon. There were a lot of buyers out there that were buying, and I don't think it worked. So we'll see what happens from here. Chris, what do you think?
Well, it's really ugly.
No, you don't. Do you really think it's ugly?
Yeah, Brent is down again. It's every day in December right now. 60-point fade off the highs for the S&P. I mean, we're also now what's left this year for us to catalyze a move? What earnings reports are we looking to? There's no more big macro events, so people may just be leveraging ahead of the holidays as well. That's feeding into this, selling into rallies, as it were. But let's see if NVIDIA cracks. NVIDIA really isn't breaking down throughout all this.
Well, NVIDIA was kind of weak through all of this too.
It broke down ahead of this. You could argue. I mean, I've seen the argument being made that NVIDIA was the leader of this, and then everything's catching up to NVIDIA. I don't think that's the case. I think this is, I think the market's catching up to the bond market, and I don't think it can keep its head above water, with bonds crashing.
I think one of the most interesting things here now is actually opportunities long side in the bonds and short side in the dollar, in particular against the euro, because I think what might happen here next is the Fed is kind of doing this judo thing where they're giving the markets everything the markets want at the time that they want it. And then the markets go, wait, really? And they get thrown off balance. And we're again in this situation where the Fed said, oh, well, now we're going to be all kinds of less dovish, but U.S. economic data is again cooling. So I think the market's going to end up finding out in early January that actually it doesn't want to be priced this hawkish, that actually it wants to take the dollar down a little, that actually it wants to take yields down a little. And so those levels now look interesting. I definitely got in a little early by about 2 weeks, but I'm not abandoning any of it yet.
I'll play the other side a little bit here. Although you do have volatility in your camp, volatility up at $1.60. That's to me the canary in the coal mine, I guess, along with bonds. But you got triple witching expiration, December holiday, typically bullish, kind of thin action. I think you can get a little whippiness like we've had today. But I don't think we really kind of fall out of bed going into Christmas. If we do, well, we got to blame it on Joe Biden. That's all we can do.
The triple witching's been bearish for the last 3 years in December, so this is like nothing really new. And this week
is this really bearish? I mean,
no. But yesterday was for sure.
Yeah.
Did you see what JJ said this morning on Squawk Box?
Oh,
I retweeted it, but I tried not to listen to it.
That was AI.
Was that AI? He said the market's reaction was, akin to a bunch of spoiled children not getting what they wanted in all the rate cuts. Do you guys see it the same way, having, traded the market in a similar fashion as JJ over the years?
Yeah, JJ, we tend to be on the same side of the market. JJ is a little bit more macro driven than Tony and I. Mm-hmm. Tony and I trade price. JJ he thinks he's a thinker. I love thinkers like you guys. I put JJ more in your camp as he's got a trader background, but he also likes to think bigger picture. But I like his quote. I like the quote.
Yeah.
I mean, the Fed kind of catchy. Did again what they did in September. In September, they wanted all this easing. The Fed goes, okay, here. And the market goes, wait, what? And then they spend 2 months running up the dollar and running up yields. And they just pulled them again, where they give them exactly what they want. They're like, oh, you have to wind back all this easing. Okay, here. And the market goes, wait, what? And they fall out of bed. So it feels like the bond market is maybe offsides here a bit. Not that we're not going to get a modest easing cycle next year as opposed to an expansive one unless something goes horribly wrong. But it does look like it's a little overextended here.
Chris, all I'll say is I think that the NASDAQ has been carrying this market for a long time. If the NASDAQ does roll over, if it rolls over, which is a big if because this does not count as a rollover. But if the NASDAQ rolls over here, it could create an interesting dynamic for the market because people love to sell certain things and buy NASDAQ, but people hate to sell NASDAQ to buy anything else. I don't care what they say. the idea of selling NASDAQ to buy something else is not anybody's game plan.
Because NASDAQ's had that upside curve to it. I mean,
Yeah,
I
sure.
get it. Yeah, it makes sense.
Sure.
Makes sense.
Well, and the whole future AI, blah, 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 all of that, that's not anything else other than NASDAQ.
True. All right, you guys, I'm going to let you guys go. Even the S&Ps are going to end the little session here down $3.50. NASDAQ down 121. Russell down 9, and the Dow, the Bucker up 42. Big range in the E-mini S&Ps and in the NASDAQ. We'll take a quick 90-second break. Bonds going to close 114, Sadnov. Right after this, we got more overtime with these two gents. Peace.
Peace.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The most pathetic bounce of bounces. It's Thursday, December 19th, 2024. This is Overtime. I'm your host, Chris Vecchio in New York. Ilya Spivak in San Francisco. Dylan Radigan's off today. He'll rejoin us next week, I think. But we're getting to the holidays, so our schedule is going to be interesting here moving forward. In any event, if you're joining us on the platform, come over to YouTube, tell us what you're trading. If you're already on YouTube, come join us on tastylive.com, see what we're all about. Today, this market was not about that rally. We had a strong market overnight going into the early U.S. hours. GDP for last quarter is quite strong. We hear incoming Trump officials say they want to bring growth to 3% in the U.S., and that actually means they'd have to bring growth down because the U.S. economy is growing faster than that right now. But the market didn't seem to care. An S&P 500 that traded back to 6,000 in the ESH5 closes the day down near 59.36. That's actually underwater from the close closer to 59.42 from yesterday. So a horrible reversal, a lack of a bounce. As we go to the chart, we see that the NASDAQ here is the big loser, off by 0.55% in today's session. And what was holding out over the course of the day, while the Dow had already lost its uptrend from the August-November swing lows, while the Russell had lost its uptrend, while the S&P had lost its uptrend, the NASDAQ was putting in a fight. But not so more. We are now down below the uptrend from the August and November lows. We closed below the 1-month moving average, treating it as resistance today. There's really not a lot to like right here in the short term if you want to operate on the long delta side, as one of us typically does.
Yeah. No, this is not happy thoughts here. The markets, I was actually kind of hoping that they'd bounce some more. Obviously, I'm short. I've been short. The latest exposure that I have on, just to kind of give folks a sense of kind of where I started to get into this, I started selling Russell 14 days ago. So that'll make it 2 weeks exactly. That's off that double top. I started to layer on SPY shorts 9 days ago. And that was within that range that the S&P held all of December and sort of refused to move on. So that's that congestion right there. And that was just a tactical kind of, this thing is not going anywhere. The NASDAQ is playing catch up all of December. S&P broke to new highs in September. NASDAQ didn't. It finally broke to new highs, finally took out its tops or from July rather, in the beginning of December. So it looked like rotation and not progress, because the S&P, which of course subsumes tech and other things also, wasn't going anywhere as the NASDAQ was rallying, which suggested that the NASDAQ was just doing catch up and everything else was lagging. So I got short there basically on the risk reward, just what Tom would call the pot odds, just basically looking at this and going, well, this thing is stuck. The risk reward on the upside versus the downside is pretty good to take a stab. If you're wrong by a little. And so that's worked. But right now we're kind of sitting at support. I think you've penciled it in there exactly right. And I was actually hoping for a little bit more of a pull up to get more short at a better level, because as again you have here on the chart, the yellow line showing the uptrend from August cooked. So this looks like now the time to start thinking about how to get more short and where opportunities for that arise. And it may not be in the S&P, which has already made its move, but actually in NASDAQ, where you still have a sliver of hope that support might hold. So if we zoom out here just a little bit, we can see where those July highs are, and that's making for something like an area of interest here. This is, of course, the NQH5 contract. In the continuous, it looks a little bit more continuous, for lack of a better term. But that right there is basically what you're looking at. That area. If you can convincingly clear that, let's say overnight here, and you come into tomorrow's session with momentum through that, the way to add short exposure may well be here. Because if this thing escalates and the NASDAQ really rolls over, given its leadership since the start of this rally, now over a year ago, November 2023, you have a situation where things really start to unravel.
You know, it's interesting. A few days ago, on Tuesday, I believe it was, we cited what was the stretch of breadth in the NASDAQ, or rather the S&P 500, having been negative every single day this month so far. And the last time we had seen a stretch that had gone on this long was 1996, and the S&P 500's 1 month return was negative 4.3% thereafter. Granted, it was one of a handful of occurrences that have occurred since 1950 when breadth had been this weak, but the market's return was positive most of the time 1 month later. It sets up an interesting dynamic where maybe we did have a washout type of event that just occurred, right?
Maybe.
It's in line with the historical move, and moreover, something that I couldn't help but notice today, we flagged this before, a number of stocks trading above their 20-day moving average. It's now down at that 8% level, which the last times we were here was back in the middle of April, which was a compelling place to get long. And then again, back in October of last year, which if you got long in October last year, was a pretty compelling place to get long. Maybe this time is different, but we're now in a place where the breadth had weakened so much. We've entered an extreme place of breadth displacement, and certainly the indexes reflect it. So when we talk about pot odds from here, I think about the exposure that I have on right now, which after trading long stocks September, October, November into December, rolling out positions, this stinks. But it also goes to show, and I think the biggest lesson here for people listening in who've been watching this trade unfold, or the trades unfold in long equities over the course of the year, why risk management and trade structure matter so much. Because if these trades were structured as short put spreads or short puts to get that long delta exposure, it would have been a nice little double tap for me, where the expansion of volatility coupled with the downside directional move puts me out of pocket. And when you're trading short put spreads in a low volatility environment, you're really risking one to make, or rather risking 3 or 4, maybe even 5 to make one. You're picking up pennies in front of a steamroller, trying to sell low vol in a low vol environment on the way up. It's why I've been looking at the long call spreads, where even if it's only a 25 or 30% probability of profit, you're risking 1 to make 3 or 4. And so, you know, even if this trade that I had on in the NASDAQ that gets on here to roll forward towards 23K, if it doesn't work out, it's going to be 41% of the previous winner. So net, I'm not really too concerned about it being a significant loser. I see a reason to hold here for now because I already endured the pain. We're not really closing below the zone of significance just yet, but gosh darn, this is the last place I'd like for it to be. That was a, you know, we talk about stair step up, elevator down type of environment. When you have a VIX coming in at 13 and starting to creep higher, it begs the question, you know, really, do you really want to be looking to sell vol? And I've always found that answer to be no, and this reaffirms why you structure your trades in a manner where maybe you reach for convexity as opposed to looking to sell the vol itself. But Ilya, the question is volatility, because you have to, you know, we want to discount what happened in August. There's only 2 other times historically where volatility spikes the way it spiked here. When we think about what happened in this market, I think we need to go to the monthly back in August here. Yeah, there we go. Global financial crisis back in 2008, and then COVID in 2010. August is the 3rd highest volatility spike that we've seen. So
I guess in 2015-ish, 2016, you get something kind of big, but not like this.
Let's just mark this off here on the chart, though. In normal times, when we get up to about a 23.5 VIX, it's represented a ceiling. And even back in August, when we had this huge implosion to the upside, or explosions to the upside in VIX, implosion in stock markets, that didn't last more than a week. So if you were in there selling the move in VIX above 25, 24, it was painful for a little while, but ultimately you were rewarded for it. So why is this time different? I guess my question is, why shouldn't we be looking at a chart of the VIX right now and seeing spot VIX up at levels where it's previously crested and not think that this is an opportunity to look to begin to fade the expansion and volatility?
Because it's not an efficient use of capital, in my mind, to look at this and say, well, look at what happened last time. Even just from August. It takes 4 weeks, 5 weeks to get back into the range. And sitting on losses in whatever your long risk exposure just seems unnecessary. If you're going to be a trader and you're going to be opportunistic, what this should perhaps tell you is that every other time you've had a breach of this range, you've had at least a few weeks of follow through. And so what you want to look for is that follow through and then change course. So once you convincingly break back into the range and you get a weekly close back into it, even a daily close back into it, okay, maybe I can see that as saying, you know what, let's lighten up on shorts. But let's take a look back at July, August. I mean, you had a much longer down run than anything we've seen so far. Look back even further. Obviously, the sort of extreme cases, COVID, the 2008 financial crisis, there was quite a few weeks of pain in there.
Sure.
If you were to go buy right here, you would essentially be saying, in the event that this is anything like the most, let's say, benign versions of this, I'm in for maybe 2-3 weeks of this going the wrong way. Why would I do that? Why wouldn't I at the very least
case
wait?
Right now? Well, yeah, because it's the holidays, right?
Right.
Like if you're about to go off for the next 2 weeks for vacation,
right?
Why buy the dip now? And that is one thing that if this wasn't December, you might take a different approach to looking at the chart this way, because the liquidity just might not be there now until January. I want to say January 2nd, but realistically, there's no non-farm payrolls report on January 3rd this coming month. It's going to be January 10th. So you're really talking about liquidity returning January 6th.
Yeah.
Might as well just wait.
Yeah. Like it doesn't seem like there is any hurry here. Even if your perspective is this is not a larger thing, there is really no reason in my mind to say, you know what, we've just had a clean break of a trend that's lasted since early August. You've had a clean attempt at rebounding today that got rejected outright across the board. Why would you try to fight this right now? I would think you'd want evidence. That doesn't mean that you have to be short. In fact, I think if you haven't been short, then I would not be getting in now, because at this point, the risk reward is kind of shot. But that aside, I mean, if your disposition is you're not going to sell because you think that buying the dip is always the right move, and Lord knows there's a whole generation of folks out there with that mindset. Although I wouldn't actually put you in that camp, because you were there in markets in 2008. You were at least looking at them. You remember, as do I. And so, but there's a whole generation of people out there that have no clue what that's like, and that only saw COVID, which frankly was a brief aside, because frankly the Fed learned the right lesson from 2008 and didn't put little tidbits of QE out there. They just went and said, it's free money, it's unlimited, everybody sit down. And it worked. So I would say at this point, if your disposition is, you know what, the market always goes up, the Fed knows what they're doing, it's working, everything's fine, this is not the risk-reward spot to be a buyer. There's no evidence there, in my opinion. And if you're a seller and you haven't been short, why would you sell directly into support? The risk is actually that you bounce here.
We do have a PCE index reading tomorrow morning.
Yeah.
PCE is something that's typically overlooked, but I don't want to say that it's PCE that's driving the market move. We look to the one-day expiration, 53.8, we'll call it 54 points priced in through the end of the day tomorrow. So just under 1%. That's pretty good. We haven't been looking at moves like that in quite some time. So vol has certainly come in across the curve and expected to persist We don't see a reading with IVRs below 20 now at any point across the curve through the end of, dare I say, 2027. So vol's inflated, Ilya. It's a 53.2 IVR. I mean, if you were to take out the early August spike, you'd be looking at one of the highest volatility readings that we've seen all year long right now. And I think it's because the market's telling us, when you look at the bonds here, that the Fed has just made another policy mistake.
Either that, right? or either that, or I've been toying with this idea for the past 24, 48 hours that what the Fed is doing is basically judo. That the Fed is giving the markets what they want, and in so doing, throwing them off balance. Because what the market is used to is a gradualist Fed. We've talked about it here. I was expecting a more gradual Fed out of this December announcement. I was expecting a Fed that didn't cut its 2025 rate outlook in half, which, by the way, is exactly what the markets were telling it to do. And they delivered. Look back September. Again, the Fed gave the markets all the dovishness they wanted. And the markets went, wait, what? And then spent 2.5 months rallying up yields, rallying up the dollar. And the Fed didn't do anything that the markets weren't expecting. Everything that the Fed gave them in September is what the markets had priced in. But once they saw that the Fed was going to go their way, they got spooked. It just happened again. So, as with judo, when your opponent tries to lunge at you and use their force, you don't resist. You pull in the same direction. And your opponent is thrown off balance. Kind of looks like this is what the Fed is doing here. And kind of looks like how you would manage a soft landing.
Oh, I don't know about that. If you're so worried about inflation ticking up by 0.4% up in 2025, more so than where it was in the September forecast, why on earth cut by 25 basis points right now?
Well, because I don't think those forecasts really speak to anything. I think it's the rates forecast that actually matters.
But here's why I read this as a policy mistake. The market right now, Fed funds futures for the end of next year are pricing just over a 4% Fed funds rate. That's where we were more or less back at the end of November. There hasn't been a significant dislodging. If we can go to the M5 contract for June, we are literally pricing in the same number of rate cuts through June as we were back on November 25th, back on December 2nd. So this isn't there hasn't been a huge shift here. The market, by and large, heard what it thought was going to happen. But in doing so, there's also the sense the Fed also may have made a mistake, because why on earth then would you cut rates? If you think that the unemployment rate, you've just boosted your unemployment rate forecast, saying the jobs market is going to be stronger than you thought it was going to be. You just boosted GDP for this year. You boosted GDP by a little bit for next year. You're telling us that inflation is going to be stronger than either of the improvement to GDP or to the unemployment, right? Unemployment ticked up by, is it 0.1% improvement in terms of the forecast? And GDP, I think, goes from 2 to 2.1%. But inflation goes from like 2.1 to 2.5. So you're telling me that even ahead of an environment where growth and the unemployment rate are not going to move directionally as fast as inflation is, you still think it's appropriate to cut?
But look at what you've done.
Something's not clicking there.
Well, look at what you've done. Well, what you're saying, we've talked a lot on this show and others about the idea that there's cuts and then there's cuts, right? There's maintenance, which is to say you're trying to contain inflation expectations, but in containing them, what you do is you essentially bring down expected inflation as a calculation in real rates, which means that if you don't then move nominal rates down as you quash inflation, the real cost of borrowing surges and you crush the economy. So you don't want to do that. So as your rate hikes generate success, not only in bringing down backward-looking inflation, so CPI, PCE, but forward-looking inflation expectations. As you contain them, you want to bring nominal rates down so you don't destroy growth. At the same time, there is the other version. You cut rates because something has gone wrong, because you're trying to provide stimulus, because you want the economy to get hotter. The Fed can still cut rates next year while inflation ends up being higher, and it's made it very clear that given what it thought in September, it needed 100 basis points in maintenance. And that it's in maintenance is key, because the economy has not really fallen apart. Now they feel like they need 50, and they've extended the runway. And they said this in the statement. We are now expecting to see the same 3.4 median Fed funds a year later than we were going to get it. So not only has the Fed changed the makeup of the cuts, it's spaced them out a lot more.
Right.
So yeah, I mean, I don't think there is a meaningful inconsistency with their guesstimate on PCE here, especially since it really is a guesstimate. It's all of those policymakers throwing numbers into a bucket and using different methodologies, and the Fed going, oh, here's the median of the bucket.
Sure.
Getting stuck on that part of it is probably not where the insight is, because all of those economic forecasts come from different models, different approaches. All of these Fed officials have their own branch economists doing these things in different ways.
Right.
But if you look at the rates, their decision on what to do with rates up or down 25, 50 basis points, that's where you have the same yardstick. And so at least there, you get a little bit of a better like-for-like comparison for how their thinking is evolving.
One tool that I've touted out or trotted out in recent months has been the Taylor rule Fed funds heat map. Back in September, we were talking about how could the Fed rationalize a 50 basis point rate cut. And I was pointing to this, that if you were to look to the inputs for the Taylor rule, if you're thinking about inflation and GDP and the output gap, you were looking at a Fed funds rate that was, in the neighborhood of 100, 125, maybe 150 basis points too high. And so by starting off with a 50 basis point cut, the Fed would signal that it was taking steps to get back to neutral, and policy was still inherently restrictive at those levels. Okay, the market bought it somewhat. I mean, stocks continued to run up. Bonds obviously melted down for one reason or the other, but gold kept rallying. We even saw that the breadth was improving in late September, October, going into November. But now these estimates, if we're going to hold ourselves, I'm trying to be intellectually honest, right? Now that they've turned higher here, why am I kind of critical of the Fed? A lot of these numbers here are flashing readings that say that the Fed funds rate should be higher. That where we are right now, if we're looking at PCE, then, that's long run, it's okay. We're still restrictive somewhat. But if we think about where we are with core PCE has been running hot. You get a lot less of those red readings, which you kind of want to see here, and a lot more of these green ones. Green means that we're in excess of the Fed funds rate effectively. So by many measures right now, policy just got a heck of a lot looser. And that's why I read what's happening in the bond market as the Fed may be making a policy mistake. Because if you're going to be loosening rates in an environment where independent measures of monetary policy are suggesting, hey, policy should actually be going tighter, not looser right now, all you're doing is telling the bond market that they need to punish you a little bit more before the message is ultimately heard. And so this leg lower today, I find that to be I find the disconnect between bonds and the SR3 market today to be very fascinating. SR3H5 actually ticks higher today. We're above the lows that we were at back in November.
It's the spacing, yeah. That they've spaced things out is telling you that actually where you want to be probably looking is like SR3 M5, N5 for things to start to show up.
But it raises the question, right? If inflation isn't realized here, right? If inflation doesn't bump up in the night for reasons other than base effects, and the economy continues to grow at a 3% or so clip. Atlanta Fed GDP now has it growing at 3.2%. We just had the final reading of the third quarter GDP release, if I recall correctly. Why am I spacing on this? 3.1% from 2.8. There we go. So
white hot.
That's very hot, right? And I'm reminded of the fact, we look to where we're pacing now. We're still pacing right over 3% by the Atlanta Fed. So in an environment where we have growth positive in the quarter, that the Fed started to cut rates, what are the long-term return profiles for stock? And they are typically still positive, right? These are still maintenance cuts, but the Fed needs to go into a long period of pause right now. And it's that, I think the greater issue here for the market is the path uncertainty moving forward. And if we see that there's a government shutdown potentially looming, apparently in the last 15 minutes or so, House Republicans have reached a new deal. I have yet to see President-elect Trump, or Vice President-elect Vance weigh in on it. I haven't seen any tweets from Elon Musk about it so far. So we'll see how this plays out. This could potentially be part of the risk for bonds. But my goodness, glad that I've structured all of these bullish ideas like this one. God, I've been so pounding bonds notes the last few months. It's killing me. I got long on December 6th, Ilya.
Yeah.
It's just terrible timing.
I mean, I can't say that I've done a whole lot better. I've been holding the bonds for the long side for what, about 24 days now, so that would be late November.
But yeah, you were in at a better level than I was. That's the thing.
Yeah.
And
So I bought that low. I mean, it's upside down, and it's risk defined. It's risk defined. And thankfully, it's risk defined at only about 1.5% of equity, so it's not a big loss by any stretch of the imagination. But I'm basically at max loss now, with 15 days to expiry. And if this keeps going, I'm just going to let this thing expire worthless. Take my 1.5% of equity hit. That's peanuts relative to what the stocks shorts are doing. So fine. That's the cost of doing business, but no good on the timing.
The other day we mentioned how, because of just the timing of December, TLT goes ex-div twice this month. December 2nd, December 18th. And so you see today that TLT is down by 1.51% relative to either ZB or ZN. ZN is off by 0.34. ZB, the more relevant futures product, off by 0.90. Again, because of going ex-div a little bit, helping with that downdraft. So it's just rough out there right now. But the upside of this move in the bonds is if the inflation doesn't materialize, right, then you have a runway for the economy now. A continuing resolution further reaffirms that the economy is going to get the spending that it needs for the next several weeks. So those deficits and debts don't really change off their current path. Fed rates are now lowered a little bit more, and while they're probably not going much lower for the foreseeable future, the impact on the real economy is going to take a lot of time to process that. So isn't an influence on markets in the short term. No Fed cut in January, probably not in March. It's a 50-50 shot right now, but most likely before June, and then maybe we don't get another one. So the end of the Fed cut cycle is here. We got 100 basis points in cuts since September, and that's it, apparently. Apparently we're done. Ilya.
For a while at least. I mean, if you look at what Fed funds is baking in right now, you're looking at 37 basis points for next year and 20 basis points for 2026. So you're looking at a 57 basis points cumulatively over the next 2 years, which it's not a lot. What's interesting here is, and I'm going to talk about this in granular detail on macro money after this. And by granular detail, I mean I'll bring charts so you can see this visually. So don't despair if you get lost in my macro machinations here. But if you look at what happened in September, right? Again, the Fed gave the markets exactly what they wanted, but it threw them off balance. Why? The Fed said, yeah, okay, 100 basis points now, 100 basis points for next year. You get a car, and you get a car, and you get a car. It's a car for everybody. Market wait, but the economy is heating up. This is going to be reflationary. And changed their mind as soon as the Fed confirmed for them what they wanted to see. So then you get the 2 months of higher yields, higher dollar. How do you know that that's what happened? Well, because by the time the Fed makes its announcement, U.S. economic data as of late August is already heating up relative to expectations, if you look at Citi's surprise index. So when the Fed delivers all of its dovishness, the economy is already showing signs of picking up momentum. Well, it's the flip side now. U.S. economic data has started to cool relative to forecasts in mid-November and has continued. Fed comes out, does the hawkish thing. Markets go, oh no. It's bizarro September. It's September upside down. And so now the risk is actually the data starts to surprise on the downside, and the markets end up being off sides. And bonds come up, and gold comes up, and the dollar comes off.
Dollar's at its highest level since November 22. It's a good performance buttressed by a yen that gets slapped around to a 1.76% loss. Oh, here's a silver lining on a gloomy day for bulls, at least for me. Because those yen puts, which were sitting at, basically going to go out for nothing a few days ago, I said, well, what the hell? We're looking for 0064. We're now at 0067.5. They got 2.5 weeks, 3 weeks to go. I might as well just hold on to them. Makes today a little less painful in some regard.
Yeah.
But today really wasn't. Yesterday and today were really not that painful, all things considered. I was looking at the market and seeing how the dust settled. It's like, oh, we're down like 3% or so. I'm off about like 2.7%. Okay, not bad. Outperforming the market. Hey, silver lining. So yeah. It's been a good. I was talking to my wife yesterday about this. I was like, oh yeah, the market got killed today. She's like, isn't it still up like 20% this year though? I'm like, yeah. She's like, so who cares? It's like, yeah. Who cares? We've been along for the ride. We're not going to get worked up over it. But the yen here and the dollar are now, kind of at odds because you have a Fed that's saying, whoa, let's pump the brakes on this rate cut cycle. And the BOJ last night has their own meeting and they dither. They're not exactly keen to move here.
Yeah, they don't go.
And my working thesis a few days ago was, we think about the Fed and we think about the Fed's position relative to other central banks. Europe is dealing with worse conditions. The UK is dealing with worse conditions. Canada is in a free fall. The GDP per capita in Canada hasn't grown in like the last 8 years, mostly under Trudeau. I don't know if there's a connection there, but it's worth exploring. We think about what's happening basically in any industrialized country in the West, right? Their currencies are in trouble and the central banks are being forced to ease. And there's a lot of coordinated global easing going on right now, if you believe it. But the problem is the Fed now is saying, no. And so you see emerging market currencies hitting new lows for this year, all-time lows, like the Thai baht, the Indian rupee, the Singapore dollar. It's struggling, right? Curiously, the Mexican peso today is up by 0.31%. Canadian dollar has a little bit of a rebound. But the big guys, the euro, the pound, the yen, which are the pillars of the dollar index, together constituting, we'll call it 82 or 83%, right?
Yeah.
57.6.
There's really nothing in the dollar.
11.9.
There's really nothing in that dollar index that I mean, other than the Canadian dollar, if memory serves, but the Aussie's not even in it.
No, it's the Swedish krona, and the Swiss franc. But you go to the British pound, for example, this being like 11, just under 12% of the dollar index, it's now closing at some of the lowest levels that we've seen in several months. You have to go back to where we were.
Bank of England didn't help.
And they had their meeting today.
They were much more dovish than expected. We talked on Macro Money at length yesterday about how they were kind of between a rock and a hard place, and how they can get through that will be volatility inducing one way or another, because there's really not a very good answer. Their economy is slowing. The PMI numbers at the start of this week showed that we've basically slowed back to standstill, some of the weakest growth we'd seen out of the UK all year. And at the same time, inflation came in hot. And what's striking is that it came in hot, and the biggest pieces of doing that were discretionary spending, hospitality, recreation. And these are the things you would expect to start to fall away with a cooling economy, and they're not, which makes you wonder how much COVID labor market lockup for the jobs in that space, especially the service sector jobs in that space, much like the U.S., if that's just keeping inflation from falling away. And what the Bank of England then needs to do, how much more pain does it need to inflict? Because at this point, it would have to inflict a recession. So they were kind of stuck. Do they cut? Do they not cut? Do they signal hawkish? Do they signal dovish? Because growth and inflation are going in opposing directions. And although they opted to stay, it was much narrower than expected. It was supposed to be 8 out of the 9 of them voting to stay. It was only 6.
Just a quick note here. I just got to see the notification. Trump has endorsed the Republican plan to pass this continuing resolution to fund the government, according to the Wall Street Journal. Trump endorses his new plan by House Republican leaders to try to avert a government shutdown this weekend, a day after he killed a bipartisan deal. That's the Wall Street Journal's news alert. Bond yields slightly lower here after hours. Equities, they ticking up a little bit off the lows. We're down at 59.32 immediately after the close. We're now back to 59.42. So 10 points between friends. That's not hurtful here. Ilya, the question is what's doing now in the metals? I have to say, I've talk about sometimes the structure of the market helps me because I just don't get filled on positions. A few days ago, I was kicking the tires on silver, and I couldn't get filled on my long 33, long 34, or short 34 call spread. And thank goodness that happened on Tuesday, because yesterday and today would have been, listen, it would have been, those trades are structured 25 or 30%, blah, blah, blah. So I'm risking 1 to make 3 or 4, and it would have been a loser.
Yeah.
But it would have been a big loser. Selling puts would have been obviously crappier. And just by the function of the fact that I tried to do this in SI as opposed to SLV is probably why I wasn't able to get the trade in, because just SI futures aren't the most liquid deep contract. So the question is, now that I don't have any capital at risk, I get the opportunity to look at this with kind of fresh eyes. Mm-hmm. And this looks awful. Now that I'm looking at this without a position on, it looks like a head and shoulders pattern that broke down through the uptrend from the August and November swing lows, and volatility continues to just creak lower, even with that big price move. Gold, silver, they're all just looking like crap. The gold positions, unfortunately, I still have on. So I can't say that.
Gold looks much better, actually.
Does it?
I think so. And if you look at where gold is here, you can sort of draw a line at the August kind of swing highs, sort of the top of that range. It's a broad range. I mean, it goes all the way back to April, but if you look at just the August 20th high and you put a line across the chart, you're basically at former resistance come support. So if you were gonna bounce somewhere, this looks like a place you might do it. And it because support and resistance is never a level and usually a range, then I suppose you could give yourself leeway through into the November 14th low. That's what, 25.66. So you have then a kind of area of support, and you kind of held it today. You didn't break down. I think if you think bonds are overcooked, if you think the dollar is overcooked, then this is overcooked. And so
that is the same story, yeah.
It's the same story. And the added benefit here is China is buying for their reserve account again. We just saw numbers, of course, for November that said that was the first month since April that they were buying again. When they paused in April, the preceding 18 months, they were buying at an accelerating clip. If they, for whatever reason, thought that this was a good time to buy some more, that, again, there's an if, but if that reflects their perspective that the price has become attractive, then where are we? We're basically the same areas we were the beginning of November. This is a place where maybe they're interested in buying some more again. So I'm actually happier with gold. Silver, on the other hand, looks terrible. And it's probably because silver is not a precious metal only. It also has some risk sensitivity. And the very same range that is now holding in gold is decidedly not holding in silver.
Yeah, it's not holding in silver. It's kind of holding up right now in copper. It's such a stretch of a claim. Copper is down below 4.1 a pound. And you see here it's...
But China stimulus, they said.
Well, they're anemic to the proper kind of stimulus that they need.
So it seems.
Supply side reform.
I will continue to gloat at their ineptitude until they get better.
We're sitting in this zone. Volatility is not that high. Gold, copper, silver, all kind of struggling here. We'll see if we get a bounce out of gold. China's buying in force again. If they were buying down here back in November, because apparently they restarted their buying operations in November, I can't imagine that they wouldn't put in a line of defense here as well. If we do break down further from here, where to? Maybe it's down at 2,500, but this has been a sucker's trade on the long side, right? You just got to admit when they get you. The breakout here looked awesome. And then we clear the engulfing bar high. Fantastic. That was a one-day event. One-day event. Got sucked in on the wrong side of the trade. Sometimes it happens, Ilya. Let's talk about crude, though, because this is a day where really nothing happens. Crude's modestly lower here. It's up by 1.1%, but in the grand scheme of things, it feels a lot quieter than some of the other markets over the course of the session. We're still between 66 and 72. We can't seem to shake ourselves outside of this range. For all the warts that every other asset class had, energy's been relatively constrained this week. Why so boring right now? There's so much going on in the world. Is it just all too much for crude, and crude's kind of closed its eyes and plugged its ears and just taken a rest for the rest of the year?
There's a lot of uncertainty here. Because
it's a 20.4 IVR.
Well, there's a lot of uncertainty if you want to make a bet. And so I think the perspective that seems to be getting reflected in this coiling up is, you know what, nobody just wants to have an opinion. And that's why the IVR is so low. If you thought that things were going to go badly or become volatile, yeah, you'd see higher readings if you were concerned. But if you just didn't know, should I be concerned? Should I not be concerned? Then you'd just take your hands off the wheel. Take the keys out of the ignition, not drive anywhere. So I think that's what you're seeing here, is just a lack of conviction to make a bet. And it makes some sense why. Because the situation in Syria in particular is incredibly fluid. The situation with the Russia-Ukraine theater is suddenly a lot more fluid. And the situation on the U.S. output story, of course, as a consequence of the election, adds a wrinkle. Because on the one hand, you ostensibly have the drill, baby, drill administration coming in, but how much more can you drill, baby, when you're already producing record output and the U.S. is a larger petroleum producer than Russia and Saudi combined? It's not going to be easy. You're going to have to turn on a bunch of rigs, and granted, they're there to turn on. The number of active rigs has been falling. The number of active fracking extraction sites has been falling. We've become more efficient at getting more output out of less infrastructure. If you want to really ramp up and keep going, you're going to have to turn some of this stuff back on. It doesn't turn on as fast for regular rotary rigs. It can take months. Fracking is faster. So the supply story is a long path, a long kind of downwind runway to more supply. If you get into a situation where what looks to be Iran on the back foot, with now not only the loss of Hezbollah and Hamas, but also Syria, if that means that at the very least they're not going to do anything aggressive for a while, it's going to sit down and retool, then not much risk. So as you get into next year and some of these confusing threads start to get rationalized in the market's mind, maybe what you find is geopolitical risk premium should come out. The supply story is more than abundant. It's an ocean of crude out there. This is just waiting to break down.
Elliot, 2 points of interest. Nike and FedEx both reported here after hours. FedEx is up around 7% here after hours, but not because the earnings were particularly great. Second quarter earnings were $4.05 a share, which was right on the nose for the estimates, up from $3.99 a year ago. But revenues were smaller, $22 billion, short of consensus of $22.17 billion. They're separating the company in two. FedEx and FedEx Freight will be two independent public companies moving forward. So, you think about FedEx being a parcel deliverer, this could be a leading indicator for the global economy. Well, the actual reason why it's trading higher here is because there get to be a little bit more financial engineering in the future. Nike, on the other hand, maybe this is just a relief kind of thing. They have a new CEO, Elliott Hill, who just finished up his first quarter, and the results were better than expected. 78 cents versus 63 EPS. Revenues of $12.35 billion versus $12.13 billion. So they're enjoying a nice little bump here after hours as well. Any broader read-through for the economy? I don't know, particularly because FedEx's results are not that great and kind of feel a little bit muddled if you think about the breakdown results. So that's really it for the earnings stories here. I mean, what else is there to look forward to now on the calendar as we turn our attention to these final few full trading days of the year? Tomorrow, if you care about cruise lines, Carnival Corporation's reporting at the start of next week. There's BHP if you're into oil energy. On the 24th, San Juan Basin Royalty Trust, market cap of $177 million, is reporting. Thursday, Friday, nothing else. We are done, dusted. The calendar is winding down for the year. Are you expecting Fed officials to come out and try to massage this now as we think about, potential risk? Are they going to be of the mindset that we've misinterpreted what they intended for us as we move forward now here into the end of the year?
No, I don't think that they have anything to say, and I don't think that they think that the market has misinterpreted. I think this does not present any kind of a problem for the Fed whatsoever. In fact, if you look at what the bond market has been doing and what the Fed has been saying, it's a really nice dance that's been going on basically since the Fed kind of got frustrated with itself in the first half of the year and then seemingly changed its approach. if you consider what the Fed was doing at the beginning of the year, they look like they're behind the ball. They come in and they say, we're going to do 3 cuts in 2024. And the market tells them, no, you're not. It doesn't make any sense. Inflation is stalling. Your progress that you think you're going to be making, it's not there. The Fed resists in March. They resist all the way into May, which is where this gets really interesting. The market is slashing rate cut expectations from the start of the year and into mid-year because the economy is heating up and the Fed says we're going to do 3 cuts, and the market goes, yeah, okay, no. Mm-hmm. The economy is heating up. What are you talking about? In June, the Fed goes, okay, fine. 1 cut. But of course, by then, the economy is already cooling again. And the market goes, well, you got it wrong again. Or the Fed has figured out that the way to throw the markets off extremes back toward the middle is to give them the last thing they wanted. Because if you're going to engineer a soft landing, you don't want the markets to over-extrapolate this or that. You're fine-tuning. You don't know where the balance of growth and inflation are because you've gotten to the point where you can't really solve the problem with a hammer. You have to go in and do a scalpel-like approach. This isn't the beginning of 2022 where inflation is obviously out of control. You have to do a lot of hiking. Fed starts doing 75 basis point hikes in a row. This is not that.
No.
You don't want the markets to overthink things.
No.
So you throw them off balance. Now for a third time.
Yeah, we talk about this week being the week of a potential blow-off top. This is the week where if we think about the riskiest of risk, you see that Bitcoin tops 108,960 in the futures market on the 17th. We're now back to 96,505. And this little bit of an uptrend we've been trading in since the post-election breakout, it's starting to creak. We think about the dominoes as people are investing or allocating every incremental dollar. You're putting stuff in here because you're reaching for return, reaching for yield, reaching for risk. And if you're abandoning this, you're abandoning NASDAQ. You're starting to see credit spreads widen out a little bit more. Again, de-risking before the holidays right now, but that doesn't preclude a Santa Claus rally from happening. We'll see what the price action tells us moving forward, of course. But the number of stocks below their 20-day moving average, now at levels that typically coincide with bottoms. So I got time here, Ilya. The bond position can't get any deeper underwater, right? We'll hold on to it for now.
We got time. We're at support. Let's not freak out here.
Unfortunately, we have time. If this is zero D to easy, we put out of our misery, but instead we are not. But that will be a problem for Monday, which I think will be one of our last shows altogether for the year. So be sure to tune in. But with that, Overtime is now out of time for today and this week. See you on Monday, December 23rd. Until then, good luck trading. For Ilya Spivak and Chris Vecchio, who's me, this has been Overtime. Gosh, crash landing here. Up next, after a brief break, Tasty Live continues after dark with Macro Money and Ilya Spivak. See you there.
See you there, everybody.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to tastytrade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. tastytrade.
It's a quiet day after what was a Fed-induced collapse, for lack of a better term, around equity markets. The Fed seemingly shocking the markets with their policy announcement. And we'll take a look at what that means here. But as the markets digest, we are getting an opportunity to take a little bit of a deeper dive into just what the Fed has done and why and how this portends to resolve itself going forward. Because clearly the market's at a violent response, and in the Fed's doing and in the triggering of that response, there is perhaps a signal for what their strategy is going forward. And what we're calling it here on Macro Money, which is what you're watching here, I'm Ilya Spivak, head of global macro at Tasty Live, is Fed Judo. And we'll talk a little bit here why this is what we have, why this appears to be the maneuver that the Fed is employing, and what the trade is in all of this, because there does seem to be one. So let's first and foremost take a look at what the markets did when the Fed made its announcement. Needless to say, risk appetite was not happy. The S&P recorded a 3% loss, NASDAQ almost a 4% loss. Yields surged by almost 3% across the curve. 10-year up, 2-year up. Crude oil, of course, continues to march to the beat of its own drum. It doesn't seem to be paying attention to anything. But the higher yields give us lower gold and a stronger dollar, a euro off, yen off. And the risk-off environment lands directly atop Bitcoin and sends it down almost 6%. So, needless to say, risk sentiment didn't like this, what the Fed did, and the upshot of how the markets read what the Fed did was hawkish. Dollar up, yields up, and risk didn't want that. So, what was it that the Fed did, and why did the markets not like it? That's, needless to say, the key question here. So, let's take a look. Here's December's summary of economic projections. We won't even bother with the fully expected rate cut that the Fed delivered. It was already being baked in at well over 90% likelihood ahead of the announcement, so no big shock there. And frankly, we can see that back in September, the Fed projected that it would give us 100 basis points in cuts. It delivered exactly in line. When you come out in September and say, we're going to do 100 basis points in cuts with 2 meetings left and 50 basis points up front, it's really not a stretch to say, oh, you have 2 meetings left. You just gave us half. You're going to spread out the rest over the last meetings of the year. So you're going to give us a 25 basis point cut in November, another one in December. You're issuing this forecast in September. You really don't have a lot of time to see data to change your mind. It's probably locked in. So, and by the way, 4.4 is 100 basis points in cuts because, of course, the Fed operates policy in ranges. So the median jump-off point for Fed easing, which begins in September, is 5.4. That's the midpoint between 5.5 and 5.25, which is the Fed's range before it starts cutting. So when the Fed says that in 2024 rates will be 4.4, that's 1% or 100 basis points off the median. And the median is the starting point at 5.4. So there's that. Nobody really was speculating around this. The real question was what would happen next year. And in September, we can see the Fed said 100 basis points in cuts next year. So we're going to go from 4.4 to 3.4. And here they went to 3.9, which is to say they cut the forecast in half. Rather than 100 basis points next year, the Fed said 50. And now, notice, that 3.4 has moved into 2026. They've elongated the policy path. They've said what was going to take us 1 year will now take us 2 years. So the Fed said we are going to cut, but less, and we are going to space the cuts out much more. Notice this end point of 2.9 doesn't even appear through 2027 anymore. So the scope for cuts has narrowed. Their length in delivery has extended. We end up at 3.1 in 2027, and of course that's a very long view, and the Fed's going to change its mind a bunch of times. Needless to say, the market is going to change its mind a bunch more times on what this is likely to look like before then. But the upshot of what the Fed does is it makes a hawkish adjustment. So that's why you get this response. Now, what's incredibly interesting about this is by the time the Fed makes this move, this is precisely what the markets were calling for. And so the idea that they're surprised by this and that this throws them into some kind of a imbalance, that risk sentiment cools and that yields shoot higher, that's the interesting bit. And this is where the judo component comes in. Now consider this. The Fed, as we just said, went from 100 basis points to 50 basis points in 2025 cuts. Where was the market before the meeting? Right here. So this is the last remaining bit that was there for December. But for 2025, 50 basis points. And that's after a long 2 month, 2.5 month readjustment where the market was a lot more dovish. And when the Fed made its 50 basis point move in September, got a lot less so. So the Fed essentially just trued up their outlook to where the market already was, yet they were thrown off balance anyway. What does that mean? To follow this story, we really have to go back to June and figure out how all of this fits together. Because one interpretation might be, well, the Fed is constantly behind the ball. But another might be that they appear to be behind the ball like a fox, and that what they're really doing is using the market's own momentum against them to deliver the policy results that ultimately they want to achieve. So let's consider. We get to June. This is the June summary of economic projections. Notice this marks a hawkish shift for the Fed. So again, remember the starting point is 5.4. This is where we are on rates in the context of this forecasting before the cuts begin. In March, the Fed projects 4.6, and in June, it pointedly goes for just one cut from 5.4 to 5.1. Right? This is rounded off to 1 decimal point, round off a 0.25 cut to 1 decimal point, you get 0.3. So from 5.4 to 5.1 is 0.3, one cut. Now, why is the Fed adjusting this from 3 cuts to just 1? Well, if we look at what's going on in the economy at this time, recall, this is June, what we're seeing is a little bit different than what we had been seeing. At the beginning of the year, the economy is heating up. U.S. economic data, looking at this City Economic Surprise Index, is actually improving relative to expectations. And it holds here basically through March and into April or so before there is a turn. How do the markets read this? Well, they start the year with a very dovish expectation because the Fed told them back in November of 2023 it's going to start cutting. But then the economy is looking hotter. And so these rate cut expectations start to go in. I have here the entire cycle in the orange, at least through this year and next. And you can see the market moves substantially here, over 100 basis points to a less dovish setting. That is, fewer cuts. And at this time, the Fed comes out with their policy announcement in May and bemoans that inflation has been stalling and that we need to see it continue to decline. And come June, all of that seeming frustration gives them this hawkish adjustment. But of course, by then, the economy is already turning the other way. You start to see U.S. economic data begin to cool relative to forecasts in mid-April. You start to see it really start to underperform before the Fed even meets in June. So what does that do? The markets start, oh, wait, we need more cuts. And if the Fed is resistant to cutting in 2024, well, maybe they'll cut more next year. So the wedge between the outlook for this year and next widens out. So the Fed either could be looked at as behind the ball, or they could be looked at as forcing the markets off this setting back to the bottom of the range for where expectations find themselves. What happens as a consequence? Bond yields come down. The dollar comes down. The yield curve has a deeper inversion. Inflation expectations come down. The markets at this point are saying, oh, the Fed is reluctant to cut. They're going to kill the economy. Inflation expectations are sliding. It is into this that the Fed then comes back in September and goes, oh, you want more easing? Okay. Sure. Here is more easing. So when you look at this here, by September, the market is looking for an expansive easing cycle. And the Fed goes, okay, there you go. And they go from 5.1, which is one cut, to 4. Not only that, but they give a lot more easing for the subsequent year. And the market goes, wait, really? But U.S. economic data has already been heating up again by the time the Fed meets. And the market suddenly looks back in context and goes, wait, so they gave us everything we wanted again. The markets were calling for more easing. The Fed gave it. As a matter of fact, it gave about exactly as much as the markets wanted. Notice they wanted 100 basis points for this year. Exactly what the Fed gave them. They wanted a little bit more for next year, 130. The Fed gave them 100. So a little bit less, but at this point, that's a year and a half away. There's a lot of time to rethink that. So the markets seemingly are caught off balance again. They look back here and they go, oh, but the economy is heating up again. Now all this easing looks wrong. Now what's going to happen is all this easing is going to reflate the economy. Inflation expectations come right back up. Bond yields come right back up. Dollar soars. What do we get now in response to this in December, Fed goes, okay, you want less easing now? Here you go. And the market is thrown again. If we look at the adjustment in the yield curve from September even into November, we can see the market is aggressively calling for less easing. If we look at the way the curve looks now, and indeed the way it looked at the policy announcement earlier this week, there is a strong clustering here. All of this was mainly done between September and November in terms of the likely policy path forward. So what happens when the Fed gives the markets exactly what they want again? They overshoot again. They're thrown off balance again. And here's our first look at the 2025-2026 chart. We can see the markets are now lighter than the Fed, just 37 basis points for next year. They have 57 basis points over the next just 2 years' time, a little bit more. And this is what makes things interesting. Because now that the market has been thrown off balance again by the force of its own speculation, we get a sense that, wait, maybe we're on the wrong side of the ledger again, because now the U.S. economy is already cooling and has been since mid-November, at least relative to expectations. Not in absolute terms. The PMI numbers we got earlier this week on where U.S. economic growth is in December were white hot. But and of course, the GDP revision as well, 3.1% for the third quarter. But relative to expectations, we're cooling again. And so maybe we are once again in a place where the Fed has thrown us to the opposite end of the range. Why does the Fed want to keep doing this? Well, if you're trying to fine-tune because you feel like you're close to being at the neutral rate of interest, if you're trying to fine-tune because you feel like the balance to employment and to inflation, the dual mandate that the Fed has to meet, if you feel like the risks there are almost in balance, you don't want the markets to over-extrapolate this or that. So when you get to tops and bottoms in this range for expectations, which have roughly, over the course of the past year, moved between 80 basis points and 200 basis points, going all the way back to the start of the Fed easing cycle, signaling in late September, October, going into November's policy announcement, then rather than push back against markets, what the Fed seems to be doing is just handing the markets what they want so that the market's more reactive, speculative forces, because the markets are, of course, on a much more volatile reaction function than a central bank looking to get things right in the medium term, which is typically 2 to 3 years. The markets are obviously speculating on a much more shortened time frame. If you don't want them to get out of whack, seems what the Fed has figured out is you give them the last thing that they've wanted because the market's front run. We can see here all of this adjustment was made going into December. Most of December was really no change at all. From mid-November here, this was done, the market's corrected, then in December reset to where mid-November was. And the Fed's perspective seemingly is we'll give the markets the last thing that they adjusted for, and by then they're already there and find their speculative reach has overdone it. If we look at the price response again, notice we're right back to where inflation expectations were back in May. We're a little bit higher on the dollar, but we're not too far at all on yields, right back to where this back and forth started, as though the Fed is employing judo-like tactics to keep the markets from over-speculating and over-extrapolating one way or another, because they're trying to engineer this soft landing, and they don't need the markets to reach too far in any direction. This makes for an interesting sort of going on as we get the last bit of economic data for the week. This is the PCE inflation index. It is the Fed's favorite inflation gauge. We're expecting a pickup here, much like we did from the CPI numbers that were released earlier. And in fact, when the CPI and the PPI numbers come out, we saw that last week, we generally have the components we need to build a PCE model that is very close to expectations. So the markets very rarely get this number wrong. So there's probably not a lot of surprise risk here. 2.5, 2.9 on the headline and the core, respectively, is probably pretty close to what is going to end up coming out. And of course, what that'll confirm is exactly what the Fed just told us, which is to say that the path to disinflation has slowed, which is why they've become ostensibly less dovish. We can see the increases in monthly core PCE have been greater. The increases in headline also a little bit greater, though less than core. And the speed at which this is moving has been in the wrong direction. In particular, the 3-month annualized rate for core PCE has been going higher. And so that's, of course, not what the markets want to see, not what the Fed wants to see. Even the 6-month rate seems to be stalling. But what we have here now is, of course, data is starting to get cooler relative to forecasts. If this data is close to in line, which would be 0 here on this index. So if we're getting to that setting and the data starts looking like it's closer in line with expectations, and there isn't a further push into this hawkish direction, then maybe this starts looking overcooked, like the market's overshot again. Precisely what the Fed might want them to think. In which case, you get a correction. And maybe then bonds come up off the lows, and the dollar comes up off the highs, and gold rebounds, because again, it looks like the markets got knocked across their own feet. That is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris for Futures Power Hour on Mondays and Fridays, on with Victor Jones for The Price of Truth on Wednesdays, on with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com. You can find most of what we talk about here on this show in written form, summarized, so that it's easier to follow. And likewise commenting on the platform formerly known as Twitter, as well as now on Blue Sky, at Ilya Spivak. This show is also now live streamed along with all of our post-market shows on YouTube at Tasty Live Trending. So if you want to comment in real time, go to that stream and do that. Thanks very much for watching. Macro Money's back next week.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through a scraper. You know, one of those things, a grater.
A grater, cheese grater.
Yeah, cheese grater. And then you put a little butter on the, mix it in with the, you know, when you smash them. It's great.
In with Tony.
So bad. You mixed it up. English is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Hello, everybody, and welcome back to Bad Taste. My name is Julia Spina, and joined with me today is my regular co-host of Bad Trader, Luis. Luis, thanks for joining me, dude. How are you doing?
Hey, Julia, awesome. Thank you for having me here. What a day today. Ended up, they actually red. I don't know if you saw the last minutes, well, the last like 15 minutes on the NASDAQ and the S&P. They were all over the place, but I'm good. How was your portfolio? How did it end it today, Julia?
It's red. Yeah, it's red 2 days in a row. Yesterday was a rough day, I'm going to be honest. And today, it started out strong, and then we just bled. We just did a slow bleed, which was another red day. Honestly, the move in the morning kind of made sense. Like, okay, kind of a bit of a correction after a very big move to the downside yesterday. It was like a 2.5 sigma move, which does not happen a lot, obviously, with diversified market indices. And so, yeah, having a bit of a reversal of that kind of made sense. And then we just bled out. Oh, man, my portfolio. But you, being a perma bear, did you have a good day?
Yes, I actually had a really good day today and yesterday. The ones that I actually went long, the Dow Jones, I ended up having 50 shares when you and I were on stream. Cut them to 25 shares, and they ended up in the red. No surprise after today's weakness, but not that really bad of a day for the DI. Well, today they finally broke the streak of 10 days straight of negative closing. But they still have 11 days of closing red from the open to the close. So I'm long in the Dow Jones right now. That's the only ones I was only long. I'm short Palantir and long the yen. Those are my main positions that I actually ended up the day today.
Very nice. Palantir, slow bleed in the market, but Palantir had a pretty strong day, actually. Ooh, man, good days for the Bears. Let's actually take a look real quick, because we've had a couple flips. What did not flip is Micron Micron had a really rough day today, down 16%. While NVIDIA, actually at the time when we were streaming, not doing too bad. Moderna's up 3%. I think hell officially froze over. And NVIDIA, I think did it flip by the end of the day? No, it's still up 1.3%. So NVIDIA was green as well. So glad you had a good day. This Palantir trade is interesting. This has been just an absolute beast. It officially outperformed NVIDIA looking at the last 252 trading days, is the strongest component of the S&P. And I have to actually recalculate those statistics because the last 2 days might have changed that. But at least as of recently, it's been a really strong performer this year. So continuing on today. My portfolio is not doing too hot. I threw in an AMD trade. This is kind of short term, 29 days out. My gold, Condor as well, is like kind of the only one that's doing okay right now. Everything kind of donked after yesterday. Bitcoin as well. Have you been keeping up with Bitcoin?
Yes, I saw Bitcoin dropping almost like 10K from the highs of 108.
Yeah, tumbled.
I missed Coinbase and MSTR short today. I literally like to short those stocks.
I feel like you short
did
MSTR
not-
like every day.
No, MSTU. I like to short MSTU, but after their 10-to-1 split, not any longer. I prefer MSTR plus. MSTU is a double leveraged ETF, and I prefer to stay away of those for the most time. But right now, MSTR definitely gonna see that tomorrow. If Bitcoin still becomes more weak tomorrow, I'll definitely add a little bit of a short position at MSTR for tomorrow, and maybe even Coinbase. I actually was with Chase on the stream yesterday. I like Coinbase below 300. Once it broke it was a great short. I missed it because with all the Fed, Jerome Powell, there was so many short opportunities yesterday that just catching with all of them was a little bit hard.
Yeah, for sure. Really wild sell-off in crypto. It was just kind of a sell-off, especially yesterday. It was kind of a sell-off in everything. Like gold was down,
Yes.
market indices were down, Bitcoin was down. And it looks like, I mean, obviously there's a couple names. Natty Gas up 7%. I completely missed that. Oh my God. Man. Well, there's a couple names that seem to be up. Boeing, General Electric, Moderna. But in terms of the rest of the day, yeah, just weird day. Kind of a weird day.
We got some stonks today, Julia.
What'd you say?
We got some donks today, FedEx and Nike after earnings.
Oh, that's right, because Nike just reported, didn't they?
Yeah, really good earnings. They were up almost 11% after hours. But did it actually came back?
It kind of came back. It's almost, I mean, it's down a little bit, but not very much actually. For anybody who is watching, so on Bad Trader, we have these little challenges where you can wager in-app currency on whether or not something is going to stonk to the upside or donk to the downside. This is when it's hard to call because it is both a stonk and a donk. But all in all, we're not going to know till the morning. Actually, Nike that's like a little baby Peloton curve almost. Actually,
they had amazing earnings. Actually, they beat estimates. They beat their own guidance, both in revenue and in net income as well. So double beat for them and also for their next quarter guidance. But right now, it's currently their investors conference. So I don't know what their CEO or CFO is saying because that's definitely making them drop. Last time I saw they were up 11%.
Yeah, look at that. Well, yeah, now it's pretty much flat. So we're probably not going to know until the morning, actually. This is when the stonker donk is hard to call. A little surprised, actually. I feel like with Nike, it's a little bit more definitive than that, but there's still some time to go. Man, that's it. And then which else? What other company? There was another
FedEx.
big. What was it? FedEx. That's right.
FedEx. Yeah.
FedEx also had earnings. Let's see how they're moving. FedEx.
They're doing pretty
Ooh,
good.
that's a stonk. Look at FedEx stonking up in here.
Yeah, they're actually going to be splitting themselves into two separate companies. So definitely the market liked that. If you see, there's a pretty interesting pattern for FedEx.
Mm-hmm.
All their past earnings, the stock actually either jumps or drops 10%.
You really get one or the other, don't you? Look at that.
Yeah, that was
yeah,
actually
you can see that.
Look at those huge
dude,
gaps.
These discontinuities are crazy. I mean, don't get me wrong. When you see discontinuities like this, a lot of the time it's because of earnings, but you just see it so like literally every quarter. That's so funny. I never noticed that actually. That's so funny.
Yeah, FedEx does move whenever they report earnings, and they've been in a like upward ascending channel that I've tracked it. I don't really trade FedEx, but yeah, it was something interesting that I saw. Like if you actually measure the gap they actually make from their earnings, tends to be like around 10% either to the upside or downside.
That's yeah. Well, there you go. That's a big move. Oh my God, and it's a big move consistently. I guess slowly but surely trending up. I guess.
Yes.
And it's actually like it's so interesting to see this. Like the 50 and 200-day moving averages are like close to converging. Although now this is going to shoot. I mean, both of them up quite a bit actually with this big move that it's having now. It's up to almost $300. Wow, what a move! What a move that I didn't trade because I'm trying to be responsible in the, what is it, like 5 days that we have left, like 5 trading days that we have left in 2024?
5 trading days, and they're supposed to be the best days for December and the best days of the year. The Santa rallies are actually about to come. So
well,
let's see. I'm leaning short, but
well, of course you are. But like statistically speaking, like yeah, if it was going to come, it seems to be most likely based on historical trends to come I guess tomorrow, right?
Yeah, but, well, tomorrow, yes. I actually had supposed to start it's the last 5 days of December, which, yeah, tomorrow, basically. So I don't really plan maybe trading too much tomorrow. I think I'll be happy with yesterday's shorts that I took also today, especially with futures. It was honestly somewhat hard to be scalping them today, especially at the end. They moved pretty well. The Nasdaq futures moved 100 points, like upward, downward, and then again sideways. Huge moves for them. So I don't think I'll be scalping them for tomorrow.
No scalpy poos. No, we're gonna end the year responsibly, maybe. Yeah, which is good.
A little bit more,
I
yes.
did not buy my VIX calls. Maybe I should have, but yeah, I did not buy my VIX calls. Which I've never done.
Julie, every Thursday you say you're gonna buy something. It works out perfectly. Whenever you buy it doesn't. But when
well, it's because when I do actually go for it, it turns on me. When I do actually be like, I'm gonna pull the trigger. I'm gonna buy this like random like penny stock or something, and then it usually goes south.
QUBT, you were actually going to buy it on Tuesday, and it actually would have worked pretty well until yesterday. Today, really big drop for them. Look at 41%.
Yeah, but that could have dropped 41%. That could have happened at any point. Like, if it didn't work, it would have been, or if it did work, it would have been sheer luck and technically good timing. But yeah, that is how it often works, isn't it? Oh man, what a day. We got some stonks, we got some dongs, we got some earnings. And you actually brought up an interesting statistic. I'm mentioning it now because I see that it's not in the slides that we're going to show in a second. But really interesting statistic, which is that on average, we get about 8 corrections in a year, like in a trading year. And we're actually, if you count the one that we just had, we're only at 5, correct? This was the 5th one this year?
No, it's actually only the 2nd one this year.
The 2nd one this year, Yeah.
And there have been only 5 corrections in this bull market since the start of 2022. There's on average 8 corrections in a bull market.
In a bull market. Okay, so just so that I get I must have misinterpreted the statistic, but just so that I understand it, in any given bull market, there's an average of 8 corrections, and this is our 2nd one since 2022?
This is a 5th one since 2022, but it's the 2nd one this year.
I see. And typically in a year, we would expect, you said 8?
It was actually 3 and 5 a year.
Between 3 and 5 a year. Okay, so we're still under
only
that.
2.
Really interesting statistic. Thank you for clarifying that. I remember it was interesting bringing it up sort of during stream, so I wanted to kind of share that a little bit. It's 4:44 at least Central Time. Make a wish. But we do have some slides, and if we got time, we're going to do a tradle before we kind of sign off. Do you want to hop into it?
Sure, Julia. Yes.
Let's do it. Okay, so first things first, let's get into some slides. Lego. Do you see the slides?
No, I don't see them, but I can.
But this platform looks mighty fine, doesn't it?
Yes, it looks really good.
Hell yeah. Are you guys able to pull up the slides? Pretty please. We can keep looking at the market though.
Yeah, well, actually, right now, I might actually load up more on Dow Jones tomorrow.
It's okay. We can hop back in a second. First things first, I see some really interesting stats in here, so I want to go through them. But we do have a little bit of market news. And first things first, we do have an app. So we made some sick updates this week. We have it's in review in the App Store. It's a pretty big one. It's going to be coming out hopefully today. Pulling the trigger on that. So if you want to come find us, we're in the App Store and the Google Play Store. Some really cool technology. We'd love to have you. And then as well, if we have time, we should. We're going to do a tradle. If you want to come throw your guesses over in chat, you can find us on Tasty Live's YouTube channel in the chat over there at Tasty Live Show. And if you want to follow us on Twitter, Luis does an awesome job of managing our Twitter, and that's @TraderApp, or I guess like X, formerly known as Twitter. So you can find us over there. So what stats do we got?
Well, for value investors, while I was on stream with you, I actually bought some shares for the value ETF, which has had 14 consecutive straight days of losses, which is longest streak in history ever. So I actually closed them for a small profit, the IVE ETF, which I'm definitely planning to enter tomorrow, because just 14 days of straight losses, honestly, I think is way too much. But it's not surprising after seeing a very weak market breadth, and I think a lot of people are starting to actually talk about it. So definitely I'm going to be eyeing it for tomorrow. One of the few long positions that I'm going to take is going to be definitely IVE. And also the Dow Jones even though today was able to actually close on the green, it has closed for 11 straight days, going from green to red. So that's really bad. Well, not really bad, but I think it's also an opportunity. I ended up having 25 shares long on the Dow Jones. Definitely thinking on adding on these two long for tomorrow, which is, I think, very interesting to see, and uncommon stuff here in the Dow and also on the value stocks.
I was going to say, I'm just kind of eyeballing it, but this looks like, in terms of like, so IVE is a really interesting ticker. And this one you showed me actually on stream, and it's been kind of interesting to watch, especially because we're in this long down streak, and just kind of eyeballing it. I would need to like calculate this more exactly, but just this has to be like maybe one of the longest streaks to the downside that we've had in the last 4 years, with an exception maybe appearing in 2021. But really significant devaluation in value stocks, which IVE ticker. Brandon, awesome to see you. Thank you for joining us. I didn't know this existed, so it's really actually cool to start kind of tracking that. And some of the biggest holdings, I'm looking at this page now: Berkshire Hathaway, JP Morgan, ExxonMobil, Walmart, J&J, UNH, Bank of America, Chevron, Home Depot, Wells Fargo. So a lot of traditionally value stocks that have just been so deady spaghetti in the last couple of days. And yeah, again, just eyeballing it, looking at the stock history, like in the last 4 years, this might be, I think it's the longest streak that we've had, with maybe an exception in 2021. But yeah, really significant devaluation in there, and super interesting stats. So thank you for showing us that.
Yes.
Hell yeah.
Sure. Also, for example, you just mentioned the Berkshire Hathaway forms part of the value stocks. This map actually shows the S&P 500 price to earnings ratio. 15 is considered standard. Anything above 30 is overvalued. Palantir, I actually highlighted Palantir. I may be a little bit biased because I'm short Palantir right now, but it has a price to earnings ratio of 376. While Berkshire Hathaway, which you just mentioned, for example, for the value stocks, actually considered a little bit undervalued at 9 price to earnings ratio. So I honestly thought it was an interesting heat map to show right now with the price to earnings ratio overall, because as you said, right now with the possible corrections, the one we just got yesterday as well, which is very normal, and actually gives a little bit of possibility to enter maybe long. But it's at the end, when you see this very high valuation, especially with very high price to earnings ratio, like no surprise when you get days like yesterday, for example, maybe investors try to find whatever excuse they want to see to actually just sell the market, because on the next slide, we actually see the Fed projections. Basically, these projections is what caused a little bit of the spookiness. The other thing that I told you today is might as well been also Jerome Powell's. He seemed a little bit nervous. I was watching the conference. He seemed a little bit, not only nervous, but he was not always the same Jerome Powell as we've seen him. But the economic projections showed a little bit of a bump in inflation expectations compared to the previous September projection meeting. Just a mere 0.1% for inflation. Also an uptick in GDP, which today GDP came for the third quarter and was above expectations, so pretty good for the US economy. And also unemployment improvement. Both really good, GDP and unemployment improvement. But the thing is that investors were a little bit worried, and maybe caused a lot of yesterday's reaction, was seeing a little bit of an uptick inflation, and basically Jerome Powell saying that current economic reports are actually not favoring inflation's downtrend like it used to be. So yeah, it was a pretty interesting forecast from the Fed that actually they publish every FOMC meeting up to 2027.
Very cool
projections.
stats. And it definitely showed today 60%. I'm looking over at the heat map on the Bad Trader platform. If any of you guys ever want to check that out, it's over on the trade page. 60% of the stocks in the S&P are actually down today. There are two sectors that actually did okay, and it's looking like financials and utilities. About 78% of utility companies in the S&P were actually green. But compared to yesterday, 94% of the stocks in the S&P were down. It's really only a handful that were actually up. It looks like energy is getting hit kind of hard today. 80% are down. And then, utilities and financial services are kind of doing okay. But evidently seeing a little bit of pessimism in the market these days, looking like a death by 1,000 paper cuts vibe after yesterday.
Last time I checked today, actually more stocks were actually up than down. I was surprised to see 60%. So the market breadth keeps on deteriorating.
I know. It flipped. Like the
Bad news.
majority flipped, and that's a lot of companies. So you can all kind of see it getting tied to sort of the index, which is always a great sign. But really interesting stats. So thanks so much for putting this together. It was a really interesting stream, from earlier today. And looks like we've got about 9 minutes left. You want to try to do a tradle?
Yeah, you did. So let's see if we can get it. I think last time you got it on the first try, no?
Maybe not the last time. No, that's my heat map. If anybody, my heat map. Yeah, Broadcom got donked today. So let me pull this up. Pull this up so y'all can see it.
It was Madagascar. I think it was with vanilla.
That one with the vanilla. The vanilla gave it away. Okay, everybody. If this is your first time playing Tradle with us, we like to play a game called Tradle, which is similar to Wordle, where instead we are given the export distribution of a country. We have to guess which country it is. So, for example, this country has $15 billion in exports. It's not very big, and about half of that is petroleum gas. 11% is gold. We got copper ore. We got crude petroleum, nickel, mats. Palm oil, that's a good sign. Okay, palm oil, coconut oil. Okay, so we're dealing with something kind of tropical. And so basically what we got to do is we're going to give a guess. We're going to guess a location. And then it's going to basically tell us how far the target country is and what direction the target country is in. So this is small. We've seen it smaller, to be fair, but this is pretty small. And I'm thinking tropical. I'm also seeing like coffee in here. Coffee's in here. Actually, don't know what copra is. What's copra? Do you know? Is that a fruit?
No, me neither.
I have no clue, but vanilla, coffee. Okay, so I feel like we're dealing with something non-fillet frozen fish. Costco is the happiest place on earth. Sounds like we have some people at Costco or went to Costco today. But palm oil and coconut oil and stearic acid. Oh, this is the stearic acid, tiniest little sliver I've ever seen. But Luis, I don't think this is going to be easy. What do you think?
No. But I'm thinking something like in South America.
Mm-hmm.
I don't know what you... Maybe is there a...
It could be one of the...
Something can piggyback?
It could be one of the islands. And the islands, like when I was on with E last time, the geography of all the islands was a little bit tricky. The petroleum gas is throwing me. Half of it's petroleum gas. And then the palm oil, coconut oil makes me think it's like maybe something kind of tropical. Malaysia, we got a guess from Nan. Not a number, Nan. We could just... You want to throw Malaysia in just to get a guess on the board?
Yeah, let's throw it.
Yeah, I don't think it's...
to piggyback out of something.
I think Malaysia, Malaysia. I think Malaysia would have a lot more textiles, so I don't think it's Malaysia. Oh, it could be Venezuela, actually. I think that's maybe a better guess. Venezuela?
Yeah, I was thinking like Ecuador or something on that line.
Try Ecuador?
Let's try with Malaysia, maybe, or...
I think Malaysia would have a lot more textiles. I just kind of want to get something on the map. Venezuela.
Let's go with yours first. Venezuela.
Venezuela? Well, that was Emmett Morrison is making that guess. Venezuela. Okay. Let's see. We're going to make that guess. Ooh, it is nowhere near Venezuela. Okay, that's awesome. 17%. Okay, so it's about as like...
It's not in South America.
It's definitely not. It's in Asia. It's got to be.
Philippines?
The Philippines was another guess. That was from VW Diesel Dork. We can give that a go.
Yeah.
Maybe Malaysia was a good guess. Oh. Okay, it's a lot closer to the Philippines, and now we're really putting my geography knowledge to the test. So it's 3,200 kilometers away from the Philippines, and it's kind of southeast.
Let's try.
No, this is word geography, but we're 84% of the way there, so it's definitely a lot closer to the Philippines. It could... Is it Malaysia?
Asia... Well... Basically, Nan might have actually got it.
I think it might.
Let's try it.
Now I'm going to feel really bad for... Uh-oh. Why can't I spell today? Malaysia. Cannot spell today. Okay, it is not. It's right next to Malaysia, though.
Let's go.
It's next to Malaysia. Someone who knows geography much better than me. Big palm oil producers. Nan, I'm sorry for snuffing your guess. It was a very good guess, actually. It would have been a lot closer than my first guess. From Max, we're guessing Australia. Australia, I think, would be a lot bigger. It would be a lot bigger, and I think kind of more mining exports, like more mining stuff, like ores and metals. But let me think. Okay, so now I'm trying to think. Brunei. Well, Brunei. I snubbed you once. I can't snub you again. You want to do Brunei?
Let's do it, yes.
Brunei. Okay. It's pretty close to Brunei. We got to go a lot more. We got 2 guesses left. We got to go a lot more east. Vietnam.
Vietnam, Indonesia. I was thinking like Indonesia, but I don't know if it's basically east of and southeast of Philippines.
My thing, okay, so if it was, I feel like if it was Vietnam or Indonesia, it would be a lot more textiles because a lot of clothes are manufactured in Vietnam and Indonesia, right?
A lot of suede, no? I think.
15.4 billion. Try.
It's got to be big, a big country, because 15 billion is definitely big.
Okay, it's not that small. Yeah, it's decently big. You want to try it? Yeah, let's try Vietnam. Try Vietnam.
Vietnam.
Okay. Man, my geography, my knowledge of geography in general is pretty terrible. We have moved further away.
Damn, this one is hard.
I know it's hard. We got one more left.
Southeast of Philippines.
Oh, wait a minute. I think it might be one of the Pacific Islands. Oh, it might be like Samoa or something.
Damn, I don't really know where Samoa is.
Kuwait is
Kuwait.
Middle East, other way. Iraq?
No.
Right?
Yeah, Iraq is also Middle East.
I think it's one of the Pacific Islands. I think it might be like Samoa or something.
I don't really know Pacific Islands. I think only Indonesia is the only one that I know, but I'm not pretty sure where is it located near to. I know it's near Philippines, but not necessarily if it's southeast. So I like your guess, Julia.
Oh God, yeah, my geography is pretty bad. New from Max. If you want to give a different guess, I don't think we're gonna get it. We got one guess. No, East Palau. You know, Emmett, I'm gonna take a guess because I am really stuck on this one, and I'm gonna feel like a real dingus when we get. Luis, you want to pull it?
Let's do it. Palau.
Oh, that was actually. It's Papua New Guinea. God damn. You know, that's okay.
You actually said it, no?
Well, I didn't say Papua New Guinea.
VW
Dieseldorf just said New Guinea. That's so annoying. It's Papua New Guinea. God, I'm gonna go look at a map after this. I feel like all my geography, that was like my worst subject. Geography and history did not click very well for me, and it shows. But a bunch of people at VW Dieseldorf, it sounds like, from the honor system, you got it. So well done. Man, but this was a hard one. Oof.
Yeah, it was a hard one.
It was a hard
because
one.
Because of Trello, it made me learn all of Africa's countries really good. Because I remember when you and I played, we always get an African country, but really need to study Asian ones.
Well, especially like when you're by like the Ivory Coast or whatever, like there's all those tiny little countries around there, like with Ghana, and so at this point, that's what I'm saying. With tradals are fun, but it's like at one point it becomes more of a geography problem. But VW Dieseldorf, you'll take that. Vita, very very good job. But man, guys, well, I'm gonna go study up after this. I feel like I feel like I've failed. But what are you gonna do, Luis? I think we're just about out of time. Thank you so much for joining me today. Is there anything that you kind of want to tell people before we get out of here? Say anything?
No, Julia, thank you for having me here. The only ones that I'll definitely be eyeing for tomorrow, maybe longs, will be the Dow, because I think it's a good sign that finally ended up the day just a slightly green, a little bit. And also maybe the value, I don't know what you all think about it, but yeah, those are definitely my long positions for tomorrow.
Well, I don't know how I'm feeling. I'm just kind of holding on for dear life at this time. I think maybe a lot of us are. Yeah, Big Deal Donuts. I got to study up too. I got a Google Maps up right now, and I'm about to go see how far off American Samoa is. It's gonna drive me crazy. No, you don't have to go. That's okay. We'll pull this down. That's for me. But you guys, it was an awesome time seeing everybody here. Thank you so much for coming. Luis and I are going to be back on Bad Trader actually not next Tuesday. Because it's Christmas Eve, right? Well,
yep.
I hope everybody has great holidays. Happy Merry Christmas to everybody who celebrates it. And happy other holidays if you don't. It was awesome to see everybody here. Thank you guys again so much for joining us. I hope everybody has a green rest of the week, rest of the year, because I don't think, I'll be back sometime next week. But yeah, thank you again, everybody, for joining us, and we'll see y'all later. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The beauty of thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realize it was just a big competition. You know, it's like a big poker game with really smart people who know game theory, and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go wherever the opportunity is.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're gonna break down all the details of each one of those keys. So I'll see you inside.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
If you missed the live show, here's our cherry on top week.
Did I see a birthing room?
Birthing room?
Oh, stop. Behind JJ, is there a birthing room? That's not a birthing room, you genius.
Okay. Oh my God. Yeah, we have a whole birthing room. It's called, oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. Hey, Tasty, we're delivering babies.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what? This is English. You should watch him read.
From the smart mouths at Tasty Live.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow. Let's take a look. They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yes.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. Listen, there's a lot of things I want to do too.
I'll be the
time last night. I didn't have it in me. But back in the day, I could do it. I'm older now.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
Do this every time I'm here.
I just want to know
Every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Get in the. See you later.
Nick is going to be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this. Like, oh God. It's hot as hell in here. I'm like sweating. Like, it smells.
Oh, yeah, it is Thursday, December 19th, or so they say, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. What a week, everybody, and we're still not done. Shout out to everybody watching on tastylive.com, Tasty Trade desktop and mobile application. Shout out to all of you watching on the YouTubes, I think they call it as well, the interwebs, something along that lines. Sorry, we're getting started a little bit late. That's all on me, everybody. Let's get cruising. Where are you, Victor? Daniel Marquardt, where art thou? I'm right here, my friend, and I'm ready to get started. The S&P 500 cash index, not a ton doing today, down about 1/10 of a basis point. 1/10 of a percent, 1/10 of a basis point would be absolutely nothing. 1/10 of a percent on the day. The NASDAQ cash found a way to go negative again, and I love everything about that. Down 1/2 of a percent. The Dow Jones up 1/5 of a percentage point. The Russell down 0.5% as well. Here's the Cliff's Notes on today. The Russell and the NASDAQ were down. Not much else happened. I think the interesting thing, though, talking about curves, we've been talking about curves the last couple of days, as we usually do, everybody. But the interesting curve today is the VIX. Look at what we've got here, everybody. A little something called backwardation. Front month VIX futures spiked up a little bit here today, even though I would argue. VIX cash had gone all the way up to like 27 and change. So technically VIX came in today. At some point we were much lower, I think 21. But the sell-off later in the day, you saw the rise in the VIX. And you also saw VIX futures, which hadn't done much. There was a big divergence between the basis, between cash and futures. And the question was, what was going to happen there? Was cash just going to basically implode and come down to meet where VIX futures were, or were we going to see basically that basis converge higher with VIX futures also coming higher? And it was a little bit of both. So VIX cash came in, VIX futures came up. And with that, my babies, we got a little bit of backwardation. And the question, what are people fearful of? I don't know. Are we hedging the potential shutdown, the government shutdown risk? I would probably guess the answer to that is yes. And it seems, my babies, it seems, my babies, the marketplace is assigning a very real probability that a government shutdown could be upon us. I talked to Tom and Tony about this earlier, or during the trading day, I would say this morning, Polymarket had the probability of a government shutdown at 52%. It has now gone up to 63% chance of a government shutdown. Kalshi this morning had that probability at 56%, and it is now 57%. So we've converged here between 57 and 63%. The probability is now 60% of a government shutdown. And I think that is your leading reason for why you're seeing a spike in the front end of the VIX term structure, why you're seeing a bit of backwardation. Call me crazy, but I think that's probably what you're looking at. And here's the thing. The market kind of gets stuck. The market narrative gets stuck in what I would call recency bias. Recency bias of this particular situation is this happens, people, every single year. It happens every year. Here's what happens. Because our government does not work together, they do not get together and they don't pass a real budget. They pass what is a continuing resolution, which only funds things for, a couple of months down the road. And they do that. Let's not go into that. There are several reasons why they do this, but they do not pass a giant budget. They just pass these continuing resolutions. So what you have here is instead of, basically what happens is the Congress got a 1,500-page budget, and they always pass it. They always give it to them right before Christmas. And they say, we're going to vote on this. And Congress, Thomas Massey has brilliantly outlined this. I think he outlined this a few months ago, and he goes, I'll tell you exactly what's going to happen. We're going to get this giant continuing resolution a week or two before Christmas, and you hold Congress hostage. You say, look, if you don't pass this, you're going to have to stay here over Christmas and figure out, a new spending bill. And nobody wants to do it because they all want to go home and go back to their families for the holidays. And so that's the leverage that's played every single year. And there's the threat of a government shutdown, but ultimately they kick, they scream, they nag, they grumble, but they pass something because they want to go home. And I had thought the probabilities, I think yesterday or 2 days ago, and I started thinking about this, I think there's a very real possibility that this happens this time. Maybe that's the sucker's bet, right? As volatility is expanding, as you're getting a 24 VIX, as you're getting 21 VIX futures, the sucker's bet is to bet anything other than they figure this thing out. They vote in their own, they vote in their own self-interest, and they get something done. But I think that if I'm not mistaken, the Republicans came back with their own spending bill, and I think Hakeem Jeffries called it laughable. So you've had sort of three things happen. You've had the Republicans put forward the things they care about, which I believe is disaster relief, primarily disaster relief and assistance for farmers. I think the Democrats came back with what the Republicans are saying is a bunch of pork. But, depending on the way you see the world, you might not view it that way. And the Republicans came back and said, this is what we'd be willing to pass. And Hakeem Jeffries on the Democrat side called it laughable. So the question is whether they're actually going to move this forward. And one of the reasons that the pressure has been ratcheted up is you have Elon Musk putting a ton of pressure on not moving forward. And then you also have,
Donald Trump as well as Vice President-elect J.D. Vance putting together, a little bit of pressure that says, if this, then pass, else call the Democrats bluff in shutting down the government. So there's a lot of rhetoric, but we always see this every single year. I would say the poly market and calcium markets are right, that the probabilities are higher that something happens, that they don't get something passed. But I don't know. To me, it still feels like a little bit of a sucker's bet. Let's see what you guys think. Donna says, good morning, everybody. We haven't had a budget agreed on by Senate and the House for a number of years now. It's unbelievable. Exactly. What are these? And then I think the greatest irony, sometimes when you're negotiating, you put something in that you obviously know is going to get struck down. And so it makes the other side feel better that they got rid of something. And then that helps you move something forward. To me, I think the whole idea of raising Congress's salary, to me, I think that's something they know didn't have a snowball's chance in hell getting passed. That's the thing you put in so that both sides can remove, they can feel good about it, and pass a bunch of other stuff. I remember being on a road trip in 2013. What's up, VDub? When they did shut it down, the national parks, I know they rope out the national parks. I was trying to visit October 1st that year where, sorry, government shut down. Exactly. I know. I believe it. The oligarchs love playing games with the serfs, says absolute beginner. I'm telling you, if you haven't read the book, Techno-Feudalism, you should definitely check it out. It's worth checking out. It's a great book. And if you don't love to read, if you don't want to read, the author, Giannis, I'm going to blow his last name, Varoufakis, maybe? Try to find a phonetic pronunciation. Giannis Varoufakis, I think. Varoufakis is the author. He's the previous Greek finance minister. And not the one who brought him into the crisis, the one that tried to get him out. Brilliant guy. Go read that book. It'll open your mind up to what type of world we're living in right now. Grumpy Mike says, I'll read it a couple more times. Wouldn't it be a riot if the Republican majority can't work this out? The government is shut down. TSA is working for free over Christmas. That's what you think will happen? Republicans elect a new speaker and the government stays closed through the 20th. Wouldn't it be hilarious? Wouldn't it be a riot? I don't know. This time is different. I kind of think so, Cactus. I think the market's right to price this above 50% probability. I think the market's right to put it at 60%, and I think that puts a lot of pressure on Democrats. Grumpy Mike, I think you're forgetting that while the Republicans were elected in, they're not there yet, and they do have House, but they don't have Senate, and they don't have the executive, and that's a hell of a way to go out as president with the government shut down. It's not a good look. The Senate bill that Trump opposed not only had massive amounts of pork, it gave Congress a huge pay raise, yeah. But I don't think they actually they tried to pass that. I think they knew that was not going to happen. How would the audacity? the audacity. When you really think about how incredibly bold that is. Some people, I don't know where you think inflation comes from. For me, it's the creation of more money than the need on the demand side. And that additional money creates more demand. It's more money chasing it's chasing the same amount of goods and services, which raises the price. Another way of saying devaluing the currency. What I think anyway, and I think depending on where you put that money in the hands of people with low velocity of money, then they'll put it into the asset market. If you give that money to people with high velocity of money, then that money is going to end up going to goods and services. And I think we sprayed down both groups of people with liquidity. And so we ended up with asset market inflation, and we also got goods and services inflation. That's where I think it came from anyway. And so the very same people that have a lot to do with why prices are so high want to also give themselves a raise. And I think that's just a poetic way to end 2024. Anyways, sometimes stuff is so wild you got to laugh. ZT, my babies, just bonds not doing a little bit of a rally. They wanted to, a little bit of a rally in the front end. In ZT, 5-year, everything in the long end sold off hard. Good God, the 10-year at 108 and 22.30 seconds. The 30-year at 114 and 6.30 seconds. This one's painful. This one's getting a little bit painful. And I'm gonna have to. The good thing about my whole trading strategy, it's always defined risk. So I know my risk going into it. And the question becomes, do you add to it or not? And I want to just talk really quickly. I talked with our good friend Ilya Spivak yesterday about the SEP. I wanted to dig into it a little bit more. I just want to say a specific thing about bonds. That when you look at their inflation projection, it's 2.5%. A quick shorthand for thinking about yields is take your inflation and take your GDP, take your growth projection, stack them on top of each other, and that's the world in which yields should play. So 2.5% inflation, 2.1% growth. What do you get? 4.6% in terms of yields, which is in the ballpark of where we are right now. We are literally 4.557 is where your 10-year is right now. Now, here's the problem. What do you believe? You have to play this game. What do I believe? So the Fed is telling you, they said 2% growth, and they were wrong. It ended up being 2.5%, right? So they had, in this SEP, they had to, and even that's not real. I think we're at 3%. The last second quarter revision, or the last GDP revision, not for the second quarter, but the last GDP revision had us at 3%. So it's, what do you believe? Do you believe growth is at or above 2.5% and will be in 2025? Do you believe it'll be above trend at 2.1%, or do you believe that that number is going to be somewhere near 3? Do you believe they've under forecast growth? And if you believe they've under forecast growth, then this number could be 3s. These numbers could be 3s. At least that's what the administration wants them to be, right? 3% growth is what their targets are. So 3% growth at 2.5% inflation means you're in the ballpark of 5.5%. So it's just what, and then also, do you believe inflation's going to run hot at 2.5% versus 2? Do you think it only runs at 2.5% hot? Do you think it could be 3? I think probably 2.5% is probably going to be aggressive, but I think that's a realistic projection. So here's my point. We're at 4.6%. If you believe growth is 3%, you could be in the ballpark of yields at 5.5. So anywhere between 4.6 and 5.5% is sort of your range. If you play the game, what do you believe? And this is the part that's really tough, because if you believe these numbers that they just put in front of you, if you believe that growth is going to be 2%, not 2.5%, not 3%, well, then you're probably at an interesting inflection point for bonds at 4.6. But if you believe they could be under forecasting where growth could be in 2025, then your yields probably could be, let's say, 2.5% here, 2.5% here. You're at 5%. If you think they've drastically underestimated growth, then you're at 5.5%. So my point in all this is just to say, I'm trying to look at their piece of paper and go, what would a reasonable 10-year be, given their projections? And a reasonable 10-year, assuming they haven't if they're right, is 4.6. If they've under forecasted growth, it's probably 5%. And that's your range. So anyone buying bonds right now or taking long deltas, as I have been, I'm just probably being greedy. I'm probably early. But if you were sort of somebody that goes, I don't like this chart, or I don't like the setup, or everybody in Wall Street is leaning short the long end for one reason or another, whether it's the steepener or whether they just don't like the long end because it doesn't offer value, then in that particular case, I would say you hold off until you've got a yield approaching 5%. And let me take the next 40 basis points of risk and pain. Should there be 40 basis points of risk and pain? Because I'm already sort of pot committed, but I'm risk defined. So if the trade doesn't work out, it's not gonna kill me. But I do think if all else was equal, given the fact we've broken this technical support, given the fact we're at 4.6, I would say the highest probability, if I could do it all again, I'd probably wait until 4.8, 4.9 to try to go long bonds. But I'm sort of pot committed here, so I got to keep playing the game. But for anyone else out there, I don't know. I said this morning I liked my entry, and then I did the math. I looked, just a simple addition. I just looked at these numbers again. I said, where could they be wrong? Where have they been wrong? And it could be the growth side, but that doesn't necessarily need to be the case. Just because we were running hot growth numbers in the last few quarters doesn't necessarily mean we need to see them in the next few quarters, right? Because a lot of that Trump tax optimism has been pulled forward. So it doesn't necessarily mean the economy needs to be running hot for the next several quarters, especially if we get in a tariff war and a tariff tit for tat. So again, it's what do you believe? And I think it all comes down to growth. Do you think a 2% number for 2025 at growth makes sense? Or do you think they're under forecasting? You think they're under forecasting, then you probably wait for 5%. If you think growth is slowing from 3% to 2% when it's already underway, and we're going to come in at 2% for next year, then you're probably getting a decent value. So it's what do you believe? I sort of believe things aren't as good as the report, as the narrative. So that's why I don't mind owning them here. But if you're optimistic, if you've been optimistic about equities, if you've been optimistic about the economy, if you've been on the opposite end of sort of my point of view, no problem with probably waiting towards 5% to play a long bond position. All right, that's my story. I'm sticking to it. One quick look at the yield curve before we move on. Let's see what you're saying here. They're still the majority of the House, and that's where the issue is. The issue. What is the issue? The issue is what? That the spending bill's not moving forward. Is that the issue? And I guess I always think, I don't think of it as binary, is passing, yes, then government equals doing their job. To me, I look at those items and I go, does DC need a new football stadium? No, it doesn't. Why is that being put in the continuing resolution? So then if somebody's fighting to not make that to not use government money to move that forward, I'm okay with that. So I don't think there's an issue given what I've seen in there. Given some of the things I've seen thrown in there. Do I think the Congress deserves a raise? No. Not the way that they're trying to give themselves a raise. What I would do is I would move it up from, I think they're in the 2s. I'd move it from 2s to 5s. right before the midterms. So what you would do is you would encourage a whole new crop of really capable individuals to come get that seat. That's what I would do. And I would do that not as a continuing resolution, but as part of a budget. That's when you deserve a raise. You pass an actual budget, and then the people get to vote on whether or not they like that budget or not a bunch of continuing resolutions that gets the government funded for another 3 months. You don't deserve a raise if that's the way you're kicking the can. All right, let's keep going. Sorry, I went back to politics for a second. Just read an article in the New Yorker about techno-feudalism. Have been wanting to read it. It's a good one. Love that, blob. I love that you mentioned velocity of money. It is so important. That's right, Donna. It depends on where the money goes, right? You give a rich person money, it's going into the stock market. You give somebody that's struggling money, they're going to pay their bills with it. So it's pretty simple. So depending on where money goes, or who gets the money, and the velocity of that person's money, that's going to depend on where the money's going to go in the economy. And they know this, by the way. They know this. Or at least they should. God help us if they don't. When full port TLT? Yeah, I just think I might be a little early. 4.6 might be early. 5% might be where you go grab them, and they might scare the children, go to 5.25. I might be early. No one talks about velocity anymore. It's an extremely important topic that's been sidelined ever since 2008, when money supply sitting in banks started to completely distort velocity. Well, I just think it's hard to think about velocity of money at the economic level, but it's super easy to think about it at a microeconomics level of the individual. I think it's easy to understand at that level. And I also think, Mark, you have a real-time application, right? We saw this play itself out. We see what sort of supply-side economics has done to the marketplace, and we saw that it didn't really create, I don't want to say it didn't create inflation. There was inflation. We just didn't measure it. But the CPI wasn't going up. And then we saw what happens when money goes, tons of money, doesn't go supply-side economics, it goes direct stimulus. We saw what happens when you're not able to increase supply because of lockdowns, but you're increasing demand and you're putting money in the hands of people who have a high velocity of money. We literally saw a textbook example. This play itself out in front of everybody. And what happens? Where does that money go? Right? Some people put it in Bitcoin and in the markets and Kathy Wood's funds. And then other people went to Amazon and Home Depot. And you got to see what happens. You got to see all of those all that theory play itself out right in front of you. Textbook has $1 billion, or Fartcoin has $1 billion market cap. I'm not taking less than 5% on any treasury. I get it. Yeah, I get it. Is the growth reported government spending growth? Do we consider that real growth? I'm not educated in this. Gosh, that's a good question. So yeah, there's probably a more academic way to break this down. I don't think I was ready for the question, but I would say just generally speaking, a government spending shows up in GDP. And the question becomes, once government spending, there's some people that believe once government spending crosses a threshold of a certain percentage of the overall economy or overall debt, once that government spending crosses the threshold, what happens is you get something called crowding out. So when the government spends money, it's not the most efficient spend. It doesn't necessarily care about an output and a consumer experience. It doesn't necessarily care about winning additional business. And because it doesn't have that market dynamic, the spends tend to be less efficient, and they tend to crowd out private enterprise. So is it real growth? Is it growth? Yes, it shows up in GDP. Is it real growth? Some would argue that it creates a larger and larger inefficient portion of growth. It creates capital misallocation, and that it crowds out private enterprise for the areas where government is spending, because it's So I mean that's a poor man's description of what's happening there, but it's growth. The definition of real growth will probably depend on your point of view in the world. I would say probably not. I would say the more growth we have that's independent of government spending is probably closer to what your likely definition of real growth is. Donna Ski said, Powell said he's happy aiming for 2.5% inflation next year. Plus, Trump is aiming for 2.5% to 3% growth the next 2 years. Right. But just because he's aiming for that, got to make it happen. Got to get all this stuff passed. Stuff's got to work, right? Got to avoid any gray or black swans as well. People got to your adversaries have to let you do what you want to do, and your partners have to want to be on board. I think there's a lot of what ifs, but I do agree that getting to that 5%. I'd said this before. You guys know this. I thought we would see a 5% in 2025. I just thought we'd see a rally in the long end before we got there, and maybe we just saw it, and that was all the market's going to give us. That little break above the consolidation pattern, maybe that's all we're going to get, and we're just going to head straight there. It's very possible, and we're going to find out, right? The next challenge of this, of the structure of this market, we're right there. 113 is the next challenge of the structure of this market. So we're going to find out very quickly. Let me see if I can get on a longer time frame. Yeah, there is maybe below that 107, right? So this area of support is 113, and we break 113. You're talking 107 is the next point of structure, and we haven't beyond that. We haven't been there in a very, very long time. I don't even know if my charts will go back far enough to account for a time when we were below 107. Oh, here we go. Back in 2008, everybody, we got to go back to 08 to find a level lower than 107, which is at 101, basically 104.16, 104 and a half. So those are your levels: 113, 107. And basically 104 half. Those are your levels, everybody, for bonds. It's okay being early on TLT. Yeah, if I was nervous about this trade but wanted to be in it, I'd probably pick TLT. I'm picking ZB and ZN because I'm greedy and a masochist. But I think if you want to play this for a longer game, and you want to play through the potential levels of 113, 107, and 104 half, I'd probably pick something like TLT. Good point, Donna. Real talk, Victor. This is from Sean. Real talk, Victor. What's your favorite Christmas movie? Gosh, good question. Good question before we go into some more market-related talk. It would have to be. It's definitely one of the Home Alones. Me and my sister used to crack up at the Home Alone where Marv puts. I think it's Marv. He puts his hands on the. I think it's the second one, puts his hands on like that washer, that old school washing basin tub in the basement, and gets electrocuted. I'm 38 years old now. I think my sister's 2 years younger. I think if you put us in front of the television like we were when we were very young and we watched that part, I think we'd crack up just the same. Probably that one. A Christmas Story, you'll shoot your eye out. That's a classic. As I got older, it's probably Friday After Next is technically a Christmas movie, so we're gonna throw that in there. I don't know. Those would be three. Those would be three. So I think it's Home Alone 2, A Christmas Story as a classic, and then I got to throw in Friday After Next. I think. What about you guys? Give me some Christmas movies. Give me your favorites. Maybe I missed something. Love That Blob says gross domestic product, third estimate, corporate profits, revised estimate, and GDP by industry. Oh, I think Love That Blob just as posting the last GDP number, I believe, which came out today. And the quarter-over-quarter consensus was 2.8. The actual came in at 3.1%. So I think that's what our good friend is talking to. Christmas Vacation, yes, for sure. Forgot that one. Chevy Chase, a genius. Brian Watson. Die Hard, is that a Christmas movie? Are you messing with me, or is it a Christmas movie? I've only seen it once. I'm not like a super Die Hard fan. The Grinch, yeah, of course. You got to catch that at the right age. Too young, it's a little scary. I'm not gonna hold you. Yeah, Love That Blob. Thank you very much. So Love That Blob confirmed what they were doing here is making sure everybody was aware of the GDP. And yeah, it's the third quarter, and it did come in hot. So I think all of those reasons are reasons why, if you need a reason, that the bond trade continues to be just painful, the long bond trade, because you've got a Federal Reserve that's saying, oh, by the way, we're not moving towards target. We're not getting towards 2.2%. We said we would be in 2025. We're going to be at 2.5%. And we're going to be okay with that. We're happy with that. He's delivering that with a smile. And then we're not even going to be at target in 2026. We're going to be at 2.2%. And now we're going to put our target at 2027. And guess what? At the end of 2025, do you think this is still going to be 2% in 2027? Or do you think once we get 2028, all of a sudden, all of these numbers are going to be revised higher? We're going to be talking about 2% in 2028. And so I think that's part of the market concern here, that you've got 2.5% inflation that's being blessed by your central bank, by your beautiful Federal Reserve, with two mandates. One of them is to not do this. And then the other part of this is, okay, that's my inflation number. What do I do with my growth number? And you get a 1-2 punch. The next day growth is at 3.1%. And so that tells you the ballpark of yields that you should be in is 5.6%. So it has to be, what do you believe in terms of growth? Do you think that is real and that has staying power, that 3.1? If so, you should be somewhere near 5.5. If you think we could be 2.5% growth, we should be at 5. And if you think all that's overstated, it's probably a good time to buy bonds. Elf is such a great movie. I like Will Ferrell too much to love Elf. It was such a weird departure for me. It was too soft. There's no edge in that movie. It was like, didn't that come right after Anchorman or something? It was like Anchorman and then Elf. And if you loved Anchorman, you loved Will Ferrell, and it's like, okay, it's funny, but let's throw this one, Bad Santa. Nobody said Bad Santa, so I'm taking that one too. That's a Christmas movie for people like me. The jaded, cynical people that's a Christmas movie for people like me. I got to throw Bad Santa in there. Okay, let's keep cruising, everybody. Wicked, I haven't seen it. That's the one that just came out. I don't see any of the new movies anymore. We got rid of our TV. I'm telling you guys, I'm on a wavelength, man. We got rid of the TV, and I don't trust any of the new movies. I don't like the messages in any of the new movies. I woke up to the programming, and I'm like, I'm not doing any of this with our kids. We're not watching any of this stuff. So now we just build, we built a solar system. The next one is a model car. We got a whole queue of projects, and we're just take stuff off the list, and that's how we spend our time. We're not doing any of that programming. Nosferatu's dropping Christmas Day. What's that? I haven't even heard of that. Oh. Christmas Day? That's kind of gangster. That's a gangster drop. All right, so real quick, a look at the curves, and then we'll move on from bombs, I promise. So red line, as I mentioned before, is the first cut in September. Green line is the second cut in November. And the blue line, my babies, that is now going to be memorialized. We're going to keep it here. I'm trying to think. Should we do the 18th? We'll do the 18th. The 18th then is where the curve was on the third cut in December. And we'll watch it from here. Each successive cut, what has happened? It moves the long end higher. And I think, so what is the market predicting now? What is the implied market forecasting? What happens with rates from this point forward? Well, let's take a look, my babies, because it's better than us forecasting and squawking about what we think will happen. Let's just look at what the market is priced. And this is wild. Just a few weeks ago, before CPI, my babies, we looked at this. It had a cut in December. It had 3 cuts in 2025. Now we're past the cut in December, so it has the implied holding rates in January, 1 more cut in March, and that is it. The implied market has 1 cut effectively built into all of 2025. Do you think that's going to happen? Do you think we're only going to cut 1 time in all of 2025? So if you do, what that means is you have a very positive view of the economy. You don't think that rates are restrictive. You think growth is going to move forward. We're going to be at 3% growth. You think inflation is going to move up to 2.5%, or it's going to be high enough to be a thorn in the Fed's side so that they can't actually get off any cuts. And they're just going to hold for the entirety of the year. You think that's what plays itself out? That's what the market is saying. And I would remind you that coming into this year, the implied market was we're going to cut 7 times. And that's how wrong the market was, 6 or 7 times. They did basically 3 cuts, but one of them was a jumbo cut. So let's say they cut 4 times. So they were wrong by a big, big percentage. And so going into next year, we're talking about once. The Federal Reserve says twice. The market says you're not even going to get that off. In fairness, it's very close. This morning, this was more than 50%. So they actually had a cut in December, but right now there isn't one. That's how the market's saying this is going to play out. So either you believe We're gonna absolutely rip next year. Inflation is going to be high. Growth is going to be high. Yields are going to be high, and none of that's going to make a dent into the economy. Either you believe that's true, or you believe perhaps this is the moment of peak hawkishness. And if you believe this is the moment of peak hawkishness, that's where I'm at. That's why I started to get long a little bit of bonds. If nothing else, then I believe that this probably is not right. But when does that reprice? It might not be tomorrow. It might not be until January or until March. Maybe then we're talking about a repricing of this. It doesn't have to happen tomorrow, which means I could be really early. But I just don't think this happens. I don't think next year they cut once and hold the entirety of the year. But maybe they will. We'll see. What do you guys think? Hit me up in the chat. Tell me, do you think this is realistic, this implied market for 2025, which now says they're going to hold until March and cut once, and they're going to hold the rest of the year? If you had to bet, would you take the over or the under on this in terms of the number of cuts? I'm not saying they should. It's about what they will do. Let's see what you guys are saying. Pretty soon you're going to tell people to get off your lawn, Victor. No, I'm not grumpy. I'm definitely not a grumpy old person. I'm just saying I'm hip to the methods and tools of programming. And here's the best way to say it. When I was young, I had this tool. It was this, somebody had given me, I don't remember where I got it or which, if it was my parents or somebody else gave it to me, but I had this 130-in-1 circuit board. Okay, so it's just a circuitry set to teach you to learn about electronics, these types of things, electronics and circuits. This was I wore this little toy down to the nub. It was my favorite thing as a little kid. And until it broke, years later, you could make all types of stuff with it. You do simple stuff like learn just a closed loop with a battery. Then you could learn sort of like you could learn LEDs. You learn to like alarms, all this stuff, right? Had a little propeller, all this stuff. I went to go find that same toy for my son and my daughter. My daughter's a little young, but my son's getting to that age. And all it had completely transformed. All the complexity, the little circuitry, the little wires, all the intricacies of that, they're still around, but they've removed all of the complexities. So it's just everything's just snap in. The wires that connect instead of being open and exposed wires, where you have to, it's metal to metal. Like instead of it being a real circuitry set, this thing is all snap in and it connects via USB. It's teaching a kid just a USB something into the port. And I was like, what the hell is this? Like, it feels like we're systematically dumbing people down. This is the crazy part. And the reason I say this, like, I've even looked at the milestones, right? When we first had our kids, I looked at the milestones, the development milestones. And I go, these don't need, like our kids are like on where they're supposed to be at 4 years old at 2. These don't make sense. So then I looked at the history of those developmental milestones. Where did those used to be 10 years or 20 years ago? And they do shift. Over time, as we've been getting smarter and richer as a society, the milestones for development get lowered and lowered and lowered. And I'm like, what the hell do we do that for? If we have more time, more money, more resources, why are the milestones for learning going down at such young ages? And so when that happens, that's my whole no TV thing. That's my whole no TV, no screens, figure it out ourselves, build the solar system, not from a kid, but go get the styrofoam balls, go get the DC motor, make the thing spin ourselves. That's where it comes from. It's not from a grumpy get off my lawn thing. It's give our kids these foundational understanding. Don't just teach them a USB goes into a port. You know what I mean? That's where it comes from. That the more if you start a base level of understanding below the root level, well, your education is limited. Your understanding of the world is limited. Sorry to go so deep into that. I probably lost half the people. But that's where it comes from. Sean says Montessori school when? I don't know. Tell me what you guys think about Montessori schools. We visited a few. We didn't love them. My son went to one for a while. Hated it. Fred says, I'd love to disconnect and deprogram. Then do it, my friend. Do it. That's why all my books, all of our book collection is all physical books. I got off the digital book game. Hold. You think the hold, Brian? Sean says he's taking it over. Love that blob says 2 cuts in 2025. Oh my gosh, Brian hit me with that old school Radio Shack. Had the Radio Shack electronic kit too. It was something like that. I had the 130-in-1 and I went and found it. And it is insane. It's like, because it's so difficult to find, it's like, I think it was like $250 for this little for this old ass toy. Darren says I had one of those too, and I'm 61. I still think about that. It's how I had that, and like this other science encyclopedia for kids, which taught me how a motor worked at like 8. I still think about that. You guys are the best. We're all kindred spirits. That's why we're all here. They took all the fun and education out. I don't know if they took the fun out. There's a lot of fun. I just don't know if there's as much education, idiocracy, and practice. That's what I'm saying, Max. I'm trying to avoid that, though. You know what I mean? And it's possible. A Jet Model SU-27 flanker for my teens, never assembled. Guess I moved on after that. Oh, they didn't put it together. Brutal. That was, I was even in Boy Scouts. I've got a history, you guys would blow your minds. I was in Boy Scouts. I did the model cars, the Pinewood Derby. You don't know me. You don't know who I am. We used to go out there once a year, do the zip line, build a fire with our hands, identify poison ivy and snakes just by looking at them. That's what we should be doing. That's what we send boys and girls out to do. And then they had this giant rope ladder thing. What do they call those? Obstacle course. Let's get back there, baby. Not give kids USB plugins to figure out circuitry. Are you joking? A snap-in kit? Are you joking? Come on. Now the nerds and you guys is coming out. Now I gave you I met you halfway. I told you how I used to nerd out. I'll give you more. You want to get nerdy for a second? I'm going to admit this to Bill Gates and to everybody. When I was a young man, we were doing CD burning when that was just like taking off. Everybody's burning CDs. You could burn anything, any CD. You could burn whole programs as long as somebody gave you the program key. Somebody at my school, in elementary school, burned a copy of Microsoft Front Page and gave me the Front Page CD and the program key. And I went home with a stolen version of Microsoft Front Page, which is basically how you would write HTML. There was a program to write HTML back then. And that's how I learned to write websites. And I think at 11 years old, I would find business in AOL chat rooms. I made myself a website. It was called Vic's Web World. And people would come in and they would submit projects. Then I would take those projects. Then there was another guy who had his own website building thing. And then he would help me build it. and then I would modify the code off the template code he would give me, and then I would ship it out at 11. This is what I was doing. I think 11. Maybe it was a little older. That's what I was doing. I'm telling you. I played basketball on the side, but this is what mattered. Sean says, my dad and I cheated in Pinewood Derby. We used furniture polish instead of graphite, and it was glorious. We crushed. That's so effed up. But thank you for the tip. I'm going to take a screenshot of that. Thank you very much. LimeWire. Or giving a kid an iPad at 7 years old. No, I can't do that. Vince K says, I was in boarding school since age 10, different kind of upbringing, learn independence quick. I was burning CDs as well. Yeah, man, these kids. Have you ever seen these, the hashtag, it's like teacher TikTok? Go look up that hashtag. Go look what they're posting up there. Terrifying. Absolutely terrifying. Anyways, let's move on. That was a little too negative. Kids, let me say this. Kids have the capacity at 5 years old to do things that'll blow your mind. They can be like little mini men. You ever see those old pictures of New York City? And there's like those really young kids dressed as sort of like older men, probably working as newsies or something like that back in the day. They have that capacity. If we treat them like adults, they can damn near act like them. All right. So we looked at GDP already. Existing home sales came out today as well. Up a bit month over month, 4.8%, 2.6% year over year. But be careful if you're going to look up that teacher TikTok. It's very unsettling. Personal income and outlays tomorrow. See, you guys are nerding out with me. Brian Watson says, I was building websites when Andreessen was coding the Mosaic browser. Wow. I remember Mosaic. Lee says, the best CD I ever burned was Get Rich or Die Trying, the 50 Cent album. I sold a bunch of copies freshman year of high school. I think the first burnt CD I purchased for $5, maybe. And I thought it was just the greatest deal because I think they were like $20 back then. No, it seems a bit too much. It was Dre's Chronic 2001. I think that was the first burnt CD I purchased. Max says, my first PC was a Commodore 64 at 8 years old, making games in BASIC. I remember coding in BASIC too. When I was young, though, I think my parents gave me. It was like one of those toy computers. But the toy computers today, they don't have programming in them, do they? Maybe they do. But mine was just nothing. It was a computer that did nothing unless you programmed it to do something. It was a toy, so it wasn't a Commodore because that's what you expect. But it was a toy. It did absolutely nothing unless you went in there and coded the computer to say, hi, what's your name? And then had some loop based on what your name was. Or it was just a variable, then feed it back in to say, hello, whatever you typed in. I remember doing this stuff. I'm telling you, those are the greatest gifts I've ever had. Because those are the foundational building blocks of me starting to understand programming and circuitry and electronics and the flow of electrons. And that was outside school. That wasn't a science class. It was what I was doing with my free time. Burning cassettes. You had the dual machine, Darren. That mixtape era was wild. Just putting in a tape and pressing the two buttons when the song comes on that you like and building a mixtape like that. Bro, talk about patience. You had to build that over like weeks, days. Talk about patience. All right, let's keep going. We got sidetracked. That was kind of hilarious aside. But none of you guys left. You guys like to nerd out on this topic. All right, let's keep going. Bitcoin it's taking a bath, man. We're down at 97.5. This thing can't figure out what it wants to do. Coinbase had a wild day as well. Let me go to days. At one point, we were up 3%, I think. At one point, we were up something like 3, 4, 5%. Ended the day down in Coinbase 2%. So the vol here was, the swings here were just crazy in Bitcoin and Bitcoin-related instruments. We are now at 97.5. I am curious. Is this a moment, in your guys' opinion, to buy Bitcoin as a short-term trade? Okay, so all you Bitcoin maxis, this question is not for you because the answer for you is always going to be yes. But for anybody who likes to trade, sell expensive levels, and buy what they believe are going to be value levels in the short term, what do you do with Bitcoin here? This price action is a little spooky to me. And I'm going to tell you why it's spooky, because it's not just Bitcoin. It's like they rugged everything. I can't stop reading your guys' stories. I'm trying to move on. I can't stop reading your guys' stories because this is like, it feels like a room full of kindred spirits. We're a little older now, but all of us remember sort of our first relationship with electronics. And I'll go so far as to say that you think of electronics very fondly. And I would say the relationship today, I don't think of electronics as fondly as I once do. I think of them as sort of this like insidious monstrosity, sort of this game that I have to play. But when it came, it was like this new frontier, and I got to be a part of this exploration group that was headed west, and that felt really exciting. And to think about that, those new versions of electronics, the evolution of the computer, the evolution of audio, the evolution of video, it was exciting for most of that journey. And at some point, I can't tell you when, the excitement of that journey, it went away, and it got replaced with something else, like a resentment in a way. But that, for some reason, hearing you guys speak about your first experiences with this stuff, there's a joy in it. I know there's a joy in the way that you're typing it, you're remembering it, that you're typing it, and the way that I'm receiving it. And that joy, I don't know if this current generation do they feel that joy as they're scrolling up and down TikTok? Is there a joy? Is there a connection to that? I don't know. Is there a joy when they think about the potentials of AI, or is it are they anxious? Are they afraid of it? I think far fewer of them are part of it. We were sort of a part of it. We were building our own programs, building the websites, building the internet. They seem to be, it's just like everything in their lives. It's less active and more passive. Maybe that's why there's a little bit, my perception is less of a connection. Maybe I'm wrong. Had an original Apple II, fully loaded with 64K RAM. That was a big deal back then. And cassette tape interface. The defense contractor I used to work for had an Apple lab with a how do you pronounce that? Krememco, and Apple II, Commodore 64, and one more. That's gangster. To have access to those types of instruments. So cool. You opened Pandora's box. I know I did. It's kind of fun, man. I can't buy. Can't you buy? Yes, I can, Jerry. I can. That's kind of the direction I ended up going. I bought basically something like that. Lone says this is the best chat ever. One man's opinion. I'm gonna read a few more, and then I'm gonna do a few more actionable symbols here. But you guys took me off. I'm blaming it on you, but it's also my choice. I'm doing this on purpose because I like what you guys are saying. The next company saw the replacement of X computers with IBM desktops and Apple's for publications department. Kind of want to sell short call ratio in coin or MicroStrategy. They got down to 326 today. I did not see that. I can't even call an interesting level with MicroStrategy. The trade is just so crazy. VW says, I feel the same. 90s to mid 2000s with computers and early internet was great. Social media algorithms are what ruined that sense. Yeah, I think so too, man. Isn't that wild, VW? We grew up in the internet of chronological order. We grew up in a world where there was only one person who ran a site, and that person was called a webmaster. Crazy. There was no templates either. Crazy. I remember my dad got an HP 65 calculator for his structural drafting job, about $900 at the time. Insane. What about MS-DOS? I still mess around in DOS every once in a while. Do I? No, not really. Mostly shell. Mostly bash. Oh, now you guys are all giving your first. Now I can't read all these. There's just so many. You guys are all giving your first computers. I love this. I'm going to let you guys geek out in the chat. I can't read them all, but it looks like I've stumbled into an area you guys love and are passionate about, and that's cool. I like that. Anyways, Bitcoin 97,000. Part of me, I don't love the rug pull that happened. It is happening across all assets right now. So it's like, if this is risk off, shouldn't there be a play? Like, usually there's a risk on counterpart. If US sells off, money's going to go somewhere, right? Money goes, let's say it goes to US, or if maybe it goes to bonds, or it goes to gold, or it goes to Bitcoin, it goes to silver. But none of that is happening. None of that is happening. And I want to say it wasn't even like the dollar just got mad stronger today. It did against some currencies, not against all, I suppose. Yeah, like Aussie and Euro kind of recovered. The yen weakness has been disgusting. Yeah, there's a part of me that I did not love the rug pull that happened across all assets. MySpace taught us all to be webmasters. No, it didn't. I mean, it kind of did. MySpace was to like, that was part of the dumbed down process, right? That's when you could start customizing stuff. So it wasn't like you didn't have to learn code. Here's a thing that you can easily customize to make your own on the internet. And that was sort of the first step in, do you want a white phone or a black phone? And do you want light or dark theme? That's the extent of your customization on the internet now. You used to be able to do anything you wanted. Now it's all like, what's that saying from Henry Ford? You can have any color as long as it's black. That's the internet now. Congratulations. Anyways, so it's either you look at this market and you go, finally, I got a 4 or 5% discount. I'm going to go shopping. But like 5%, man. Does any of this stuff look cheap to you? Does any of it look interesting? I know at some point they might just take them higher, and we're talking about a 6,500 market. But to me, none of this stuff looks interesting yet. And Nvidia is still rolling. What are we at, 130? If anything, I'd be more interested in this stuff, but it's still not super cheap. 130 sounds a hell of a lot better than 150, but it's still not super cheap. And somebody said my TLT trade is going to be the new version of the Newmont mining trade. Let me just say this. I think they sent Tony an email. When I do this stuff, they're never week. They're rarely week over week trades. This one is a specific case because I didn't talk about buying equity. Normally, I talk about buying equity. When it comes to Newmont mining, I told everybody that the vol was super cheap and I might do something like a stock replacement. When you tell people it's a stock replacement, then you're locking yourself into a 45-day to 60-day cycle. That's why I think it's all right to judge this trade on a short-term basis. I will say I added to this. I added to the equity in this. I'm long the equity. I'm adding here. Vince K says, am I selling puts? I didn't today. I did not today. And that's probably going to be my downfall because at some point I'm going to have to get used to these high prices. Just like people that go to the grocery store, they're going to have to get used to the high price of eggs. They're going to have to get used to the high price of meat. And it's just going to take time. At some point, I will look at NVIDIA at 130 and say that was a deal. But now it's hard. It's hard to think through that lens. But given the backwardation, I will tell you this. Yesterday, I was like, I don't want to sell puts here because even though VIX cash was high, the VIX term structure was normal. It was in typical contango. I only really like to sell puts if the VIX term structure is in backwardation, because I think in those cases I'm getting pretty decent. I'm getting decent odds, and every VIX backwardation is normalized. Some have just taken longer. Like if you go back to, I think the Great Financial Crisis, it took like 150 to 160 days, if I'm not mistaken, for that to normalize, to come out of backwardation. So it can take a long period of time, but I think if there's ever sort of a period where you're just waiting for mean reversion, it's when we're in backwardation. Long way of saying, I can't be mad at anybody that goes out there and starts selling puts here. And I think that's probably the right thing to do. For some reason, man, I can't pull the trigger when stuff is this expensive. Nothing looks good to me. But I think that's probably the right thing to do. Probably the right mentality. Gold getting cheaper at 2,600. Keep coming down, my babies. It tried to make a little rally here today, but they rug pulled it. It rug pulled everything. They tried to make a rally, still at 2,600. I'd love to see that come back in towards 25. I'll be a buyer at 24. But if it does come in at 25, you got to understand that means more pain for Newmont and other miners. But I'm not trying to time Newmont. I'm just saying that the pain in Newmont reflects a deeper drawdown in gold. So one of these two things is not going to be true, either, in my personal opinion. Either Newmont rallies to catch up with gold at all-time highs, or gold sells off and comes closer and looks closer to what Newmont's chart looks like. And if gold goes down, Newmont chart's not just going to rally, it's going to go down as well, but I'm betting not to the same extent. And that's why I think risk is better deployed in the underlying miners than gold. But I could be wrong. That's my bet. Yeah, copper not having the greatest run either at $4. I mean, it is off the lows. It's well off the highs at 5, and that's killing the other thing that I used to love, which is Freeport-McMoRan. Donna says, I'm a buyer of NVIDIA at 120. I think that's probably a decent level. I could get behind that. I'm a little long already. I think at 90 and change, really close to 100. I could get down with getting a little bit more long at 120. I should probably sell puts. What am I doing? Yeah, I'm probably going to get long a little bit of Freeport as well. Just nibbling. I nibble. But we got a low here at 36. We're trading at 38. We're out of most of this because we collar all these positions. I collar these positions. So I sell upside calls to buy puts, and when this stuff pukes,